As well, very different story there. Some of the stocks that we were focusing on, some of the individual potential movers, Kriti.
Yeah, it's going to be a fascinating one. I feel like because it's Friday, it's Halloween, everyone wants to go home, it's kind of rainy outside. Maybe that does mean we're going to set ourselves up for a lower open. But then again, there's plenty of positivity out of the States overnight to actually price into these markets. So let's see how the European trade actually opens. Here we are. The FTSE 100 kind of wobbling around. There's no other better way to put it. Again, I finally feel like it's a sleepy feeling. Everyone's just excited to go trick-or-treating. I think that's the takeaway from today's market. I am excited to see what the IBEX does, though. You do have a couple of interesting stories. You mentioned the banking sector, Tom. I think what's crucial as well that Telefonica has just talked about a dividend change as well. So there's a lot going on in the Spanish market, a couple of earnings, a couple of deal news, and of course some buybacks there to price in. The Stoxx 600 overall, though, taking a little bit of a back seat. And now, of course, you have the CAC and the DAX. Again, these markets are giving me nothing, Tom. Rescue me.
The FTSE 100 is down 0.2, but let's look at the individual sectors then. I'm sure when we come to some individual names as well, there will be some interest there for Kriti Gupta. Health is currently your top sector, up 0.2%, very modest gains coming through. Auto is also getting a bit of a lift, up 0.2. You're seeing the DAX over in Germany, of course, tilted towards that sector at 24,000, largely flat on the German index. This is not helping Kriti Gupta. On the downside, construction is the biggest loser right now, down 0.6%. And interesting, the read across from the tech optimism stateside not coming through for the tech sector here. Of course, there was a significant sell-off in the Nasdaq 100 yesterday, concerns about Meta and to some extent Microsoft as well. But then you had the earnings coming through from Amazon and Apple, and the US future story is putting and pointing significantly more positive, looking to pair those losses. Nasdaq 100 is up 1.3%, but that read across from the futures picture stateside when it comes to tech is not being reflected in European tech. That sector is currently down 0.5%, Kriti.
Yeah, I think it's fascinating. What is rallying this morning, though, is we are seeing a lot of the healthcare names get a little bit of a bid. Novartis, for example, is your biggest index contributor to the upside. From a sector perspective, higher by 0.3%. You're seeing like Novartis, Sanofi is a bit higher as well. But to your point, Tom, you are seeing perhaps some of the outperformers, again, earlier from this week, the tech, the banks, they are starting to rotate out. And again, the healthcare names weren't doing so well earlier this week. They are starting to rotate in. I feel like when it is a boring, lackluster market as it is right now, it is easy to blame the Friday energy. Let's get maybe a little bit more analysis here. Anne Maletti joins us around the table. She, of course, is the head of equity investments over at Allspring Global Investments. We thank you so much for joining us on this Friday. I mean, rescue us. How should we be thinking about these markets going into next week?
You know, I think it's an interesting time because there's an odd barbell effect going on in the U.S. markets, and it's those large cap names that are really outperforming, and then on the other side of it, small cap, which is really strong. But there is some differences. In the large cap space, you have some companies with solid fundamentals, increasing revenue, increasing earnings. On the small cap side, what is outperforming the most is that low quality, the non-earners. And that, while I like small and mid cap names, and we can talk more about that, that appears a little bit dangerous given where we're at in the market cycle. Buying companies with not great fundamentals long-term is kind of a short-term trade, not a long-term investment.
So does it, I mean, let's just take it piece by piece here. It feels like everyone's talking about the earnings picture, specifically out of the United States. 6 months ago, we were worried about margin compression. Is margin compression not an issue anymore?
I think there's still a question mark out there. I mean, the tariff concern, interest rate environment, all of that makes people concerned about whether or not margins are sustainable. I think there's promise with, technology technology, productivity improvements coming. That's a promise. Also, we've seen companies adjust really well to the tariffs. I mean, everybody expected this to be a much greater impact than it has been so far. And so I think margins even remaining stable is good for the market. And over time, if you see a little bit more margin creep up, that's going to be positive.
When it comes to the small cap story, and you're talking about that barbell picture that we've seen in the markets, to what extent is that predicated on an assumption that there will be additional and significant cuts from the Federal Reserve? And if there's a pause in December, how much of a challenge is that to that narrative, that theme?
Yeah, Tom, I think you hit the nail on why that tail end of the small cap have really outperformed. It's been a play on the rate cycle going lower. And so when there's fear about whether or not we're not going to have as many cuts, there's more risk to that tail. What I'm optimistic about is I'm fairly optimistic about growth for 2026. And if that continues and the rate cuts are fewer because growth is better, that's still a great environment for small caps. And so, but the higher quality small cap names.
Okay, let's move from the small caps to the mega caps and some of the tech names. Where do you look beyond the very obvious tech winners at this point? What is the opportunity that investors are going to be thinking about in terms of adding to their portfolio if they remain optimistic on AI?
Yeah, look, we're really optimistic on this innovation cycle, AI in particular, but our portfolio managers are starting to take the next level approach. What's next? And if you think about all the names that kind of have been not ignored, but silently and slowly following the gains that these the mega cap companies have had, there's some really interesting areas. I mean, you all talked about healthcare a little bit. That's an area where there's good opportunity. It could take longer to see the productivity improvements, but the healthcare system I'll just say it's broken in the U.S., and it is ripe for innovation. And so our portfolio managers are looking deep in there. They're still involved in technology. It's a big space, but outside of the hardware companies, what's going to be the next part to really advance and look good? And software is sold off dramatically. I think there's some areas of software that continue to look really strong.
But is that baked into, is the AI theme, is that modernization you're talking about baked into every company that is leaning into it? I mean, I'm just taking the example of Deutsche Telekom here, or Nokia even, or even some of the smaller European names that haven't seen the same AI premium that you've maybe seen in the United States. Is that a European thing, or is that a small cap size thing?
I mean, I think, when you asked earlier about margins, I think that's kind of the key focus for, the answer to the question. Where are the margins sustainable and where could you see margin growth? And those are the areas of the market that our investment teams are really, really focused on, and big believers that the innovation cycle and the right spend could lead to greater revenue growth and greater productivity over time.
When it comes to the energy picture with relation to the tech story, should there be a stronger correlation there? We talk about it all the time, but you're not really seeing that in the way things are trading.
No. Again, I think about the energy market. I have followed energy much more closely early in my career, but it's supply and demand. And, while you can be very excited about the energy demand coming from AI and what is needed for the infrastructure, you see a lot of supply coming on the market. And, again, we'll have to see what global growth looks like. But if global growth is strong in 2026 and you have this extra demand coming from the infrastructure side and what is needed for AI, et cetera, in the future, the environment for energy could look much better than it does in this moment in time.
We've been focused on the APEC summit as well, and that brings us to the EM conversation, emerging markets, and the lift, frankly, that's come through from weaker dollar in 2026. Is that something that is sustainable into 2027? Is it into 2026? Sorry, the gains that come through 2025. I'm already in next year. How vulnerable is EM on a turnaround in the dollar story? And what assumptions are you making about the greenback for next year?
Yeah, I'm quite optimistic about EM. And look, we were optimistic heading into 2025. It worked out I think, primarily for the reasons you talked about. Dollar weakness really gave the tailwind for EM. The next phase of that, the EM outperformance that we believe can happen in 2026 is even if you have a stable dollar, which I think is, I'm kind of in the camp of, you'll see more stability, you'll see some trades up and some trades down, but overall a flat dollar. That environment's not bad. It doesn't produce a strong headwind from EM from this point. But the fundamentals for the EM stocks are getting, again, brighter. There's a lot more focus on AI and all the materials that are needed to go into AI that come out of emerging markets. And so the picture of the companies that you can invest in emerging markets looks different today than it did a decade ago. And then lastly, there's just an under-allocation of global assets into EM. It's only 5% today. That's down from 7% just a few years ago. If you just get back up to, and 13% I think at the high, if you just get back up to 6%, it's over $500 billion that has to flow into EM. That's a lot of money that's sitting on the sidelines waiting to see if it's real.
Okay, so that's the 5% exposure to EM versus 7% historically, at least in recent precedents. What about the flow show into European equities then for 2026? Where are the opportunities there?
Look, I think international markets still provides good opportunity. It's a little harder with the developed countries to see where you're going to get that strong growth. Is it going to be from Europe? Is it going to be from Japan? Is it going to be from those places? We're still optimistic about international, but again, if I had to pick one over the other right now, EM seems like a little bit more solid of a trade.
Wow, that was quite the call. Ann Maletti, Head of Equity Investments at Allspring Global Investments. We will leave the conversation there. We thank you so much. I'm putting my Guy Johnson hat on today and taking a look at his core six, of course, the heavyweights that tend to move the European market. We're really got an eye out to see whether the optimism after market in the U.S. is going to bleed into Europe. And by this indication, the answer is no. ASML down about 0.7%. Schneider Electric moving lower as well. Seeing some, I don't know if optimism is the right word. This feels like a defensive trade to me. Nestle higher by 0.2%. Risk off, it seems, across the board. But again, these were the names that rallied quite significantly earlier in the week. So maybe just, again, letting out some steam ahead of the weekend. Let's get a check on some of the other individual stocks on the move. Chloe Melly has that for us. Chloe.
Good morning, Kriti. We have got some positive movements across for Universal Music Group. So it is up almost 1% this morning after reporting a revenue ahead of expectations thanks to really strong sales of Taylor Swift's new album and also a strong performance for the Netflix hit K-pop Demon Hunters, and the soundtrack there performing really well. So it's quite a relief for investors in Universal after some weakness in the stock over the last few months. Moving on to Rank Group, which is also moving higher this morning. The German defense company is up 2%. It makes gears for tanks, and it has been upgraded to a neutral rating at Citi, and that is following some retreat in the shares recently, which means that now it is trading near fair value according to the analysts, and we are therefore seeing the stock up 2% this morning. Moving on to Saint-Gobain, which is the French company that makes building materials. It is down this morning. We are down almost 2% after it reported sales that missed estimates over the third quarter, and that is because of quite a weak performance in North America, despite some resilience in Europe, which is quite worrying for that kind of key market for Saint-Gobain. Moving on to SCOR, which is an insurance company. It actually managed to swing back to profit after a loss, but the earnings seem to have disappointed. We are down 4.7% this morning for SCOR. It might be because the gross written premiums came in below expectations, but it seems there was some disappointment in those earnings for investors this morning. And finally, Sainsbury's is also down after being placed on negative catalyst watch by Citi analysts ahead of the results that are coming next week. And that is because there's probably not going to be a guidance upgrade, and that will probably be leading to some weakness in the shares when they report next week. So we are down 1.4% for Sainsbury's this morning.
Chloe Melly from our equity team. Thank you very much indeed, with some of the stocks on the move this Friday morning. Coming up, a frantic 4 days for Pfizer as Novo tries to crash their deal for weight loss maker Metsera. That is next. The countdown is on. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting, what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. On November 4th, Election 2025 is here. Trust Bloomberg for continuing coverage of the races for mayor of New York City, governors of New Jersey and Virginia, and the redistricting map in California. Tune in at 5 p.m. Eastern for an extended balance of power and return Wednesday at noon for full analysis of the results. It's Election 2025 on Bloomberg Television and Radio. Context changes everything.
Welcome back to the opening trade. 16 minutes in today's session, and we are already seeing the Debbie Downers, is what I'm going to call it. You are seeing risk sentiment turn over a little bit. The DAX and the FTSE seem to be your underperformers, but only down by about 0.3%. It feels like a little bit of the momentum is being taken out of this market. But, of course, some of it is also being driven by the heavyweights, especially in the healthcare space. Let's go to that story next. There's a showdown when it comes to the obesity drugs market. Novo Nordisk has upended Pfizer's deal to acquire obesity upstart Metsera. Now, the U.S. pharma giant now has 4 days to trump Novo's bid or walk away. We can get the latest on this drama with Bloomberg's Ashley Furlow, who joins us around the table. Just big step back here. Why is Metsera so in demand?
So every company who is not in the obesity space needs to get in the obesity space. Pfizer's not there yet. They really want Metsera. Novo Nordisk, in the obesity space, people are not so sure about the pipeline. They need this big bet. And for Pfizer, this is particularly important. Post-COVID, we've seen the shares down. It's sort of down around 60% from those COVID highs. CEO Albert Bourla is under a lot of pressure to prove to investors that it has the pipeline. Metsera was sort of going to solve that problem, and they actually had a pretty good price for it. So we know in the previous negotiations, Pfizer was actually a lower bidder, but because of concerns about regulatory issues with another bidder, which we're all assuming is Novo, Pfizer beat Novo. We're assuming it was Novo to the initial deal. Now, obviously, Novo's come in with a higher bid, and Metsera is saying, we'll accept this, and you have 4 days to counteroffer.
Okay, so the clock is very much ticking, 4 days, and we'll see if Pfizer comes through with a counter. Given your understanding, your experience analysing, looking at this space, who do you think is best positioned at this point? Are Pfizer going to go all in on trying to lock in Metsera, given, as you say, they do not yet have an obesity drug proposition?
So if Pfizer raises their bid, I think analysts are pretty sure that it could have a pretty good play here. The issue is it seems like Pfizer's kind of going on the offensive. They're really saying, pointing to anti-competitive issues, saying that, you're trying to take over an emerging American competitor. So that if they try to play the American angle, sort of the anti-competitive angle, that might make it harder if they're not actually willing to put more cash on the table, which at the moment we're not really sure if they are willing to do.
And again, I think it's so fascinating here that they're kind of leaning into this nationalism piece, especially because Pfizer, my favorite fun fact about Pfizer is that at one point 60% of their revenue was coming from the COVID vaccine. So their diversity push in terms of their pipeline is really fascinating. But I want to come back to that U.S. kind of take when it comes to healthcare and the pharmaceutical space. Where are we on that relationship, given that so much of, especially the obesity market, is driven by things that are not in the U.S.? Where are we on that rate, on things getting cheaper, on that dynamic?
So interestingly, obviously, Pfizer was the first a drug maker to agree a deal with U.S. President Donald Trump. So, they already have that in with Trump. They have a long relationship during the pandemic with Trump. Many companies are already agreeing to manufacture many more drugs in the U.S. They're agreeing to drop prices in the U.S. They're agreeing to sort of give sell drugs directly to consumers rather than going through middlemen. Yeah. Everyone's sort of coming to the table and saying, look, President Trump, this is what we'll do to make it easier and make it cheaper for Americans to access new medicines.
Okay, Bloomberg's Ashley Furlow, thank you very much indeed on the Pfizer-Novo standoff around Metsera. 4 days to go, and we'll see if Pfizer responds with an upped bid, of course. Thank you, Ashley, for the update on that front. Let's switch focus to the oil sector right now, because oil is heading for a third monthly drop on concerns of a global glut. Those fears could be confirmed this weekend, with OPEC Plus expected to back another supply hike. For more on this, let's bring in Bloomberg's Jumana Pasecci with the details. Jumana, give us the outlook then as we count down to OPEC Plus this weekend. Expectations, maybe they put more oil on the market despite the softness in oil prices.
That's exactly it, Tom. So the expectation is that OPEC Plus, when they meet again this upcoming Sunday, will decide to put back extra barrels to the market, but to the tune of around 137,000 barrels per day. So slightly slower than the pace that they've been running at over the course of the summer. And also, just as a reminder to everybody, over the last few months, OPEC Plus have actually reintroduced a targeted amount of 2.2 million barrels per day. I say targeted amount because in reality, the actual production that has hit the market has been slightly less. But nevertheless, I think, from here onwards, the focus for the market, especially on back of the price action in oil over the last couple of months, is on what this extra production actually means to supply and demand. And most analysts out there are anticipating quite a big supply glut to come in the coming months. Bloomberg Intelligence anticipating a supply glut of around 900,000 to hit in the fourth quarter. IEA estimating a supply glut as big as 2 million by the first half of next year. And so what you are seeing now is the market reacting to fundamentals. That being said, over the course of the summer, we did see strong seasonal demands kick in, which is one of the reasons why, despite the extra oil, we still stayed above the $60 target. And the second big question for investors is China's strategic stockpiling, because that has continued throughout the course of this year. Our own Bloomberg Intelligence estimating that China's strategic reserve capacity are now sitting at 95% full. So we are getting to a point where you may start to see that demand from China beginning to level off as well. So all of these are matters that the OPEC Plus group will have to think about when they meet on Sunday.
Well, talk to us about how the geopolitics factors into all this, Jumana, because we've seen quite a bit of volatility when it comes to the price of Brent. There's been some questions around whether the purchases of energy from China into the United States could be factoring into this, how the relationship between the Saudis and Russia are factoring into this. For you, what has been the driver in the conversation?
Look, I think one of the main focuses right now is what is exactly going to happen to that Russian oil. With the two companies, Rosneft and Lukoil, they were targeted by the Trump administration. They account for about 50% of Russian oil production. Already, we are seeing signs that Indian oil refineries are beginning to divert away from Russian oil. The summit that took place between President Trump and President Xi actually did not discuss the subject of oil, though India and China remain the biggest buyer of oil at this point. But so when you think about how that could impact the oil market, if that Russian supply were to come off in any shape or format, then you would have to think other producers will come in. And that is where OPEC Plus could come in if they want to. But perhaps the reason that they're being cautious here also is, let's not forget, Russia are a member of OPEC Plus as well. And Russia have been pushing for slower incremental production putbacks on one point. And the second thing to bear in mind as well, from a geopolitical perspective, is the Saudi Crown Prince is heading to D.C. later this month. Obviously, we know that President Trump wants to keep a lid on where prices are. And so maybe OPEC Plus and Saudi Arabia leading them at this point in time will want to keep a little bit of spare capacity in case there are other shocks to the system at some point in the future, so that they can lean in to that spare capacity. So yes, geopolitics is a big focus, but at the same time, there's no need to rush into putting back extra supply to the market, given the uncertainty about the months ahead.
Okay, Brent currently just below $65 a barrel on Brent, $64.97. WTI at $60.44. Bloomberg's Horizons anchor Jumana Pasecci on what to expect and the implications of that OPEC Plus meeting and that decision expected this weekend. Jumana, thank you very much indeed. Horizons Middle East anchor, of course. Let's check in pre-market then. The US, a couple of significant names in the tech space, of course, and this is lifting the NASDAQ 100 futures. Apple coming through with strength, particularly the predictions around the holiday season and demand for the iPhone 17. The quarter on which they reported only included about 2 weeks of iPhone 17 sales. The expectation is that the holiday season will be strong, offsetting concerns about a bigger than expected slowdown in the Chinese market. Amazon, AWS, the strength there really performing very well. 20% increase quarter on quarter for the leading cloud provider, of course. And look at the shares in Amazon, called higher by more than 12%.
You know what the best part about the holidays is, I think, in my opinion, is the cheesy movies, like the Hallmark, the Netflix, Christmas movies, where, you know, they always end up together under the mistletoe. It's a really exciting time of year, I think, for Netflix. Nevertheless, that's not what's boosting the stock. That's just my own personal opinion. Shares are higher because they are announcing for a 10-for-1 stock split. I mean, this is natural here. They are saying it's going to benefit employees. Shares higher by about 3% in the pre-market. I mean, just look at that stock price, $1,124 for Netflix. There's also some rumors that they may be involved in some M&A. Reuters talking about a bid potentially for Warner Brothers Discovery amid the broader media consolidation story in the States.
Yeah, there you go. That's why you need the stock split, given the pricing right now on Netflix. Switching to another part of the tech space, Cloudflare. This is Cloudflare. This is a company that focuses on things like security, data security, cybersecurity. Fourth quarter revenue forecast beating the estimates, called largely unchanged right now. But in terms of the cybersecurity space, Cloudflare potentially one to watch at the US Open as well. Currently, NASDAQ 100 futures pointing higher by 1.1%.
Yeah, it's a fascinating one. We'll see if this kind of momentum actually sticks. And we should just mention that Jensen Huang is still making comments, of course, in South Korea. And NVIDIA shares are higher by about 1.9% in the pre-market. Coming up, we are going to, of course, dive into the earnings story, but we're going to put it in the broader context of how it squares with some of the other geopolitical issues, including the supply of critical minerals and rare earths. We have a fantastic conversation ahead. Stick with us. This is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
to the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Power, money, culture. Linda Almond tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
In case you missed it on the opening trade.
Here, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
Coffee
lovely Tara.
coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session. It was a challenge session on Wall Street yesterday with losses on the Nasdaq 100 of more than 1%. Question marks about the spend coming through on CapEx from the likes of Meta. US futures looking a lot more positive today, but European equities still trying to find the direction. A bit of a softer picture yesterday as well. Today, down 0.2% on the benchmark Stoxx 600. The German DAX is off by 84 points. You're seeing the FTSE 100 here in the UK down 0.3%. And over in France, a little bit more stability, off just 8 points so far. But it does seem on the back, of course, of a huge week when it comes to the central banks, with the Fed cutting by 25 basis points, putting a big question mark over December, the ECB on hold, and the earnings story coming through. The equity markets here in Europe looking for the next catalyst. Kritty.
A little bit of a mixed market picture when you look beneath the hood, one layer lower. Let's talk about the members higher and lower. Higher 253, lower 318. But again, take this with a giant grain of salt because the volume is down about 26%. Everyone is getting ready to trick or treat tonight. I think that's my theory here. Let's talk about what some of the other individual movers are and your leaders and laggards for the session. This is one that we haven't talked about a lot. AB and InBev has been having a massively volatile week, higher by 1.2%. It was one of the biggest movers in yesterday's session as well. So keep an eye on that. The banking sector, we've been talking about the blockbuster beats from SocGen to Santander to name your bank, Standard Chartered among them. Danske Bank and Erst also getting a late boost in this kind of trade towards the end of the week. Let's talk about the laggards, though, because as Tom said, the risk sentiment is to the downside. And you are starting to see some of the pain here. We were talking about the tech theme, that tech outperformance in the States, not necessarily bleeding into Europe. I think this is a great example of it. Prosus down almost 3%. Deutsche Telekom had gotten that a little bit of a boost earlier in the session, earlier in the week, I should say, with that partnership with NVIDIA, now down about 1.3%. Some of the momentum coming out of this market. A similar story for AXA, down about 1.5%, Tom.
Okay, here's what else you need to know. This Friday morning, Bloomberg has learned that Telefonica is set to cut its dividend as part of a new strategy plan due next week. The Spanish carrier has one of the highest dividend yields among European telecom operators, and its new policy aims to align it with peers, strengthen the balance sheet, and signal commitment to financial discipline. China's factory activity has slumped for the longest streak in more than 9 years, prompting fresh calls for greater policy support even as the country reaches a trade truce, of course, with the US. And NVIDIA has forged a landmark deal to supply its technology to South Korea's biggest companies, part of an aggressive push to expand AI infrastructure around the world, under agreements brokered with the country's Ministry of Science and a trio of corporations, Samsung, Hyundai, and SK Group. NVIDIA will be supplying more than 260,000 of its accelerator chips to help jumpstart Korean AI projects. Kriti.
Well, Tom, speaking of that partnership, we should mention that our very own Sherry Ahn is on the ground right now at the APEC Summit. She is speaking to Jensen Huang. You can see a shot of him there. Of course, we will bring you the news as we get them. Now covered by the camera, but don't worry, that conversation is very much happening. We should mention, of course, we are seeing NVIDIA shares actually higher this morning to the tune of about 2%. He was on stage earlier at the APEC Summit to say he was already looking ahead to the next generation of AI products.
This year, AI became profitable. And when something becomes profitable, you want to manufacture more of it. Just like when you're manufacturing chips and wafers and DRAM, if the manufacturing of those chips were profitable, you want to build more factories to create more chips. Now that the AI is profitable, we want to create more factories to generate more AI.
Matt Bloxham of Bloomberg Intelligence has, of course, been following this story. He joins us now. NVIDIA is just on a world tour of deal-making and partnerships, it seems. Is this the peak? Are we at peak NVIDIA?
Good question. I mean, I think it's a great strategy. You know, I think clearly there's a lot of runway to go yet with AI, but at the same time, the rivalry is picking up both from the US and from China. And I think this makes complete sense for them to be getting themselves embedded in as many technology industry partners as they can, but also as many vertical sector partnerships as they can, so that really you're at the kind of ground zero with the technology. And once people are locked into your technology and they commit to it, it gets very hard to unpick that and bring in rival technologies. So I think it's whether there's an AI bubble or not, this is a great strategy to kind of make sure you're going to benefit as much as you can from the opportunity.
And Matt, it was talking as well, Jensen Huang, about the CUDA software platform that they use that integrates with the hardware as well. And as we think about locking customers into ecosystems, I'm thinking of Apple as well, which historically has done that. And they came through with results a little bit softer in China, but they're forecasting a strong holiday season. Apple performing relatively well, given that they're not winning on AI at this point, and they face some supply chain and tariff challenges as well.
Yeah, that's right. It's all about the iPhone again. You know, it's about 50% of their revenue. I think that the 16 last year was a bit underwhelming because it really didn't change very much, and people held on to their phones. What we've seen now is that the 17, again, not perhaps a big technology change, but I think people have had their phones long enough that they're running out of battery, they're running out of storage, and this was the trigger for them to upgrade. And people are upgrading to the more expensive phones, the Pros and the Pro Maxes. And I think even in China, the messaging is that whilst sales dipped in the September quarter, the December quarter is going to see a return to growth. And overall, they're talking about a 10 to 12% growth in iPhone sales in the December quarter, up from 6% in the numbers they just reported. So, yeah, really encouraging signs there on that core product for them.
Okay, Matt, thank you very much indeed. Matt Bloxham of Bloomberg Intelligence, of course. And so we think about the tech space, we have to think about what's happening in terms of the supplies of raw materials into some of this key hardware, rare earths, of course. And what a week it's been in terms of the deal, at least temporary, when it comes to the US and China. Rare earth minerals are critical, of course, to big tech, as we mentioned, and central to the trade tensions between Washington and Beijing. Appian Capital Advisory is one of the few private equity firms dedicated to the mining sector and is making a big push into those critical minerals. Joining us now is the company's head of global affairs, Dominic Raab, also former UK Deputy Prime Minister, of course, and Foreign Secretary, so well-versed to talk about this. Dominic, thank you for joining us in the studio this morning. I know you're launching a new fund as well, so we can get into the details of that, but I do want to start on the news of the week and this reprieve, it seems, around these export controls and this system of licensing that China's put into place being delayed by 12 months. Some of the controls are still there, but the framework that really concerned some of the global manufacturers in the US as well has been delayed at least for 12 months. How much relief should we take from that?
Yeah, there's certainly a measure of relief. I think people want to see these export controls lifted, the wider trade tensions ebbed, and the reason being is you've got exponential demand, particularly for heavy rare earths, but also for critical minerals across the board, and these bottlenecks in supply. Just to give you some sense of what that concentration in the market looks like, if you include refining and processing, Chinese control is upwards of 90% plus. And so notwithstanding the progress, I think the central message for investors is, can we attract the patient capital to build up those alternative supply chains in critical minerals, and in particular heavy rare earths, everything from industrial and tech through to national security applications. And I actually think the impetus for more investment in that space is only going to grow.
What are you hearing from investors then? Are they waking up to this? Are you seeing more capital flowing into this space? Where's it coming from? How much momentum is there?
Well, look, there's a big challenge with supply. There's a good question around the awareness of OEMs to this challenge. We need to bring them on board. You saw that a little bit with the Mountain Pass deal, which was the most recent heavy rare earths investment that the Department of War, the Pentagon, made. But that brought Apple in, so that was quite interesting. But it also involved a floor price at something like double market value. That's quite a significant level of state intervention. How scalable will that be? We'll see. But certainly we see huge opportunities in this space. We've got one asset, for example, in the context of Australia. And of course, there's been this US-Australia critical minerals deal that was done about a week ago. Well, we've got one asset which can produce globally something like 7% of necessary supply of heavy rare earths. There's an interesting piece as well as the onshoring in the US around friendshoring. That's the kind of investment we think that would probably be part of that conversation.
Well, you mentioned Australia. This was also a piece of the commentary that's come out of the U.S. and Japan's negotiations as well. There's a conversation in Washington right now that the United States can find alternative sources of rare earths to limit and even completely offset that dependence on China. Is that a fair argument? Are there enough sources around the world to offset that dependence?
Yeah, it's a great challenge. Look, we've seen the concentration upwards of 90% if you include the refining and the processing. My advice has tended to be, when I talk to international institutions or governments, onshore when you can, friendshore when you must. And Mountain Pass is a good example of the kind of deal where, okay, you can onshore, but that's not going to provide all your needs. If you're looking outside the US and at global supply, interestingly, 37% of the natural resource available for rare earths can come from Brazil or Vietnam. I think interesting in terms of the trade discussions we've discussed, but also in terms of partners, so-called non-aligned partners that could be brought into the mix. And then you've got Australia, high trust partner, member of the Quad, member of the Five Eyes Intelligence Alliance, and then we've got this asset that can provide 90% of potential global supply. The question is, how do you make the best of that? What's the right mix of onshoring and friendshoring? Where do you do the processing?
So we've talked about the Americas, we've talked about APAC. Let's bring it right back to where we are right here in Europe. I mean, how does Europe, how does the UK get their hands on these critical assets?
Well, we engage a lot, and I've been to Brussels a number of times this year. I think you interviewed me when I was over in Brussels.
Yeah.
Look, there's lots of plans being articulated. The West as a whole is something like 20 years behind China. We're seeing a lot of ambition under the new Trump administration, and there were previous initiatives under the Biden administration. I think it's fair to say Europe is a little bit behind, but they're starting to articulate plans and projects. I think two things. One, they need to turn those strategic frameworks into operational delivery. And secondly, certainly with respect to the European Union, and we have good engagement, there is still this Henry Kissinger question, who do you call? And who is actually driving forward the delivery of those supply chains that the industrial base in Europe needs?
Tommy, I think it's interesting as well, given your background with the Conservative Party, you're a champion of free markets, but in this case, you say the state does need to intervene, and you're quite clear on that. Particularly when there's one thing about digging the rare earths out of the ground, the other is about refining capacity, and clearly China has the tech there, but also they're able to take on the environmental hit and the cost of labour and everything else that goes into refining these rare earths. So clearly, government support is essential at this point. Is that fair to say?
I think so. Look, if you compare the last big geopolitical commodity crisis, 70s, OPEC, concentration in the oil market at that time was between 11 and 26%. That was regarded as fairly heavily concentrated. Now you're talking 60, 70, if you include the refining, the process, upwards of 90%. So I don't think anyone, even pure free marketeers like myself, would argue it's a free market. The challenge is, what are the ingredients for a solution to the alternative supply chains? Cost of capital for investors, that's a big issue, and we're seeing that with these innovative floor prices on top of subsidies and grants. How can you forge best-in-class public-private partnerships? The International Finance Corporation partnership with Appian, up to $1 billion in non-OECD countries. High ESG standards is a good example of that. Lowers the cost of capital for investors like ourselves. High standards of ESG. We want to make this a race to the top. And then you've got this wider piece around friendshoring and onshoring. And I think that you'll see both Europe, the US, Australia, Canada look towards what I consider a hub and spoke model, which is, as I say, onshore when you can, but be willing and agile enough to friendshore when you must.
This is a crucial conversation and absolutely central to so many different industries. Let me indulge in one question about UK politics, though, Dominic, given your previous role as Deputy PM and Foreign Secretary as well. Does your Conservative Party survive into the next Parliament? Should they think about a merger with Reform, given the pretty dire polling numbers?
Look, it's really a tough field at the moment. I'm going to leave those questions for Kemi Badenoch.
Do you have faith in Kemi Badenoch as leader of the Conservative Party?
Look, I'm not actively involved in politics, but you're right. It's a tough situation. I work very closely.
You're a big player, Dominic.
No, sure. I'm reborn again in my investor role. But look, I work very closely with Kemi. I think she's a formidable talent. It's a difficult time, and you're seeing this fragmentation of politics across the board. You're seeing it in Europe. You're seeing the polarization in the US and in other parts of the world. The question is who can knit a path forwards, and it's no easy challenge.
Dominic Raab, reinventing himself right here on the opening trade. Head of Global Affairs, of course, Appian Capital Advisory, giving us his take on the UK, Europe, and, of course, the rare earths conversation happening around the world. It's dominated the markets. We thank you so much for your time. Coming up on the program, Jamie Dimon has conquered Wall Street. Now the question is who will succeed him at JP Morgan. That's the focus of our Bloomberg Weekly Doc. Coming up next. Stick with us. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden, covering the ECB decision in Florence, Italy, and this is Bloomberg.
Welcome back to the opening trade. We are 48 minutes into today's session. European markets are down across the Stock 600 benchmark, down 0.2%. Bit of a brighter picture, though, in Italy. The FTSE move up 0.6 and the AIBEX up 0.5. But over in France, the UK and Germany in negative territory. Now, with a $4.6 trillion balance sheet, JP Morgan is more valuable than its three biggest rivals combined, and much of the bank's success is arguably due to its long-time leader, Jamie Dimon. But talk of a successor now has many wondering who could fill his shoes, a question Bloomberg Originals has explored this week.
The name of the game in American capitalism, especially American financial capitalism, is being big, and no one is bigger on Wall Street than JP Morgan Chase.
How big is it? With a $4.6 trillion balance sheet, it holds around 20% of all the money in the U.S. banking system. JP Morgan is more valuable than its three biggest rivals combined.
Last year, JP Morgan earned the highest profit in the history of American banking. They became the only bank to ever crack $50 billion in profit. There are a few different ways that you can measure a bank's success. You can look at profit, market value, asset size, but there's also staying power.
There is essentially no figure in the history of modern finance who has won power and kept it like Jamie Dimon.
Jamie Dimon is a great banker. I think he's been the head of JP Morgan for 17 years, something like that.
This country is a lot better off because Jamie Dimon has been running JP Morgan.
But the success of Jamie Dimon and JP Morgan casts a long shadow.
When you think about it, it's more of a question mark than an exclamation point. What is going to happen to this gigantic bank after its longtime CEO leaves? No one really knows.
You can watch the full documentary on the Bloomberg terminal, of course, Bloomberg.com. There have been plenty of suspicions of who might take his spot. He
speculation, a lot of speculation.
Yes, exactly. There's a lot of contenders. It's a big bank, as we just heard as well. But he says he's not going anywhere for a little bit, so there's some time to figure it out.
Well, the riposte has always been from Jamie that he's got another 5 years, and then every 5 years he says he has another 5 years. We met him when he was here for the JP Morgan Tech Summit. He bounced into the room full of energy, so it doesn't look like he's slowing down in any way. And they've just opened this huge and pretty impressive headquarters, of course, in New York as well. Yeah. So the ambitions there with that balance sheet and with that most profitable bank in history being notched up in 2025. What a year it's been, but clearly some very valid questions about who takes over given the scale and just the ambition and the success that Jamie Dimon has had at that bank.
Yeah, absolutely. He's also, I've got to say, in full stride in terms of making comments about where we are in this market. I feel like his latest comments around the credit cockroaches have really been one that have taken everyone by surprise. You've seen several banks, we certainly have those conversations here on the show, really address some of those concerns about whether or not this is a credit market that is healthy. This is, of course, with the backdrop of the continued fallout from First Brands and Tricolor. Take a listen to what some of the banking CEOs on this side of the Atlantic had to say.
The thing about fraud is you wonder whether it is one bad actor or it is some effect of circumstances that are stretching the company's finances and making them take risks that they otherwise should or would not do. That's the kind of thing we look for.
This was something that was deemed to be correct. So I think that there is a little bit of witch hunting and trying to compare things between one bank or the other and one strategy or the other is totally inappropriate.
Listen, we don't give any color on names on clients, but it is just one file that we have been impacted, and it is not a usual suspect.
There is nothing structurally that suggests that asset quality will be under pressure. Obviously, there are some talks about some sectors, industries. In our case, the exposure we have to non-bank financial institutions is less than 1%.
We are reducing, if anything, our exposure towards credit cards and personal loans in order to reinvest more in our wealth management.
It sounds like you're not seeing cockroaches in your portfolio.
Nothing moving right now.
All right, fine, nothing moving right now. I mean, clearly the auto sector, particularly when it comes to the subprime part of that in the US, is challenged. You've seen an increase in delinquencies, and so the question is to what extent it's just ring-fenced around that particular part of the US economy, as clearly bank executives are feeling the heat in terms of making sure that their portfolio is being scrutinized and how much exposure they may have, but credit spreads remain still tight, Kriti.
Yeah, everything's fine. Everything's fine in credit is what we keep seeming to hear. I think what's interesting, though, is that ultimately there are going to be some bad eggs here and there. That is a function of the growing activity you're seeing in the credit space. I think the bigger problem is that you are not only seeing issues in private credit, but starting to see it in public credit as well.
Well, let's get a view on that, because Goldman Sachs' CEO, David Solomon, also gave his take on the US debt burden, to Kriti's point, in an interview with David Rubenstein.
If we continue on the current course and we don't take the growth level up, there will be a reckoning in this, and the bottom line is we have to find people, to buy and finance our debt, and ultimately it's not going to be other people around the world. If it keeps growing, it's going to turn to us.
Lots of things to worry about on the horizon, from private credit to public credit. But then again, there's plenty of positivity as well, especially when it comes to the boom in AI, technology, even the possible easing of trade tensions between the United States and China. Of course, it's been another lively week when it comes to these markets. Let's get a big picture takeaway. Bloomberg's Farah El-Barahi is all over it. Farah, I don't even know where to start. I feel like we've been drinking out of a fire hose. What was the takeaway for you?
Well, Kriti, I'll start with the key theme of this week, which was earnings. Let's look at Europe quickly. You had a very strong season so far in Europe, about 60% into the season, and 5% of companies have beat, you actually see 5% growth in EPS versus analysts. They were expecting 0.4% drop at the start of the season. So a really big beat for Europe here. And over in the US, you have 13% growth. Analysts had expected something akin to 8% at the start of the season. So expectations were high, but companies are easily beating those expectations. Over in Europe, you have banks, energy, are among the sectors that are beating quite handsomely in the 70 to 80% range. But overall, Europe is seeing a pretty healthy beat rate compared to its own history. But in the US, it's actually one of the highest in 4 years, if not the highest at the moment in 4 years, both on the EPS and on the sales beat. So earnings continue to be quite healthy, and that's why even in the face of all of those risks, you're not seeing the market necessarily going off a cliff, even though there's a little bit of a wobble, especially in the US at the moment.
Yeah, but the earnings story showing that resilience. So that's at the corporate level then, Farah. What about at the macro level, and how the central bank action kind of overlays the corporate story?
Exactly. So that's where you started to see the wobble in the U.S. You have the concerns on the AI capex that nearly doubled for some of those companies, but you also have the Fed coming in and saying December is not certain. That's not what the market is expecting. And you've seen that have more of an impact on the U.S. market than in the U.S., where the ECB did hold rates, but Deutsche Bank economists are calling this a resilient pause in face of a resilient economy. Yeah. In the U.S., the Fed is potentially not cutting rates with the S&P 500 trading at 23 times earnings, price to earnings ratio, when stock 600 is trading at about 15. Yeah, so really elevated levels compared to its history there for the S&P 500.
Really fascinating dynamics that we're seeing, from course, from the macro and the micro. Bloomberg's Farah El-Barahi, we thank you so much. Tom, I think we made it. I think we made it to the end of the show. I think we're ready for the weekend. Are you dressing up for Halloween?
My kids will be. Okay. So we're going with a gothic queen for the eldest and possibly a pumpkin for the 2-year-olds. So we'll be doing trick-or-treating. I'm looking forward to, as well, USA versus Scotland at Murrayfield, 5:40 tomorrow. The USA will get trounced. They've had a good season, though. It's an important game because it leads up to the pick in December for the 2027 World Cup. So that could be a good one to watch. It's the first time they're playing in Murrayfield for a long time.
I guess the Gothic Queen and the Pumpkin will be joining you at that game. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
case you missed it on Bloomberg Brief.
The French economy is resilient, as a euro area economy. We had good surprises, and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Used to be, one would say, what's that got to do with the price of tea in China? When they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/finds treatment.
In New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Tech reassures Apple sees a blockbuster holiday season while AI powers Amazon's fastest cloud growth in years. Forging ahead in Asia, NVIDIA strikes AI deals with South Korea's biggest companies. Jensen Huang saying he also hopes to sell Blackwell chips to China. And next up in earnings, Big Oil, Exxon and Chevron on deck later this morning. So it may have been a bit of a difficult day yesterday with the indices down a percentage point or more apiece, but still green on the week. And now, look, we're back to green on the Friday. S&P futures pointed significantly higher. NASDAQ 100 futures even higher again, thanks to those tech earnings. And, of course, we get Big Oil and some stragglers for the week today as well. Let's look at the bond universe, because it does look like that bear flattening that we saw right after the FOMC decision might be reversing itself to some extent. We have the 2-year yield at 360. The 10-year yield all the way up to almost 411, and the 30-year yield at 466. So maybe the steepening trade is back in vogue. We have about 17 basis points of cuts priced in for December now. That's down from the almost 25 basis points, obviously, right before the meeting. So lots to get through today. In the meantime, let's get to some individual equity movers. Over to London now, and Kriti Gupta. Kriti.
Bonnie, good morning. We've got to start off with the big tech names. Amazon, of course, having a blockbuster morning, higher by 12%, not only beating on their estimates, but really wowing the street. The fastest growth when it comes to their cloud unit since almost 3 years. A big story, of course, for Amazon, but it's not alone. Apple also having a very good morning. It turns out some of those worries about the tariff fears around Apple, what the read-through on the iPhone would be, not permeating just yet. 2% higher on the expectation of a very happy holiday season. I want to go to another big tech story, and that, of course, is Netflix. You are seeing a big bid here. They're announcing a 10-for-1 stock split. Also, some reports that they may be considering a bid for Warner Brothers. Both shares of both Netflix and Warner Brothers Discovery higher this morning, Bonnie.
Kriti, thank you so much. Kriti Gupta there in London. And coming up this hour, we'll speak to Michael Sneed of BNP Paribas on market risks and Joel Colina of Wedbush on Amazon's and Apple's results. So let's dig deeper into those tech results now, with Amazon's cloud growth reaching the stars.
AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality, security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead.
Shares of Amazon extending its rally in double digits. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, what did analysts miss? Because this certainly was a beat.
Yeah, it was a 20% growth in their cloud business, strongest for some time, and beating expectations. You know, I think the market has been a little bit concerned that maybe Amazon's AI strategy perhaps wasn't keeping up with the pace, and that perhaps even Google and Microsoft, who are their two biggest rivals in the cloud space, were taking market share. I think what we've seen from the results is that AI strategy is more robust than perhaps people thought, and that the market in aggregate is growing more strongly than expected, so there isn't necessarily the kind of the share loss, or at least even if there is some share loss, the pie is big enough for everybody to grow at pretty good levels.
It doesn't seem like the market, at least in this case, is too concerned about spending, about AI spending, CapEx.
Yeah, that's right. I think what we're seeing here is that there's a clearer connection between the investments they're making and the revenue that's connected to that, and that revenue is coming through pretty quickly. You know, that contrasts quite significantly with what we heard from Meta earlier in the week, where they're spending big, but the incremental revenue isn't particularly so clear. And, you know, even Mark Zuckerberg being, you know, kind of fairly cavalier about, you know, we just need to invest. We're not quite sure what the revenue streams are going to be to support this, but it makes sense to invest. So I think, you know, that clarity around what the investment is going to deliver in terms of near-term revenue is being rewarded, particularly for Amazon.
Just briefly, Matt, you know, Apple initially sold off after the results, but then the call came and things look very rosy for a good holiday quarter, and also repairing the China market.
Yeah, that's right. I think people were initially a little bit spooked about the weakness in their China print. I think down about 4%, the market been looking for a stronger print, but very optimistic and upbeat commentary around the iPhone sales for the holiday quarter in aggregate. So talking about 10 to 12% sales growth in the holiday quarter for iPhone, which is half of their revenue and the platform for everything else they do. That would be up from 6% in the September quarter, and that they even said they expect to return to growth in the China market too in the holiday period. So I think the momentum behind the iPhone product set is definitely moving in the right direction. The 17 has been a success for them in terms of the latest generation.
Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Sticking with tech, NVIDIA makes its mark in South Korea.
We will build 250,000 more GPUs here in Korea, making Korea one of the largest GPU or AI infrastructure countries in the world. And then finally, it's really vital that we build the ecosystem, not just the AI infrastructure of Korea, but the ecosystem of Korea.
Joining us now from Gyeongju in South Korea, where the summit is taking place, is Bloomberg's Stephen Engel. So this was to APAC CEOs, Stephen, and it just happened in the last few hours. Jensen Huang making all sorts of partnerships.
Yeah, that's right. So they kind of teased it last night when Jensen Huang went out and had chicken and beer before all the world's cameras that are here at the APEC, along with J.Y. Lee of Samsung, the executive chairman, as well as the executive chairman of Hyundai Motor. And they sort of teased that big announcements were going to be coming today and within the last couple of hours, including just the last 20 minutes or so where he had a media scrum. Jensen Huang announced that they are going to be doing this big deal with a number of the biggest companies in South Korea, including Samsung Electronics, including the SK Group, which of course has SK Telecom and SK Hynix, and as well Hyundai Motor for some autonomous driving and some other AI-driven manufacturing. Samsung Electronics, which by the way, separately, has also been trying and not tremendously successful to build out its foundry business to rival the likes of TSMC. They are going to be working together with NVIDIA for foundry business for those HBM4 chips, but also going to essentially be building an AI factory. And again, this is all intended to kickstart AI and the AI infrastructure and projects throughout South Korea. So again, this has taken on increased impetus because of NVIDIA essentially being shut out from the China market. So South Korea obviously is a tech hub in Asia and part of the supply chain of advanced electronics. Samsung is about 50% of the Kospi index. It's a huge player, so teaming up with them makes sense.
Yeah, absolutely. Now, you mentioned China. One of the burning questions, obviously, was what happens to NVIDIA's Blackwell chips? Did we hear any more about that?
Well, yeah, of course, yesterday or 2 days ago, it was Donald Trump who essentially said those Blackwell chips, those most advanced AI accelerators, could potentially be on the table in negotiations, final stretch negotiations with Xi Jinping to secure that trade truce. It ended up not materializing. They did talk about NVIDIA products, but did not talk specifically about Blackwell. When asked about that today, Jensen Huang says, of course, he still would want to sell the most advanced chips, the Blackwell architecture, into China. You'll have to wait and see, though. Like H20, which is widely considered to be more of the watered-down version of Blackwell, was given export licenses to go into China by the U.S., but it was China that rejected it on national security concerns. Yes. But again, no doubt, with Jensen Huang saying they're in an awkward position right now because of export controls, they would want to sell Blackwell into China.
Of course. Stephen, thank you so much. That is Bloomberg's Stephen Engel there for us. Turning to pharma, Pfizer now has 4 days to make a better deal than Novo Nordisk to acquire obesity drug maker Metsera. Let's get more from Bloomberg's Ashley Furlong. Ashley, Pfizer was one of the original 7 bidders for Metsera. Why is Metsera so in demand?
If you're a drug maker today, you all need to get into obesity space. So we've seen with Pfizer, this is really critical. You know, they have sort of dropped 60% from their post-COVID highs. Albert Bourla, the CEO, is under a lot of pressure to prove to investors that they have the pipeline. Metsera was going to sort of offer them a big in into that obesity space. For Novo, what we've seen is there's concern about the pipeline of the next generation obesity drugs, and this would really help boost that. Investors are also questioning potentially if Novo might be overpaying. Already they have obviously a significant obesity pipeline, and there's concern that they might be overpaying with this enhanced bid in the effort to sort of push Pfizer out of the way.
Yeah, I mean, it's a cracking story, a cracking corporate story, because Pfizer had struck that $5 billion deal, and now it's in a position where, you know, the rug could be pulled out from under them. At this stage, who is the favorite to win?
If Pfizer is able to offer a better offer than Novo, I think analysts think that it has a fighting chance. But at the moment, Pfizer is really taking an extremely aggressive approach, sort of citing anti-competitive behavior, pointing to the fact that both Pfizer and Metsera are American companies, and, you know, sort of almost making an overture to Trump to sort of step in there. So there is, if they sort of go that route, it's less clear if they'll be able to accurately fight Novo, and if they don't actually offer a better deal.
Ashley, we will wait with bated breath. That is Ashley Furlong there. Thank you. Now to other top stories trending on the terminal this morning. Millennium Management is raising $5 billion in a new fund to invest in private market opportunities. The new venture, named Millennium Opportunities Fund, marks a shift for the firm and will mainly focus on relatively less liquid corporate and asset-backed debt. The Trump administration is pushing for a global internet free of import duties and other surcharges to maintain the U.S.'s surplus in trade in services. The government has received assurances from Malaysia, Cambodia and Thailand that they will not impose digital services taxes or discriminate against American providers of e-commerce and other online services. And China's factory activity slumped for the longest streak now in more than 9 years. That's prompting fresh calls for greater policy support. The official manufacturing PMI fell to 49 in October. Coming up, we speak to Michael Sneed of BNP Paribas on why he's staying pro-risk. That's next. This is Bloomberg.
In case you missed it on Bloomberg Tech. How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting, what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg Brief, I'm Bonnie Quinn in New York. Michael Sneed of BNP Paribas says risk-seeking behavior in this market is far from appearing extreme, though investors should expect choppier markets. He writes this: we would expect markets to place greater emphasis on the limited data from the US, which will likely result in higher volatility, not high enough to dent our pro-risk view. Michael joins us now. He's head of cross-asset and macro-quant strategy at BNP Paribas. So, Michael, I'm excited to hear what signals exactly you are seeing that would keep you pro-risk this market.
Hi, good morning. So I think what really stands out at the moment is that there's not one unique signal that's saying be pro-risk. There's a whole range of signals. So maybe let me spend a few moments and talk you through that. So one is that you could say in this backdrop where US data is kind of looking a little bit weaker, the data that we do have, that it's a little bit odd to then be pro-risk. But one of the things that we do is we can search across what's really most important for the market. And we see two key factors that are important for the risk factor. Is firstly, earnings expectations. And the secondly is the performance of credit. Now, this latter has had a little bit of a knock recently, but we continue to have a positive view here and think actually credit spreads could tighten. And on the earnings side, as we're seeing at the moment, the earnings reports are generally delivering above expectations. You're seeing earnings expectations for 2026 being revised higher, and that is supportive for risk.
At the same time, when we saw just a little bit of disappointment yesterday, the market sold off big. This wasn't just a reaction to the Fed. It was also an earnings reaction, Michael. Is that where you're seeing the volatility come in then?
Yeah, so I think there's a new dynamic that's kind of been entered after the FOMC. So going into the Fed, expectations were that the Fed would largely be delivering a rate cut at this meeting and the one in December. And the rhetoric from the Fed really kind of opens the door to kind of questioning that December rate cut. And particularly at a time where we'll now be out of the Fed blackout period, we're going to have more Fed speakers and more kind of news flow for the market to digest over the coming weeks. And so this kind of adds a bit of, two-way price action, two-way thinking about whether or not the Fed can deliver that December rate cut. We think that they will be delivering the rate cut, but what you'll likely see is kind of more volatility come to the market as you get this commentary coming from Fed officials.
So
please.
Well, I was just going to move on and talk to you about a point that BTIG was making, that on Wednesday we saw 9% of S&P 500 companies make a 52-week low, and that's the most since April. And by 52-week low, that's even lower than the April lows. And BTIG is suggesting that this is an ominous signal. So in spite of what you're seeing, there are also other signals out there that are ominous, no?
So I think this really comes down to the kind of bifurcation of the global economy. You have sectors that are doing very well, so particularly AI-related sectors that are having this kind of investment into the sector. But then you're also having other kind of more classic industries which are facing a backdrop of slightly subdued economic activity, more struggles with consumer confidence, and a slightly soft labor market. In aggregate, however, when we think about kind of market cap weighted stock indices, we think that these can continue to rise. And I'd say there's kind of three reasons behind this briefly. So one is investor sentiment is not really appearing stretched at the moment. The second is positioning actually looks quite moderate. And the third is actually aggregate kind of valuations for the stock indices. Stock indices like the S&P, while it's kind of continues to push all-time highs, does actually look slightly cheap on our short-term valuation measures.
Well, to this market then, giving out those signals, does it matter that we're in day 31 of a US government shutdown and it looks very likely will continue into November, and that those SNAP payments, those $8 billion, won't go out to all those families in need?
So again, that kind of adds to this bifurcation theme of the market, that you have the market focusing on the kind of aggregate indicators and trading stocks and bonds off those. But at a disaggregated level, you're right, Bonnie, there are stories of sectors, parts of the economy, individuals that are doing well, sectors, part of the economies that are seeing more of that challenge.
So, Michael, when it comes to the bond universe then, are we back into looking at a curve steepening trade? Is that back in vogue? Matt Hornback of Morgan Stanley sticking with it, even while some others moved away from it. And indeed, we did see some bear flattening after the FOMC meeting.
So we think we could see steepening from here. We generally see that duration does look a little bit vulnerable here, really as a hangover from the fact that duration has been a good trade throughout most of October. If we do continue to see a pro-risk backdrop, that is likely to be leading to duration partly selling off as you get a rotation out of bonds and into equities. So we'll probably still see within the ranges that we've had this year, but we could see some duration weakness over the coming weeks.
What about the trend that we've been seeing in gold? We're back above 4,000 today, though, just barely. And I wonder what your signals have been telling you as to whether it was a safe haven play or, you know, maybe central banks are buying the dip that we saw in the last few days again?
So in our framework, where we focus a lot on valuations and positioning, this had been really flagging earlier in October that valuations were very stretched and positioning was very crowded. We've seen that the retracement of gold basically brings us back in line with the fair value that you would expect based on where things like real yields and the dollar and inflation expectations are trading. We think going forward, this is likely to give an opportunity for gold to form a bit of a base and then to reattract those buyers that see gold because of its favor gold because of its safe haven status and also those central bank buying flows.
You know, I'm looking at the MOVE index, Michael, and it's down to, I mean, multi-year lows. We have a VIX at about 16. Are they appropriate levels?
So this is where we think the vol could start to rise, particularly as you get the market focusing more on the limited data that we have from the US against the context of the FOMC speakers that we'll likely have over the coming weeks. And then as we hopefully move to a period where the US can exit its government shutdown, then that would likely be a slightly vol-inducing event as the market prices in that we'll be getting more news flow.
All right. I guess something to look forward to maybe for the rest of the year. Michael, thank you so much for joining us today. That is Michael Sneed of BNP Paribas. Coming up, a look at what else is making your headlines in your front page news. That's next. This is Bloomberg.
case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Power, money, culture. Linda Almond tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
Bloomberg Brief, I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting the Trump administration is considering striking targets inside Venezuela, including military facilities it's identified that are used to smuggle drugs. The escalation would pressure President Nicolas Maduro to step down. Sources telling the Journal no final decision has been made. Next up, the Washington Post reporting classified reporting by the State Department's watchdog found that Israeli military units committed, quote, many hundreds of potential violations of U.S. human rights law in the Gaza Strip. U.S. officials telling the Post the report's findings would take the State Department multiple years to review. And on the front page of the New York Times, the Trump administration yesterday staunchly defending its decision to stop paying food stamps during the government shutdown. It argued it could not tap a tranche of available funds to provide aid to millions of poor Americans in November. The Times reports the judge appeared frustrated and confounded at times and promised to rule soon on a lawsuit filed by roughly 24 states. And that's where we are on this day 31 of a government shutdown. But it is earnings the market is focused on, and in particular Apple and Amazon after the bell yesterday. And as you can see, we have futures pointed higher, a dollar index that is not really doing much, and a 10-year yield that is quite happy to hang out, having made that move after the FOMC. So we're about 10 basis points higher for the long end in particular of the curve, that curve steepening trade back in vogue. Coming up, NVIDIA's landmark AI deals. CEO Jensen Huang announcing big partnerships at the APEC CEO Summit. We'll have more on that next. This is Bloomberg.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency, and also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the marginal fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Tech reassures Apple sees a blockbuster holiday season while AI powers Amazon's fastest cloud growth in years. Forging ahead in Asia, NVIDIA strikes AI deals with South Korea's biggest companies. Jensen Huang says he also hopes to sell Blackwell chips to China. And next up in earnings, big oil, Exxon and Chevron on deck later this morning. So let's take a look at those futures because they are pointed firmly higher, particularly those NASDAQ 100 futures after a down day yesterday. That index was down 1.5%. Both indexes, though, still very much in the green for the week, even before today. We'll see how Apple and Amazon earnings lift market spirits. Now, I do want to point to the fact that this is day 31 of the U.S. government shutdown. In 5 days, it's going to be the longest shutdown in history. SNAP benefits will not be deployed in November, as far as we can tell right now. That's $8 billion worth not going out. And RBC saying today the full impact could actually be bigger than initially expected, especially if this drags through December. In fact, it could drag perhaps as much as 3 percentage points off Q4 GDP in that case. Looking at bonds, we are seeing that curve steepening again and a bit of a pricing out of a full cut in December. So we have about 17 basis points of easing priced in now for December. That 10-year yield just above 410. Let's get to some individual movers now. Over to London and Kriti Gupta. Kriti.
Good morning, Bonnie. Let's start with the tech space. You hit it there. It's an earnings story that continues to power these shares higher. Amazon higher by 12.5% this morning. Not only did they beat their estimates when it comes to their cloud division, but they also beat it by their best and strongest growth in almost 3 years. So the shares really being rewarded. You know, going into it, there were some questions about the sustainability of that growth. Amazon shares, of course, higher by 12.5%. It's not the only tech story on the move. Apple, of course, very much in focus as well. Those shares higher by almost 2%. It's not necessarily their China reemergence that's getting investors excited. It has more to do with a very happy holiday season that they are pledging. They're expecting iPhone sales to go off the shelves. Those shares higher by 2% on that sales forecast. And lastly, let's talk about Netflix here because, of course, they came out talking about a 10-for-1 stock split, really to benefit some of their employees that are holders of those shares. There's also some reports, especially from Reuters, coming out that they may be entertaining a potential bid for Warner Brothers Discovery, which of course is up for sale. Both Netflix and Warner Brothers up by about 3%, Bonnie.
All right, Kriti, thank you so much. That is Kriti Gupta there. So let's stay with those tech results. Amazon's cloud unit posting its strongest growth rate since 2022.
AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality, security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead.
Shares of Amazon, as you can see, up more than 12% in the pre-market. Joining us now is Joel Kulina, Managing Director of Tech, Media and Telecom Trading at Wedbush. Joel, is this just luck on the part of Amazon? Nobody seems to expect this kind of growth, and yet AWS came through again when Amazon most needed it.
Yeah, and good morning. Thanks for having me. Yeah, you heard a little clip there. Jassy sounded great on the call, and not even arguably, almost by landslide. Amazon was by far the most debated amongst the top 5 coming into the CPS cycle. Stock was down 4 to 5 weeks, was up low single digits for the year, and there just was a lot of concern that AWS was losing market share and mind share when it comes to AI workloads. And I think the AWS reacceleration last night kind of just is refuting that narrative, and it's sort of game on for Jassy and company. And again, positioning was very lean here, which you haven't been able to say that in the past kind of 4 to 5 quarters. And so the setup was great. Stock's breaking out above 240, and I struggle to see why the stock doesn't work from here. Clearly, I think this move was an element of catch-up as well, just giving its massive underperformance of late.
Yeah, for sure. Is this sustainable over the coming quarters, Joel?
Yeah, I mean, if you take Jassy for what he's saying, it sounds like it is. They're investing CapEx in the right areas. I think they added about 3.8 gigawatts of capacity as well to handle the AI inference and workloads. So they are, again, they got their game back on track. And to me, when the narrative shifts positively and people have been underweight, especially amongst the global long-only community, it tends to work for at least the near medium term, which means, for me, 2 to 3 months.
What should Amazon do with its extra cash at this point, Joel? Is there a part of the business that it should be investing in?
Right now, it's all about AWS and AI. That's what's moving the needle in the stock price. That's what investors and shareholders want to see. Thankfully, other parts of the business are performing well. Online retail and advertising performed very robustly as well in the quarter. But again, people want to see the money in CapEx going back into the AI side of the business, and that's what's going to move the needle for the stock and obviously drive the multiple higher.
All right, let's move to Apple, because that was another interesting one that I'm not sure the street was expecting. You say that, for the first time in a long time, actually, there's a bullish narrative now around Apple, and it's deserved. Is that all because of the iPhone? It's finally selling again?
I think it's definitely a big part of this narrative, and I say that sort of tongue in cheek. But before the iPhone 17 launched, 6, 7 weeks ago, Apple was just left for dead. Nobody wanted to talk about it. Never came up in conversations. But then checks started coming out. They've been improving, and now you can kind of look into 26 as well. And you have 3 product cycles. You have the Vision Pro 2 is going to launch, the next foldable iPhone as well, and we'll see what they do in terms of advanced Siri when we get kind of hopefully more granularity and color around that next spring. But again, there's actually stuff to talk about here with Apple, which is kind of sexy again. And right now, AI has been priced at 0 in the stock, so I view that as a call option. And again, nobody owns it. And to me, that's the top of the bull case right there. It's the least owned name amongst the mega cap tech by a mile.
Yeah, it's only up 8%. I say only, and in another year, 8% would be great, right? But this year, 8% may not be so good. That's before today's move, I should add. So just in general, for the TMT outlook, Joel, you got your eye across all of these stocks. Have we seen a good quarter? Are you bullish going into coming quarters about these types of stocks?
Yeah, I think tech it's a little bit more bifurcated and a lot more dispersion under the hood. I think tech investors have clearly made their bets. You have your AI winner bucket and then your AI losers. And what we do know about tech investors historically, if you're a perceived loser, your multiple is going to get hammered. And that's what we're seeing. We've been seeing in the large cap software space, where names say like Duolingo or kind of Salesforce has been languishing at the bottom. Names like SAP, Adobe, Figma, and then even going to internet, Instacart, Trade Desk. There is just no appetite to really invest any stories with hair on it. So that to me is the biggest kind of talking point point in tech right now. Stick with your horses that have gotten you here. And again, there's just really the classic buyers are higher, just not seeing any willingness to kind of step in to catch falling knives. IT services, jumps out in that bucket as well, with given their exposure to federal and Doge and whatnot. So stick with your winners, yeah.
Then I have to ask about Netflix. I don't know if you're comfortable talking about it, but we're going to get this stock split. It's done pretty well, up 22% year to date. And now it might actually be looking at bidding for that studio. I mean, is that a good idea?
Yeah, I mean, it was kind of kicked around on their call. It wasn't completely dismissed that they would take a look at Warner Brothers, so I don't think this will throw too many people, off guard. And the 10-for-1 split, historically, retail loves it. Psychology, for whatever reason, it really doesn't make a difference, but it always tends to have a positive impact on share price. To me, Netflix is a little bit of an unexciting story right now. We know they're the king of streaming. They still have a very robust content slate ahead. But again, looking at their last print, there just really wasn't anything in there to get too excited about. So I don't think M&A hurts the near-term narrative. But again, I don't think it's major consolidation. I don't think it's what investors want to see either. Just given it's a lot of money, a lot of uncertainty. So we'll see how kind of this plays out.
Joel, thank you so much for orienting us today in this environment after all of those earnings reports yesterday. That's Joel Colina of Wedbush Securities. U.S. oil majors ExxonMobil and Chevron reporting today, both expected to press ahead with plans to accelerate production growth despite weak crude prices and higher supplies from OPEC and its allies. For more, joining us now is Vincent Piazza, senior analyst at Bloomberg Intelligence. So Vince, two companies, two different trajectories. How should investors be thinking about the results and particularly their outlooks?
Good morning, Bonnie. Thanks for having me on again. So I think for Exxon in 3Q, there's a bit more clarity with results. So the downstream margins for the energy products, chemical products, specialty products, margins will probably add about another $1 billion of incremental profit there relative to the prior quarter. But that'll all get diluted from upstream prices and also restructuring costs. Maintenance costs and restructuring costs, which will probably add up in total to somewhere around $1.3 billion. But what's interesting is free cash flow should really spike up in 3Q, somewhere north of $8.5 billion. We should get some clarity on the buybacks and the dividend strategy. We have clarity through 2030, really, for Exxon. Their plans are to spend roughly $20 billion on buybacks per year. CapEx somewhere between 28 and 33 billion per year out to 2030, and obviously the production cadence, as you mentioned, roughly 4.7 million barrels per day in 3Q, and that should run closer to 5.4 million in 2030 by 2030. For Chevron, though, Bonnie, different trajectory. We don't expect a great deal of insight about forward outlook or spending or distributions on the 3Q call, because on November 12th, they'll offer their broader views at their investor day. What we do know is you'll likely see a little bit of noise in 3Q because Hess closed on July 18th. So roughly half of the cash outflows for severance and also for other transaction-related costs, roughly about $400 million. That'll likely hit for 3Q. But for the longer-term trajectory, we will get some additional insight on the November 12th call, so I wouldn't hold your breath on anything major coming out.
Yeah, and it's a bit of a caretaker quarter as well for them, as you say. So the results, what about the upstream space? Will they give us any takeaways, do you think, Vince?
Yes, absolutely. I think they are the telltale for what's happening in the U.S. Upstream. Obviously, most of the group will be hit with pricing issues because benchmarks, WTI, are relatively off year to date. Also, nat gas had a pretty tough go of it for a while, but that seems to be rallying back ahead of the winter season. So it's really tough for these guys to grow production overall when you're sitting here below 60 on WTI, with investors calling for shareholder distributions in terms of dividends and in terms of share buybacks. So for the most part, we're looking for capital discipline more broadly and the return of excess cash.
All right, Vince, thank you so much. Looking forward to those results. That is Vincent Piazza of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Millennium Management is raising $5 billion in a new fund to invest in private market opportunities. The new venture, named Millennium Opportunities Fund, marks a shift for the firm and will mainly focus on relatively less liquid corporate and asset-backed debt. Pfizer has 4 business days to offer a better deal than Novo Nordisk's bid for Metsera, or walkaway. Novo Nordisk is offering at least $6.5 billion to Metsera shareholders, with the possibility of the price rising to $9 billion if certain targets are met. And China's factory activity slumped for the longest streak now in more than 9 years. That's prompting fresh calls for greater policy support. The official manufacturing PMI fell to 49 in October. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin. New 2-hour programming beginning November 3rd. Only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, I'll still be driving some.
Yeah. Probably very fast.
Yeah. This is so exciting!
This season, we're along for the ride.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. What President Milei's victory in Argentina means for investors and for the United States. And the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
We will build 250,000 more GPUs here in Korea, making Korea one of the largest GPU or AI infrastructure countries in the world. And then finally, it's really vital that we build the ecosystem, not just the AI infrastructure of Korea, but the ecosystem of Korea.
NVIDIA forging AI deals with South Korea's biggest for Samsung, Hyundai, and SK. Back with us for more now is Matt Bloxham of Bloomberg Intelligence. What are these deals made of, Matt? What are the details?
Yeah, they're kind of bilateral deals. I mean, obviously, Samsung is an important memory chip provider into the NVIDIA GPU system, so it's kind of extending that partnership, but it's also kind of reversing back into Samsung as well, and them building out their own AI capabilities for their business, which will, not surprisingly, rely heavily on NVIDIA chips. So, kind of an element of circularity there, but, kind of a mutually beneficial beneficial partnership moving on to the next stage. It's a similar situation with Hyundai too, and I think what we're seeing here from NVIDIA is a very smart strategy that would still, given the relatively early stages of the AI future, and they are embedding themselves into as many industries as they can, because I think if you're an early technology provider, then it becomes very difficult for companies to kind of unpick and unwind those relationships to bring in other technology. And as we know, there's lots of other players, both from the US and from China, developing rival AI accelerators. So it's important that they kind of develop those strong partnerships at an early stage to minimize the market share threat further down the line.
Yeah, it is fascinating. I mean, is Jensen Huang able to do this with restrictions? So, for example, are these more than just gentlemen's agreements, so-called? Are they, binding?
Yeah, I mean, these look, I mean, at least on the face of it, beyond just kind of gentlemen's agreements, these are clearly kind of binding partnerships to work with each other. So definitely stronger than, just kind of verbal agreements. These are strong statements of intent.
And as you say, switching costs down the road might be, extraordinary, so that might never happen. Just very briefly, the Blackwell chip, do we have any update on whether that might be actually going to China or not anymore?
No, we're still waiting on that. Obviously, Donald Trump gave a kind of tantalizing kind of glimpse of what might happen, but from Jensen Huang saying that there's no kind of news on that, but that he would like to sell those chips into the China market, and that all of the kind of guidance and optimism they've given excludes that. So still very much positioning as China as a bonus on top of what's already quite a rosy outlook, at least for the next year or so.
All right, Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence there. Chinese President Xi Jinping and Japanese Prime Minister Sanae Takaichi wrapped up talks at the APEC summit that span from trade to security. For more on the implications for the U.S., Bloomberg's John Harney joins us now from Washington. So, John, what do we know about the premiers Xi and Sanae Takaichi meeting just in the last few hours, and what they agreed upon?
Well, this is their first meeting since she became prime minister. It shows a few things. Most important, that even though she had a apparently successful meeting with Donald Trump and his very recent visit to Asia, Japan must strike a balancing act. While the United States still, after all these decades, provides security guarantees to Japan, China is Japan's largest trading partner. So they really have to have the best relations they can with both superpowers.
Yeah, absolutely, and such a winding relationship, that one. Moving to this U.S.-led digital economy that President Trump is pushing for, he wants, an internet that's free of tariffs, and he's got some countries to agree in Southeast Asia. It's not going to go too well with the Europeans, though.
Probably not. I mean, there's certainly like a lot of the president's. The president's initiatives, the president's ideas. There's much fine, or not even fine print. There's more like ideas and actual policy. So, like much else of what he says, we'll have to see how this turns out.
John, just briefly on the government shutdown, we're into day 31 now. I believe 35 was the longest ever, so we're very close to the longest ever shutdown. What do we know about whether troops are going to get paid, and whether those SNAP payments are going to go out from tomorrow onwards?
Yeah, that's right. I mean, tomorrow, for the first time, people who have in the SNAP program, are also known as food stamps, will be unable to get benefits, and many government employees are still not being paid now. For the military, apparently there will be funds to at least this pay period. They'll get their paychecks, but no solution is in the offing, and for a very good reason. The House is still out. Speaker Mike Johnson said that he saw no reason to bring his members back because they approved the so-called continuing resolution, a short-term funding measure, which, by the way, expires November 17th. So even if they came up with a solution today, they'd be back again in about 2.5 weeks. And the Senate is gone too for the long Halloween weekend.
Yeah, and President Trump's latest idea that we just saw there is that the GOP should ditch the filibuster over this shutdown stalemate. We'll continue to follow. John, thank you so much, Bloomberg's John Harney. And coming up, we're going to get you set up for your trading day. We'll have Fed Speak, of all things, and earnings. This is Bloomberg.
In case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the lovely
Coffee
Tara.
coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Exxon and Chevron reporting earnings before the bell. Plus, we're going to get lots of Fed speak. We'll hear from Laurie Logan, Beth Hammack, and Raphael Bostic throughout the day. And I'm very invested in this one. On Sunday, we turn the clocks back an hour in the U.S. Daylight savings coming to an end. So make sure you make those clocks say 5 o'clock on Monday morning. All right, let's take a look at some pre-market movers. Amazon's cloud unit posted the fastest growth in 3 years on that AI push. So obviously you can see investors are rewarding that stock. Also Western Digital extending gains after it gave an upbeat forecast. And then Coinbase up more than 4.6% now. Third quarter revenue beat estimates. Bitcoin also higher this morning. And of course that stock was down 5.7% in yesterday's session. So it's just making up for those losses. Let's take a look at the macro climate because we had a down day yesterday. It doesn't look like it's going to be a down day today with NASDAQ 100 futures pointed very much higher. They are off their highs of the morning though. You wouldn't think there was much going on, but the yen is above 154 today, and we're also seeing the Canadian dollar above 140. So quite the move in several different currencies, but not so much the index itself. And then that move that we saw after the FOMC has held. We are higher on the 10-year yield. That is it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the budgeting fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Earnings growth is driving S&P performance, and you want to be where the earnings growth is.
It's hard for us to kind of see a downside catalyst.
The downside risks here is AI is, I maintain it's a bubble.
The market's starting to get a little bit worried.
The market seems pretty happy to whistle by that cemetery, as they say, and until then, markets are going to rally.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Happy Friday. Happy Halloween. Big tech is beating away the bubble fears, at least for now, with Amazon shares surging as its cloud revenues grow at the fastest rate since 2022. Corporate results mostly hurtling past a high bar and setting stocks to new record highs. Yet concern is rising over a government shutdown that keeps dragging on, threatening to become the longest in history and keeping us in the dark about any kind of real-time economic data.
For now, that concern, though, is just playing out on can you get home for the weekend if you're a senator, representative. For the markets, it's so much event risk that we've digested, but here we are on track for a third consecutive week of gains. It is the tech story that is winning out. As Nomura put it, maybe we're getting away from a macro-driven market, and instead it's a melt-up, and Joy, the AI bubble is not here, at least not yet.
Well, yeah, Joy, the AI bubble, if it is here, is still inflating, and everybody can welcome it and pile in afterwards. Part of the reason why is because people were worried about spending plans. And what you see is CapEx coming in above expectations, the expectation for next year even further above, but for the most part, with the exception of Meta, the revenues are growing at a similar pace. So this seems to edify the idea that demand is still outstripping supply, giving backing to some of these companies to continue with their spending
And that's
plans.
exactly what Microsoft said, right? That still there is an imbalance between the two. The Meta example, though, is so interesting because the market isn't saying you can spend money at any cost. They are saying it needs to be backed up with revenue. But the nuance in there, the bond market was okay with it. It completely took on the new supply coming from Meta. It was the stock market that wasn't okay with it.
Yeah, yesterday we did see that $30 billion bond sale coming out from Meta, and we did see the bond market respond with spreads widening 2 basis points in the investment grade market. I am curious, though, how different it would be if we were getting some of the real-time indicators. Today we should be getting personal income, personal spending, and core PCE, a key metric the Fed should be looking at to understand whether or not it should cut rates again, which, of course, we don't really understand the reaction function because it's not clear there is one right now. But I am curious how much a lot of the tech spending is filling a vacuum that otherwise could be offset by some of this other data that would be coming out of Washington.
So much has been made that the tech spending is contributing to economic growth, but maybe people are looking to Chair Powell, who in his press conference seemed confident that even if they don't have data coming before December, that they can use alternative data and the beige book. To him, that was enough to prove or disprove that they need to cut or not cut. cut.
He seemed like the father in a car, in a fog, on the street, and the kid in the backseat saying, could you just press the gas a little bit because you know where you're going? And he's like, no, it's foggy. Cut it out. Right now, we're looking at markets that seem to be really building on gains. As Danny said, a third weekly gain that we're poised to see, led by the tech sector. S&P futures up 0.6%. You are seeing just a little bit more dollar weakness. And that 10-year yield, really watch this space, especially after Fed Chair Jay Powell pushed off the potential for a guaranteed December rate cut at that 4.10 level. Coming up this hour, Peter Shear of Academy Securities as the equity rally looks to get back on track. Dan Ives of Wedbush Securities on the big week for big tech, and Dan Stuyven of Goldman Sachs breaking down earnings from the oil giants. We get Chevron and Exxon later this hour. We begin this hour with stocks rising after a slate of upbeat earnings from big tech. Peter Shear of Academy Securities writing this: the lack of breadth has been a concern again recently, but big tech has provided earnings that warranted that. Peter joins us now, and Peter, are you going to provide us with one of these puns, bad breath, etc.? I mean, how many of those do we have every day?
No, I'm sticking to one major theme, which is production for security, or ProSec, and that's kind of our main investment philosophy right now, is look for things that the government's going to get involved with and really rethinking this kind of production for security. I think it's the new ESG. This is going to be a multi-year trend where countries, corporations, governments, asset managers all think about what we need to be truly sustainable.
So this is the reason why, and some investors have welcomed a lot of the CapEx spend that we've seen from the big tech players, from some of the other energy-intensive industrial companies. At what point is there enough money already sloshing around the system to finance this without being diverted away from other efforts?
Right now, I think there's a ton of money. I think you've got private credit looking to put money into this. Banks are all very flush. The banks are doing very well, so I think the banks are looking to lend to this. And I really think the growth story is going to be, how do we keep our energy production, or electron production, or electricity production, however you want to phrase it, to keep up with this demand. So I think there's just going to be an immense amount of growth as we look at rare earths and critical minerals, not just the rare earths and critical minerals, but the process and refine. These are going to be important parts of it. Then I think it's ultimately, can we build enough electricity production to keep up with what we're going to do? And that's going to be the growth story. It's going to be a big commodity push, right? We're going to have to build all these things out in conjunction if we want to win the AI race.
But when you have both a huge amount of capital supply and demand for that capital, typically that's kind of the environment where things get papered over because there's so much money being put to work and the need for it. Are you concerned that there are places in the margin where we go too far?
I think it's at the margin, though, right now, right? There's probably going to be, I think, I would be cautious if I'm investing in someone who doesn't get good deal flow. I think the people who have good deal flow have plenty of opportunities. I think, you're just seeing this investment. It's real. But again, that's why I'm kind of really much more focused on, okay, what are going to be the underlying building blocks of this? There I have less concerns about whether there's a bubble or not in valuations, right? That Dan Ives can speak to later. I think he's still probably fairly bullish. You can understand why. But for me, I'm looking, okay, what is the core that we need to really make this, to really compete? We're way behind China in terms of electricity production. Clearly, the rare earths and critical minerals, the refined versions of those, was a huge sticking point during all these trade negotiations. I think we're just going to explode on that front, and that's where my efforts are. You look at the things we're doing in nuclear. I think nuclear is going to be a big part of this, and I do think eventually the president's going to give up on solar, and you're going to see solar become part of the equation and really get growth there. And everything we're doing, I think the rest of the world should be copying.
Can we catch up? I mean, it's an immense push and a lot of money being put behind it, but we're starting, to your point, from such a place of being behind.
I don't know whether we can catch up. I know if we don't start or do anything about it, we won't catch up. So at least now you're seeing the building blocks put in place. The Department of Energy has 70 nuclear projects listed. Only one supposedly has all the regulatory approval. You did see the U.S. government take steps to allow small nuclear reactors on military bases, right? The government has a lot more control over federal land. So I think we're just starting to see this whole process. And when I think about kind of this replacement of ESG and this production for security, I'm thinking everyone's going back and saying, if I want to be truly sustainable, what do I need to make myself? I need to make some things myself to be truly sustainable. Then I can work with my close allies and neighbors and friends to get some other it. And then sure, I can buy some percentage of that on the open market from whoever. But I think we're looking at it this way. I think the government's looking at it this way. I think corporations are going to look at their supply chain. So I think we kind of got away from what it is to be truly sustainable. To be sustainable, you actually have to be in control of certain things. And I think that's also going to apply. We're looking much more at South America, the opportunities there. So I think the Monroe Doctrine, always been talked about, not much has been done. I think we're seeing that. So that's where I'm kind of looking at the investment landscape away from the AI, the data centers. Who's going to benefit? It's going to be South America, and it's going to be this production for security.
So I just want to point out that ProSec is something that you've trademarked, and you hope that we all use at some point in terms of
you got to try something,
a trading theme, and that is a longer-term theme that you have been talking about before all the rest of us were. So kudos to you. If you just take a look at this week, and this really goes to what spending is the right kind of spending that should be rewarded, and what is the spending that shouldn't. This week we saw massive capex from the likes of Microsoft and Amazon and Meta and Google. And there's this question about whether this is sustainable and whether it is going to the right types of areas that either go with your ProSec theme or that just in general go with the AI and exactly what form it will manifest in. From your perspective, is this the right kind of spending?
Again, it's very hard, right? One company yesterday, Meta, clearly went down 10% on the stock on spending, and today now you have Amazon going up 10%. So clearly everyone's trying to figure out where we are in that cycle. And that, to me, is where it gets a little bit dangerous, right? Maybe we go up another 30, 40% from here. Maybe we drop 10, 20%, just as people try and figure that out. That's why I'm kind of trying to deviate away from that and away from the big high flyers, away from the momentum, into these other areas where there's less pressure. Again, look at energy. I think energy is going to be a huge part of this. Most hedge funds, my understanding is, are underweight energy. You don't see a lot of bullishness there. That to me is like, okay, I would rather be there. Maybe I don't have the same upside as some of the big AI providers. On the other hand, I don't think I have the downside, and I think we benefit from whichever one of those scenarios wins. We benefit if we're in that space.
It also has the benefit of removing from the backdrop of the murky mess that is the U.S. economy, of trying to understand the K-shape and exactly what's happening with some of this investment and what it means or what it doesn't mean for employment. So I just wonder from your perspective what you expect in terms of how much your call is dependent on an economy that does keep chugging along, on a Fed that does keep cutting rates, on a backdrop that is as benign as so many people seem to think it is.
So, we've been talking a little bit about the little I-shaped economy where there's a little dot that's doing phenomenal well. The stick, I don't know how bad it's doing. I know there's a lot of talk about the K-shaped economy. I do think there's some weakness. I'm not comfortable with the job situation. I think the job market's still been overstated. Having said that, I really do like this push towards this production domestically, working with some of our allies. We're starting to take tariffs off of things like avocados, bananas, things that we just don't have here anyway. So I think you're seeing some rationality flow into all of this that lets us grow. And I think the one thing that's underestimated in the big, beautiful bill is the accelerated depreciation, right? If you get lower rates and you start seeing this move, and again, I think the best thing about capitalism is money flows to where there's opportunity. And I think some of the things I've been describing, whether it's in the chip sector, whether it's the data center AI sector, whether it's space, money is going to start going there. You're seeing things rewarded. Like miners have been like left in the dust or the dirt for ages. All of a sudden, they're becoming exciting. Yeah, sorry about the pun, but it's. But I do think that's where capital is going, and you're going to see ETFs built on this sort of concept. Money will flow there, and that will allow the growth to occur, and that's where you're going to see the real development.
The growth, though, again, is occurring in such a specific place that you're talking about. This gets back to Lisa's original question. Are we witnessing something that looks incredibly regressive?
No, I'm going to push back a little bit on that. I think the growth is occurring on things where we realize we ceded these things to China, who is not our friend, not our ally, is a long way away from us, and we have to go back. What do we need to make, either domestically or nearshored, to make sure that we're safe, that we can sustain ourselves for periods of times if we have a friction with China?
Does that help the I part of, the stick part of the I?
I think it does. I think it does really help the stick part, because then we're going to be building these things out, and let's say a nuclear plant, right? Okay, it's going to take 7 to 10 years probably to be online for a big one. Maybe a small one can get on in 5 years. There is going to be a ton of construction around that, right? So the amount of construction jobs, right? And if we're going to do this construction, we're going to need steel, we're going to need aluminum, we're going to need concrete. So I think the job creation in and around that build out is the part. So it's going to be years before we have a full electricity grid that we need, but just trying to get there. And again, don't forget, the U.S. government already took a stake. I don't know exactly what it looks like in U.S. Steel. The government is going to be involved in kind of what we're looking at as kind of national champions. I think they're figuring out who they can work with to progress this. You're seeing the regulatory environment change. So that's where the jobs, that's where I think the stick does better. And so I think the stick has kind of been left behind. Maybe we're still going to be left behind the data center. But if that stick can...
The dot.
The dot is doing phenomenal.
Okay.
But I think the stick is moving in the right direction.
Peter Scheer of Academy Securities, who trademarked ProSec. Thank you. Always wonderful to start the day with you. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa.
Amazon shares are rising nearly 13% in the pre-market after earnings. The tech giant reported $33 billion in revenue from its AWS unit, a 20% jump from the year prior and its biggest year-over-year increase since 2022. CEO Andy Jassy praising the impact AI's had on Amazon's business, saying, "We have momentum." Meanwhile, Apple shares also getting a lift, up 1.8% in the pre-market. The company shared it anticipates a blockbuster holiday season led by demand for its newest iPhones. Apple also reported a surprise decline in China sales due to supply constraints, but says it expects to return to growth in the market. CEO Tim Cook saying store traffic is up significantly in China. And Vice President J.D. Vance is warning a prolonged U.S. government shutdown will impact travel during the holiday season, telling reporters it could be a disaster if the shutdown extends into the Thanksgiving travel season. The comments come after Vance held a roundtable with the CEOs of United and American Airlines. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, de-risking from China.
We do not want to decouple from China. We need to de-risk. My guess is a year from now, we'll be back at the table and we'll get another delay, another roll.
So what is decoupling and what is de-risking? Ed Mills of Raymond James will explain all. This is Bloomberg Surveillance.
To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Bloomberg Brief.
The French economy is resilient, as the euro area economy. We had good surprises, and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Setting up for a third straight week of gains, as you do see some sort of legitimacy put into some of the concerns about the AI bubble. When you take a look at why, you can see what kind of CapEx plans these companies have. We didn't put Apple in here because they don't have the same type of AI-related CapEx. But Danny, when you take a look at the numbers on the screen, when you take a look at a 75% increase year over year in Q3 CapEx from Microsoft at $35 billion, $34 billion for Amazon, $19.4 billion for Meta, and $24 billion for Google. Just the scope of money going into this is absolutely shocking.
They've basically doubled CapEx in 1.5 years, and it underscores just how much these tech giants have changed. This was a sector that was usually loved for its free cash flow and limited exposure to things that depreciate. That's completely been flipped on its head, and they're tapping the debt markets too. So they're becoming increasingly indebted. It's a completely different model for evaluating these companies.
Particularly particularly for Meta. And when you take a look at the expense plans for next year, it continues to increase at a similar pace. Meanwhile, ongoing spending is expected more broadly as the United States tries to move away from its dependency on China, on the rest of the world for some critical minerals. Under surveillance this morning, de-risking from China.
We do not want to decouple from China. We need to de-risk. My guess is a year from now we'll be back at the table, and we'll get another delay, another roll, because what everyone misses is the Chinese have rare earths, but we have President Trump's threat on tariffs. He gave the team maximum negotiating leverage.
Here's the latest. U.S. and China tensions are de-escalating after striking a year-long truce on tariffs and rare earth export curbs. The two countries continuing a push to reduce dependence on each other. Bloomberg's Tyler Kendall joins us now from Seoul. Tyler, a really tricky dance here. Yes, a sort of a truce of some sort in the near term, but really accelerating the push on the back end for each country to move away from one another.
Yeah, hey, Lisa, good morning. You're exactly right. While the trade truce is intact for now, it really doesn't address those more fundamental issues that contributed to the standoff between the U.S. and China in the first place, including national security, the persistent trade imbalances, but of course also what you're alluding to here, which is this jockeying for dominance when it comes to the tech sector. Now, we did hear from Chinese President Xi Jinping today for the first time since his meeting with President Trump, and he struck this positive tone when he addressed the APEC Leader Summit here in South Korea. He called on countries not to threaten global supply chains, saying that instead they should be working together. But of course, it is worth noting that China's now delayed export curbs on critical and rare earth minerals had the potential to disrupt supply chains, not just in the U.S., but globally as well. Plus, these curbs, Lisa, are technically still in place. They are still rather in the pipeline. They still could be coming down the road a year later. Plus, there are old curbs that are still in place, have been at this point for years, and many businesses note that the Chinese export licensing system is really opaque. So that's led our analysts at Bloomberg Economics to say that even after these talks, China really does maintain its grip on the global critical minerals supply chain. But of course, that led the White House during this trip to try to strike those cooperation pacts with countries like Japan, like South Korea, in these essential sectors like rare earths and like shipbuilding. But Lisa, I did want to point out that while President Trump is in Washington, here in South Korea today, the Chinese leader did hold some pretty high-profile meetings, including with Japan's Prime Minister, but also with the Canadian Prime Minister, Mark Carney, too, saying that they're going to start re-talking about trade, all in a bid as both countries try to bolster their leverage, even as we have just gotten this most recent trade truce.
Bloomberg's Tyler Kendall, great work. Thank you so much. Also some discussion with respect to NVIDIA speaking in South Korea about potentially restarting Blackwell sales into China. At least that is Jensen Huang's goal going forward. Joining us now is Ed Mills of Raymond James. Ed, I just wonder your takeaway about how the geopolitical chips are falling after this Xi Jinping-Donald Trump meeting.
I think they're basically where we would expect them to be, which is getting a de-escalation, getting delay. But the real question now is kind of how long does this last? And I don't think there's anyone who thinks that we're going to go through the next year or through the term of President Trump without kind of some more hiccups. This is a roller coaster ride. I am sure there's going to be more export controls that are going to be kind of suggested by either side. But really the big question that we've been getting here at Raymond James is how much semiconductors can go into China, how much relaxation of some of those tech controls. We've talked about that de-risking. In the last 8 years, that's been about blocking what China can buy. De-risking now in D.C. is making sure that China gets hooked on our AI technology so that we don't have the risk that China develops something else and is a competitor globally. That's a fundamental change that is going to potentially drive a lot of this AI trade even a bit higher as we get those kind of de-risking sales into China that were not expected.
To Lisa's point, Ed, the president had said that Blackwell would be discussed. Jensen Huang said he hoped he'd be able to sell Blackwell back into China, but it appears that wasn't on the table during these negotiations. What do you make of the fact that that specifically was left out?
So, Danny, the president said that NVIDIA in China are going to have conversations and that he was going to let NVIDIA be the referee. He did say that Blackwell, in NVIDIA's latest chip, the Rubin, is probably off the table, and I think that's appropriate. What we do know is that the Trump administration had previously banned the H20. They banned one of the AMD chips. They've reversed those bans. China hasn't purchased that because they want to see what else they can get. I do think that there is a version of Blackwell that probably can be sold into China. I do think that that is going to be part of future negotiations. So on a scale of 1 to 10, if I had been hoping for a 10, what came out of this is probably a 6 or a 7. And if we can get those negotiations ongoing, it can go up from here. But the opportunity to possibly relax tech standards versus where we've been is a fundamental shift in and of itself, which gives optimism for a lot of investors that I talk to.
So notably, not a 12, as the president said that the outcome of the meeting was, Ed. What else wasn't discussed? Also, TikTok, Taiwan, transshipments. What do you make of just what was left out of the discussions?
You know, it is a 2-hour meeting, but that's not very long when you kind of have all these different negotiations. I think as it relates to TikTok, that has been moving along. That has had a lot of other negotiations. One thing that I've always heard about Vice President Xi is that he likes to go into these meetings with things 98, 99% settled. So I think what was discussed in the meeting was what Besson and his counterpart were able to do the week before. There is a desire to have another meeting first half of next year where Trump goes to China. Maybe Xi comes to the United States at an appropriate time. So there is opportunities to follow up from this. On rare earths, yes, they are going to have this pause, but because there's licensing, there's plenty of opportunities for China to tighten in certain ways that will get U.S. response. So the fact that we have more to discuss at later dates and other dates already set to kind of have the leaders come together seems fairly appropriate at this point.
Just really quickly here, do you think that we're going to get a completion to this government shutdown by Thanksgiving so we cannot worry about flight delays?
I think Thanksgiving, yes, but I think that that's where I kind of have been putting the over-under. Once we get to November 21st, which is the date of the CR that passed the House, the conversation changes because it's not that the Senate could just vote to turn it on because there's nothing to vote on. I do think that there's going to be a conversation today and over the next week about nuking the filibuster. That's what President Trump has put on Truth Social. I don't think the Senate goes in that direction. I think that's about Trump trying to regain negotiating leverage. But because of those social media posts, this does go on at least another week. As the pressure builds, President Trump is probably going to have to be the off-ramp, but as we get closer to kind of November, kind of 21st, and as we get closer to Thanksgiving, that's really, I think, where this finally comes to a head. I think we're at the beginning of the end, but unfortunately, we're still at the beginning, not the end.
Not the end of the end. Ed Mills of Raymond James, thank you so much for being with us, and have a wonderful weekend and have a wonderful Halloween. Right now we are getting data from some of the biggest companies, the big oil companies, Chevron Corporation, reporting earnings, beating earnings estimates as profits from the Hess Corporation acquisition seem to pay off. You are seeing the adjusted third quarter earnings of $185 a share, exceeding the 166 average. They also are talking about share buybacks, and it really flies in the face of oil prices, Danny, which have gone down. You are still seeing profits coming out of some of the oil majors.
Yeah, Brent crude on pace for its worst year since 2020, since COVID really depressed demand for oil. It's notable, to your point, that the Hess acquisition is what got them through. Speaks to the consolidation that's happening in this industry and why it's happening.
And why we expect more to come, especially with the deregulatory push that can allow more big oil tie-ups. Coming up, we're going to be talking about big tech with Dan Ives of Wedbush, who probably will be bullish, as Pete Shear noted, on big tech after the earnings we got this week. Plus, Yahaira Anand with your morning movers, Reddit soaring on strong advertising projections. This is Bloomberg.
lesson is that 1.5 is not the end of it. So if we look at last year, you mentioned one of the metrics, one of the temperature databases went above 1.5, but there are about 4 or 5 others that still are below 1.5 for now. The IPCC has sort of projected that by early 2030s or thereabouts, all the other databases will consistently be above 1.5 for the entire year. So we still have that little bit of wiggle room, but I think some of the messaging is a bit mistaken. It's not that we passed 1.5, we're dead in the water. No, the assessment of the science has shown that if we go to net zero by 2050, there is still a chance of us peaking and coming back down to 1.5 or below by the end of the century. There is still hope to actually get back down to something of a livable world if we get our act together.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Good morning. Welcome back. 3 hours until the opening bell. What we can see right now is a market that wants to grind higher toward new record highs, building on a third weekly gain. And you can see that really being driven by the tech space after the earnings of the likes of Amazon and Apple yesterday. Tech up, NASDAQ up 1.1%, S&P futures up 0.6%. The Russell taking it a little bit, but yesterday was an outperformer. What you are seeing is that Amazon absolutely crushing it in pre-market trading, up almost 13% after their beat, showing that cloud revenue came in at the strongest going back to 2022. Apple shares getting a boost because people are upgrading their phones finally to the iPhone 17, and it really does have to come down to the hardware. And this has been bolstering sentiment. Just a reminder, though, Amazon shares are only up 1.6% before this move. So definitely the underperformer of the year so far from the big tech space. Meanwhile, in the bond space, a real question about what a Fed that isn't going to cut rates in December means for credit markets, for fixed income markets more broadly. 10-year yields are the ones that I'm watching at that 410 mark after selling off, seeing a 10 basis point rise on Wednesday following the press conference. 2-year yields getting a bid, 3.6%. 3 hours away from the cash open. Here are your morning movers with Yahira on Yahira.
Hi, Lisa. We start with Amazon. As you said, the stock is soaring nearly 13% after a strong performance. It's a big win for a stock that's lagged its tech peers this year. The company's profit engine, AWS, saw revenue jump 20% year over year. As you said, its strongest growth since 2022 and well ahead of forecasts. I will also note Amazon said that CapEx last quarter hit a record more than $34 billion. And moving on to Apple, also another strong performance there. Shares are up 1.75% after the company predicted a strong holiday period thanks to its newest iPhones. The tech giant says revenue will jump as much as 12%, while iPhone sales will jump in the double digits. That would make it Apple's strongest iPhone quarter ever. And we end on Reddit, also soaring nearly 11% now in the pre-market after posting some pretty impressive numbers in the third quarter and saying that momentum will continue into the end of the year thanks to its advertising unit. Thanks to its advertising, daily active users jumping nearly 20%, while revenue grew 70% year on year. It also gave a better outlook than analysts expected. Lisa?
Thank you so much, Yahira. We are getting earnings ongoing this morning. We did get Chevron earlier. Now, we just got the numbers from Exxon, the reaction in shares. A little bit worse than what we saw from Chevron. Those shares down 2%, even though, Danny, they seem to beat pretty much across the board for earnings as well as for revenues coming in far above expectations.
And kind of not the same flavor as Chevron, but a similar one in terms of what is driving it. It's just new projects and what they called growth acquisitions. The cost of capital is very low for them. So at Exxon, they're betting that they can take on more debt. They're already coming from low levels, take on that debt, have new projects, and that be the thing to lift them up despite the fact crude oil prices have been tumbling all year this year.
Yeah, talking about how their cash capex is coming in slightly below the lower end of the $27 to $29 billion. Interestingly, they did talk about having some sort of $18 billion in cumulative cost savings. Whenever I see cost savings, I wonder, is this just sort of a sanitized way of saying job cuts? Is this part of the economies of scale of some of these acquisitions?
At least they didn't blame AI. At least they weren't like, oh, we're doing AI things, so we're shaving jobs.
But maybe they will be anyway, in terms of exactly what's behind it. We'll dig into that as we get more details and as the call comes through. On our radar this morning, a turnaround for tech following Thursday's losses. Amazon shares surging on its fastest cloud unit growth in nearly 3 years, while Apple gained on a revenue beat and an upbeat holiday forecast. Meanwhile, NVIDIA CEO Jensen Huang remaining hopeful about selling his company's new Blackwell AI chips in China, adding sales were not discussed during his meeting with Chinese trade officials. I love, by the way, Danny, that they talk about how he's going to be the sort of referee on these talks. It's sort of like, you know, the fox in the hen house, no?
Right. Is that comforting or discomforting? I mean, it's a China that's explicitly said we want to use our own homegrown chips. So you're, you know, pun intended, putting literally all the chips in Xi Jinping's basket.
All right, Punny Friday, I love it. Absolutely loving it. And there is this question about whether it's a national security thing in order to get U.S. tech into China so that there isn't this huge divergence. Meanwhile, Netflix reportedly exploring a major bid for Warner Brothers Discovery Studio and streaming businesses. This, according to Reuters. Netflix has hired advisors to evaluate any potential deal. Netflix also announcing a 10-for-1 stock split to benefit employees and, of course, to make their stocks more accessible to the individual investor. But the tie-ups right now in the media space, it seems like there is a rush to get big enough to survive whatever kinds of tech advancements there are in the years to come.
I want to know if this Netflix bid, if it's something that Warner Brothers Discovery would actually entertain too, because one, I guess it would involve splitting up the company because they just want streaming in their studios, or if this was all just a ploy to get Skydance Paramount to up their bid, which has been said many times. But maybe if Netflix offers enough, all of a sudden it becomes attractive.
Yeah, this to me is really the question. What is the price? What is the clearing level for a lot of these companies? Turning back to Apple, shares rising in the pre-market after giving a strong outlook despite reporting a surprise decline in China revenue. Dan Ives of Wedbush maintaining, guess what, an outperform rating on Apple and raising his price target to $320. Dan joins us now, his colorful self. You never sleep. Love seeing you. So what is it that was so good, given the fact that this really is a hardware story, not necessarily a technology story, which is what's going on with the rest of the tech world?
Sure. I mean, look, if you look services, that continues to be rock of Gibraltar for them, and that, you know, mid-teen growth. That, I think that's something from a multiple perspective that investors are really focused on. But look, the reality is we've talked about it so many times in the show over the years, like other cycles have been disappointing from iPhone. If you look 15, 16, iPhone 17, it almost looks like a surprise upgrade cycle. You know, especially in China. China was the headwind, now looking like a tailwind. And then also it comes back to Cook. I mean, 10% politician, 90% CEO, playing nice in the sandbox in DC. That's going to have an impact as well. And this is all the drum roll to AI. I mean, that is what you're playing for here when it comes to Apple over the next year.
Is it? I mean, I guess that's really the key question. Is this still the promise of AI? Or is this really a question of we all have phones that are broken and cracked, and we've been waiting for a long time, and we're going to now upgrade to the i17. They are capacity constrained at this point, which was the biggest hamper for them. And it's a completely different story than the AI spend that we're seeing in the other companies, and a very different kind of trajectory than maybe what we're seeing in the other space.
Yeah, and that's been the frustration, right? Because, I mean, if you look at Apple, this AI party where it was 9 p.m., it's now 10:30 p.m., that party goes to 4 a.m. Apple, they've been out on the outside looking through the windows, right? So now the focus is consumer AI revolution. It's going to go through Cupertino. Now, how does that happen? Comes down to that Google DOJ win. That's huge. And now, candlelight dinner, Sundar, Cook, I believe it's a matter of time. They're going to announce a massive AI partnership on Gemini. That's what you're playing for, because you're 25% of what you're playing for is the stock's cheap relative to what I think could happen on an iPhone 17 services. But what you're really playing for here is they get to the AI party. They announce that deal over the next year. This is a $350, $400 stock as AI finally comes to Cupertino.
Doesn't that, though, completely not illegitimize, but basically challenge this idea that you have to spend in the AI race to keep ahead? If you have a company like Apple that basically figures we can partner with people, we don't need to spend, and we can still benefit, does that just show you don't need to participate in the arms race for every other company that is?
Yeah, look, I think for them it's unique because there's 2.4 billion iOS devices, 1.5 billion iPhones. So they've built the mountain, right? The field of dreams. I mean, they've built it, they will come. So now it comes down to, like, from a consumer perspective, you have to monetize that on the consumer perspective. I think AI revolution comes to Apple on the consumer side. When you look what's happened on the enterprise, look, it's a fourth industrial revolution. The reality is that from this tech earnings, going into eating chocolate tonight and Sour Patch Kids and whatever else on Halloween, you go in as a bull more bullish relative to everything we've seen from hyperscaler, Amazon, Microsoft, even Meta stock down, but why is it down? They're spending more and more, and it speaks to our view. This is only second inning of the 9-inning game.
It really changes, though, how you analyze these tech companies. If they are taking on AI servers and other relatively short-lived assets, it means that depreciation charges start racking up. Sure. How does that change how you think about these companies and the otherwise cost discipline that they need to exercise?
Yeah, and look, and I think that's the debate, right? Because if you look at these companies over a year, then you wouldn't have bought even the last few years. But the reality is it's an AI arms race. You're essentially building out the new economy on the consumer, on the enterprise front. And that's why you have to be able to look out 2-3 years to what this is going to look like. Microsoft, a good example. I mean, you essentially have almost built a Microsoft within a Microsoft. You look what's happened at Google, right? New York State cab drivers bearish on Google and Alphabet. If you look back over the last 6 months, now Win DOJ, search, death greatly exaggerated. That's actually a positive relative to AI. You look at Amazon, finally Jassy's saying like, hey, don't forget about us, and that was a huge pop the champagne moment for them last night.
We saw a huge bulk of the Magnificent Seven report earnings this week, and I want to just take a look and take stock of what we've learned. And our team put together a fantastic series of charts really looking at the CapEx expense and just what this is compared to revenue. What you can see is that revenues are expected to increase the likes of 5% in Amazon, expected CapEx rise 51%, Google expected revenue rise 6%, CapEx rise 43%, a similar story for Microsoft. At what point does that become a concern, that they have to fund an increasing amount of this with debt, that it's increasingly going to depend on leverage and the benevolence of private creditors and all sorts of other investors who are going to finance this?
Yeah, and to that point, that's, I think, also outside Mag 7 in terms of companies that are basically going to have to raise debt. They're going to compete from a CapEx perspective. When it comes to big tech, I mean, $1 trillion in the balance sheet, generate $300 to $400 billion a year. So that's why the reality is they are fueling this AI revolution. But if you look at CapEx, look, a year ago, CapEx going into this year is $220, $230 billion. That was a thought. It's actually going to be $380 billion. So I think investors continue to underestimate the scale and scope, and that's the fuel in the engine. That's what's fueling all of this in terms of the CapEx cycle, and that's why in his leather jacket, the godfather of AI, Jensen, continues to be the chip that really fueling the AI revolution. But AMD, TSMC, Broadcom. It speaks to our view. I mean, I've seen it even like authentication with, what we're doing on Orb side, where you're seeing like authentication, cybersecurity, CrowdStrike, Palo Alto. This is where it's all going, second, third, fourth derivatives.
Yeah, we get Palantir on Monday, and then we get the rest, so we can see exactly how that's playing out. Just taking stock, though, of what we've heard. And people think of Dan Ives, they think of Tech Bull. And you've been right. You've been 100% right with a lot of this. I'm just wondering, what are you seeing that does seem excessive, that does make you think, hold on a second, there is something here that makes me just a little bit nervous that there's some good money going after bad in small pockets that are getting a little bit bigger?
Well, to that point, I mean, like, I just got back from basically being gone a month around the world trying to understand, like, especially in Asia, what demand and supply looks like. So for the real ones, demand and supply is 10 to 1, okay? But just because you say AI 30 times in a conference call doesn't make you an AI play. So when you say what worries me, that's what, but Lisa, that's like I focus on, like, we have our, ETF, like, who are the winners, who are the fakes. So it just speaks to my view, like that, when you say what worries me, it's just separating out. You need to own the winners. You can't just own an AI play because they have great PowerPoints.
Is Caterpillar an AI play?
There's a better chance of me playing in tonight's like Blue Jays like Dodgers game than Caterpillar be an AI play. That's my opinion, but it speaks to the view, like, you have to be careful about who's AI, who's real, what are the derivatives. And I think as an investor, that's how you separate, like, look at the spending, who the winners are, second, third, fourth derivatives, obviously Messi of AI Palantir being one of them.
Dan Ives, always wonderful to speak with you. Thank you so much. And I hope that we someday learn how to have no sleep like you do, Dan Ives of Wedbush Securities. I want to go as AI to Halloween as AI. What would that look like? I'm just trying to think about that.
So I actually had a friend pitch me this. For you and your husband, one of you dresses really artificially, and then the other person looks very intelligent. Dan seems to have an idea. How do you do it?
I would just say, like, but Lisa's the one, she's the house, she's the one where you actually give out full chocolate bars.
Totally.
And the problem is, like, but you're just one of those. And because it's your world, we all pay rent.
Oh, yeah.
But I just want to be...
Lisa's the CapEx giant of Halloween, investing in good-sized
She's the CapEx from a chocolate perspective. And then the neighbor, you have this small chocolate, you feel bad. That's the problem.
All right, so I'm making everybody feel bad. Right now, let's move on. Let's get you an update on stories else for this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. U.S. oil majors Chevron and Exxon are reporting this morning. Exxon posted an earnings beat. The company is pressing ahead with a raft of expansion projects despite slumping oil prices. Meanwhile, Chevron beat earnings estimates as profits from the Hess acquisition were included in the results for the first time and provided a boost. Chevron's global production rose 21% to the equivalent of 4.1 million barrels a day. Meanwhile, American soybeans are great again. China has purchased at least 4 U.S. soybean cargoes following the summit between President Donald Trump and Chinese leader Xi Jinping. Sources telling us here at Bloomberg the cargoes are for shipments later this year and in early 2026, and the total volume is about 250,000 tons. And California Public Employees Retirement System is planning to vote against Elon Musk's $1 trillion Tesla pay package. CalPERS, which owns about 5 million Tesla shares, says the pay package is far larger than those for CEOs in comparable companies and further concentrates power in a single shareholder. The $1 trillion agreement spans 10 years and requires Musk to meet certain benchmarks. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, Dan Stroyven of Goldman Sachs as oil giants report earnings and eyes turn to rare earth minerals. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Geoffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Well, the earnings have delivered, and they've delivered big time. And to the extent that this was going to be a risk week with Magnificent Seven stocks reporting, it has not been. And what you are seeing is a lift to markets. Equity futures indicated higher, led by those tech shares, up 0.6% on the S&P futures. You are seeing yields just marginally higher at that 410 level on the 10-year. Crude continuing to fall. A real question here with the oversupply. Under surveillance this morning, earnings from the oil giants crossing this hour. Exxon shares are lower with the plans for major expansion projects. Chevron rising after posting strong results. Joining us now, Goldman Sachs' head of oil research, Dan Stuyven. Dan, thank you so much for being here. What a year on all the commodity fronts. I'm just wondering with the oil giants, what this tells you about the path of production in the months and years to come.
Yeah, so I think those earnings help us to check in on the key assumption that global supply will continue to grow. We estimate that actually in the fourth quarter of this year, on a year-over-year basis, global oil production will be up 4%. That's 4 times more than in a normal year. And that, in combination with the global stocks data that are rising, supports our view that you sort of have another $10 per barrel of downside for oil prices over the next year, with Brent next year averaging $56 per barrel.
Does it look like a race to the bottom, though? You have Exxon talking about the fact that they have low levels of debt, so they can take on more debt and finance more projects. Is that what the path looks like?
So I think 25 and 26 are pretty exceptional in how much extra supply we expect to come to the markets, coming both from core OPEC producers like Saudi Arabia, the UAE, and others, and then also from production in the Americas, especially from Latin America, actually, Brazil and Guyana. If you look out further down the horizon, we see a sharp slowdown in supply growth from 27 onwards. So we really think of this as the last jump in global supply, and that's why I think prices will probably come down somewhat more next year, the last leg lower, before we likely recover, as demand probably keeps growing while supply starts to moderate.
Meanwhile, the other big production jump, at least hope of which, is in the U.S. for rare earth materials. And it's a Trump administration that, yes, may have reached a pause with China, but has been investing in the key players in the U.S. Can the U.S. decouple from China when it comes to rare earths?
So investment in the space is definitely rising at a quick pace. Western governments are investing, but we think it will take years to build up an independent supply chain. China's dominance in the rare earth supply chain is pretty incredible. China refines about 92% of rare earths in the world. China produces 98% of the magnets that are critical to make batteries, for instance, or in the defense and AI sectors. And another challenge really has to do with the fact that if you look at some of the deposits of the so-called heavy rare earths, they're incredibly concentrated in China and Myanmar. And so we think this issue is not going to go away. Of course, in the last 2 days, we saw China postponing rare earths export controls for a year, but I think this topic is here to stay with markets and investors for years to come.
So as you suss out where in the world there are these other reserves that could potentially support U.S. efforts to de-risk, not necessarily decouple, we can dive into what that exactly means. Where are you seeing rife opportunities?
Yeah, so if you for instance look at some of the American, Australian, Canadian companies active in the rare earth supply chain, those equities have really surged year to date. They're actually down over the last 2 weeks, but year to date, you're still up sometimes, if you take an average, 200, 300%. Because we need higher prices to incentivize a big ramp up in production. And so I think the companies in these supply chains are typically in the West, either in Australia, the US, or Canada.
What is the biggest obstacle for the U.S. being self-sufficient in some of these areas, in the production side of things, and the refining side of things? Is it the regulatory environment? Is it just how long it will take for the plants to get built? Is it just the expertise and the fact that we haven't had it since 2003, 2004? Which is it?
Yeah, I think all of these above, but if I had to give you the top two, I would put refining on number one. Refining rare earths is incredibly complex. These minerals are incredibly similar to each other from a chemical perspective, and so removing them, splitting them is incredibly hard. It requires a lot of expertise. Building a refinery typically takes 5 years. And actually, if you go back to the 70s and the 80s, Western countries like, for instance, France, were leading the refining process, but then those technologies were exported to China, and then they were improved very, very significantly over time. So I think refining is complex, it takes time, and the second major bottleneck is just that some of these deposits, the rare earth raw minerals for the heavy rare earths, they're mostly concentrated in China and Myanmar.
All of that just underscores the immense amount of leverage that China has in discussions with the U.S., and it used that leverage on rare earth elements to bring the U.S. to the table. Does it demonstrate a playbook? Could commodity weaponization in trade talks go beyond rare earths?
So I think that commodities are clearly a key part of sort of the U.S.-China race for tech and AI dominance. I think on the China side, indeed, access to rare earths gives China a lot of leverage. If you look at the U.S. side, I think China has been very focused on allowing the U.S. to continue to export advanced chips. You both need very advanced chips, and you need rare earths in this big race for tech and AI dominance. And more broadly, we do think that in a world where countries are very focused on becoming dominant and decouple, we think the risk of commodities being used as sources of geopolitical and economic leverage, will stay high, and arguably has risen over the last 10 years. We have seen export restrictions for rare earths minerals, for cobalt out of the DRC Congo. Big picture, commodity supply concentration is high, has risen further, and that's, I think, why for investors the message is diversify into commodities. It's a hedge against negative supply shocks.
Yeah, the whole idea that Eddie Fishman of Columbia talks about the choke points in the global order. Just real quick, how many calls are you getting on things like nickel that you've never gotten before? I mean, just give us a sense of your scope of inbound calls that you're getting.
This is a great year to push our boundaries and expand the scope of commodities we cover. We're enjoying the process, but sometimes we have to go back to our Mendeleev, chemistry tables to go back to the basics.
I was about to say we should have a chemistry, you should have a periodic table on the screen. Dan Stuyven, thank you so much for being here with us. Dan Stuyven of Goldman Sachs. And we are seeing, with respect to oil, this question of how the oil majors are trying to weather this overproduction in the near term. And it does seem like it's cutting staff, consolidating, continuing to produce, and weathering the storm.
It's a vicious feedback loop, because if you're continuing to produce, to Dan's point, you're contributing to that oversupply. So then do you need to produce more? Do you need to cut more staff at a time when we're seeing a lot of corporate America think about slimming down?
Yeah, and we already have seen a lot of layoff announcements at some of the big oil companies. Next week, we are going to get a number of other tech companies coming out. I'm curious what they have to say about some of the production issues with rare earth minerals. Coming up next, we'll continue the conversation with Barbara Duran of BD8 Capital Partners, former White House trade official Kate Kalukowicz, Gene Munster of Deepwater Asset Management, and Winnie Caesar of CreditSights. This is Bloomberg Surveillance. Good morning.
Power, money, culture. Linda Almond tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire, how Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Inside with Haslinda Amin. New 2-hour programming beginning November 3rd. Only on Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. What President Milei's victory in Argentina means for investors and for the United States. And the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
There's so much uncertainty what's happening here.
That's what's hard for the Fed. They're in the muddled middle.
We're in a bit of a data vacuum.
I don't think that the December rate cut is a foregone conclusion.
There are strong signs here that Powell is struggling to manage the committee.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. We're getting data in the form of earnings. Big tech coming in strong. Take a look at Amazon pre-market shares, just absolutely soaring in pre-market trading. Now the question is the data that we're not getting, the K-shaped economy. Torsten Sklock of Apollo coming out saying K-shaped economy also for corporates, because you can see that big tech space doing absolutely phenomenally, posting incredible numbers. The rest of the world, Danny, not so much.
And the breath has been so bad in this equity market. We have had near record-breaking numbers of days when you are up in the very limited amount of stocks that are taking us there. Is it a really regressive event? Because not only is the stock market going higher, maybe it puts pressure on energy demand, so energy gets more expensive for everyday people. I will say, Peter Scheer in the last hour says not so. The construction projects are actually going to benefit the lower-income people in the creation of jobs.
Which is really a key question as we take a look at the CapEx spending from some of these companies. Let's take a look at what some of these companies have been pledging for the year to come, as well as the current year. Next year forecasts. Microsoft coming out saying, yes, that they plan to increase what they spent this year significantly. Amazon going from $34 billion this year to $125 billion of CapEx next year. We're talking about Meta tripling from almost $20 billion to $72 billion next year. And Google going from $24 to $93 billion. This is massive spending plans that have really been edifying a lot of the rally that we have seen.
And of course, the big tech company that's not not on there is Apple. And I really do wonder if the good results from Apple stress test the idea that you have to spend. Because it is Apple that has bet that it doesn't need to spend. It can benefit from everybody else. It can partner up with other people, and it doesn't need to commit hundreds of billions in CapEx. So do they prove maybe for some of these companies, I don't know, it's unnecessary?
Yeah, and you're building on what Dan said earlier today, Dan Ives, which I thought was fascinating, the idea that Apple could end up partnering with Google and Gemini using their artificial intelligence rather than investing on their own to really build this out. Is this the model if this isn't going to violate some of the antitrust agreements? That's really a key question here.
That is a huge question because Google has come up against it and lost before. But maybe in this administration, they'll find a more friendly player. Of course, those original cases were brought on by the Trump administration 1.0. But at least it seems like it's a bet Apple's willing to take.
And Google has won some of those cases, so that's also part of the issue. Right now, you're seeing in markets a win for the bulls. You are seeing a third straight weekly gain. Building on that gain this morning, S&P futures up 0.6%. You are seeing yields just marginally higher as people assess the Fed's landscape as well as just the strength in the underlying economy. What you are seeing in Amazon and Apple, real gains, as we mentioned before. Coming up this hour, Barbara Duran of BDA Capital as Wall Street delivers another big tech rally. Former White House trade official Kate Kalukowicz with President Trump's global tariffs facing a legal challenge. And Winnie Caesar of Credit Sites as the AI boom takes on more debt. We begin this hour with stocks edging higher on strong earnings from Apple and Amazon. Bloomberg's Matthew Bloxham joins us now for more. Matthew, thank you so much for being with us. I just want to get a sort of report card on what we've learned this week. Who are the winners? Who are the losers? Are there losers? Or was this just a big beat that blows back all bubble talks?
I think if you look at the top line, it was a win for all of the companies. You know, they generally beat expectations. If you look at someone like a Google or a Meta, where there's question marks about whether, you know, so-called legacy social media businesses, which generate all this kind of advertising revenue, are at immediate risk from the likes of ChatGPT. I think what we've seen is they're actually using AI to their advantage to strengthen those businesses in the near term and fend off that competition. But that clearly is a kind of mid-term risk around AI browsers eating into that. I think that the story is more nuanced around the investment side. So, you know, we saw Meta severely punished earlier in the week because there isn't a particularly clear link between the huge amount of money they're spending on AI infrastructure and the revenue that's going to come in to justify that investment. And you're seeing a much stronger connection with the likes of Amazon, Microsoft, and even Google's cloud business. And I think that's because that revenue connection is into the business market. You know, we are definitely starting to see businesses move from a piloting phase into a more kind of implementation phase when it comes to AI. You know, there are much clearer use cases forming that they're investing in, and that's driving demand for additional compute and cloud capacity. And Meta doesn't really have that. And so it's a bit more aspirational in terms of where the new revenue streams are going to come from to justify the huge sums they're investing in AI capacity.
And right now they're looking to the debt markets to open up their pocketbooks to try to help fuel that. Bloomberg's Matthew Bloxham, thank you so much for being with us. Barbara Duran of BDA Capital writing, the market in the near term seems to have been fully discounting positive outcomes. The narrow advance this week also likely signaled unsustainable near-term highs. Barbara joins us now for more. Barbara, are you pushing back right now against the optimism we're seeing in markets?
In the very near term, but you're also seeing the response. That was a response. This week has been very interesting because going into the earnings for Microsoft and Meta, you had the highest expectations in terms of you had the Fed cutting, you had earnings are coming in well above, you know, targets, and then you also had, people were thinking of the AI. We've had so much reaffirmation in the last few weeks in terms of announcements, especially from NVIDIA and partnerships and orders and that sort of thing. So understandable with the 23 times PE, we're going to have volatility. You know, so in the near term, caution is warranted. However, you're seeing this morning what's happening, you know, with the Amazon, you know, good earnings there, and Apple, you know, not to mention Coinbase. So I think just caution in general at this point, putting new money to work. However, when you get sell-offs like yesterday and you see Meta down, I think Meta is a buying opportunity in here because, again, we saw this a couple years ago. People were freaking out on one earnings because they were spending so much money. The stock got down to $100.99 briefly, and it was a great buying opportunity because it's really really about the users and engagement. So on these kinds of sell-offs, that's when you can cherry pick, some of these high-flying names, because you have to be long them. And if you're not, you need to get it.
So has Meta then done enough in your mind to prove that it's not just spending for the sake of spending, that it will in turn result in real revenue for them?
I think they've proven that over and over again. And certainly in the last year, they're one of the first to really show they're spending on AI, but they're also one of the first to use it effectively. You've seen that in terms of increasing their user base, their engagement, their advertising targeting is much better. They are leading the pack there. So I think they are living proof that AI can really change the productivity of your business.
I say it's remarkable how much event risk we've just lived through in the past 5 days. You laid out a bunch of them, add in tariff China trade talks to the central banks and to the tech earnings. Nomura's Charlie McElliott has said the fact that we've gotten the central bank decisions out of the way and the trade deals where it's kind of like nothing to see here means that macro won't be the influence for the rest of the year, that it will be a melt up and a fear of the right tail that keeps people buying. Would you agree with that?
Yeah, I think that's accurate. I mean, we've been through so much geopolitical risk, this year in terms of the Middle East. We still have Russia to deal with, particularly this recent nuclear testing things. That seems to be ratcheting up. China, they really didn't address some of the major things in terms of, are we going to sell the Blackwell chips, or are we going to do a lot more? But that seems to have calmed down. And with President Trump's commitment to go back in April, I think those geopolitical and trade tariffs, I think we're getting used to, there can be a sudden tweet, and we saw that sell-off a couple of weeks ago, and he said 100% tariff on China, but then the market calmed down. So I think that a lot of those things, the macro risks are calming down. So I think it's really looking at, again, right now the market has a high valuation. However, this week also was again, about AI that is so driving it. You had talked earlier about the narrow advance, and it is indeed narrow, but that is where the action is. These are big free cash flow. And if you look ahead to next year, again, we're seeing great earnings, and the guidance is key because obviously the earnings are just what happened. But you've also got the full impact of the tax package, and CapEx should start to kick in. If bank deregulation happens, that's going to actually increase capital available to loan out, helping individuals, businesses, particularly small businesses. So I think there's a lot to look forward to next year that's going to be positive.
Is stock markets gain the credit market's pain? And I ask this because this week we saw a transfer of some of the risk with some of these CapEx plans. And yes, Meta is the poster child of it, but it's not just Meta, it's also Oracle. We've seen these huge debt sales come out. How much does this start to raise your alarm bells about taking more risk in the credit sphere and maybe consolidating any kind of risk on move within the equity space?
Well, I think these are excellent questions, and it's something that you will tend to see in any sector where there's an explosion of interest. Overcapacity is very easy to happen because everybody's doing it, and where does it end up? One example has been the fiber build out, but it's very different because, and I think, and Jensen Huang described it, I think, yesterday about the virtuous circle, because the more you spend, the more you up the abilities of AI, the more it gets adopted, the more affordable it gets, and a lot of these things, we're talking about the debt that's been announced, but so much is being financed by free cash flow from these companies, which generate just huge amounts. So I think we are going to see it just continue to build and build and build, and I'm not so concerned about the debt because I think they'll get the payoff on that in the not so distant future.
What you have seen from earnings has been this K-shape, and this is something that Torsten Slok of Apollo put out this morning. You have seen the winners, you have seen the Chipotles, the losers. This idea that you are going to struggle with a consumer that is weaker in certain pockets, and I just wonder whether it matters to you with the narrow breadth and the sort of AI promise in the equity market, whether it matters if the Fed cuts rates in December, or whether essentially this week we learned it doesn't really matter because ultimately it's all about big tech for the risk assets.
It does, and it doesn't matter. I mean, obviously, if they cut, it does help, the big tech guys, because obviously the value of the cash flow is going forward. That can be a PE expansion. It obviously matters for housing, for the lower income consumer. We're talking a lot about that, and that's where I think Chipotle is the canary in the coal mine. We've got retail reports coming up. Although it was interesting, Amazon, when they reported yesterday in e-commerce, they're not seeing any, impact from tariffs. They're not seeing prices go up. They're not seeing demand come down. But I think it's going to be very different as people start to shop, for the holiday season, and what that means and how much the lower income is going to impact. So I think that if the Fed does not cut in December, I don't think it's such a big deal, but we're going to have a lot more information too, because if right now from private sources and from the companies themselves that are reporting, labor seems to be sort of in a flat line, and whether that's because there's lower supply or whatever. But the one thing we are watching, we've seen these layoff announcements with Amazon, UPS, and others, Right now, still can be one-offs. We don't know if that's a trend because that's been the whole thing. There's no hiring, but there's no firing.
Yeah.
And so that's being watched very closely. But I think, and again, we're going to have a real lag in information going into that December meeting. Even if the government shutdown stopped tomorrow, it's going to take a while to gather because they haven't been gathering information. So that's got to happen. Yeah. So I could see the Fed not cutting in December, but depending on the information that comes in, could be January because we've been doing pretty well. Even with the Fed supposedly restrictive.
Barbara Duran, thank you so much for being here. Barbara Duran of BDA Capital joining us here. And we should be getting personal income and personal spending, Danny, as well as core PCE. And personal spending was supposed to go down to 0.4% based on economist survey by Bloomberg from 0.6%. That's the data you're going to get, estimates from economists, because we're not going to get it officially.
Yeah, you're going to get alternative data. You're going to get the beige book. And again, I go back to Chair Powell saying that's enough for us to make a decision to, I guess, not move.
Yeah, well, exactly. To be in the fog and call it the dark and say, correct. Come on, guys, get it together. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Pfizer has 4 business days to offer a better deal than Novo Nordisk's bid for obesity biotech Metsera or walk away from the deal. Novo Nordisk is offering at least $6.5 billion to Metsera shareholders with the possibility of the price rising to $9 billion if certain targets are met. Metsera is working on an obesity drug that could be given as a monthly shot while current comparable drugs are taken weekly. Meanwhile, Netflix is reportedly considering a bid for Warner Brothers Discovery studio and streaming businesses. According to Reuters, Netflix has hired advisors and accessed confidential financial data to evaluate a potential offer. Warner Brothers Discovery announced earlier this month that it was exploring strategic options, including a possible sale after receiving interest from multiple parties. And President Trump is urging Republican senators to scrap the filibuster in order to bypass Democrats and reopen the government. The filibuster is a tactic used to delay or block votes by keeping debates running. 60 votes are required to overcome a filibuster. Republicans currently have just a 53-seat majority. It's been 30 days since the start of the government shutdown. That's your Bloomberg Brief. Lisa?
And will they get it resolved by Thanksgiving? So if you're flying anywhere, nobody can blame air traffic controllers because they have a hard enough job. Up next, the Supreme Court showdown.
I think that we have a very high level of confidence that the Supreme Court will side with us. I even spoke in the Oval with the President about it. I should say the level of confidence is extremely high.
Former White House trade official Kate Kalukowicz joins next. This is Bloomberg Surveillance.
At the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
Coffee
lovely
coming.
Tara.
There we go. So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Coming into a third week of gains on the S&P 500, on the NASDAQ. You are seeing those gains build this morning after tech earnings for the likes of Apple and Amazon. Yesterday up almost 0.7% now. On the S&P, yields just slightly higher, crude lower, as we do get a sense that there is going to be that ongoing oversupply from the likes of Chevron and Exxon competing for market share, not necessarily on price. Under surveillance this morning, Supreme Court showdown.
I think that we have a very high level of confidence that the Supreme Court will side with us. We think we're on very strong grounds. I've been fishing through the briefs myself just to see what the arguments are, and I think the case is very, very strong, and we're highly confident that they'll side with us. I even spoke in the Oval with the President about it. I'd say the level of confidence is extremely high.
Here's the latest Supreme Court arguments on the legality of President Trump's global tariffs set for next week. Bloomberg's Tyler Kendall joins us now. Tyler, it seems like a big potential risk for markets. What are you watching as those arguments come to the light?
Yeah, hey, Lisa. Well, the Supreme Court, first of all, agreed to hear this on an unusually aggressive schedule, signaling to us that they may like to resolve this quickly. Now, as you mentioned, this has to do with the legality of President Trump's tariffs invoked through IEEPA, the International Emergency Economic Powers Act, and whether or not President Trump has the legal authority to do so, because we have never seen tariffs enacted through IEEPA before. There's questions here about whether or not he bypassed Congress. But importantly, when it comes to IEEPA, President Trump needs to declare a national emergency in order to use the law. So he did that, one, when he cited fentanyl and the border to impose tariffs on Mexico, Canada, and China, and then again for the so-called reciprocal tariffs, where he cited persistent trade imbalances as amounting to a national emergency. And that is really the second big question to watch out for as this case unfolds, is whether or not those national emergencies that President Trump declared, if he does have the legal authority to use IEEPA, reach the legal standard of being an unusual and extraordinary threat. So those are some of the ways that this could actually play out when it does reach the Supreme Court. But Lisa, it's important for us to note that while IEEPA does extend to the vast majority of the tariffs imposed by the Trump administration, it's definitely not all of them. And U.S. officials have been pretty open with us that they have other tariff tools in the toolbox to use, including those Section 232 tariffs enacted over national security concerns on sector-specific industries, and then Section 301 tariffs, for example, which look into unfair trade practices.
Tyler Kendall, thank you so much, as always. Right now joining us, former White House trade official Kate Kalukowicz, who wrote, "A decision would have the potential to redefine presidential authority over trade policy." Kate joins us now. And Kate, before we get into the big sweeping questions, how are you advising clients who are suggesting that maybe they should try to claw back some of the tariffs that they've already paid, should some of these tariffs be overturned, or potentially could face other tariffs that could be just as punitive, if not more so?
Well, I think as exciting as it is for companies that have been worried about these tariffs and have been arguing about the impact on their businesses, it's really best to take a calm approach to this, a wait-and-see approach to this, because as you just heard, the president has many other tariff authorities, and I think frankly, if he loses his ability to use these IEEPA tariffs, he has many other authorities in his quiver to put these back in place.
Even if he has other tools, Kate, how long does it take to implement? How different does the implementation look, if not with the use of IEEPA?
Well, it's a great question because, of course, some of these other authorities require procedures to take place. We've seen in the case of these 232 tariffs that there is about a 200 to 250-day delay in between the announcement and the imposition of tariffs. Section 301 tariffs, which were just referenced about unfair trade practices, can take up to a year. So they are simply not as fast as the IEEPA tariffs, but I think it's important to remember they are more durable than the IEEPA tariffs simply because a process has established them. The one benefit of the IEEPA tariffs, if we want to call it that, is that they can be removed as quickly as they're imposed. So that provides the president and companies a bit more flexibility about the long-term nature of them.
Flexibility, can we translate that into certainty, Kate? Dependent on the Supreme Court decision, what outcome would give more or less certainty to corporate America?
Well, it depends on the type of certainty we're looking for. I mean, frankly, the certainty around tariffs, I think, in a medium-term picture, is that they're here to stay and they're going to expand much more drastically. IEEPA tariffs are quite exciting because of the Supreme Court, because of the way they've been imposed in such a broad way across the globe. The 232 tariffs, which are these national security tariffs on a wide-ranging amount of sectors in the United States, are probably going to be here to stay, and these are very high tariffs. They're 25%, 50% on things like steel and aluminum and cars. And I think, frankly, we need to be prepared for some long-term imposition of these sorts of tariffs.
Kate, how does it change negotiations with China? This week, we saw a standstill or back to normal and waiting another year to renegotiate things. How do changes in the legality impact those conversations?
Well, I'm of the view that they don't change them at all. If you remember, the tariff burden on China largely at this point relates to Section 301, the authority we talked about that allows the administration to go after unfair trade practices. Importantly, before President Trump went to Asia, USTR, U.S. Trade Representative, announced that they would be launching another 301 investigation into China's compliance with the commitments it made to President Trump. So USTR is already gearing up for another round of potential tariffs under a very steady authority. The IEEPA tariffs, or so-called fentanyl tariffs, as you saw, were reduced by half. So that remains 10% on fentanyl and 10% reciprocal, which are under the IEEPA authority. The other 25% are under 301 and can be expanded with fair ease.
Right now, we're just trying to assess what actually got done in Asia, what the landscape looks like. What are you telling clients about how much they can rely on the sort of new effective rates of about 30% for China, 20% for Southeast Asian countries that are big trade partners with the United States?
From a U.S. perspective and from a client perspective, I can say these are fairly stable. The president, of course, has not indicated his interest in raising tariffs on China. I think this is a result and an outcome that he had hoped for. He's going to be very focused, as we saw in the days leading up to the summit with President Xi, a focus on negotiating trade agreements with other economies in the region. He is attempting at the moment, I believe, to isolate China to provide a stronger amount of leverage going into his next meeting with Xi. So whether or not that takes place in the spring or in a year from now, I think we will be moving toward stronger leverage on the United States side. But that will be done to exact wins from the Chinese side rather than impose significantly higher tariffs. Now, of course, we can't predict what the Chinese may do, and our president always likes to go back to tariffs. So I think if President Xi and the Chinese make some big moves, we could see ourselves back in a higher tariff scenario. But as for now, I don't think that's what President Trump wants.
Kate, why is Canada so bad?
Canada is challenging, but I mean, it's not a question of being bad or good. I think there is just some ill personal will that dates back, frankly, for President Trump and former Prime Minister Trudeau. But also, when I speak to former colleagues at the U.S. Trade Representative, negotiators continue to say, we love to negotiate with Canada, but they were tough. They echo a little bit what President Trump says. The barriers that remain between the United States and frankly, its most important trading partner are long-held, very difficult barriers. You hear them on dairy and lumber. These sort of sit below the surface and I think create these unpleasant tensions. I am hopeful that Canada, I think, will realize that the United States economy, the United States consumer pool are in its best interest, and I'm hoping some cooler heads can prevail here.
Former White House trade official Kate Klukowicz, thank you so much. It does feel, Danny, like a family affair, doesn't it? Sort of.
Yeah, incredibly personal, like putting out this attack ad here,
Oh, totally.
That one there.
I mean, at my Thanksgiving dinner, we're going to have attack ads. I just, different relatives.
Would love to be invited, Lisa. That sounds marvelous.
Actually, not at all. It'll be much more tame. Coming up next hour, not that. Gene Munster of Deepwater Asset Management wrapping up this week's big tech earnings. Plus, Yahira Anand with your morning movers. Shares of Coinbase higher on earnings and an uptick in crypto trading.
case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
In case you missed it, on Bloomberg Brief.
The French economy is resilient. As a euro area economy, we had good surprises, and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday.
2 hours to the opening bell, and you can see that lift continuing to build heading into the open. Futures higher across the board, up 0.7% on the S&P, even more so on the NASDAQ as we look to tech companies to rally. You do see yields just marginally higher, crude lower. Take a look at these two particular names. We're looking at Amazon and Apple after yesterday's earnings. Amazon shares up almost 13% in pre-market trading. Apple shares up 2.3%. Amazon coming into this was only up about 1.6% on the year. So really put the catch-up trade here to the other tech giants. 2 hours away from that cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We are seeing Netflix shares and Warner Brothers Discovery shares rising in the pre-market on a Reuters report that Netflix is eyeing Warner Brothers Discovery's studio and streaming businesses drawn by HBO Max and its popular library that includes DC Comics and, of course, the Harry Potter franchise. We know that Comcast and Paramount's guidance are also circling, so this could turn into quite the showdown. And we move on to Coinbase. Those shares are up more than 4% in the pre-market on third quarter profit surge thanks to stronger trading plus an acquisition and more digital assets on its platform, helping nearly double transaction volume. Investors also liking what they heard on the call, with Coinbase aiming to become an everything exchange and getting into things like prediction markets. And this is one of those companies gaining attention as an AI play. Shares of Western Digital up nearly 10%. This is a data storage giant, and it is soaring after reporting first quarter profit that more than doubled, with the company saying that AI and data center growth are driving record demand for its high capacity drives. Lisa.
Thank you so much, Yahaira. Danny, I think that we should just be an AI play. I keep thinking that.
I think so. We'd probably get paid more. Maybe we can list ourselves on the stock market and do wonderfully. It's the playbook.
Yeah, AI fueled anchor. On our radar this morning, Amazon Web Services reporting third quarter revenue of $33 billion. That's a 20% jump from last year and the biggest year-over-year rise since the end of 2022. Amazon's total sales rose 13% to more than $180 billion. And really key in this is that, Danny, this is a company that always has been heavily capital intensive. It has never been an asset light company in the tech space. Right now, they're demonstrating the power in their cloud services at a time where the other parts seem to at least not be losing ground.
Right, and in that excellent board you've been showing about how much everybody is spending, Amazon is far and away spending the most. But to your point, they're showing that the spending is paying off, that AI is powering their cloud results. Unlike a Meta, where Mark Zuckerberg was a little bit more vague on exactly what the returns would be from its AI spend. So the market does seem, at least just this week, who knows what happens after after that, but more discerning on what you're getting in return for the spend.
Yeah, and how much the spending is outpacing some of the increases that we're seeing in revenue. Meanwhile, when it comes to other sectors other than AI, although they could also be an AI play, U.S. oil majors Chevron and Exxon reporting this morning. Exxon posting an earnings beat, the company pressing ahead with a raft of expansion projects despite slumping oil prices. Meanwhile, Chevron beating earnings estimates as profits from the Hess acquisition were included in the results for the first time. Danny, to me, these stories are fascinating because of the job cuts coming with them and the play for just simply having the supply in order to compete on just product rather than price at a time where prices are expected to continue to be at least somnolent for a while.
Right, it's a symptom of oil prices that are on track for their worst year in 5 years. Plus an OPEC Plus decision this weekend where they're likely to increase oil supply yet again. So you have them and the oil majors increasing the supply. So what do? You just try to get more market share and you go big on expense discipline, which can result in job losses.
Yeah, we saw $18 billion of expense discipline from the likes of Exxon this morning. Vice President J.D. Vance, meanwhile, meeting with airline CEOs amid a push to end the government shutdown. Ahead of the busy holiday travel season, air traffic controller absences causing major delays and cancellations at airports along the East Coast Thursday. This is what really caused the end to the shutdown, the prior longest shutdown that we saw during the first Trump term. I just wonder whether this is also a play for political cover, how much this is trying to jockey for public sentiment as to who's to blame.
And I mean, it's notable that the airlines weren't just like end this shutdown. They said, we want to clean CR, which is decidedly with the Republicans and what they want. So the airline's almost making a clear decision in that. But I mean, the statistics and numbers have been so bad. Orlando apparently is one of the worst hit when it comes to air traffic control. The average delay was nearing 3 hours for airlines. In New York City, they had a ground halt, not just because of the bad weather, but also insufficient staff. For these senators and for these representatives who go home basically every weekend, this is hitting them literally where it hurts.
I really would like to see that chart. If you have it, if you could send it to me, just where the biggest delays are, just because I'm very curious where not to travel.
It will make you at Florida, basically. Don't go to Orlando.
Yeah.
Sorry, Orlando.
Honestly, I've seen that happen though so many times. The storm that always happens, the canceled flight, not getting rebooked, but you know.
Yeah, it feels like shutdown or not, you're sitting on the tarmac. Sorry.
Turning back to tech, less of that. Apple share is getting a boost following a revenue beat and an upbeat holiday forecast. Gene Munster of Deepwater Asset Management writing this: I expect Apple to be the best performing Mag 7 through the end of the year. Gene joins us now. Gene, Apple, best performing. Why?
It's pretty straightforward. There's two big levers. First is that iPhone demand for the next 3 quarters is likely going to outpace the street. The street's looking for around 7%. I expect it to be 10%. That, of course, is one of the big focus. That's why the stock was moving around aftermarket yesterday. It's all about the iPhone. So that piece. And it begs the question of why is the iPhone going to be better? It's not about AI features. It's less about product features. It's more about this massive upgrade pool they had back in 2021. As a reminder, that year iPhone grew 39%, huge growth. And then the subsequent 15 quarters, it basically was down 0.5%. And now we're starting to reap the benefits of that big cycle. So that's one piece, is just we're going to see some better iPhone numbers than expectations. And the second is that the Apple Intelligence bar is just so low coming into the new Siri next year. And I think that hope springs eternal when it comes to investors and when it comes to a feature like Apple Intelligence that I believe is going to be the biggest step forward since the iPhone itself. I mean, this is a massive potential for them to contextualize personal data with some sort of digital assistant. And, you know, they've set this high bar out that it's going to be next year. Your own Mark Gurman is saying that it's going to be kind of March, April timeframe. And I think that anticipation of that's going to be good for the multiple. So when you put those two together, I think that sales are going to be better because of the iPhone upgrade pool. And then separately, I think the multiple expands because anticipation of what's going to happen with Apple Intelligence.
Gene, we were speaking with Dan Ives earlier of Wedbush Securities, and he said that he expects Apple to partner with the likes of Google with some sort of a Gemini partnership to provide some of the heavy lifting for the AI effort. Is that something that you're expecting? Is that kind of the underpinning of the optimism around Apple AI?
That's part of it, and I think Dan's definitely onto something that what's going on with Gemini and just Apple working beyond GPT and OpenAI, and what they have told us back at WWDC in June is that they are open to other developers, other platforms, other large language models, and they've specifically pointed out to Gemini. The central question is just how much? Is this just in terms of the menu for developers? Are they going to just allow developers to use the Gemini model when they build iOS apps? Or is this something bigger where they really lean on Gemini to power this new Siri experience? And so it is a daunting task to take this personalized data and do this contextual, build these personalized bots around it. And so I expect them to pull from more than one, more than just OpenAI to deliver that. So I think he's onto something. One of the other big questions around this is, what does this mean in terms of financially? And in the case where they would be doing something with Gemini, this is a little bit of a different piece where they're actually licensing technology from Google. It's most likely where Apple would pay Google for that. Now, they've given guidance to expect some of their CapEx and some expenses around AI to go up modestly next year, a few $1 billion, which seems like chump change when you look at these hundreds of billions of dollars that are being spent. So the bottom line is that this is a cost. If they do end up leveraging more around Google, is a cost that Apple can easily manage and maintain the margins that investors love so much.
Gene, is there any regulatory risk to that? Is this a relationship that regulators would welcome and not challenge?
I mean, clearly, the regulatory piece has been something that has concerned investors. That has been diminishing over time. And I think what we saw with the regulatory around Google and their search deal, of course, this is about a fifth of Apple's earnings come from this Google search placement. And so the fact that that kind of went in a good direction, I think is a sign of a little bit of a softening tone on the regulatory side. So I think that in this piece, this dynamic around Google, it largely won't have a regulatory topic. There is a question about if Apple does want to do something bigger, if they want to acquire somebody like a Perplexity, which I think would make a ton of sense for them. That is something that may be a little bit more of a challenge. These big tech companies want to get a hold of Perplexity and Anthropic, but I think that regulatory piece is something that's going to make that less likely.
So, Gene, if a strong iPhone 17 upgrade cycle allowed Apple to play for time when it comes to their AI offering, just how much time did it give them? How patient are you willing to be to allow Apple to figure out and solve the mess that currently is Siri?
I mean, it's really the central question for Apple over the next 2 years, 3 years, maybe even 5 years, of how much time investors are going to give them to figure this out. So point of time today is that the bar is really high because they've set that bar high about what the next series is going to look like. But if we fast forward into April, and let's say that it's a disappointment, I think that the stock will clearly trade off, but investors are going to give Apple more time. Competitively, all that's on the horizon next year is this new device that we'll see for the first time from OpenAI. It'll be available likely in 2027. But there has been essentially nothing that's happened when it comes to consumer hardware AI that has changed the competitive field. And so at the end of the day, consumers love their Apple devices. This resurgence we've seen with the iPhone in the last 2 quarters and the guidance for December is all about that commitment that Apple customers have to the platform, that upgrade pool. And so the reality is that these devices just become entrenched in our lives. They're just surround us. It's not just the phone. And I think that that's going to give them much more time. Yes, the stock is going to have some variations around how people feel about any given change to their AI, but ultimately, investors will give them more time. And most importantly, the consumers will, because they've made such a big investment into Apple's products over the last decade.
Jane, just quickly here, you said that Apple is going to be the biggest gainer through the end of the year. Who do you see in the Magnificent Seven names as being the biggest loser?
I mean, I think that, surprisingly, I think Amazon's going to have its surge today, but expectations have shifted higher. I still think that they're struggling with, they're losing share within cloud. Yes, they had a good quarter with AWS, but that losing share piece. And so It's been a laggard. It's getting its day in the sun today, but I think that that's probably going to be towards the bottom of the list.
Gene Munster of Deepwater Asset Management, thank you so much for those insights. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. NVIDIA pushing to expand AI infrastructure around the world. The chip maker is supplying accelerator chips to South Korea's largest companies, Samsung, Hyundai, and SK Group. This as NVIDIA plans to invest as much as $1 billion in AI in the AI company. Poolside, the deal would quadruple the valuation of the startup. Meanwhile, American soybeans are great again. China has purchased at least 4 U.S. soybean cargoes following the summit between President Trump and Chinese leader Xi Jinping. Sources telling us here at Bloomberg the cargoes are for shipment later this year and in early 2026, and the total volume is about 250,000 tons. And Google's YouTube TV has lost major channels like ESPN and ABC after failing to strike a new licensing deal with the Walt Disney Company. YouTube called the blackout a Disney negotiating tactic to force price hikes, while Disney argues Google is trying to undercut industry standard terms. Discussions between the companies are ongoing, and YouTube will offer subscribers a $20 credit if the channels remain unavailable. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, priced for perfection.
Spreads are very tight. It probably makes sense for these companies to issue. But I would say that overall, we're starting from a position where credit is priced pretty close to perfection. Not much scope for error.
Winnie Caesar of Credit Sites joins next. This is Bloomberg Surveillance.
You missed it on Balance of Power. I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their job.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Stocks pushing higher on the last day of this week, which will be the third straight weekly gain. You can see it led by the NASDAQ. You are seeing, as the session grows older, futures in the S&P continuing to push higher, up 0.75%, 74 basis points. We're looking also at yields marginally higher. A real question here about a Fed that might not cut in December and what this means longer term, about just how dovish they are. 10-year yields at 4.1%. We did also see yesterday a whole glut of bond sales. And Danny, one thing that we saw was Meta coming out with $30 billion of sales, as follows Oracle with their blockbuster debt sales. And we did see a huge reaction in credit markets, 2 basis point push upward in terms of investment grade credit spreads. Not much in terms of pushback. In fact, more just give us more.
And it's weird because the equity market for Meta fell 11.33%. Usually it's supposed to be the discerning credit investors who get scared and are bearish. Instead, it was the equity market. Does it speak to the amount of capital in this credit market that has to be put to work? That maybe some of the risks are getting papered over, and then you do get that divergence, bearish equity market, bullish credit market.
Is the risk transferring from equities in some ways to credit as they fund the build out of the AI promise, hopes, and dreams? Under surveillance this morning, priced for perfection.
I don't think I'd go as far as saying we are concerned. The fact is the market is currently absorbing it. Spreads are very tight. It probably makes sense for these companies to issue. But I would say that overall, we're starting from a position where credit is priced pretty close to perfection. Not much scope for error.
Here's the latest. Meta defying AI spending gloom with a record-breaking bond sale. The social media giant selling $30 billion of bonds while drawing record interest for the debt. I think that there were offers of something north of $100 billion. Winnie Caesar of credit sites writing this. The acceleration in debt-financed CapEx on AI-related initiatives is weighing on free cash flow and credit metrics. Meta could turn free cash flow negative next year as CapEx reaches 50% of sales. Winnie joins us now. Winnie, great to see you. Thank you so much for being here. How much are you getting concerned about the amount of debt issuance tied to some of these big tech companies?
Hey, good morning, Lisa. So we are definitely seeing a shift away from cash flow financed investment, equity financed investment, back into intentional releveraging and some debt financed investment, which is very typical of that middle stage of the credit cycle where you start to see more M&A, more financial engineering, a bump up in CapEx and spending. And that does come with some additional concerns around where valuations are and are they appropriately reflecting the potential return on that investment.
At this point, do you think that investors just throw caution to the wind as soon as they see the word artificial intelligence in any kind of prospectus?
Well, I think it's a little bit of a more nuanced view than that. I think that people realize that AI is going to be a defining trend probably for the next 5, 10, 20 years. There's definitely sustainability and durability there. But there are a lot of open questions as to the magnitude of return on investment, the timing of that. And I think that people are looking at things like Meta bond deals, which is still a pretty high quality issuer, and thinking this seems like a reasonable place to continue to put cash to work, especially because that new bond sale did come with a pretty significant new issue concession, which is something that a lot of investors have not been getting this year in the primary market. So there's that balance of, are these valuations compensating me for the potential risk in a higher quality company? Now, if this were a single B or triple C related bond deal, I think that we'd have a very different conversation.
Winnie, it's notable, though, that the debt being raised isn't just in the syndicate market. It's also private credit that's been participating in this, too. Meta also doing this, a JV with Blue Owl and PIMCO that leans on Meta's creditworthiness without actually impacting Meta credit because it's off-balance sheet debt. Is that concerning, especially with off-balance sheet debt and that being used as a way to fundraise? Seems problematic in some areas.
Yes, I think that off-balance sheet debt is always a very appropriate Halloween topic. It gets your spooky senses rising a little bit because there is a historic track record of off-balance sheet debt sometimes going a little bit sideways. Now, when it comes to the AI investment spend, there is just the reality that so much capital is being raised and needed to be put to work in such a wide variety of initiatives that some sort of diversification of financing does make some sense. Now, that being said, anytime we see off balance sheet, we're definitely taking a closer look, trying to ensure that we understand kind of the stream of cash flows and where the risks really lie.
Well, for things like project finance in general, things happen, Winnie. There's force majeure. There are big events that disrupt, especially physical plants. Are those types of risks fully appreciated by this market?
Yeah, that's a great point. Project finance can be a really challenging road sometimes. And I think when we look back at valuations and where they stand, the reality is corporate credit spreads are very, very tight. Now, that doesn't mean that they necessarily have to widen, but the balance of risks does seem to be skewed much more to the widening rather than incremental compression or tightening from here on out. And that does leave us a little bit more cautious just in terms of the direction of travel of spreads more broadly, as we have this mix of kind of broader macroeconomic risk with what's going on in the consumer complex, and then also just capital structure and balance sheet risk with how things are being financed, where the capital is flowing, and whether that return on investment is going to be realized in the relatively near term.
You have all of that, and spreads are barely moved, Winnie. What would it take to significantly and sustainably widen spreads at this point?
That is the question that every client is asking us. And I think that it comes down to some sort of acknowledgement that the fundamental picture is perhaps less healthy than what people are currently anticipating. Earnings expectations for 2026 are pretty lofty. The most recent earnings have come in, I would say, relatively well in aggregate, though we have seen some signs of pressure in some different sectors. Now, what usually changes that technical demand for fixed income is concerns around downgrades, around defaults, around the potential recession word. And I do think that over the next 12 months, there is that risk that some of these lofty expectations start to be a little bit disappointed. And that's where you start to introduce some of the conversations around what is the true fundamental trajectory of corporate credit. We've enjoyed a massive ratings upgrade cycle. Is that going to start to reverse and start to spook investors a little bit?
I'm looking at a cuddly cockroach costume from Halloween Cost that looks like it is definitely going to do the trick. Winnie, without government data, I'm just wondering from your perspective, is there any sign whatsoever that we do have that downturn that could potentially call people's bluff?
Yeah, so I think then when we look at the composition of economic growth recently, we do realize that so much of the momentum in the broader economy and also the market has been linked to AI spending, to tech spending, to all of those initiatives. When we think about the current health of the consumer, it's a little bit more of a mixed bag, with the banks saying, hey, we're not seeing a lot of signs of pressure here on the consumer. And then some of the consumer products companies saying this is the worst consumer sentiment, the worst consumer environment that we've seen in a very, very long time. Trying to reconcile all of those things, I think, indicates to us that the job market is going to be the linchpin here. Yeah. We've already seen a pretty significant downdraft in the pace of job ads. Of course, we are flying a little bit blind as it relates to official economic data, but there are some substitutions there that would generally point to not a super encouraging labor market overall. Yeah. And we're very much focused on those announcements.
Winnie Caesar of Credit Sites, unfortunately, we have to leave it there. Definitely would be great to get that labor market report next Friday. Coming up next hour, Jim Caron of Morgan Stanley, Vivek Arya of Bank of America Securities, Ryan Wang of HSBC, and Emily Rowland of Manulife John Hancock Investments. From New York on this Halloween Friday, this is Bloomberg Surveillance.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision
of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting, what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Power, money, culture. Linda Almond tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Earnings growth is driving S&P performance, and you want to be where the earnings growth is.
It's hard for us to kind of see a downside catalyst.
The downside risks here is AI is, I maintain it's a bubble.
The market's starting to get a little bit worried.
The market seems pretty happy to whistle by that cemetery, as they say, and until then, markets are going to rally.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Bubble, what bubble? Heading to close a third straight weekly gain. Big tech delivering big time. Amazon and Apple shares rising ahead of the open as spending plans and revenue continue to deliver. Next week, it's Palantir, Uber, and Qualcomm on deck. Those earnings incredibly important given the fact that government data about the health of the economy really has not materialized, probably will not materialize. It still is, Danny, a government shutdown, leaving us in the dark about the non-AI names out there.
But it almost feels that as long as we're not getting the data, we can ignore the macro, that we can focus in on the wonderful company earnings and the AI spend that continues and just how much that is boosting companies. But underneath the surface, you talked about Torsten Slok's note. There are some signs of economic weakness in company earnings, be it Shake Shack or Chipotle. There is some pullback in spending. Is it just on the margin? Is it larger? All of those questions at the moment getting masked over because the tech players have done so well.
And frankly, the Fed's just bailing on the question because there's so much dissent and a lack of some sort of consensus among Fed governors, Fed members, that essentially they're in the dark and they are reluctant to move too quickly. And this is the reason why there's a hard question around what the reaction function is at a Federal Reserve that's facing off with a blank slate with respect to data at the same time that you're getting this K-shaped delivery from companies, some reporting blockbuster earnings, others talking about a consumer in distress.
Right. What we heard from Chair Powell, was it him just trying to digest really divergent views? Or was it a Fed where the onus is to prove that you need a cut, not that you need to prove that you should pause? And Lisa, does it also just show that this is a Fed that's become irrelevant right now?
Yeah, and especially given the fact that there's going to be a compensation shift early next year. In the meantime, one thing that the big tech players delivered on was the CapEx. When you take a look at just how much the CapEx rose over the past year, how much it is expected to rise next year, you just see an incredible exponential escalation in the spending, a question of who's going to finance that going forward. And I think that that really is going to be an increasing question heading into 2026.
It's just amazing how easily this bond market absorbs the amount of debt coming from these companies. Debt to the levels, especially from tech, that we have never seen before. Does that mean it is smooth sailing, that these companies are really well rated? Or is it just because there's so much money that needs to be put to work, that some of the issues maybe are being ignored because that money has to go somewhere? There is real demand, and that supply is getting eaten up easily.
Just going to let you know that if we had been a little bit more forward-thinking, I would have come as a cockroach today, and you would have come as pest control. I think that we picked out the outfits that we would have otherwise picked out.
Absolutely. It's not too late, Lisa. We could do it tonight. I'll show up to the family not Thanksgiving.
Yeah,
that would be weird for Thanksgiving. Halloween event, and we can go trick-or-treating.
Yeah, I'll be in that cuddly cockroach outfit. Right now, we're looking at markets that are not seeing cockroaches. They are up. They are up pretty much across the board. You're looking at S&P futures that are rising and continuing to build on gains that we've seen. Now up 0.8%. You're seeing just marginal lift in bond yields, and oil prices lower by 0.3%, $60.38 for a New York crude. Coming up this hour, Jim Caron of Morgan Stanley Investment Management. The stocks eye another month of gains. Vivek Arya of Bank of America Securities as NVIDIA is ramping up its chip rollout with fresh deals. And Ryan Wong of HSBC as the lack of economic data is adding to the Fed's December doubt. We begin this hour with stocks rebounding following a rough day on Wall Street. Jim Caron of Morgan Stanley Investment Management writing, "We expect turbulence in Q4 as we gain more clarity on what the initial conditions will be for 2026. Jim joins us now. Jim, we're always supposed to see turbulence. Why have we not seen any turbulence in the face of so much doubt, and yet, frankly, AI companies that just keep on delivering?
Good morning and happy Halloween. So look, I mean, the markets, I don't think the markets are experiencing the turbulence for a lot of the things that you were just discussing, is that the big leaders, the narrowness of this rally that we've had, which is a large cap tech, are printing really strong numbers. Now, those might be just a handful of stocks. When we look at the rest of the stocks in the S&P 500, there are some cracks, and it is reflecting some of the weakness in the broader economy. I know we haven't gotten any of the data yet, but we understand that things aren't necessarily accelerating. What we have to recognize is that the market is not the economy, and the economy is not the market. So when you think more broadly about the S&P 500, say the S&P 493, X the Mag 7, what you're really looking at is a broader picture also of the economy. So therefore, if the economy is moderating at some point, then you're likely to see those broader equities also somewhat moderate. But the dominance of those Mag 7 is so strong, and the earnings and the numbers that they're printing are so monstrously strong, it's carrying the rest of the markets. So that's why we're not really seeing the turbulence. It really just depends where you look. If you look in other broader sectors of the markets, you might see some of that turbulence. And that's really where we think some of the opportunity is going into 2026.
Can you build on that? Where do you think we're going to see some sort of rebound, given the fact that some people are speculating you could see a growing amount of this pain, given the fact that prices are expected to continue to rise, albeit not necessarily at the levels that we saw in 2021 and 2022, and there is this feeling that this weakness in the lower income sphere is just continuing to build?
Yeah, so we have to look at the full picture here, right? So one of these things goes back to the tax package that, one big beautiful bill that got passed, and effectively starting to think about the consumer and what stimulus package they're going to get next year in the form of bigger tax deductions. That number in terms of what the consumer, what taxpayers are going to pay less is somewhere on the order of $160, $170 billion. So that's money that's going to be in the pocket of the consumer. As we know consumption is 70% of GDP. That can keep consumption relatively robust, even though the labor market picture, which is weak right now, it's currently weak right now, might start to improve as we move into 2026. Most economists' forecasts into 2026 is that we will have better economic growth versus 2025. So if you have a growing economy, likely in 2026, and you have enough slack in the labor market at this point to keep wages at a reasonable price, then the profit margins and the earnings margins for many of these companies can stay somewhat afloat. So we have to recognize that whether it's accelerated depreciation, all of the various things that came out of the tax package, this is going to be a tailwind as we move into 2026.
And Jim, I know you, and it's the old adage of many people saying that the stock market is not the economy. Is that kind of changing, though? Because nearly half of all households own equities. It is a record exposure from everyday people to this equity market. Have we entered a scenario where this time around, the put from take your pick from the Fed, from the president, has gotten all the more important just because of household exposure to equities?
Yeah, so it's a good point, right? So the way I think about this is that conditions have become increasingly fragile. As this market has moved up, people's overall equity exposure has also moved up too, meaning that their wealth effect is tied to what's happening in the markets. And like any other time in markets, there tend to be drawdowns and corrections and things like that, and that can have a more of an outsized impact on consumer spending and consumer psychology, because as you point out, that there is an attachment to the markets. But that being said, most people, I would hope, when they're investing in the markets, have a diversified portfolio that if we do see this correction that may happen in the future, at some point in the future, I think it's likely to happen amongst the leaders currently right now. It's really probably a large cap tech correction. Maybe that comes. I'm not forecasting that, but maybe that comes at some point. But if you have a diversified portfolio, I think that people's broader portfolios, well-diversified portfolios, will hold up better than what the actual headline of an equity drawdown might actually show. So it really gets down to that. It's a hard question to answer because I don't know how everybody's positioned, but I would expect that most people are pretty well diversified.
A lot of the diversification, though, Jim, this year has come in the form of gold, and we've seen incredible volatility starting this week out with a 3% decline. Is that a concern? Is gold a good way to diversify, especially at these levels where some serious volatility is being introduced?
Yeah, look, I mean, it's one of these subjects here where the price has gone up quite a bit. So anything that you say against that is like, well, you've been wrong in the markets and whatever. We don't have a position in gold in our portfolios. Do I think it's a reasonable way to diversify? Sure. You know, if you have a longer term view and a broader portfolio, absolutely holding some gold is always going to be a good idea. But are there other things that you could also own too? Could you own high quality U.S. Treasuries? Could you own high quality investment grade bonds, earn some income, and at least get some positive carry that should be able to preserve capital and preserve income and things like that? So when I think about a portfolio for people who are broadly investing, they generally need some liquidity in that, and they also want to get some income. So that's why we think about the more of the broader equity market, including large cap tech, but then also thinking about other items, but really at the margin, gold. And I think gold has become very speculative at this point, and I think people are chasing a lot of those returns.
Yeah, we saw that certainly in the past couple of weeks with the volatility there. Jim Caron of Morgan Stanley Investment Management, always wonderful to speak with you. Thank you so much for taking the time. This upcoming week should be jobs week. We should be getting the labor market report on Friday. We should be getting JOLTS. We should be getting a host of different information. Instead, we are not. We are getting ISM manufacturing. That should be helpful with respect to what's going on in the industrial space. Earnings from Palantir, earnings from Qualcomm, earnings from, of course, we can also get Uber on Tuesday. We get the elections in New York. We get ADP employment data, how people are looking to all of these other peripheral measures to take the place of the official data. And then, of course, University of Michigan consumer sentiment data. But it really is interesting, Danny, that everyone is talking about this bifurcation in the economy, how the labor market holds the keys to that. We should be getting the October report on Friday next week, and instead, we're getting crickets.
And part of the issue right now is Ross also hearing about all these layoffs from different companies, be it Amazon, be it UPS. It runs the gamut in the sectors we're hearing from. It so far hasn't shown up on the headline level, which has been a head scratcher. Would it be showing up now? That we don't have an answer to.
And Neil Richardson of ADP yesterday was saying the reason why it hasn't shown up is because smaller employers are the ones that account for the greatest amount of job creation. How much can you get a read on those? That's the reason why things like the Beige Book have taken on import as well. Right now, what we're getting from companies is a myriad picture. It's a bifurcated picture. It's that K-shape. And that is the reason why it has been so incredibly interesting. Let's do an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Trump is urging Republican senators to scrap the filibuster in order to bypass Democrats and reopen the U.S. government. The filibuster is a tactic used to delay or block votes by keeping debates running. 60 votes are required to overcome a filibuster. Republicans currently have just a 53-seat majority. It's been 30 days since the start of the government shutdown. Meanwhile, Vice President J.D. Vance is warning a prolonged U.S. government shutdown will impact travel during the holiday season, telling reporters it could be a disaster if the shutdown extends into the Thanksgiving travel season. The comments come after Vance held a roundtable with the CEOs of United and American Airlines. And it's marathon weekend here in New York City. The 54th edition of the world's busiest run is expected to draw more than 50,000 participants from around the world. Temperatures are expected to be in the mid-40s to low 50s with partly cloudy skies. The race begins at 8 a.m. on Sunday morning. That's Bloomberg Brief. Lisa?
Thank you so much, Yahira. Have you ever run the marathon?
I have not, and I never will.
Oh, yes, that's so. That was pretty definitive.
I feel like you might have. You're a big runner.
I admire people who run in the marathon. I have the wherewithal to go 13 miles, maybe 14. You start getting into the 20, 21. That's just...
You know, it's just too much time to train. Like, you have to train, like, hours on the weekends. I don't have the time for that.
I don't think my knees have the time for that either. Up next, the morning calls, plus Vivek Arya of Bank of America Securities as NVIDIA is ramping up its chip rollout with some fresh deals. That's coming up next. This is Bloomberg Surveillance. To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin. New 2-hour programming beginning November 3rd. Only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This year, AI became profitable. And when something becomes profitable, you want to manufacture more of it. Just like when you're manufacturing chips and wafers and DRAM, if the manufacturing of those chips were profitable, you want to build more factories to create more chips. Now that the AI is profitable, we want to create more factories to generate more AI.
That was NVIDIA CEO Jensen Huang speaking at the Apex CEO Summit earlier today, and he was not wearing his leather jacket. He was wearing a regular suit, which is notable. Right now, you're seeing stocks higher. You do have to wait till November 19th to get information from NVIDIA in the form of their earnings. People are not waiting, though, to pile into the tech names after the earnings that we have gotten this week from Microsoft, Alphabet, Amazon, Google, Meta. Right now, you're seeing NASDAQ futures up 1.4% above that S&P return, or the S&P gain on futures of 0.9%. Time now for the morning calls. First up, Piper Sandler raising its price target on Amazon to $300, saying Amazon seems on the cusp of an AI product cycle. Those shares, as we talked about earlier, up almost 13% in pre-market trading. Next up, JP Morgan raising its price target on Apple to $305, seeing its product cycle momentum sustaining as that Apple iPhone 17 really does seem to generate a lot of demand. And finally, New Street raising its price target on NVIDIA to $307, expecting the company to exceed its base case for AI deployments in 2026. Sticking with NVIDIA CEO Jensen Huang is still hoping to sell the company's Blackwell chips to China as it continues to forge new AI deals elsewhere. Vivek Arya of Bank of America Securities maintaining a buy rating on NVIDIA and upgrading its price target to $275. Vivek joins us now. Vivek, thank you so much for being with us. What do you think is the most important takeaway from the Asia tour that we have seen with Jensen Huang and his push to try to sell more into China?
Sure. Good morning. So a few days ago, we had a chance to attend their GTC conference in Washington, D.C. So I think there were three important points that came out. First is that AI is absolutely an ongoing industrial revolution. It's very important for the government to stimulate and nurture it. It's the next productivity tool, and it is not just the government here in the U.S. I think we see this as a global phenomenon. You mentioned he was in Korea, he was in China earlier. So every government in the world, I think, understands that this is a very important tool to nurture. Second is that NVIDIA's full stack approach is seeing applications in a lot of end markets. You know, there's not just some chips that are deployed in a data center somewhere. They're having real world applications and implications in markets such as industrial, such as healthcare, such as cybersecurity, even emerging markets such as quantum and such as robotics. And then finally, the company's visibility extends out till the end of next year, at least $500 billion of orders for its new Blackwell and upcoming Vera Rubin platform. And I think what you're seeing with the CEO's travels and engagements is to make sure that the supply chain is ready. You know, Korea is an important source of memory chips and some foundry capability. You know, it's one thing to say that you have orders for $500 billion, but the supply chain has to be there to adopt it. And then finally, when it comes to China, we have it at zero in our model. I think it's just too hard to predict where the geopolitical nature of these engagements is going to go. It's an important market. We think it's about 10% of the overall market, but I think NVIDIA can do just fine without engaging with China in the near term.
Vivek, we can get into the supply chain securitization that they're working on, as well as this discussion around how much they are connected to the geopolitics of the moment. But I am curious about why NVIDIA is not threatened by any of the other chip makers that seem to be really pushing to try to get in on the game. And we've seen AMD do well, we've seen Qualcomm do well, we've seen the shares of a number of these companies surge, and yet it hasn't dented NVIDIA's lead. Why?
Sure. You know, the very simple visual I can give you, it's the competitors are essentially creating a sitcom at a time, whereas NVIDIA is like the Netflix of the market. You know, that they have developed a full stack approach. Their CUDA software, came into place in 2007. So I think they're in the 14th generation of that. They will soon start their third generation of implementing racks. So what you get from the company is essentially a lot of integration of their hardware and software. There are over 5 million developers who can work with their platform. It's available in every public cloud, whereas a number of their competitors are still developing their first rack scale architecture, and the software is still in infancy. Some of the custom chip suppliers that you mentioned have no software. The customer has to develop that. And in other cases, the merchant suppliers, have a decent hardware platform, but they have never actually implemented rack scale. So I think it's important to, put them on a level playing field. And from that perspective, NVIDIA is several years ahead of that.
Vivek, it feels like the rules of the road when it comes to China. We still don't know, even in things that were supposedly agreed upon. The H-20, a glaring example of this agreement reached with the White House, where the U.S. would get 15% of the revenue. They've yet to establish a legal framework for it. How do you think it ultimately shakes out?
Yeah, I think, look, China is an important market for two important reasons. One is that their software community is extremely innovative. Unlike a lot of the West, which is, in many cases going after artificial general intelligence, going after the biggest models, the most comprehensive models, there's a big part of the Chinese software ecosystem that is going after a lot more practical applications. And I think in some ways, not having resources has become part of the innovation cycle for them. So it's very important to engage with China. But having said that, if you look at the spending by their top hyperscalers, it is still less than 10% of overall spend. So it's important to engage with China. It's important to stay, competitive. But NVIDIA, we think, can grow their top line over 50% next year without having much contribution from China. I think on the geopolitical side, I think the U.S. wants to make sure that, there is some scrutiny, there is some limitation on what technology is exported. The H-20 is a product that is, at this point, basically 3 years old. I think what China is probably interested in is the Blackwell variant of what NVIDIA can supply, but it's hard to know whether that specific new variant will be approved by the U.S. government. So that's why we are assuming no contribution from China data center in our model.
Vivek, you mentioned the hyperscalers, of which we got their earnings this week, spending of $72 billion for the year for Meta. Alphabet, it's $93 billion. Amazon, it's $125 billion. As long as the hyperscalers are putting up those kinds of numbers, do you remain bullish on NVIDIA?
Yeah, I think that's absolutely the right point, that it is really capital spending by these top customers. And what I would also mention is that in each of those earnings reports, you heard them say that they are starved of capacity. Right? That it is not demand, it is capacity, it's supply constraints. Otherwise, they could have grown even faster. And you saw most of them exceed expectations for their cloud computing revenues. That's why we think this thing is a lot more real than sometimes people give it credit for. And as NVIDIA comes out with the new generation of their platform, it provides a lot more computing power per unit space, per unit power. And that, I think, is the real constraint. How fast can data centers be built out? How fast can power and water be available to them? And that's where I think the governments, the U.S. government can be extremely helpful in approving these data centers, providing them with power. But I think as power becomes available, you will see a lot more AI deployment. And then finally, I did want to mention that NVIDIA, the stock itself, if we are right about the visibility they shared with us at GTC, it's essentially trading at a market multiple for a company that is able to grow 5 times as fast as the market and grow earnings 7 times as fast as the market. And it's basically trading at a market multiple. So we do think that the stock still remains very compelling.
Vivek Arya of Bank of America Securities, with the best analogy all day, the idea of Netflix, the Netflix of the world being NVIDIA and the others just simply being sitcoms. Thank you so much for that. I will just say, heading into the open, we did get Exxon and Chevron earnings, and we're getting some headlines from the Exxon call. This is pretty interesting. Exxon seeing California chasing flawed ideology like Europe. California causing forced speech by companies, a real pushback there.
Wow, and a real willingness to express political opinions, but clearly not against this administration on the other side.
Really interesting. Anyway, we will follow that throughout the day, I'm sure. Coming up, Ryan Wang of HSBC, as the lack of economic data is adding to the Fed's December doubt. This is Bloomberg Surveillance.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting, what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Geoffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
In case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
coffee
lovely Tara.
coming. There we go. So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade. Live every weekday.
Getting a lift to end the week. We are seeing futures across the board higher with about an hour to the open, led by that Magnificent Seven cohort that did deliver earnings that beat expectations and continued to indicate incredible capital expenditure spending over the next 12 months. We're seeing NASDAQ futures up 1.5%, S&P up 0.9%. Bond markets are getting a little bit softer here as people try to imagine what it looks like if the Fed doesn't cut in December. 10-year yields, although now just basically flat here around 4.1%. Turning to the Fed, Kansas City President Jeffrey Schmidt giving his reason for the reason why he dissented in favor of no rate cuts at the October Fed meeting. Bloomberg's Michael McKee joins us now with some more insight. Mike, what's his rationale?
Well, Jeff Schmidt is putting out his reasoning behind his dissent, which was kind of unusual to not cut during the month of October meeting, the Fed's blackout period ending last night. And Schmidt is saying basically he disagrees with the way the Fed is looking at the balance of risks. He says in his statement, I do not think a 25 basis point reduction in the policy rate will do much to address stresses in the labor market that more likely than not arise from structural changes in technology and demographics. However, a cut could have longer lasting effects on inflation if the Fed's commitment to its 2% inflation objective comes into question. And while Jay Powell dodged my question about market valuations, Schmidt takes a bit of a sideways swipe at it today, adding in his statement that financial market conditions appear to be easy across many metrics. Equity markets are near record highs, corporate bond spreads are very narrow, and high-yield bond issuance is high. None of this suggests that financial conditions are particularly tight or that the stance of policy is restrictive. So you could probably put Schmidt down for objecting to a December cut as well. And I point out that, as I mentioned, the blackout period is over. Lori Logan speaks at 9:30 this morning, and we have Beth Hammack and Raphael Bostic speaking at noon today. So this is the chance to get on the record if you are one of the people who disagrees with the way the Fed is going.
And Mike, we have heard from Beth Hammack before that she does seem more concerned about inflation than other members on the Federal Reserve. Do you get the sense that anyone else on the Fed agrees with Jeff Schmidt and does think that the balance of risk signals they need to be more aware of inflation than perhaps structural labor market issues?
Well, there were people on the Open Market Committee who did suggest that they thought that going much further with cutting rates would be a mistake. Alberto Musalem of St. Louis and the folks from the Minneapolis and Dallas Feds both had suggested that that might be the case. So it'll be interesting to hear from Lori Logan this morning. And we don't have Neil Kashkari on the calendar yet, but we'll see if he comes out with something. We know that Musalem's going to speak next week.
Thank you so much, Michael McKee. Great insights, especially given the fact that we've been talking about how, in general, the Fed doesn't care about markets unless they're going down. It does seem like Jeff Schmidt cares about markets that are flying pretty high, and we are seeing plenty of deals getting done.
Yeah, one of the few to talk about financial conditions is Jeff Schmidt. There is a scenario which we were talking about with Jim Caron where households own a record amount of equities. So there does seem to be an ever more interlinked connection between what the Fed is doing, what stocks are doing, and how good households feel.
Particularly the upper end of households that have a greater proportion of assets in markets. Turning to the economy, the lack of data make earnings reports from consumer brands all the more important. Chipotle shares sliding as much as 22% on Thursday, the largest intraday drop since 2012 after the restaurant chain lowered its full-year outlook. Bloomberg's Michael Halen joins us now. Mike, thanks so much for being with us. I'm just curious whether Chipotle is an anomaly. It's a question of how much chicken and beef they put in their burritos, or whether this really is what you're seeing across the sphere when it comes to consumer discretion and dining out.
You know, look, the low-income consumer continues to be pressured. You know, October, you know, seems to have slowed a bit, you know, especially around the D.C. area due to the government slowdown, right? But the companies that we cover that have reported so far, Chipotle's been the weakest, right? So yesterday, Shake Shack put up a 5% comp. Domino's put up a strong comp. Burger King put up a 3% comp in the U.S., right? So a lot of this is self-inflicted on Chipotle's fault. You know, in the restaurant business, what we're seeing is the gap between winners and losers widen. People are more discerning, so when they do go out, they want to make sure they have a great experience. And Chipotle's numbers would indicate customers are not having a good experience.
So, Michael, more broadly, is it fair to say that you're not seeing this weakness, you're not seeing the same kind of pushback that we heard in the commentary that spooked a lot of people, at least in markets?
You know, the restaurant data we get, the sales are better than they were last year, which they're not, you know, they're up 1%-ish this year, a little more. So they're not crushing it. Traffic's down. They're taking a little bit of price, and that's boosting sales. So they're not knocking the cover off the ball. Low-income consumers, like I said, continue to struggle. But this is not the end of the world in the restaurant space by any means.
Michael Halen of Bloomberg Intelligence, thank you as always. Maybe they just need to make the scoop a little bit bigger. Ryan Wang of HSBC joins us now, and he's going as an economist with no data for Halloween, which we all find very scary. I'm just curious how much you're digging into some of these earnings reports to edify your analysis in a data vacuum.
Well, that's definitely part of the picture. We have to listen to what the companies are saying. Of course, the Federal Reserve also does still have its beige book reports, so those are the anecdotal comments that can come from businesses of all sizes, big and small. That's even more important in the current environment because, yeah, we're getting a few private sector economic releases, but obviously we are not getting the traditional releases, and this week is no exception. We should have gotten the third quarter GDP number yesterday. We should have gotten the PCE inflation this morning, but it's a data vacuum.
One of the things that is notable, which our Bloomberg Intelligence was just talking about, was for Chipotle and Shake Shack, it's the exposure to the younger customer base, which saw a 4.4% unemployment level in August for those aged 25 to 29. Is that a problem that expands more broadly into the economy? Is that age group a canary in the coal mine when it comes to joblessness expanding?
Well, I think what we've really seen is a small increase in overall employment over the past year. And, you know, the national unemployment rate, or at least the latest one that we have, of 4.3%, is still relatively low. And then when you break it down into those age cohorts, I think it does fit with this idea that, okay, hiring rates are somewhat slow. And so the lack of hiring disproportionately impacts that age cohort. So I think, in a way, the signals do make sense. But also it's important to note, again, the unemployment rate overall is fairly low. That's partly because of the impact of reduced labor supply, a huge theme that we heard from the Fed Chair Powell this week and consistently. And that is raising the question of what is the break-even level of job creation, which is, you know, by all accounts, is much lower than it was in the past.
Well, Powell this week also said that there was a strong case to pause if the alternative data, in light of not getting official releases, remain solid. Is the alternative data enough to get a clear enough picture to base a Federal Reserve rate decision around?
I think it just makes things a little bit more confusing. There are some pieces of data. So Chair Powell this week did mention the state unemployment insurance claims data, and Bloomberg, amongst others, is doing a great job of adding those numbers together. So in a sense, we still can say that there hasn't been a sharp acceleration in firing over recent weeks, right? So it just takes a little bit more interpretation. Next week, we will get a private sector release on employment growth from ADP. And going into this government shutdown, it appeared that employment growth had slowed to around 50,000 per month. So we'll be looking at those numbers next week to see, is there an acceleration from that rate? Are we still staying around that 50,000? But again, it's against this context of much slower population growth this year, much slower immigration. And so we have to take that into account when we evaluate these numbers.
Has the Fed rendered itself irrelevant right now? And I say this because ultimately it seems like the market, and I say collectively, and perhaps the consolidation at the top and the lack of diversification of names is a feature, not a bug when it comes to the returns, seem to be climbing regardless of a Fed rate cut in December. So does a Fed rate decision matter at all right now to markets that are flying on some other indicators?
Well, it also goes back to this question of what is a neutral policy rate, right? So what is holding back? What is a rate that doesn't hold back the economy, doesn't hold back markets? And I think it's all rolled into together, right? We have to look at equity markets, but also the rates markets. And at the end of the day, the Fed only has one instrument, so it's hard to find a single number that's going to balance all of these different elements. This came up also in the press conference where, Chair Powell basically said, look, all of the investments, all the AI investments that are happening right now, they're not particularly interest rate sensitive investments, right? So of course the policy rate doesn't really have a big impact on that structural trend.
At this point, though, can't you just say that the economy is doing fine with interest rates where they are, and this overlay of CapEx spending has just turbocharged certain points of it, but wouldn't that suggest that we're closer to neutral, sort of to Jeff Schmidt's point?
Well, yeah, I mean, there certainly is a case for that, and our own view is actually that, at least in the near term, the current policy rate, which is now below 4%, may actually be relatively close to neutral. And we know there's a spectrum of views. We know that Chair Powell considers the policy rate only modestly restrictive, so that means less restrictive than other peers on the FOMC who think it's moderately restrictive. That makes a big difference because it's what's going to determine how many rate cuts going ahead, the speed, and our own forecast actually is that we will get a December rate cut, but nothing in 2026 or 2027.
Which flies in the face of the potential composition shift and what they can do based on the economic activity. Who is going to lead the Fed? Ryan Wang of HSBC, thank you so much for being with us. Have a wonderful weekend. Danny, that to me is really the key question, right? Is this going to be a Fed with a very different reaction function next year that might not look at the data in the same kind of way that the current Fed Chair Jay Powell Fed does?
And is it a Fed that allows inflation to stay around 3%? Do they look the other way? Do they unofficially adopt more of a band approach than specifically targeting 2%? And what does that mean for economic acceleration? You and John have talked a lot about this. Are they going to be cutting into an acceleration, especially with the CapEx coming from the tech giants?
And this has been a pretty dovish Fed. I mean, we've had inflation above 3% for 5 years now. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. U.S. oil majors Chevron and Exxon out this morning with earnings. Exxon posted an earnings beat. The company is pressing ahead with a raft of expansion projects despite slumping oil prices. Meanwhile, Chevron beat earnings estimates by a wider degree as profits from the Hess acquisition were included in the results for the first time and provided a boost. Chevron's global production rose 21% to the equivalent of 4.1 million barrels a day. Meanwhile, according to the Wall Street Journal, JP Morgan is running a group investing about $90 million in the Texas Stock Exchange. The TXSE group is expected to launch the Texas Stock Exchange next year. The Journal reporting the JP Morgan investment brings total fundraising above $250 million. And in sports, Lamar Jackson returned from injury to lead the Baltimore Ravens to a decisive 28-6 victory over the Miami Dolphins on Thursday Night Football. The two-time MVP threw 4 touchdown passes as the Ravens defense forced 3 turnovers and held Miami to just 6 points on two field goals. Baltimore rises to 3-5, and Miami falls to 2-7 on the season. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira, and have a wonderful weekend. Up next, Emily Stanley Rowland of Manulife, John Hancock Investments, as AI demand continues to fuel the market rally. Plus, Yahira back with your morning movers. Getty Images surging on a new licensing deal. This is Bloomberg Surveillance.
Lesson is that 1.5 is not the end of it. So if we look at last year, you mentioned one of the metrics, one of the temperature databases went above 1.5, but there are about 4 or 5 others that still are below 1.5 for now. The IPCC has sort of projected that by early 2030s or thereabouts, all the other databases will consistently be above 1.5 for the entire year. So we still have that little bit of wiggle room. But I think some of the messaging is a bit mistaken. It's not that we passed 1.5, we're dead in the water. No, the assessment of the science has shown that if we go to net zero by 2050, there is still a chance of us peaking and coming back down to 1.5 or below by the end of the century. There is still hope to actually get back down to something of a livable world if we get our act together.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg. When it comes to big tech, $1 trillion in the balance sheet, generate $300 to $400 billion a year. So that's why the reality is they are fueling this AI revolution. Investors continue to underestimate the scale and scope, and that's the fuel in the engine. That's what's fueling all of this in terms of the CapEx cycle. You need to own the winners. You can't just own an AI play because they have great PowerPoints.
That was Dan Ives of Wedbush. Still bullish, definitely though trying to pick the wheat from the chaff, trying to figure out which AI plays are the right ones, which aren't. Right now you're seeing everything being the right play in markets. Equity futures up higher across the board, 0.7% gain on the S&P, more than a 1.5% gain. When you take a look at the NASDAQ, you are seeing a bit of a bid into bonds as the session grows older and a bit into oil as well. Meanwhile, under an hour away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We have to repeat Amazon because it is our big mover of this morning. If this rise of 13% 15% holds. It is set to add $300 billion to its market cap at the open. The company's profit engine, AWS, was the star. It saw revenue jump 20% year over year, its fastest growth since 2022. And moving on to our next stock, which is Getty Images. It's a small stock, but it is soaring 76% after the company struck a multi-year licensing deal with AI darling Perplexity, basically allowing Perplexity to use Getty's photos across its AI tools. It's a big shift for Getty, which at one point saw AI as a threat, but if you can't beat them, join them, right? And we end on Roku. That stock is falling nearly 4% in the pre-market, despite the video streaming company posting strong results due to ad growth. Analysts say the results were good, but not gangbusters, which is a problem for a stock that has run up 35% year to date. Lisa.
Thank you so much, Yahaira. Great work, as always. Counting down to the opening bell, here's a trading diary heading into next week. Today, as Mike was saying, we do get Fed speak from Logan and Hammock. Watch for further descents to the potential for a December rate cut Monday. Manufacturing PMI and ISM data, plus earnings from Palantir. Tuesday, elections in New York City, New Jersey, and Virginia, plus AMD coming out with earnings. Wednesday, ADP employment data, new import, given the fact we're not getting official payrolls data at the end of the week. Earnings from Qualcomm. Thursday, a Bank of England rate decision. Friday, we get the University of Michigan consumer sentiment, which may also be more important to some people based on the fact of just simply an absence of anything else. Turning back to markets, S&P 500 is set for another month of gains, fueled by tech optimism. Emily Rowland of Manulife John Hancock Investments writing, almost everything right now across global markets is a derivative of AI. We are following the earnings growth in our overweight, high-quality tech, comm services, utilities, industrial sectors. Emily joins us now, and Emily, I think that's perfectly put, the idea that even Caterpillar is an AI trade at this point. How much does that give you confidence versus make you concerned?
Well, it's both, Lisa. We have this love-hate relationship with U.S. mega-cap tech stocks right now. We love them because the earnings are there. The earnings engine in the United States is on. The challenge, of course, is that they're overloved, they're over-concentrated, and the valuations are getting pretty egregious here in our view. So, we like a combination of sectors here that are benefiting from AI. Obviously, tech is experiencing the demand. Comm services are big users of AI. We've got industrials really developing the infrastructure here around data centers, and of course utilities really providing the power. So there's a lot of different ways to play this, but we do want to be mindful of the concentration risk that's inherent in markets today.
So if you're not overweight some of these AI names at the moment, Emily, is it too late to join the rally? Are the valuations such that you don't want to be selling, but you can't be buying more?
Well, no. I mean, valuations can stay extended for some time. And in our view, they're not necessarily a catalyst for a market correction. It's just a really tough starting point. So what we want to do is find the higher quality parts of the market. We look at things like PEG ratio, so how much you're paying for future earnings growth. We want to focus on sectors that have great return on equity, great balance sheets, lots of cash, good free cash flow. What we're not chasing right now are the sort of momentum and technical darlings, the retail favorites, the unprofitable tech companies, the meme stocks that are now back in the headlines. It's really about finding that intersection between high quality and not overpaying for that earnings growth. And then diversifying with some mid caps that are going to give you some differentiated exposure to things like industrials and mid cap banks that are benefiting from M&A activity.
Bank of America, though, pointed out underneath the surface, despite a calm on top, that individual stocks have lost or gained more than $100 billion in market value 119 times, or 119 instances with that level of swing happening. And that is the highest annual total on record. They noted that it was a fragility event, a sign of fragility. Emily, is there some real fragility underneath the surface?
Yeah, Danny. I mean, the concentration risk is a huge issue right now. You wake up every morning, the top 10 stocks in the S&P 500 are a greater portion of the index. Right now, we're at 41%. It's a big challenge, and there is some weakness under the surface. You look at small caps, for example, 40% of the Russell 2000 index is comprised of companies that don't make money. So we want to be mindful of the risks in some of those areas. We want to be mindful of the concentration risk. Looking overseas, in particular, we're looking at international growth stocks, which have some earnings catch-up potential. China, for example, on the tech side is another area that we're emphasizing in portfolios. So a diversified approach. There's some broadening in international markets that we like to see that's healthy. So you've got to be mindful, certainly, of some of that risk in the United States.
When you talk about diversification, Emily, how much is it diversification away from the AI trade versus diversification from stocks to bonds to commodities?
Well, I can always count on you, Lisa, to bring us to the fixed income discussion, which I'm happy to do. And we still think that there is a lot of value in the income that's available in bonds right now. We've seen a notable backup in bond yields, back, of course, above 4% on the 10-year Treasury yield. And while stocks are priced for perfection and, frankly, a far from perfect world, we still think bonds are mispriced here. They offer a lot of value on this at these levels. Bond investors just aren't sniffing out the disinflation that we see coming, particularly from the housing market, as well as the cracks that we're seeing in the labor market. So, of course, this week, Powell was a bit hawkish, not committing to that December cut. We saw rates go up. We think this is an attractive entry point to lock in that elevated income and build a return stream here that could last for years.
You're talking about treasuries in particular when you talk about the sort of gold standard, the benchmark fixed income instrument. I wonder what you think about gaining exposure to AI-related names that do have investment-grade credit ratings, but at the same time are selling the likes of $30 billion of debt or even more. And you're seeing just the glut of that coming into the market. Are you a buyer? Would you rather have exposure to the fixed income side of the tech story than the equity one?
Yeah, we like anything that has the word income in it, Lisa, right now, and we think that can be a more important driver than capital appreciation into 2026. And investment-grade corporate bonds, single A, yielding around 4.5% right now. We think that that's a really fantastic time to lean into that income. It is higher quality. Investment grade to us is like the new high yield. You don't even need to go down in the credit spectrum anymore to generate elevated yield. Investment-grade corporate bonds right now are still trading at about 95 cents on the dollar. They're typically trading above par. So we're always looking for bargains in the market. Bonds are still digging out of the worst bear market in modern history right now, and they offer value. So we would be slightly overweight fixed income here and letting bonds do more heavy lifting in portfolios into next year.
Emily Rowland of Manulife John Hancock Investments. Thank you so much. Have a wonderful weekend. Danny, you are going to sprint over to the other set and carry us forward because you want to spend more time on air. And I am just curious, what do you have in store for us?
I think a lot of it is going to be about this big tech rally that continues to be underway. The market opened, the enthusiasm over Amazon, just how much that fuels this market higher, despite the fact of all the event risk littered throughout the week, be it the Fed, be it China. The concentration for this market is the AI spend.
What's fascinating to me is that the event risk has been to the upside, and that is what we continue to see, that people have all of these concerns. They're worried about cockroaches. They dress like them for Halloween, but they aren't necessarily seeing it borne out in the numbers. Is CapEx spending now viewed as a positive and a sign of just how much demand keeps stripping supply?
And I'm really excited we're going to have the CEO of Blue Owl on, who just did a deal with Meta and gave them more debt, allowed them to do off-balance sheet financing for one of their data centers. So for him, he's all bulled up.
I cannot wait to watch that. It is going to be a really interesting trade, something that a lot of private investment firms have been trying to get in on. Coming up on Monday, we have Steve Chivarone of Federated Armies, Amanda Lynham of BlackRock, Mike Wilson of Morgan Stanley, and Bob Michael of JP Morgan as we do face off with the data desert that should have been the jobs a week. This was Bloomberg Surveillance.
In case you missed it on Bloomberg Brief. the French economy is resilient as a euro area economy. We had good surprises, and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the budgeting fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto, live Tuesdays.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
All right, 30 minutes until the start of trading. Happy Halloween. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the S&P is poised to extend its winning streak to a 6th month of gains as Apple and Amazon lift big tech sentiment and Nvidia scores a landmark deal.
Plus, a big oil boom. Exxon and Chevron outperform as new project and deals boost output.
And meet Dominic Ball, the only Fiserv bear in a room full of bulls, calling the stock uninvestable ahead of its crash this week.
Well, so far, everything keeping the market afloat this week, Matt, despite all the event risk, has been the big tech earnings. And it is Amazon that is surging this morning, up 13.3%. Its cloud unit saw its fastest growth since 2022 as bets on AI infrastructure begin to pay off. Apple, for their part, up 2%, predicted a jump in sales over the holiday season as its new iPhone lineup is showing strong demand. Matt, what are you looking at?
We're going to dig deep into those, but also Nvidia climbing today after CEO Jensen Huang told reporters he's hopeful its gold standard Blackwell lineup will reach Chinese customers one day. He's in Asia, where Nvidia announced a number of deals, including one of the top tech firms in South Korea. You can see Nvidia shares back up 2% in the pre-market, Danny.
Let's get more on the AI trade. Joining us now is Bloomberg Tech co-host Caroline Hyde. Caroline, it's interesting interesting to see who has done well out of this and who has been getting raised eyebrows. Meta being a great example. For the huge amount of capital expenditures, what does the scorecard look like? Who's winning and who's falling behind?
Well, if we hold on to these pre-market gains, Amazon's going to be at a record high. So I think people would deem that they've come from behind, had a lot to prove, and they proved it. Look, I have to say, this is going to be hard to digest for many of the people who have just been told they're being laid off from the company. Some 14,000 was how we started the week, the news on that. But instead, this is Andy Jassy once again saying it's all about artificial intelligence. It is bringing us productivity across not only their e-commerce retail part of the business, that outperformed, in particular, essential items are flowing well. Revenue hit 13% growth across the entire business. But AWS bringing it back. We're up 20% year-on-year growth, much ahead of its consensus, about 2 percentage points ahead. And really, they're starting to say that even the vertical integration's working, Matt. The fact that they are bringing chips to the fore, Trainium, for example, they say is a multi-billion-dollar business now. They've won that out. They've been building juggernauts of data centers for the likes of Anthropic, and it's winning. So Amazon wins. Even Apple wins a bit today, and they're surprised in terms of growth.
Well, Apple, okay, so first of all, on Amazon, I mean, the stock has been such a dog over the past 5 years. It's really underperformed all of the other Mag 7 stocks, and 18-20% cloud growth is nothing in the face of what we saw from Microsoft or Google, right? They're looking at
But they've got the huge market share, right?
Fair enough. Apple, the interesting thing to me is that China really disappointed by a couple of $1 billion, right? So are they really having problems in the world's biggest cell phone market?
It feels like, and your surprise is as big as many because it's down almost 4%. But the competition is so harsh there. We're seeing it with EVs, but you're seeing it with phones as well. And these other players just coming to the fore and managing to power through with artificial intelligence wrapped into the phones. Remember, that is what we're lacking from Apple iPhone 7 and 17 and 17 Pro, is the fact that artificial intelligence just isn't all that. And for many, also remember, China couldn't get their hands on the new models of phones because they aren't moving and shifting to eSIMs in quite the same way that America had. So they didn't get the uplift there from the first 2 weeks of sales. But it does seem that Tim Cook thinks next quarter is going to be different. We're seeing up to 12% growth across the board for Apple in their December quarter, and he thinks China's going to return to growth again.
But wasn't this a pretty big play for time for Apple? They didn't have the AI in there, and yet the upgrade cycle was incredibly strong, maybe not in China, but elsewhere for the new iPhone.
And the average selling price went up. Look, they're upping the iPhone 17 Pro. That's helped in terms of the price point. So too did the 17 Air, because even though maybe it didn't fly off the shelves in many ways that people anticipated, it was higher price point than what was its predecessor. But these are actually, again, companies that are being curtailed by a lack of supply. We've seen that across the board with some of these offerers of AI compute. Apple itself also had a supply chain issue and couldn't get out the new phones as quickly as many would have wanted. Maybe sales could have even been greater. So we are seeing that actually a surprising uplift. But services was where the area of growth also was. Remember, they're still able to get the money from Google, but it's notable that they are under threat with the App Store. How much longer can that services keep on winning them in terms of a, uplift formula?
All right, yet another day on which Bloomberg Tech is must-watch television. Caroline Hyde and Ed Ludlow kick off that program at 11. Let's turn, though, now to big oil. Both Chevron and Exxon beating estimates before the bell, each reporting production boosts. Joining us now is Bloomberg Intelligence senior energy analyst Vincent Piazza. And Vincent, this is, I guess, all the more important given the fact that we've seen oil fall this year from $80 to $60.
Yeah, so Matt, thanks for having me on. If you think about Exxon, they're executing very well. The Permian production coming in somewhere around 1.7 million barrels a day. Overall production, 4.7 million barrels a day. If you think about the overall trend, their forward guidance from 26 to 2030, you're going to see production closer to 5.4 million. They are doing the things that they can control. Guyana, recent record of 700,000 barrels a day. Yellowtail coming online 4 months early, under budget, which is unique in the energy space. So lots of good things going in the right direction, despite the fact that we have a commodity complex that is working predominantly against them. 8 of their 10 projects coming online in 2025, 2 more right on track to come online in 2025. So all the things that they need to do, they are doing. The commodity is the headwind, but they're working fairly well within that constraint. On the Chevron side, don't expect too much on the conference call. Most of what they're going to talk about in terms of the forward outlook, spending, guidance on repurchases, longer term, that'll come next month at the November 12th Investor Day. But overall, look, they have a lot to do, right? They closed Hess in July 18th. So you saw a little bit of that in the quarter. You also saw some noise in the quarter. They outspent free cash flow with respect to dividends and also repurchases. But we're going to get a lot more clarity on the upstream side and the overall business complex on November 12th.
We'll wait for that. Vincent, thank you so much. That's Vincent Piazza of Bloomberg Intelligence. Now, elsewhere in streaming news, Netflix shares are climbing on a 10-for-1 stock split to bring the cost per share down to $100. Reuters also reporting that Netflix is actively exploring a bid for Warner Brothers Discovery studio and streaming business. Bloomberg Intelligence U.S. media analyst Geetha Raghunathan joins us now. Stock splits are my favorite, Geetha, because it proves that the efficient market hypothesis is wrong because nothing has changed in the fundamentals of Netflix, yet it is rallying. And on top of that, you have this deal news. So if Netflix is serious, how much of a contender do you think they actually are? Do you think Warner Brothers Discovery would willing just chop up their business and sell parts of it to Netflix?
I think they absolutely would, Danny. From a Warner Brothers Discovery standpoint, this is great news. The more and more parties that they have interested in their assets, that just kind of really, sets it up for a very nice bidding war. We know that Comcast is interested. We know that Paramount Skydance has already made multiple offers, which has been rejected. And now you have Netflix going after, the studio and streaming assets. This is great news for Warner Brothers. For Netflix, not so much. Yes, Warner Brothers Discovery has some great franchises. You think of DC Comics, you think of Harry Potter, Lord of the Rings. Obviously, all of that would be a great fit for Netflix, including, Warner's gaming studio. But you think of the price point, a potential price point over $60 billion. Is this really what Netflix needs? So yes, it's a defensive move, but I don't think from an economic point it really makes a lot of sense. And then, there are multiple parts of Warner's business. I don't even know what Netflix would do with them. You think about their global theatrical business or their content licensing business. I mean, Netflix would eventually have to shutter those down. So I don't know if the purchase would justify, the premium valuation that would have to be paid.
But why? I mean, isn't this where where Netflix pivots from just, producing a ton of content in high volume to actually owning distribution and IP outright and making money off of that?
This has been the constant, kind of question on investors' minds, Matt. The build versus buy strategy. So far for Netflix, Matt, the build has always worked for them. Originals now make up about 50% of their, content budget. It has performed extremely well for them. Quarter after quarter, we see them come out with some kind of a sleeper hit. It's not just established franchises like the Stranger Things or Squid Game. I mean, you just saw K-pop Demon Hunters kind of take the world by storm. So, they've had a lot of success with originals. I'm not necessarily sure that, spending tens of billions of dollars on a studio is going to actually get them as much success as maybe investing more in originals or maybe even in sports content, which we think would be actually a game changer.
All right, Geetha, thanks very much for spending some time with us. Geetha Raghunathan of Bloomberg Intelligence going to be writing on this. You can check out her work by typing BIGO on the Bloomberg terminal. Check right now on what's going on in futures. We do see gains. S&P futures now up 2/3% after 1% drop yesterday. Concerns about, I guess, higher CapEx, even though that's what investors have been begging for, dropping the market.
Well, it's higher CapEx, but you need to have the returns, and the ratio of CapEx to revenue in Meta is the lowest of all the Mag 7. So maybe it's not indiscriminate selling and buying of CapEx that is working.
Let's also take a look at oil, because we just saw a spike on oil as the U.S., according to the Miami Herald, the U.S. has decided to attack Venezuelan military sites sights, and as a result, crude jumps more than 1%. So we're looking at, there's Brent up a third of a percent, but the U.S. crude supplies are going to be showing a bigger spike today, and so we're seeing more than $60 a barrel on NYMEX and more than 65 on Brent.
Yeah, and Treasury futures also racing some of their declines on that move too. How long will it last? We've seen geopolitical events have a very limited impact in terms of time on the oil prices. Some other movers on our radar this morning, there is Reddit gaining nearly 12%, a better than expected forecast for this quarter, and said daily active users grew 19% year over year.
Oh, still. Getty Images and Perplexity struck a multi-year deal to bring Getty Photos to Perplexity's search engine. So some AI news driving Getty up 60% in the pre-market.
Yeah, but it's at $3.20.
It's a penny. It's a penny
it's
stock.
driven up by a whole dollar. Amazing. Elsewhere, Carlyle's credit arm and secondaries business helped offset disappointing earnings from its private equity unit shares, currently unchanged in the pre-market.
I really appreciate your sarcasm on a Friday morning.
Thank you.
Yeah,
it felt right.
That's excellent.
It's spooky season. Got to be a little bit, sarcastic.
Happy Halloween. Coming up, speaking of spooky season, Fiserv absolutely tanked this week, and only one analyst had a sell rating on the stock. 80% had a buy. That analyst joins us next after a customer revolt that sent those shares plunging. This is Bloomberg Open Interest.
You missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supplies. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech, live every weekday.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall, covering President Trump in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's get out of high interest. Look what's making headlines around the world. Payment in kind debt is surging as private credit funds use it to ease borrower strain, raising concerns it masks deteriorating loan quality. Lincoln International pegs bad pick at 6%, up from 2% in 2021, a shadow default rate. We'll get more on the private credit market next hour with Blackstone's Michael Zawadzki and Blue Owl's Mark Lipschultz. So a lot to look forward to in the 10 o'clock hour. Big short investor Michael Burry sent what appears to be a cryptic warning to retail investors about market exuberance. He posted on X saying, sometimes we see bubbles, sometimes there is something to do about it, sometimes the only winning move is not to play. His post comes at a time when more and more people are questioning the financial soundness of the AI boom. Burry made his name shorting the U.S. housing market, and if you don't get the reference, he is quoting War Games, a great movie with Matthew Broderick. The lone analyst with a sell rating on Fiserv ahead of the company's crushing stock sell-off says the writing was on the wall for months. Rothschild analyst Dominic Ball says he still has the sole sell rating on Fiserv. We can see that on the Bloomberg terminal using the ANR function. When he downgraded the stock earlier this year, he cited issues with its Clover product, a point-of-sale system, writing financial solutions is decelerating, and so the issue seems more systemic across Fiserv. And guess what? We are lucky enough to get Dominic here in the studio. He's been touring the U.S. and happens to be in New York, so perfect timing on both your call and the visit. I guess you've had this sell rating on the stock for a while, and it's actually down 70% since you put it on. Yeah. And most analysts won't say sell. In fact, only 5% of all the ratings on the Bloomberg terminal, which has all the ratings. Only 5% of analysts feel comfortable putting a sell rating on. Why do you do it?
Yeah, well, thank you for having us on to begin with. I think it's really the company I work for, Rothschild & Co. Redburn. We do a lot more long-form, deep-dive industrial work. When I initially did work on a peer of Clover, which is owned by Pfizer, called Toast, it was 6 months deep dive research. And that really gives us a ballast of our view and allows us to have high conviction views.
Did you have any clients push back initially when you had that buy signal? And what have they said since the big drop in prices?
Yeah, I mean, I think before Q1 for Pfizer was where there was the most contention. Pfizer was seen as the third payment company to own after the card networks. And so when you come out with quite a contrarian view, there's a lot of questions, of course. It went our way Q1 quite quickly, then it went our way in Q2, then it went our way again in Q3. And so a lot of investors just coming to us asking what is actually happening and where do we go from here.
Great story on the terminal by George McKay and Matt Turner, in which you say also that management has really focused too aggressively on Clover because there's problems there and underinvested maybe elsewhere. What's the future, you think, of the stock? What's the future of this company?
Look, it's a really tough position that they're in. Payments has a lot of technological change that's ongoing. In the last 6 months, we've seen agentic commerce and stablecoins kind of come out of nowhere. And it's tough for a company that has grown through M&A to try and consolidate and focus an R&D budget on new tech. And so peers like Toast that have a single tech stack, we really like. It allows them to have the focus in terms of serving a sole vertical, but also in that R&D budget to do well.
You also notably have a sell rating on Global Payments. You're one of only 2 analysts who have a sell rating, which is only 6% of the people who cover it. Why are you bearish on Global Payments? And by the way, I think a lot of people are going to take a second look at your sell rating now.
Yeah, again, Global Payments and Pfizer are similar when it comes to the ability in their history. They've done a lot of M&A. In payments, we've seen WorldPay, FIS, Nexi, Global Payments and First Data and Pfizer, they've all done large-scale acquisition. And again, as I mentioned, it's really difficult to innovate and change with this new tech when you've done a lot of M&A. And so we hope, and it seems like with a company like Pfizer, they're going to materially invest in the company. That was why there was such material EPS downgrades. And so that's what they can do going forward.
We're in an earnings season now where 80% of companies are beating estimates. And that sounds like a high number, but it's really not unusual. Analysts tend to do what management wants them to in order to maintain access. It's understandable. Do you find with your sell ratings that you're locked out, or is it more difficult for you to do your job?
No, again, going back to where I work, it's a very unique place, Rothschild & Co. Redburn. We do deep dive industrial work. We don't typically write about the quarter, which is what every other...
Or rely on management to give you guidance.
It's what every other investment bank does. We write, as I mentioned, when we came out with Toast or Pfizer, these are 100, 200-page reports. And it allows us to look beyond the quarter, into 25, 26, 27. And then it allows us, when we do get a lot of pushback from investors, which is always natural, to give us a high conviction view, because we've done so much work on the companies.
So of all the payment companies that you cover, which is your top pick right now?
We love Toast. Toast is a fantastic company. The moat is materially underrated. People see it as similar to Clover and Pfizer. It's materially different. Their ability to win restaurants at a market share rate they're doing right now is phenomenal. Everyone keeps betting for them to slow down, and they're not doing so. It's a company that can easily grow low 20s, easily. We have 1,000 basis points higher than that, with 35% margins, and trades at 20 times 2-year forward non-GAAP PE. If you put that in a software company, it trades at 3 times the multiple. So Toast is a materially underappreciated stock, and we really like Toast.
It's doing, over the past 5 years, and I always look at a 5-year period because it's the default for the comp function on the Bloomberg, but it's down 14%. Now, it's not doing as poorly as Fiserv, obviously, which over the same period is down 40%, and Global Payments at the same period down 50%. But what kind of appreciation do you expect from Toast?
Yeah, so we have a target price of $60. We came out being incredibly bullish when it was at 15. It's now at roughly 35. And Toast IPO'd in an environment of 0% interest rates, and we've gone to 5%. So the multiple in a lot of these companies have derated. When you look at the earnings and EBITDA, it has compounded materially. They had 0% EBITDA margin. They've scaled to 35% within 18 months, while still adding more locations for their restaurants than they've ever done before in a single year. It's a fantastic company, and our deep dive on Toast was really allowed us to then look at Clover and compare the companies, and that's really where we came up with our sell rating on Clover and Pfizer and buy on Toast.
All right, Dominic, great to get you in the studio. Thanks very much. We'll have to get you back when you put out your next report. Dominic Ball there, an analyst at Rothschild who had a sell rating on Fiserv. He has a sell rating on Global Payments. As again, only 5% of analysts in the Bloomberg universe, which is the entire universe, have sell ratings. So takes some courage and, as he points out, a lot of research. Still ahead, Sarah Hunt of Alpine Saxon Woods says, you're not spending enough on AI. That narrative has shifted to, wow, that's a lot of spending on AI. It was a short trip. She joins us at the Open to talk about where we go next. This is Bloomberg Open Interest.
You missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
coffee
lovely Tara.
coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday.
To the minute global economic news whenever and wherever it happens. I'm Lizzie Burden covering the ECB decision in Florence, Italy, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it, on Bloomberg Brief. This is a big difference from April. Remember when there was no place to hide? And now, even though
though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral.
Don't miss Bloomberg Brief, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A check on futures ahead of the opening bell. Thank you, Amazon, for the gains we're seeing. NASDAQ 100 futures outperformed by 1.2% with an S&P that's 0.6% higher. Russell, little changed as oil markets also hamper some of the gains in treasuries, but it's a week, Matt, where we've seen event risk after event risk. All that matters is the AI spend.
Absolutely, and 6 months in a row of gains. That's the best record that we've seen since 2020-21. We'll be back in 2 minutes' time with the opening bell.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the power-generating fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It is an exciting day for so many reasons. I mean, it's Friday, right? Kicking off the weekend. It's Halloween. It's the end of the month. It's the 6th month in a row of gains for bulls. If you're invested in the stock market, as a lot of people in America are, then you have to be a happy camper. S&P futures up another 2/3%. NASDAQ futures gaining more than 1%. There was a dip yesterday. There was a brief pause in the rally. But, as Adam Johnson used to say, the pause that refreshes. You need that that to keep going. Emera ringing the opening bell at the New York Stock Exchange. They have a broad portfolio of electric and natural gas energy-generating assets, which obviously is in vogue right now. They're up 35% year-to-date. Down at the NASDAQ market site, Nomadar ringing the opening bell. Looks like maybe a soccer club, but they've got a fingerprint here. We have no idea what they do. What's the tagline?
Well, on their website, it says Nomadar makes humans whole again, and they have a really sick intro video on their landing page that shows like eyeballs and brains. I still don't know.
I see like some DNA there.
Yeah,
so
some circuits. Something cool.
They're going to sell shares, so we will learn more about Nomadar in the future.
And I can't wait. In the meantime,
or not, or we'll never hear about them again.
Or we'll never know. In the meantime, all of the eyes and concentration on knowing what they do goes to Amazon. Shares here at the open up 11.5%. Their cloud unit saw the fastest growth since 2022. Those bets on AI infrastructure, they are beginning to pay off, especially considering how much Amazon has underperformed everyone by. Then there's Apple. Shares up 1.5% here at the open. They predicted a jump in sales over the holiday season with its new iPhone lineup showing strong demand, Matt, despite the fact we did not have that AI upgrade cycle that we had hoped for.
Yeah, well, you know, a positive forecast is always good from Apple. When I was a kid, they would always like sandbag a little, under promise to over deliver. So if they're doing that now, 10 to 12% is pretty hot for the fourth quarter. Nvidia is climbing after the CEO Jensen Huang told reporters that he's hopeful its gold standard Blackwell lineup of chips will reach Chinese customers one day. He is in Asia, where Nvidia announced a number of deals, including with top tech firms in South Korea. And it feels like there's not a day that goes by without Nvidia announcing a deal. In fact, we have an amazing org chart of Nvidia's investments in other AI companies, and then those AI companies' investments in Nvidia, and it just goes back and forth and back and forth.
It's like the worst Venn diagram you've ever seen. It's just like this spider web of the interconnectedness.
Joe, if you pull that chart up, we can show it right now. We're talking obviously about AI. It's the only thing that matters. Trade deals be damned, and the Fed. What's the Fed? Look at this. I mean, it's truly amazing.
No, I think someone was like, you can't show this graphic on TV because it's too confusing. That's the point. It's incredibly confusing. You can't figure out where things start and where they end.
Let's bring in Sarah Hunt right now from Alpine Saxon Wood. She's sitting here with us at the desk. And what do you make of this? Because as Mark Cudmore points out, it's the only theme that matters. But it feels pretty bubblicious thus far.
Well, I think that there was a big argument for a long time that everybody had a lot of cash and they were funding this with cash. And as that chart shows you, you're starting to get to the sort of circular arguments about, well, I'm giving money to you and you're giving money to them and they're giving money to you and it's back to you. So I think that the concern is, are we getting to the point where you're either using too much debt financing, the wrong kind of financing? Is that CapEx coming out of cash flow? And these were also companies that were asset light, right? They didn't have to, they generated a ton of cash, they had great margins, they didn't have to spend a lot of money. And now that story is changing. Right now, it's changing in a way that people don't seem to worry about. They're looking for better margins, they're looking for more productivity. We don't have to see that quite yet, but that's what the next thing is going to be, is what do you get?
By the way, yesterday, when Meta stock was off 10%, people were saying it's because they're announcing more spending on AI, but of course they've been telling us time and time again that they're going to do that. Could it have been related to the $30 billion bond sale? I mean,
it could certainly have been related to we're raising money and margins may or may not be going up the way that we want them to. And there's a lot of different things. And also specifically to Meta, they've had other issues where they've spent a lot of money and not seen the return on that investment. So they may be more in the penalty box on that investment than, say, a Google or an Amazon right
Meta's
now.
feels much more speculative. Microsoft was very clear in being like, we have more demand than there's capacity for. Meta was like, we just have a really good history of building stuff and having consumers want it. But to that point, Sarah, the bond auction went off without a hitch. There was a lot of oversubscription, a lot of demand.
When isn't there? When isn't there?
But on the equity side, you could usually say, when don't the stocks go up? But the stock didn't go up. So how would you want to play this? Do you want to own the equity or the debt portion of these companies and the AI build out they're doing?
Well, right now for something like Meta, you're going to get more, if people believe the stock, you're going to get more out of the equity than you're going to get out of the bond. bonds just in terms of price appreciation. But remember, that stock has also been up tremendously versus some of the other ones like Apple or Amazon or even Google this year. Google had a big pop on that antitrust issue, but prior to that, they hadn't been doing as well as some of the other areas. So I don't think that the cash-rich players are places you necessarily think that you need to go into the bonds versus the equity, but it's a reasonable decision depending on what you also want to do with your own money.
By the way, I should just note that we do have Mark Lipschultz, the co-CEO of Blue Owl, on the program on his earnings at 10:30 a.m., which has been one of the entities funding this build-out of AI. A lot of it is starting to happen off of the balance sheet for these big tech players. Is that a concern at all?
I think it is ultimately going to be a concern if you don't start seeing those returns come back pretty quickly. If the returns come, it doesn't matter. If the returns don't come, then all of a sudden people are going to start looking at what that costs, what that off-balance sheet funding costs, and what they're really doing and what they're driving. And right now, since we don't yet have an answer, the optimism is there. If you start to see an issue, then it's going to be more of a problem, I think.
Speaking of credit, the Fed doesn't not matter, right? Dallas Fed President Lori Logan said she did not support the U.S. central bank's decision to cut interest rates this week. And joining us with more is Bloomberg's international economics and policy correspondent, Michael McKee. Mike, what else did she say?
Well, Lori Logan joins Jeffrey Schmidt of Kansas City in statements today arguing that the Fed made a mistake on Wednesday and not supporting the idea of a December cut. Logan, in her speech text today, said, the remaining risks to employment are ones we can monitor closely and respond to if they're becoming more likely to materialize, not ones that currently warrant further preemptive action. For these reasons, I did not see a need to cut rates this week, and I'd find it difficult to cut rates again in December unless there's clear evidence that inflation will fall faster than expected or that the labor market will cool more rapidly. As I mentioned, she followed Jeffrey Schmidt, who actually did dissent as a voter on Wednesday. He also took a swipe at the financial markets, saying financial market conditions appear to be easy across many metrics. Equity markets are near record highs, corporate bond spreads are very narrow, and high-yield bond issuance is high. None of this suggests that financial conditions are particularly tight or that the stance of policy is restrictive. So we've been talking about a divided Fed, and now we are getting evidence of it since the blackout period has ended. Might also mention that Mickey Bowman last night said they're going to cut back the Fed's regulation and supervision staff by 30% by the end of next year, refocus on what they call material risks rather than processes. They'll do it largely through attrition and retirement incentives, but that's got to be good news for people who like financial stocks and believe that they are being held back by regulation and supervision.
All right, Michael McKee there with a couple of Fed speakers for us. Sarah Hunt from Alpine Saxon Woods still with us. She's a market strategist there. You know, this week I listened to The Fed Decides, which is, you know, Tom and John do this show, and I thought it was fantastic. Diane Swank came on and pointed out, you know, these cuts may be great for wealthy people, and if you own stocks, you know, really great. But for poor people, it's not going to help. It doesn't lower subprime rates when the Fed cuts and the 10-year didn't go down. Right now, we're back above 4. So what can they really move by lowering rates?
I think that's one of the big conundrums right now, right? Because there's an argument that inflation may or may not be accelerating or accelerate into next year as the tariffs really come into play. There's an argument that what does cutting rates really do in an economy that's running pretty well other than that? And the tension with the labor market is not necessarily about interest rates as much as it is about the AI story that's fueling all the CapEx boom for everybody else. So I can be sympathetic to the argument that is rate cutting really something that needs to be done for the job market specifically. I think the other big tension back and forth is what is the neutral rate and is it still too high? And that's one of those arguments that's going to continue on and also can get quite circular. But I think that above the 350 range or above what there's some argument that another rate cut or two would be more reasonable for that. Whether or not that has the impact on either of those two issues, inflation or employment, is the real question.
Sarah, it's such a pleasure to have you on, and may I say impeccably dressed this morning as well. Alpine Saxon Woods Chief Market Strategist Sarah Hunt. Now, looking at the markets this morning, up by 0.6% as we get Amazon earnings powering everything. And this morning's rally, we are going to get more on that coming up next on the program. Again, we're going to speak to Craig Moffett of MoffettNathanson and TD Cowen's John Blackledge. That's coming up on Bloomberg Open Interest.
case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting, what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Geoffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Power, money, culture. Linda Almond tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
Get you some top calls. The analyst action that we're focusing on this morning. First up, Goldman Sachs downgrading Comcast to neutral. Shares fall 1.6%. They point to the magnitude of the company's broadband pricing reset. Next up, Baird raises its target on Amazon to $285. They say 20% of AWS growth in the third quarter changes the narrative. Shares add on more than $200 billion in market cap today. And finally, Jefferies upgrading Apple to hold, seeing limited downside following strong first quarter guidance. Matt.
All right, downgrade to a hold, which is as close as a lot of analysts get to a sell. For more on Apple, we're joined by Craig Moffett-Nathanson, founding partner and senior research analyst. He has a neutral rating on the stock as well, with a price target of $225. Craig, what did you see in the earnings? Anything that might move you?
Well, look, the earnings were actually quite good. There weren't a lot of surprises in them, really. There was actually a positive surprise in the services revenue growth, coming in at about 13%. The market and we had been expecting 11 to 12. That may not sound like a big difference, but there were some real risks to the downside there that clearly didn't materialize. So overall, these are pretty impressive results. The reason we're stuck on the sidelines here is simply valuation. I think you're seeing that in the way the stock is trading. You're talking about a stock that came into earnings at something like 40 plus times PE multiple going into yesterday's report. Even though you're getting faster earnings growth, call it 11% now, you're still talking about a company that's trading in the mid to high 30s in PE multiple and growing much more slowly than its Mag 7 peers. And so it's just hard to see how over time it can compound as quickly as its peers, even though it's actually, again, we're quite positive about the prospects of the company. I just think you're being asked to pay a lot for a relatively modest growth rate.
Craig, I was speaking to Dan Ives of Wedbush, who is ever the Apple bull, who said that it's his expectation that Apple would partner up with Alphabet and start offering a Google Gemini service on its iPhone to supplement the lack of AI that it has. Would that be a game changer for Apple?
Well, no, it wouldn't. And to some extent, that's precisely the point, right? Let's step back a second. Remember that the reason that people got so enthusiastic about Apple coming out of last year's Worldwide Developer Conference, when the hype around AI was at its peak for Apple, it was because this was going to drive an enormous upgrade cycle. And that upgrade cycle would mean that everybody had to get a new device in order to deliver the functionality of an agentic AI that was going to be delivered by Apple on the device. That narrative has largely gone away, and while we're seeing a solid iPhone cycle this time, it's not driven by AI, it's just driven by the fact that these are good devices. If you do something with Gemini, you do something with ChatGPT, and it's in the cloud, that solves the problem to some degree, but it doesn't drive an upgrade cycle. You can do that today with any device. So what's embedded in the stock price is this much more rapid refresh rate or replacement rate of devices. It's harder to see what's going to make that happen. And again, that's not an indictment of Apple. It's simply an indictment of the enthusiasm and expectations that probably got ahead of the reality a year or so ago. You saw Apple trade sideways, and while it's done pretty well for the last, call it, a month and a half or so, it's still lagging behind both the market overall and the rest of the Mag 7, precisely because expectations had gotten so aggressive.
All right. I'm afraid we're going to have to leave it there. Not enough time with you this morning. Craig Moffett of MoffettNathanson, thank you so much for joining. Elsewhere in the Mag 7, Amazon shares are rising, up 11.5%. It reported its fastest cloud growth since 2022. Joining us now is John Blackledge, TD Cowen Senior Equity Research Analyst. John has a buy rating with a $300 price target on Amazon. John, this is a stock that had been chronically underperforming. Before today was only up 1.5% year to date. Has Amazon showed that it deserves to play catch up with the rest of the Mag 7?
Yeah, I think so. I mean, they're at this point now they're firing on all cylinders, and the big focus was AWS, and they beat expectations. And they were bullish on forward growth, posted 20% revenue growth, almost 3 points of acceleration. That beat investor expectations, driven by core and AI workloads, and they're really focused on accelerating AI capacity, just given the strong demand. And they told us last night, and this was kind of new metrics, that the capacity they've added over the last year is up 2x since 2022, and then they're going to double it again by 2027. So there's a lot of AI capacity coming online for AWS now and over the next couple of years. And they're filling the data centers with NVIDIA chips, AMD chips, and their own Trainium chips. And another thing about AWS, this narrative, CEO Jassy kind of dispelled this narrative around AWS and NVIDIA, saying, hey, we have a deep relationship with NVIDIA. We're not constrained from buying NVIDIA chips. We're buying them now, and we'll buy them in the future. And then they're also at the same time using their own Trainium chips, which are helping with the capacity. So net all in, with the robust growth and the capacity, we increased our AWS long-term numbers. We expect faster acceleration now, up to almost 25% growth by 2027.
So you buy that, because it was beginning to look like those companies not in the Stargate, or those companies not really in the president's circle, may not be getting as many chips from Jensen as those who are. He seems to be, NVIDIA, giving a lot of chips to Oracle and Microsoft, and fewer to Amazon.
Yeah, I do buy that. I think as I said, I mean, Andy kind of laid it out pretty clearly in his prepared remarks. And I'd also say this other thing about the AI narrative for AWS is, people calling AWS or Amazon an AI loser. They have a deep partnership with Anthropic. They're the primary cloud vendor and primary training partner. And as they announced earlier this week, they just opened up this Project Rainier, which is dedicated to training, at least the first parts of it, training the Anthropic models. Again, all of this kind of ties into us now expecting even faster acceleration at AWS.
John, Meta is also one of the companies you cover. You have a buy rating on that one as well. I'd love to get your take on yesterday. When you have Meta coming to market with a $30 billion worth of bonds, it gets 4 times oversubscribed, so the credit market likes what it sees, yet it's an equity market that saw shares fall more than 11%, and you add weight to that today, down 1.5%. What do you make of the 2 different receptions from an equity and a bond market?
Yeah, I mean, if we look at I obviously cover Amazon and also Alphabet. If we look at the 3 of them, Amazon and Alphabet have cloud businesses. They're all accelerating their CapEx spend to build out AI infrastructure. But we're seeing the acceleration for at AWS and Google Cloud and huge backlog growth for them. And Amazon and Alphabet are utilizing AI across their other business segments. For Meta, they are beating on revenue, and they are using AI to drive faster revenue, which is driving via higher engagement and better ad targeting. But they did lay out really aggressive OpEx and CapEx growth for next year. They'll get it. They'll give more specific guide at 4Q. But I think that kind of scared people, scared investors. But I do think CEO Zuckerberg did kind of say, listen, we're going to be aggressive with spend on AI talent and for infrastructure purposes. But listen, if superintelligence doesn't get here in the next couple of years, we'll maybe have this extra capacity that will sell externally. We're an initial OpEx guide for 2026.
Yeah, he did say that they continue to think they're spending aggressively enough, but then every time they look, there's more demand than they were ready for, and they have to continue to up that. So obviously people are using the capacity. John, great to get some time with you. Really appreciate you joining us. John Blackledge there of TD Cowen. Coming up at the top of the hour, we'll discuss AI portfolio allocation with Ulrika Hoffman Burchardry of UBS. This is Bloomberg Open Interest.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks on this October 31st. Happy Halloween. We're looking at gains here on the S&P, 68.57. The NASDAQ up 1%. Of course, there was a drop yesterday, and we have only made back about half of that, but still up for the month. And this is the 6th consecutive month of gains for U.S. stocks. Taking a look at NVIDIA, it's powering us higher today, up 1.5% after a deal with South Korea's top tech companies. Amazon absolutely crushing it with its cloud growth, now up 12%. Netflix, a lot of M&A talk around that, and Roku up 16%. NYMEX crude right now up 1% at 61.17 on a Miami Herald report that the U.S. may attack Venezuela. And then the Spider Gold Trust, GLD, actually down 0.2%. But I think it's interesting, Danny, that gold still holds at these levels as, you know, stocks continue to power higher.
Well, Michael Hartnett over at Bank of America saying that Chinese stocks and gold are the best hedge against a boom in AI trade and that it might bring some inflation with it. More to come. You're watching Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress. I changed during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance. I'm Deborah Rodriguez. We begin with breaking news on a potential terrorist attack in Michigan. Correspondent Michael Wallace with what we know so far.
In a social media post, FBI Director Kash Patel says the attack would have targeted Halloween weekend and multiple people were arrested. The FBI field office in Detroit tells CBS News it had agents in the Detroit suburbs of Dearborn and Inkster this morning as part of the investigation, but would not share any details of the alleged plot. They do say there is no current threat to public safety.
Lawmakers in Washington are still bickering over who's responsible for the 31-day-old government shutdown and how to end it. The certainty? SNAP food benefits run out for more than 40 million Americans at midnight if they don't. CBS's Nicole Killian is on Capitol Hill.
People may not be able to obtain their food stamp benefits. Many of these programs, as they're concerned, kids and their families could potentially go hungry. I've talked to a number of different programs who are trying to partner up with local food banks and other community resources to, at the very least, even if they have to close their doors, find a way to ensure that these families get fed.
Many air traffic controllers are still not getting paid because of the shutdown. CBS's Christian Benavides is at the airport in Florida.
There were so many delays and cancellations that a lot of folks had to spend the night here in Orlando and wait until today. There are a lot of delays. Also today, a lot of cancellations and a lot of frustration from passengers who are just trying to go on about their travel.
Tourists are clamoring to leave Jamaica after Hurricane Melissa devastated several Caribbean islands this week. Correspondent Jason Allen is in Kingston.
Some of these folks slept here at the airport last night. Almost all of them made the long drive in from Montego Bay. Some came without airline tickets to get home this morning, but they are doing their best to get home after 3 very difficult days here in Jamaica.
Andrew Mountbatten Windsor is now a commoner. Loved ones are speaking out on behalf of a woman who accused the former prince of sexually abusing her, with direction from Jeffrey Epstein. CBS's Ramy Inocencio from London.
The family of Virginia Giuffre, who said that she was 17 when Andrew had sex with her, sent a statement to CBS News' partner, the BBC here. I'm going to read some lines for it here. It says, today, an ordinary American girl from an ordinary American family brought down a British prince with her truth and extraordinary courage.
Giuffre died by suicide. Topping Forbes' new list of dead celebrity earners, Michael Jackson with $105 million this past year. This is CBS News. What happened to your YouTube faves?
Just before midnight Eastern Time, TV channels owned by Disney, including ABC and ESPN, went dark on the YouTube TV platform in a contract dispute.
We out of here at 12:30, Kenny. The first night, too.
So no banter on Inside the NBA on ESPN for those people. YouTube claims Disney used the blackout threat to push for higher prices, benefiting its own streaming services like Hulu Plus. Subscribers will receive a $20 credit if Disney content remains unavailable for a long time. Steve Kathan, CBS News.
When a famous reality star speaks, the head of NASA listens.
So I think it didn't happen.
Sean Duffy's responding after Kim Kardashian announced on her family Hulu show she agrees with an article she read that claims the 1969 moon landing was a fake. The acting administrator assures Neil Armstrong and Buzz Aldrin did walk on the moon. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so check us out there. Happy Halloween. It is Scarlett Fu, Paul Sweeney broadcasting live here from New York. Big day, Bloomberg Intelligence program for the next 2 hours. We're with you. Caroline Hyde, Bloomberg Tech co-anchor. She's going to join us here in studio to give us kind of a recap of all the earnings we got from the big tech companies this week. Again, Amazon and Apple out last night. Those stocks are higher this morning, so we'll get the latest there. David Traynor, CEO of New Constructs, will give us his thoughts on the markets. Vince Piazza, he covers all the big energy companies for Bloomberg Intelligence. We had Chevron, Exxon, both out with good results. I was kind of surprised because we got oil trading lower here during the quarter, but they had some good numbers there, so we'll break that down. Ryan Mallory, CEO of Flexential, on the growing strain on power amid the AI boom. Is the grid ready for all this power demand from AI? We'll see. Let's start this whole thing off with John Tucker and get a Bloomberg Business Flash, John.
All right, guys. Yes, happy Friday. This Bloomberg Business Flash is being brought to you by IBKR. Will the U.S. economy enter a recession by the end of Q4 2025? At IBKR forecast trader, the S was recently at 6%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, March 26, 2026. Yeah, stocks are pushing ahead this morning. Amazon kind of setting the tone right now. Best performing stock in the S&P 500, up over 11%. The cloud unit posting the strongest growth rate in almost 3 years. Apple right now, the shares are actually down about 0.4%, but they say revenue is going to jump up to 12% for the fiscal year, fiscal first quarter. That includes the holidays. ExxonMobil shares right now, they are down about 0.6%, even after reporting third quarter cash flow from operations. Actually, it missed the average analyst estimate. That's why that's down. Amy Wu Silverman, meantime, at RBC Capital Markets, does expect the market volatility to continue.
You get these huge upswings in some names and huge downdrafts in the other. And so on an index volatility level, it continues to look relatively calm and peaceful. But we know there have been these kind of violent rotations underneath. You know, we've called that the paddling duck market.
Right now, the S&P 500 up 30 points, 68.52 on the index. The Dow Jones Industrial Average up 35 points. The Nasdaq 100 up 233 points. Wall Street Journal reporting the U.S. selecting targets in Venezuela, including military facilities it may strike as part of the counter-narcotics campaign. Again, that's according to the Wall Street Journal. As a result of that, you have Brent Crude, the international benchmark, up right now about 0.25%. It's 65.16 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
That's very dramatic.
Thank you, John.
My dramatic pause.
Tucker. Very good there.
I'm John Tucker.
There you go. Market drivers today brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn more here. So let's take a look at what's happening in the markets. We got green on the screen, as John was just reporting. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
We have to talk about Coinbase. So the stock is higher by around 6%. The company reported revenue that exceeded estimates. And of course, this was helped by crypto, which really just rose to record highs. Bitcoin is now around 110, though, so it pared back some of those record gains from 125,000, but still, it's 6 digits. So Coinbase is the largest U.S. crypto exchange. It reported revenue that increased by 55%. Net income also rose 5-fold. Trading volume also increased. So overall, it's just really been a great year for digital assets. We've talked about this the whole year because of the pro-crypto administration, the first law regulating stablecoins in July. And Brian Armstrong, the CEO of the company, is now one of the biggest high-profile crypto advocates and really always supports Trump. And a lot of brokers have upgraded Coinbase from sell to buy.
Yeah, a lot of momentum in that crypto industry. All right, let's talk about Reddit.
Reddit, RDDT is the ticker. The stock is up by more than 15% after results that beat expectations. That's the highest in a month. It also gave an outlook that is above analyst consensus. So Reddit is a social media platform, and this good earnings report is a sign that the company's ad business will continue to grow really at a steady clip after its IPO around a year and a half ago. So since listing, Reddit just really has begun to try to diversify its ad business. It also tried to capitalize on a growing trove of, user posts, and now AI companies are using that. They use those to train valuable AI models, and the Reddit COO actually said that they're an AI winner because they're asset light, because their content is what a lot of the companies are using. And I find myself actually using Reddit more and more.
Me too.
Because I feel like it's honest. So I look at the site for reviews and thoughts of restaurants.
Use it.
Really?
Oh, you should try.
You just need to find something.
What do I do? I search for it and I'll find it there. And
Say,
just use
is
it?
this a good hair straightener, Reddit? And then it will come up. Yes, Paul.
Well, am I using?
Oh, yes.
Sorry
for
I
the
was supposed
example.
to use ChatGPT for that.
But ChatGPT can hallucinate, so they say, But Reddit uses
Reddit is real people.
Real
yes,
people? Okay.
passionate people.
Okay.
Crazy people sometimes.
Reddit answers end up in OpenAI.
Yes, there you go.
Sorry, Caroline, adding to the mix because they've
Look at
signed
that.
licenses with OpenAI and with Google.
There you go. I mean, it's just round and around. Can I just do my Google search? I'm good with that.
Reddit.
You got to move on, Paul.
All right, I'll move on.
We will
I'll
watch
move
you
on. I'll
later
move on.
after the show.
I'll move on. John Tucker's still using Encyclopedia Britannica, So,
Hair
Roku,
straighteners? Wow.
yeah, Roku. What's going on there?
Roku, the tickers ROKU. Shares are up more than 15%. That's the highest since April 2022 if you go to SINS, S-I-N-S, Go. And that comes after the company reported earnings that really beat expectations. It also marked the company's first quarter with positive operating income since 2021. And of course, Wall Street is positive across the board. Bloomberg Intelligence said that results are good, although not gangbusters. Benchmark said that this is also a good earnings report. Their only concern is that they've consistently had and will have expectations that are a little too far ahead from reality, but for now it's good. And Evercore also said it's a generally solid report. So
I'll tell you what, a
good news
shout
for
out to Laura Martin at Needham & Company. She's been pounding the table on this name for a couple of years. This has been like our top pick, and she's been so right on that name. So a little shout out to Laura Martin there. All right, Isabel Lee, thanks so much for joining us there. Appreciate that, Isabel Lee, giving us the stock movers there. If you want more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I tell you, big week for tech. And I think my takeaway here is they're still spending on AI.
They're spending tremendous amounts, almost double, I think, what it was last year if you put everything in aggregate. Mind-blowing numbers.
And then to see Meta go out and sell $30 billion of bonds, had a $125 billion book. I told you, 5 phone calls, that deal was sold.
Yeah, that was pretty incredible.
Caroline Hyde joins us. She does all the tech stuff with Ed Ludlow on Bloomberg Television. Boy, these companies, Caroline, they're not backing away from the spending on AI, are they?
But they're being rewarded or chucked out in different measure. And it's interesting to see who's managing to convince and vindicate on the spending. Today, highlight of choice, Amazon. We are seeing it skyrocket to new record highs. Look, that's a difficult, bitter pill to swallow for the 14,000 people that are being told that they're losing their job at the company. But at the same time, Andy Jassy is doing what he warned about 4 months ago. He is all in on AI, whether that's into the e-commerce side of the business, which is also growing rapidly. Rufus is your generative AI chatbot within Amazon, and they think that's going to drive some $10 billion of sales. But you're also seeing them really lean into scaling. Look, for all of these cloud computing companies, the issue is supply, not demand. So they've raised their capital expenditure when it comes to property, when it comes to equipment, by 55%, up to more than 50 billion. Wow. But they're managing to grow AWS once again into the 20% level. And that's what investors really want to see. It was 2 percentage points higher than expected. And also the vertical integration of Amazon is so interesting. Look, they're saying their Trainium chips are a multi-billion-dollar company for them in and of themselves. So they're managing to get the chips that are training in gigantic data centers that are then serving Anthropic. This is all becoming a virtuous circle for AWS and for Amazon writ large. So Amazon goes higher, but when you still see Meta beaten up, because look, they're doing what they've promised to do for years, which is spend significant amounts on cloud and on overall data centers to power their generative AI parts of the businesses. And then they go out and raise that unbelievable bond market. Well, there's a lot of demand for the bonds, just less for the shares at the moment.
Yeah, Amazon shares, by the way, surging as much as 12% now to record high. Meta extending yesterday's decline. It lost about $200 billion in market cap, now down about 0.9%. So that was really interesting, seeing the reception to Meta in the equity market versus the bond market. Let's talk about Apple, because it doesn't have much of an AI playbook, and that's kind of the problem.
It's a problem, but it doesn't seem to be holding us back on our iPhone 17s and 17 Pros. And what's interesting is they managed to up the prices, so the average selling price has gone higher, but services is what really drove their outperformance in their fiscal quarter. So the one that just reported, we saw, about 7% growth, more than expected. But it's the pointing towards future growth that really got people excited, why Apple is also at a record high, even with Apple Intelligence not doing much. Maybe, though, that's why the fly in the ointment came in their quarter just reported, was that China, nowhere to be seen. We actually saw a fall in growth over at China. Many people thought that they would be accelerating once again, but there's so much competition there, and there's a lot of competition that has infused generative AI within all of the phones. The Chinese-made domestic champions. But Apple Intelligence hadn't managed to do that, and the eSIM issue with the new phones, of course. So they only had 2 weeks of sales for the iPhone 17 and the 17 Air.
So people in China are asking, how do I straighten my hair into their phones?
Yes.
It's just not their iPhones.
Yes, exactly. We had Dan Ives on earlier in studio today, and his outfit was particularly disturbing today. It set new lows.
New lows, but he's forever bullish.
Exactly. It works for him, I guess. Apple investors don't seem to be that concerned about the lack of an AI play in the story. Like Dan was saying, don't worry, it'll come, it'll come.
And I think that's what Apple always rides on, is that they're late to the party, but they do it right, and everyone then piles into their particular equipment, whether it's also services side. And remember, we've seen the services side of the business also be questioned. We're worried about app stores, regulation coming from Europe and the US that's saying, look, you've got to stop taking so much from app developers. Maybe that will put that part of the business under duress. But you're right, with a record high, with only about 5 sell ratings on the stock, many feel that they can continue to eventually win out when it comes to generative AI.
Okay, the one Mag 7 name that didn't report is NVIDIA, but CEO Jensen Huang was all over South Korea, making all kinds of waves, becoming like memeable in every way.
And driving chicken stocks higher as well. This man's power is just omniscient, omnipotent. This, I mean, he's saying he's still hopeful of a deal in China, and that's what drives NVIDIA higher today. So even though we didn't get that reality, he's still talking about that potentially being another galvanization of growth. But Korean deals left, right, and center. It's all about sovereign AI.
Caroline, thank you so much for joining us. Really appreciate it. Caroline Hyde, BTech co-anchor, along with Ed Ludlow for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. I appreciate getting some of her time. It's been a very, very busy week for tech investors, tech analysts, and tech news folks as well. S&P 500 up 33 points. Why not? This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. It's being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. I want to start with oil because it's higher. Of course, the U.S. plans to strike military targets in OPEC producer Venezuela. Brent, this is the international benchmark. It is up 0.2% right now. Big tech that's fueling the gains that we are seeing today. Amazon, the best performing stock in the S&P 500, delivering blowout results after the close of regular trading last night. NVIDIA unveiling new partnerships with South Korea's biggest firms. So this extends the global push to expand AI infrastructure. Real quick, looking at shares of Reddit right now, they delivered better than expected forecast for fourth quarter sales. This looks like the company's advertising business is going to continue to grow at a pretty steady clip. This comes a year and a half after the initial public offering. Right now, the share is up just about 17%. S&P 500, that's 24 points higher right now, up 0.4%, 68.46 on the index. The NASDAQ 100 right now, 207 points higher. That's up 0.8%. Bucking the trend, the Dow Jones Industrial Average, it has turned negative, down just 6 points right now. Yeah, I thought this was interesting. There's a team at the research and advisory firm Gartner. They analyzed some of the major redundancies in the first half of this year at some 231 companies around the world, and they represent about over 241,000 jobs. They found 79% of the layoffs that took place were not caused by artificial intelligence in any way, shape, or form. Yeah, who knows if that's going to change.
How do you determine that, though? How do you say that conclusively?
You will have to direct that question to the research firm Gartner.
Yeah, it's a philosophical question.
Well,
but anyway,
a lot of people saying that the jobs lost a lot over the last generation or two or three were primarily because of automation, as opposed to the jobs going overseas to some.
We had actually a fascinating discussion the other day. Is the loss of jobs from AI? Should that happen? Yeah, it's going to increase productivity, but from a political perspective, does it result in a new wave of populism? One that was, generated initially by the World Trade Agreements way
by
back
globalization.
Yep.
Yeah.
Good question. I don't know. That's a good point. John Tucker, we will ponder that for the rest of today. We will.
An eternity.
Hey, John Tucker, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney, live with you here in the Bloomberg Interactive Broker Studio, streaming live on YouTube. I want to get to our next guest. This is going to be interesting. David Traynor, Chief Executive Officer of New Constructs. He's based down in Nashville, Tennessee, which we'll discuss later. That's a scam. How did he get away from New York City? David, tell us what you do at New Constructs, because I think our paths crossed back in the day at Credit Suisse First Boston Equity Research.
Yeah, the good old days back during the tech bubble. And New Constructs, thanks for having me on, by the way. Good to see you this morning. What we do is actually really pretty unique. We built an AI that actually scans through all of the filings, especially footnotes, and produces what is a now proven superior signal for buying stocks. And when I say proven, I mean it's proven by the performance of the live traded Bloomberg indices that have dramatically outperformed the market based on our research, and in particular, our measure of core earnings. And we provide that data to quant funds, advisors, and we also have an agent that we are launching with Google Cloud that's based on these insights. So it's a very different AI agent for investing, in that all the other agents really focus on pulling together data and building models. We jump straight to the insights. We can tell you which stocks are most likely to miss earnings, which stocks are likely to outperform because they have better earnings than the market understands. And all that, of course, backed by the fact that we've got real-world alpha in the indices.
Okay, so David, share with us some of your insights. What surprised you the most this earnings season, especially as it relates to what we were just talking about, AI and AI spending?
Yeah, the AI narrative is everything these days. And I think what we're going to see here is a war of attrition. because we all know they're spending billions and billions and billions, and some are going to be able to afford it better than others. And the ability to afford it is going to be based on two things. How profitable is their existing business? So how much can it subsidize this huge spend? And then who can realize a return first? And when I look at who can realize a return first and monetize it first, that's much tougher to predict. I like Google's approach because it's a little more agnostic. They're not necessarily tied to any one particular model or way of doing things. But besides that, it's kind of a toss-up on who's going to be the best and who's going to win at that at this point in time. I don't think we know. But when we look at who's got the money, who can show us the money to sort of really continue the spend, top of that list in terms of cash flow, you got NVIDIA, Apple, Google, Microsoft, Meta to a lesser extent, but the one company that doesn't make nearly as much money as people think is Amazon. Their free cash flow has been negative to the tune of 30 or 40 billion for several years.
So how do you look at David? How differently do you, or how do you look at financial statements or financial analysis that may be different from what traditional, looking at the, EPS and cash flow and that kind of thing?
Yeah, it's just a more comprehensive approach. It's what Warren Buffett has always said people should do. It's what his mentor Ben Graham and all of sort of the old school people who like to sort of roll up their sleeves and read the 10K or the annual report from cover to cover. That's what I did when I was on Wall Street. But I saw that there was ways to get technology to do it better. And it's taken us 20 years to perfect it and to get it right. I mean, it's not easy. That's the thing that people often misunderstand about AI. To really get it to work, you've got to have a perfect data set. You have a good ontology, all these kinds of things we don't see anyplace else. But yeah, the answer is that we're just doing a more comprehensive job. We're looking in all the dark corners that most analysts just overlook. And when you do that, you get a better number. And that's the number that drives the outperformance in our indices.
When you look in the dark corners and you look outside of things that are touched by AI or making money or hope to make money using AI, what do you find? Are there any old economy companies and old economy industries that look well positioned right now?
It's definitely getting harder and harder to find cheap stocks in this kind of a market. But, one of the companies we've written on recently and we're really bullish on is GM. We for a long time have said, listen, we think this electric vehicle market and demand is potentially a little bit overheated. We're not going all electric right away. It's too expensive. And, GM and Ford both have sort of played that same tune. And look, it's all proving true, right? They've overinvested in EVs. They're pulling back. The demand's coming way off. And they have profitable ICE businesses, legacy businesses, that are allowing them to generate tons of cash flow when firms like Tesla are not. And so we see, that's one example of where you keep focused on the cash flow, and it's going to stay true.
All right, David, thank you so much for joining us. Appreciate it. David Traynor, Chief Executive Officer. The company's name is New Construct, based down there in Nashville, Tennessee. A little bit deeper dive in some of the financial analysis on stocks out there in the marketplace. Big earnings week. As we know, a lot of the focus has been on the big tech names, but we had a big day of big oil companies reporting their earnings. Exxon, Mobil, and Chevron as well. Let's bring in Vince Piazza. He covers all the big oil companies for Bloomberg Intelligence. Hey, Vince, I got WTI crude oil at $60 a barrel. I watch Landman. I know about the oil and gas business. I know they're not happy at $60 a barrel. What did you see out of the big energy companies today?
Well, what I did see is impressive upstream results. If I take a look at
that Zoom thing.
That looks like a frozen Zoom thing.
That Zoom thing's not working right now.
And we're a technology company.
I thought we would be better than this.
Yeah, well,
I think Zoom is better than this. But, in any case, you watch Landman.
Yes.
That's the Billy Bob Thornton show?
Yes. And season 2 is coming like in a matter of weeks. Cannot wait.
Was there a price of oil in the show?
Yes. $76. That's what they say their optimal price is. Nice fat profit margins, but it doesn't put a price at the pump that gets me and you and other consumers upset.
I was like, that's nowhere close to what we're at right now.
Exactly. So, but BNEF, that's the folks at Bloomberg that really just look exclusively at the energy business and the transition to clean energy. They say the cost of production, the average cost of production for U.S. shale producers is about $55 a barrel. So at 60, it's kind of tight.
Right. I mean, they're not completely losing out, but it's not what they want it to be at.
No, but what we've seen from the energy companies over the last several years is they've become pretty, they're disciplined, I guess is the word.
Chevron's disciplined, for sure.
I mean, it used to be in the old days, you get oil at $70, $80, $90 a barrel and you start drill, baby, drill because you can make a lot of money. They're not doing that as much these days, and that's because they're trying to be better for their shareholders and their bondholders, and we're going to try to generate returns as opposed to just drill, baby, drill.
Yeah, I'm really curious to get Vince's take when he rejoins us on how Chevron and Exxon have really taken different paths in this kind of environment where there's a lot of oil, and like you said, oil prices can't get past 67, 68 because they've chosen very, very different philosophies on how to move forward.
Yeah, and I've been reading just in the last several weeks about the potential of maybe we're in an oil glut on a global basis in terms of oil. We've got OPEC kind of dialing back some of the cuts they had put in over the last several years. So
yeah,
they're
they just want market
more.
share.
They want market share. The U.S. is a net exporter, and our production seems to be pretty steady. And if the economy is slowing down, that's less demand, and there you go.
Well, today we do have oil prices somewhat higher. They erased their losses, but if you look at just the percentage gain, 0.2% for WTI, it's not massive. There was this report that the U.S. is looking to attack military fixtures in Venezuela, which is, of course, an OPEC producer.
Right.
So that could be really disruptive to the business of refinery on the U.S. Gulf Coast, and they rely on Venezuelan heavy crude.
Yeah, but it's just looking at the results from ExxonMobil, the results from Chevron. They've been acquiring some assets as well over the past couple of years, and there's been some M&A in that business looking for proven reserves. Because I don't think they would necessarily want to go out in the middle of some ocean somewhere and start drilling. I don't think they're have the appetite for that these days. So if I can buy reserves or just consolidate maybe some shale ownership, that seems to be. That's kind of where I think they're focused.
Yeah, ExxonMobil a lot more aggressive when it comes to acquisitions. It spent $2.4 billion on what it calls growth acquisitions and says it wants to be ready to capitalize on any kind of significant upturn in prices. And, there was some talk that maybe that could come as soon as next year. I'm not sure if that means they're ahead of the curve, Paul, or maybe trying to make up for some lost time. Yeah,
looking at the stocks of ExxonMobil, it's down about 1.5% today. It's up 5% for the year, so not really doing a whole lot here for these. The Chevron is up 2.8% today and up about 9% for the year. So the stocks have been underperforming the market, and I guess it's tough for these stocks to outperform when you have oil kind of going the other direction. Despite the fact that these companies have really established some good discipline in terms of trying to be better stewards of capital and returning it to shareholders and bondholders. So we'll keep an eye on that. We'll get Vince next time when these oil companies are in the news. We've got some green on the screen, folks. We're going to just kind of call it there on this Friday, Halloween. S&P 500 up $35. That's a 0.5%. And NASDAQ, it's up 238 points. That's up 1%. The Tom Keene Memorial VIX, it's sitting right below 17. So he's happy about that wherever he is. The 10-year Treasury yield, 4.08%. We did get to 4.11% earlier today. So starting to drift back down to that 4% level. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let me start with the Bloomberg Magnificent 7 Index. Today, up right now 1.5%. Amazon, NVIDIA, Tesla, all the leaders in the S&P 500 in terms of index points. You have 5 of the 11 major industry groups in the S&P 500 higher right now. Consumer discretionary, the best performer, and that is home to Amazon. Amazon Web Services generating $33 billion in revenue, and that is a 20% increase from a year earlier. Analysts were looking for 18%. Meantime, on the AI front, Sarah Hunt at Alpine Woods says investors starting to demand returns on companies' AI spending.
And the question is going to start to become, what are you getting for that CapEx? And if margins are going to be affected, then people are going to be a little less excited than they were when it looked like that CapEx was going to drive margins. So I think if that's the tension right now, that's what people are trying to figure out.
The S&P 500, 38 points higher, 6860 on the index. Dow Jones Industrial Average, it's been bouncing around right now, up 82 points. And the Nasdaq 100, 278 points higher. That is up 1%. Los Angeles or Toronto? They could do it tonight, you know.
Yeah, Toronto could do it tonight.
Anyway, they're improbable runs stoking national pride just at a time when President Trump's trade war suggests Canada should be the 51st state have stirred outrage and consumer boycotts. The Blue Jays have become a symbol of Canada's perseverance. And I wonder if we're going to tweet should the Blue Jays actually win tonight. So who knows?
Tell you some of the best skiing I've ever had in the world is
no
up there
kidding.
in Western Canada. Unbelievable.
Really?
Awesome.
I'll have to try that. And we check the markets for you all day long and give you ski reports too. You didn't know that. Right here on Bloomberg Radio. I'm John Tucker, and it's your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, John Tucker. You know, it is Halloween, so I think about haunted houses. And there's a great story on the Bloomberg, Paul, about a real estate developer in Pennsylvania who wants to turn his haunted house attraction, which is actually a former Pennhurst asylum, into what else? A data center.
Ah, of course.
I mean, it's
We
right
need more
in
data
right in
centers.
line with the times,
Sure.
right? AI is the only thing anyone cares about these days. Everyone's trying to make money off of it, profit off demand for it. But can the grid actually sustain all of this? It's not clear.
Wait, the guy lives in an asylum?
No, he owns the asylum and he's turned it into a haunted house. But now he wants to turn it into a data center.
You think it's like really wired for that?
There you go. All good questions. All right, let's bring in Ryan Mallory. He is president and CEO of Flexential, which is a private company that is tied in to this idea of whether we have enough power to power all this AI that everyone wants. Ryan, thanks for joining us today.
Good morning, Scarlett and Paul. Thanks for the opportunity to speak with you.
So just give us a primer first on what Flexential does and how it ties in with whether our grid can support all this demand for AI.
Yeah, so Flexential is a national data center operator. We've got a dynamic platform, 42 data centers across 18 markets. And so, we're right at the cornerstone of that AI on-ramp trend that's out there. So, we're seeing some of these big deployments like you guys are talking about in Pennsylvania and other places. Flexential is really that on-ramp capability from that network ingress.
So, Ryan, you say power availability is the new real estate. What do you mean by that?
Yeah, it used to be trying to find the land. So a piece of, property that could support a data center was where everybody started. Now it's really where is the power at? In 2023, there was 176 terawatts of power being, generated out there for the data center marketplace. By 2028, there's going to be 580 terawatts. And so what we're seeing is this massive increase in power demand. And, they're not making any more land close to, the generation and transmission. So being able to have access to that power is that real estate mantra of location, location, location. So you've got to find the power first.
I wouldn't know what a terawatt is if I tripped over. But what I do know
sounds like
is
a lot.
580 terawatts by 2028. That's 12% of the national electricity demand is going for these AI things.
Yeah, and sometimes we don't even have enough electricity just to do what we do right now.
Exactly.
So that's the question. Ryan, which parts of the country have this power availability? They're ready for this new revolution, and which have massive backlogs and can't afford to have anything more plugged into their grid?
Yeah, we've really seen some shifting in the game board over the past several years, where the Northern Virginias and the California markets and even Georgia has become power constrained just because of this massive shift to those markets because of at that point in time power availability. Now we're starting to see it turn to net new markets. Oregon, Utah, Colorado, Texas, North Carolina. These are areas that, from a legacy data center market had been overlooked because they didn't have a lot of the infrastructure, but they've caught up. And those markets are really primed to take off. That's where Flexential is spending a lot of its focus right now. And we see a lot of others in the AI industry doing the same.
All right, so I need power to power these things up, but I probably also need some water to cool them down. Talk to us about water.
Yeah, water is something that is a hot topic in the data center industry because, when you're talking about these high density compute workloads with AI, we've seen them, the actual, densities per rack go up, 100, 200, 300% over the past several years. You have to have water, from a heat rejection standpoint. And so a lot of companies historically had just used evaporative water cooling to be able to cool and power these data centers. That's just not efficient. And so it's really about utilizing, closed loop systems where you can, put a liquid across the chip, in the rack to be able to, dissipate that heat or reject that heat that's out of there. There is a little bit of a nuance out there. Companies that are looking at operating at a 0 WUE or water use efficiency are really what's needed in today's environment, so we don't become burdens on those local communities.
Let me ask a dumb question here. We have climate change, which is causing extreme weather. Here in the New York region, we just had flash floods that resulted in the death of 2 people and have really inundated the infrastructure. Does that matter when you're looking at water as a valuable resource in making sure that we can keep these data centers running?
Yeah, I mean, climate change is a topic that's near and dear to everybody in the data center world's heart because we have big footprint impacts in communities. But when you're looking at how we're building the data centers in today's environment with these closed loop systems, we're just not drawing off of those water sources that are out there because they're closed and contained. So it's not the same impact that historically was happening in the industry.
I'm all about nuclear here, particularly small modular reactors, SMRs. Talk to us about that technology, and is that going to be a solution in any time in the near future?
SMRs are the future of the data center world, as is nuclear in general. We've got to be focused to the climate comment that Scarlett made just a second ago around how we're impacting the environment. SMRs are small footprint reactors. We've been doing those for 30, 40 years, for government-based use, and they're tried and true from a performance perspective. What we've really got to get through is just the permitting, process and being able to deploy them. You can deploy anywhere from a 50 megawatt to 300 megawatt reactor in a small form factor, and that's going to really deliver that capability that's out there to be able to power these data centers in a more rapid fashion. A 10-year permitting process is just not going to help anybody in the industry, whether it's the home consumer or the data center consumer.
All right, good stuff. Ryan, thank you so much for joining us today and sharing your expertise with us. Ryan Mallory is CEO of Flexential on the growing strain on power due to this AI boom, and he joins us from Denver, Colorado. So a lot to think about there as everyone, it feels like, wants to find some way in on AI.
Yep. I mean, again, the data that he popped out there, U.S. data center power use hit 176 terawatts in 2023, could exceed 580 terawatts by 2028. Wowzer.
I know, and it feels like we've just barely gotten started, right? Most places are not really fully optimizing their use of AI.
Yep,
a lot more to come.
There you go.
All right, we have a lot more coming up on Bloomberg Intelligence as well. It is Friday, after all, on Halloween. We're going to talk a little bit about Warner Brothers Discovery looking to sell some assets or split up its businesses. Not sure which one it's going to be. The pros and cons of all of that coming up with Paul Hardart, who is a Bloomberg opinion columnist. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well here. I tell you, near and dear to my heart, we were just talking about what are some of these companies in these industries that are kind of slowly decaying, like the cable television industry. What do they do? But it's also
they're in decline, but they're not dead, and they're not going to be dead anytime soon, right?
No. And I think the other one here is just kind of what do some of these big legacy cable media companies do, and that's certainly, true with when you look at Warner Brothers Discovery, Paramount, all these companies. They're trying to figure out what to kind of do.
And they're teaming up as a one solution, right? Because maybe scale gets them somewhere that they can't get on their own.
Exactly. Our next guest has got a really interesting opinion piece out on this. Paul Hardart, he's a distinguished clinical professor of marketing at New York University Stern School of Business. By the way, I think Stern has basically, half of Global Wall Street came out of the Stern School of Business. I'm convinced. These people are everywhere. Paul, thanks so much for joining us here. Talk to us about Warner Brothers. It's a legacy media company, now part of Warner Brothers Discovery. The question is, should they be sold? Should they merge with another company? It's a proud company with a lot of just legacy media assets. What do you think they should do?
It's a great question. Thanks for having me, Paul and Scarlett. Nice to be with you.
It's a challenging. So from a business standpoint, it seems like they have a lot of debt. I think the plan was always to sell. As you know, they were originally Time Warner. Then there was a sort of disastrous AOL Time Warner merger. Then they were sold to AT&T, which didn't go well. AT&T then spun it off with Discovery, led by David Zaslav. And now here we are just a few years later. Once again, they're for sale. So first of all, I feel very bad for the people that work there. It's been a really tumultuous history. But they have to optimize the assets, right? That's their job as it relates to the shareholders. So I think they're trying to figure out an exit. I think there was a period of time where a lot of people felt that ultimately they could wrap these up and sell it to a big tech firm. That was same. I think that was the viewpoint of Sherry Redstone originally with Viacom and CBS and then ultimately Paramount. So I think they're trying to get the most value for what they have. Originally, like you had just talked earlier about the cable assets, the plan was sort of reflecting exactly what Comcast is doing, is spinning off its cable assets into Versant. The plan had been for Warner Brothers Discovery to split the company with their CFO taking the cable assets and the other assets, the Warner Brothers Discovery, the studio and the HBO Max platform, the streaming platform, staying as one entity. So in that time, David Ellison has come out and made 3 successive offers.
Yeah.
The value, the stock price has gone up, is effectively tripled since April. So their job is to optimize the value for their shareholders. And so I think that's what they're trying to do right now.
So what's the value here to a Skydance Paramount or to a Comcast or to a Netflix is the IP of Warner Brothers. You just go to the HBO app and you see Friends there. You see Game of Thrones. You see all kinds of assets that the company owns. That IP is valuable, but does it diminish over time? I mean, does it need to be folded into something bigger to maximize its value?
Yeah, well, so, in anything in media, we sort of always talk about the content and the distribution, right? You sort of need both. You can't just have great content. It has to be able to be discovered. And as we all know from, following the pandemic, our habits have changed. And a lot of us now, we stream content. So scale is helpful in that. So one of the value propositions for any of these buyers, whether it's Comcast, whether it's Netflix, whether it's possibly Apple or certainly Paramount, is, Paramount Plus has struggled a little bit. So pairing that with HBO Max, you'd get a huge subscriber base, you'd get extra content. It's not that different than what Disney did by merging with Fox, realizing that to compete with Netflix, they need a huge amount of content. So I think it's sort of the same playbook of scaling up, having a large, deep library that some people, when, we all have credit card bills, everyone has to check and see how they are spending their money. And if we're all subscribing to 5 or 6 or 7 streaming services, it becomes, uneconomic. So I think the idea is you want to be one of those 2 or 3 streaming services that, the family needs.
And Paul, what I think is one of the unique aspects of a potential deal with Warner Brothers Discover is you've got a CEO and a board that says basically, hey, we're open to doing a deal. We're for sale, kind of. How does that play into it?
Absolutely. Well, they've basically said that, they've turned down 3 offers. And again, the stock price is more than tripled. So at some point the board is also going to have to sort of face the music and say, why they're not accepting this offer. So I think what they're looking for, right? They're trying to, elevate, having more parties interested is always good in any dynamic. So it's unclear exactly how interested Netflix or Comcast is, but some of those assets, just like, if you go to a consignment shop, there's definitely something that would be interesting. And I think that the benefit to Comcast, Netflix, any other people, giving access to the data room there is, first of all, you learn a lot about what your competitor is doing. So you get access to information. 2, there is a deal, right? They may only want HBO Max. They may only want certain IP, but there's probably a deal worth looking at. And then lastly, is sort of what Comcast did with Disney is, you might also elevate the price for one of your competitors. So that's not a bad thing. It's you sort of, you're sort of the skunk at the picnic a little bit. And so I think all of those factor into it in a way. But there's no reason, I think it would be an obligation of duty from these other companies not to look at it, just kick the tires a little bit.
Paul Hartart, distinguished clinical professor at NYU Stern School of Business. He is a Bloomberg opinion contributor as well. You can check out what he writes on the Bloomberg terminal. And for listeners in the U.S., a reminder, you can listen to us through satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. It is presented by Oracle. Stay here for this latest market news and industry research because the second hour of Bloomberg Intelligence begins right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Halloween, everyone, and TGIF, live from our interactive broker studio. This is Bloomberg Intelligence on Bloomberg Radio and streaming live on YouTube. Coming up in this second hour of Bloomberg Intelligence, we catch up with Tyler Kendall, Bloomberg's Washington correspondent, on the president's latest Asia trip. The president has returned back to the U.S. Tyler is still in Asia, so we'll get her final thoughts on this trip. Michelle Hussein, who's the editor-at-large for Bloomberg Weekend and the host of the Michelle Hussein Show, will join us to talk about her conversation with Maria Corina Machado, the Nobel Peace Prize winner, and of course, Venezuelan opposition leader. Ashna Shah, Bloomberg municipal finance reporter, will join us for our weekly Munis in Focus. And then we got to talk some Mag 7. Amazon reported earnings yesterday. We know all about the cloud business and AI, but what about the retail side? Poonam Goyal, senior U.S. e-commerce and retail analyst at Bloomberg Intelligence, will give us her take there. First, though, let's bring in John Tucker for a Bloomberg Business Flash. John.
All right, guys, thanks very much. And right now, the major averagers pushing higher. Amazon looks like that is setting the tone. Best performing stock in the S&P 500 after results after the close of regular trading yesterday. By the way, it's the fourth stock with the fourth biggest weighting in the S&P 500. Apple is projecting a slump in sales over the holiday season after releasing the new iPhones. Sales in the fiscal first quarter expected to rise by 10 to 12%, but the stock right now is down 0.2%. That is the second biggest weighting in the S&P 500. S&P 500 right now 44 points higher. That's up 0.7%. 68.67 on the index. The Dow Jones Industrial Average up 104 points. That's up 0.2%. The Nasdaq 100 is 298 points higher. That is up 1.2%. Meantime, Barb Doran at BD8 Capital Partners telling investors, you better be a little wary.
So understandable, with a 23 times PE, we're going to have volatility. So in the near term, caution is warranted. However, you're seeing this morning what's happening, with the Amazon, good earnings there, and Apple, not to mention Coinbase. So I think just caution in general at this point, putting new money to work.
And with talk and reports of a possible U.S. strike against military targets in Venezuela, Brent Crude, the international benchmark, that is up 0.2%, 65.14 right now. Oh no, YouTube TV is going to lose marquee channels like ESPN. They failed to strike a new licensing deal with Disney, and absent fresh agreements, so it's what? ESPN, ABC, other Disney-owned channels going to go dark on the East Coast.
We've seen this before with the cable companies.
After midnight. So you'd get a rebate of $20 should this happen.
Oh, yeah?
That's what they say anyway.
You'll be put on hold for a long time before you can actually talk to someone about getting that rebate.
Extended time. So anyway. But you can make up for it by watching Bloomberg TV on YouTube. Right here. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. What are you laughing for?
I'm not laughing. I'm agreeing with you. I'm nodding my head and agreeing with you. All right, John Tucker, thank you so much. Let's get a check on these equity markets and dig into a couple of individual movers with equities in the green right now. The S&P, the Dow has turned positive, the NASDAQ, and the Russell 2000 all gaining. Nora Melinda has more for us. What are you watching, Nora?
Well, we're looking at broader markets all gaining, but we did see shares of Apple, ticker AAPL, flipping now into the red. They were earlier up as much as 2%, but we're now seeing them lagging a bit, down about 0.2% right now. So essentially, the company posted a strong holiday outlook, but they did talk about a sales decline in China. We know that's really been on the focus of a lot of investors as we think about supply chain constraints and we think about the rollout of their new iPhone. We're thinking about demand there over in China. And so that seems to be the clear overhang here for the company. But of course, you did see Wall Street trying to really assess how they felt about this report, especially given the fact that the forecast here for the holiday season seems to be quite robust.
Yeah. And again, people concerned about a lack of AI strategy, but maybe not that concerned. I don't know. Dan Ives says, don't worry about it.
Right.
So I don't know.
They still make a ton of money from their iPhones. So
absolutely.
AI needs to be there right now.
And the services side of the business is just that prints money as well. So there's no problem there whatsoever. So they'll figure it out. Amazon.
Well, of course, this one doing well. We're seeing shares of Amazon soaring for their highest level on record here, up as much as 12%. And this, of course, is due to its cloud business. It posted robust cloud growth. This was really reassuring investors, rather, about the tens of billions of dollars being spent, especially as we think about the AI efforts and whether or not they're paying off. If you think about the peers like Microsoft here, they've really been in focus as to whether or not they're able to keep up with a lot of market leaders in this space in terms of this AI race here. So you are seeing shares jumping right now, especially as people are really feeling a bit more calmed, fears being allayed right now about a potential AI bubble.
All right, good stuff. And then we've got Netflix.
Netflix, of course, this one continues to be in focus. That's ticker NFLX. We're seeing shares rising up as much as 4%. This is after a 10-for-1 stock split that we saw here from the company. Of course, we know the company was valued, really, really expensive, up more than $1,000. When you go to purchase one share, they're really trying to make it more affordable and accessible for their employees in their options program here. But we also know that we are continuing to see news trickling in about the bid that they have here for Warner Brothers Studio. Of course, we did have Reuters reporting that Netflix is actively exploring a bid for Warner Brothers Discovery.
That would be big.
That would be.
They don't do this primarily because they don't acquire any stuff.
Right.
They grow internally, organically.
Yeah, this is a juicy story here.
Wow, that is. That's going to keep going. So, all right. Very cool. Norma Linda, thank you so much. We appreciate that. Norma Linda is the markets correspondent for Bloomberg Television, giving us some of the stock movers here today. And you can always hear those conversations going forward on all the podcasts. All right. Let's highlight one of Bloomberg's newest podcasts, The Michelle Hussein Show. Each week, the show makes sense of the world with essential conversations with world leaders, business titans, and cultural icons. On this episode, Michelle speaks with Nobel Peace Prize winner and Venezuelan opposition leader Maria Corina Machado, where she shares her thoughts on recent U.S. boat strikes, Nicolas Maduro's fate, and the need for strength to secure peace. Let's take a listen.
I've been in contact not only with several officials in the U.S. government, but also in other countries, in Canada, in Latin America, in the Caribbean, and certainly Europe as well.
The Secretary of State, who feels the most strongly about Venezuela? The Secretary of State feels the most strongly.
I certainly believe the Secretary of State, Marco Rubio, is one of the people in the administration that better understand the threats that are posed into Latin America and from our region towards the United States.
And are you in touch with him?
I have been in touch with him, of course, and with his team, and I have to say even further in Congress, on both aisles, on both parties, we have really good friends and champions of our cause. Because this goes, I want to insist that this goes beyond ideological issues. I mean, it is certainly a matter of national security of the United States and hemispheric security, but it also brings, and I want to insist on this, the biggest opportunity for democracy, for stability, and for peace in our region. A transition to democracy in Venezuela will not only mean that we will stop the suffering of millions of my fellow countrymen that are dying as we speak.
All right, you can listen to the full conversation between Michelle Hussein and Maria Corina Machado. Just search The Michelle Hussein Show wherever you get your podcasts. And now joining us here in studio is Michelle Hussein, editor-at-large for Bloomberg Weekend. Michelle, thank you so much for joining us here
Great to be with you,
in our
Paul
New
and
York
Scarlett.
studio. Who is Maria Corina Machado?
Well, she would be the president of Venezuela today had she been allowed to stand in last year's presidential election, and had that been a free and fair election. I think that is pretty clear. Instead, and this is really why she got given the Nobel Peace Prize 3 weeks ago, she did something that was pretty unprecedented in Venezuela, which was to unite the very fractured opposition parties. They were rallying initially around her as a candidate, and then when she was barred from standing, she picked someone to run in her place. And then in the end, Maduro declared election victory. Anyway, they had done something extraordinary in managing to produce enough volunteers to do a shadow count of the election. So that was the backdrop to her getting the Nobel Peace Prize. But 3 weeks on, at the point that this long conversation with me takes place, we are in this extremely interesting and quite extraordinary moment between the US and Venezuela, because the military buildup that's taking place is the biggest in the Caribbean since 1989.
Wow.
Absolutely, and there are reports now that the U.S. has decided to attack military fixtures in Venezuela, which is, of course, an OPEC producer. So we're seeing moves in oil prices and getting a lot of people worried about what's next here. How does she think about that? How does she reflect on the U.S.'s increased militarism in the region?
Well, I asked her the two questions very directly on this front. Well, one, what she thinks of the boat strikes that have been taking place off the coast of Venezuela for the last 2 months. She essentially blames those deaths on Nicolas Maduro himself, and she echoes the language of the Trump administration in saying that there is narco-terrorism underway. And then I asked her directly, because the idea of the U.S. striking targets on the territory of Venezuela has been around for some days now, since President Trump said the land will be next. And she backs what the United States has been doing, because she feels escalation is the only way to, in her words, convince Nicolas Maduro to leave power peacefully. But really, she is someone who desperately wants to see regime change. She says what is unfolding, or what she hopes will unfold in Venezuela, is not regime change in the conventional sense. But she says to me, I believe escalation is the only way to force Maduro to understand that it's time to go. So I think what you get in a long conversation like the one I've had, because we speak for about 40 minutes and people can hear the whole thing on the Michelle Hussein Show, or text version as the weekend interview on Bloomberg.com, you get this sense of her thinking, and the fact that in many ways, if there's one person every single one of her words is directed to, it is the president, right? She is speaking to the administration, and in effect, she's asking them not to let go of this moment and the possibility for change that she sees within it.
What is her future, do you believe?
Well, she spoke to us from hiding. She lives in isolation. That was the effect of that stolen election 15 months ago. She did appear once in public in January. She was briefly detained, and I tried to ask her to explain her circumstances in whatever way she felt able to, because I was obviously mindful of her safety. But she cannot go out in public because of the risk of arrest. She does say that the Nobel Peace Prize has added a layer of protection. It has made her more high profile internationally, and that offers her some degree of protection. But thousands of people in the wake of that stolen election have been arrested in Venezuela.
Do we know whether she has been, or her representatives have been in contact with the Trump administration?
We do know that. Her team have confirmed that they are in touch with the Trump administration. And when I asked her that, she also said, yes, we are in touch. Clearly, and she also said, I'm in touch with the Secretary of State. Beyond that, she didn't want to be drawn on the detail of these conversations. But I think it's obvious that the Secretary of State, with his long-standing interest in the region and his positions on the region, is in the lead of policy at the moment. But there have been other voices on this. Previously, Richard Grenell was much more in the forefront. And of course, there is a relationship between the U.S. and Venezuela, if you consider that Venezuela accepts the deportation flights that come from the U.S., and it also has an oil relationship, because Chevron has that relationship which enables exports of Venezuelan oil.
Michelle, one thing that you do that is really incredible, and anyone who has just heard the clip should go and listen to the whole interview, is that you really dig into the person beneath the headlines, and you strip away a lot of the big news that we know about this person. She has been in hiding for 15 months, and she speaks with a lot of conviction. What is her state of mind like? How does she stay purposeful and with her mission in mind and energized? What did you get out of her?
Well, Scarlett, I was really struck by how upbeat she was throughout this conversation because of exactly what you say, the fact that she is separated from family. She's endured having family members in exile and living in isolation as she does, unable to go out. I think the reason she's so upbeat is because she senses the opportunity for her, for what she dreams of for Venezuela in this moment. And I do always try to get to the person behind the persona. In this conversation, it's harder than with other people, I think partly because she has such a relentless message and she wants the focus to stay on change for Venezuela. Also because I think she wants to protect her loved ones. And even when she speaks about, if she was to speak about separation from family and loved ones, that is not unusual in Venezuela. With so many millions of people having left the country, that reality of separation and isolation and far-flung families is part of the reality for so many Venezuelans. And so in that sense, what she's going through is not unusual or exceptional.
From your discussion with Ms. Machado, is there a belief that the Venezuelan people would welcome some type of regime change, and maybe one that would be supported by or aided by the U.S. government?
It's a very, very good question. And I also said to her, what are you doing within Venezuela? Are you going to be calling people out on the streets? And she said, people will come out when the moment is right, which is really a point about safety and the risk of oppression. She also makes claims which are, which she doesn't provide evidence for, like 80% of the military are against Maduro and for the opposition. She doesn't back that up, so we have no way of knowing how true it is. But I think that there have been tremendous repercussions for people who have played a role in the opposition, and not only high-profile people, but the volunteers, the people who figured out ways to get tallies of their own out of the voting machines and be able to publicize them to the world 15 months ago to prove that the opposition had won that election.
Michelle, thank you so much. Michelle Hussein is editor-at-large for Bloomberg Weekend, and you can listen to the full conversation between Michelle and Maria Corina Machado. Just search The Michelle Hussein Show wherever you get your podcasts. A lot to dig through there, and her conversations with Mark Carney in the past, Nigel Farage, really, really fantastic reads.
Yeah, just fantastic. So it's a great podcast. Again, it's on Bloomberg.com as well. So you can catch Michelle's conversations pretty much across the Bloomberg terminal, across all of our media properties. But
the universe
kind of made me rethink a little about the news we've been hearing over the last couple of days about we're obviously taking out some of these boats that are presumably with drug folks, but this may be some form of something bigger, as Michelle was suggesting, as it relates to regime change. And that's part of the story I guess I just wasn't necessarily aware of there. So that adds another layer to it.
Right. And just once again, we just want to reiterate that there are reports both in the Miami Herald and the Wall Street Journal that the U.S. has selected targets in Venezuela, including military facilities that it may strike as part of its counter-narcotics campaign. That's in addition to the attacks on some of those boats that, Paul, you just mentioned.
Yep, absolutely. So we'll stay on top of that, and again, with the fantastic reporting we have in that region of the world as well. S&P 500 up 44 points at 0.6%. So a good, strong day in the market here. The NASDAQ doing even better because that's where the tech stocks are, and they've been performing well from an earnings perspective, up 1.3% for the NASDAQ. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Looks like the AI equity leadership is not bunching. I'll start off with the Magnificent 7 index. That is set for its 7th consecutive monthly gain. This is a streak that was exceeded just once. Right now, the Mag 7 index is up 1.9%. And its Amazon shares surging 10% after the cloud unit posted the strongest growth rate in almost 3 years. Apple also projected a jump in sales over the holiday season, of course, after releasing the new iPhones, and it's helping to assure some of the investors that the flagship product does remain the growth engine for Apple. And Apple shares, despite that, down right now 0.2%. Amazon, best performing stock in the S&P 500, it is up close to 11%. Right now. And with the reporting on possible strike against military targets in Venezuela, have to look at oil because Venezuela is an OPEC member. It is up. Brent, the international benchmark right now, up 0.25%, 65.17 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. How about that? We were down visiting our good friends at BAM earlier in the week downtown, spending a couple hours with them. Some good folks down there doing some good work in the municipal bond market. Ashna Shah, she joins us right now, municipal finance reporter for Bloomberg News. She joins us here in our studio. She doesn't mail it in on a Friday like some people
She's
do.
in the office,
in
yes.
the office, grinding it out. All right, let's start with the hard question first. Where is Bexar County, and why do I care about Bexar County?
Yeah, so thanks for having me, first of all. Bexar County is in San Antonio, Texas.
Okay.
It honestly we always do a story around this time of the year looking at all the bonds that are going to be on the ballots for the election, and this one honestly really caught our eye. I originally thought it was pronounced Bexar County because it's spelled B-E-X-A-R.
That's totally fair.
Yeah, and so Bexar County is wanting to, they have a referendum on their ballot for a new Spurs arena.
The San Antonio Spurs. They want the public to fund some of this arena.
Yes, so they are asking voters to vote on a new tax hike for a hotel occupancy tax. And using the funds from that, they would help support funding this new Spurs arena. So the Spurs are currently located on the east side of San Antonio, and they want to move to a new neighborhood in downtown San Antonio. So they're asking the public to help fund this.
So basically, the opposing team that would be visiting the Spurs would be paying the bulk of these taxes, essentially. What's the sentiment around the vote passing?
Yeah, so I talked to people from the team, and they think that, they're positive. There's 2 propositions on the ballots this year, one for Proposition B, which is funding this new arena, and then Proposition A, which is funding renovations to the Frostbank Center, and that is co-owned by the Spurs and the rodeo that happens there.
Nice.
And so moving to the downtown area would allow the rodeo to expand operations. And so the team is very confident that both propositions are going to pass. The vote is on Tuesday, November 4th.
Oh, so they want to do both?
Yes, yeah. And so both are a tax increase. And so one is for the new arena and one is for funding, renovations to the Frostbank Center, which is the current arena, and the facilities around it.
I haven't seen a market that supports their professional basketball team more than San Antonio does the Spurs.
Why is that?
I think they're consistently good, and they've had consistency in coaching and all that kind of stuff. They've always had good stars, they've always had consistency. So you drive in San Antonio, and there are flags hanging out people's apartments and windows and stuff.
So you're saying on-the-field performance has a linkage to whether these muni bonds get passed or not?
They very well might. So I would back this. But so is this going to be it's going to be downtown is the arena?
Yes, downtown.
And then it's going to be mixed use around it, because that's kind of what I think they're doing, all these teams are doing these days.
That has been a big theme recently. We saw with them doing that in DC and some other arenas around the town. They really want to build out these sports and entertainment complexes. I don't know for sure if that's the plan with, this one in downtown San Antonio, but wouldn't write it off the table.
You know who wrote the book on that was the Atlanta Braves. I think they really did a great job
Arthur
with
Blank.
Yes. And it's really Liberty Media and the Atlanta Braves. They said, we're going to build a new baseball field, but we're going to do lots of mixed use around it. So it's a destination for people to come.
They revitalized the region completely and created an entire new neighborhood around that arena.
And that's what Stevie Cohen wants to do with City Field and the casino and all that kind of stuff.
Well, I mean, if it worked once, obviously it's going to work around the rest of the country. is the thinking here. Is there any opposition to this new arena?
Yeah, there definitely is. I was talking to an opposition group, and their main argument is that these public funds could be used for city infrastructure and different needs around San Antonio. So that is the opposition. The team is confident, but I mean, it's a pretty common theme among some of these stadium deals where voters do feel like the public funding could be used for other things.
Will the team contribute to this new arena?
Yeah, so if Proposition B does get passed and this tax increase does happen, it's going to be kind of a team effort between Bexar County, San Antonio, and the Spurs. So the Spurs are going to contribute around $2 billion, and that has to do with community development, private development, and the actual construction of the arena. And then we'll have Bexar County contributing about $311 million, and then San Antonio is going to front just a little under $500 million. So it's a team effort.
So you think about MetLife Stadium, John. Do we have mixed use around MetLife Stadium? Anything that attracts you to that part of the state of New Jersey, John?
Tripping through the swamp, maybe.
Exactly.
Swamp-related activities.
You think about the stadiums that are getting built today. The Texas, the SoFi Stadium in South. They are unbelievable.
Why can't we do that here?
Why can't we do that here? I don't.
I mean, you did say Stevie Cohen is trying to do something like that in New York, but yes, I agree. MetLife is a trek, and you don't get anything out of it. It takes forever to come back.
Yeah, don't give me that Dream Mall thing as a mixed use. All right, Ashna, thank you so much. We appreciate it. Ashna Shah, municipal finance reporter and experienced Bloomberg Radio contributor. We appreciate that. Ashna, thanks so much. Go Duke and go to...
Wait, the background for all of this.
Yeah, I have to clean it up because we do have a saying about Caroline, but you can't really say it on the radio.
Oh, okay. Anyway. Ashna went to UNC.
Yes.
And Paul is a
proud
hardcore
graduate. Yeah, she's
Dookie.
good there. All right, let's go.
Say that, Dookie?
What's that? Yeah,
okay.
It depends how you spell it. They spell it incorrectly, which is a little bit offensive to Dookies. But anyway, Ashna, thanks so much. All right, let's get back to Amazon. There's a stock that's working, and it's working because the cloud business for them and the AI play, and that's been the story behind Amazon and its stock for a better part of 10, 15 years here. It's not so much the retail, the stuff that we interact with Amazon with, getting the packages at the door. It's all about their cloud business. Anurag Rana, he's a technology analyst for Bloomberg Intelligence, the technology analyst for Bloomberg Intelligence. Anurag, talk to us about the Amazon Web Services. How did they do last quarter?
Yeah, I think this is the one that really changed the tone or the narrative of AWS. Because when you look at over the last 6 months or so, there is you could say a fear out there that AWS is losing market share to the likes of Oracle, to the likes of Google and Microsoft, because the other three are showing momentum for their AI workloads. But it was absent for AWS. In fact, their capex went down a little bit last quarter, or when they reported last time. Stock was down, when they had reported their second quarter results. But finally, they came out yesterday, AWS acceleration. They were very confident about how it's going to do next year. CapEx is going up. Their chip business is doing well. So I think from that point of view, that's a big overhang away from the stock. People should be happy with this.
And when it comes to AWS, I feel like that's the OG of the cloud computing. I mean, whenever we talk about cloud, it's really Amazon leading the way, and then, of course, Alphabet and Microsoft, but their growth rates were much faster than Amazon because Amazon had a bigger base overall. Where does this latest quarter put AWS versus Azure versus Alphabet?
See, that's what I was saying. The other cloud providers are so good at marketing that they have been beating up on AWS for, I would say, almost 2 years. And last night they came out, I think, with guns blazing, explaining their entire strategy in a far better way. And I think that's what you resonate. When you look at the market share, you're absolutely right. Just on the infrastructure side, AWS is so much bigger than everybody else, so much wider, much more entrenched with enterprises than any of the others. But what's happening is the first part or the first growth phase of AI has been through ChatGPT, and that product is hosted on Microsoft Azure. AWS doesn't have a consumer product like that, which is hosted on them. They're all about enterprising, adding more AI capabilities, and that growth cycle is only beginning. So I think this really puts us very confident that AWS growth rate is going to continue in this good trajectory, not just for next year, but the year after that also.
And Anurag, I know that this is something that happened more recently, but of course there was a big outage of AWS that seemed to affect everyone across the nation. Schools and students couldn't get online, businesses couldn't do things, and they couldn't log into the websites that they needed to. Did Amazon talk about that at all and give any reassurances?
Yeah, I think this is one of the biggest risks for all cloud providers, not just Amazon, but Microsoft also. Microsoft also had a similar, breakdown. Now, think of these cloud providers as electricity providers, and it can happen to anybody. One of our big theses is that we know AI is a big growth story for cloud. I think one of the bigger stories later on is going to be a multi-cloud strategy. Every company, every enterprise is going to go out and have a backup cloud provider similar to what they do in electricity. And I think that is going to add far more to the total addressable market of this important service.
I know you guys at Bloomberg Intelligence wrote, I think, the definitive research report on AI. So folks, if you want to learn about what this whole AI thing is, go to BI Go on your terminal, and that's where you'll find it. If you don't have it, call your salesperson. But what's the bear case? Is there a bear case for AI here, Anurag? Because they're certainly spending a ton of money.
Yeah, the bear case is spending a lot of money. And I think that is something to be extremely careful about because, see, one of the things you have to see is, will enterprise suddenly say, you know what, I like this thing. It is good to summarize a handful of emails. It will give me so much of productivity, but that's where it ends. It's not going to lead to massive layoffs. It's like another tool you and I have. We have Excel, now we have ChatGPT on the side. That, I think, is the bear case on it, is how much productivity somebody can get out of it. And at the same time, when you're spending, let's say, $500+ billion a year in adding more capacity, a lot of people are borrowing that money. Private credit is involved. You have a lot of that coming from one customer, that's OpenAI. What if something happens and somebody else comes up with a better model and OpenAI is no longer able to see that kind of growth momentum? So there are enough bear cases out there. That's why, almost, to be very frank, almost on a weekly basis, you have to track these things very carefully.
Yeah, that circular financing you just referenced raises a lot of concerns because so much of the economic growth that we're seeing now is tied to investment and spending on AI. So if anyone stops spending for just a moment or maybe slows things down, that could have huge ramifications. Anurag, always appreciate your joining us. Anurag Rana is one of our Bloomberg Intelligence senior technology analysts, giving us the lowdown here on Amazon Web Services. Fastest cloud growth in years for Amazon Web Services, providing some relief to those investors.
Yep, absolutely. It's good numbers out of Amazon. Saw big spending across the board out of big technology on AI. That is not slowing down. The market likes it. S&P is up 0.5% today, but the Nasdaq's up 1.1% today. The market rewarding AI. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. It is Bloomberg Business Flash. You look at the 11 major industry groups in the S&P 500. It is consumer discretionary that is the best performer right now. And that, you dig a little deeper, that's where you find shares of Amazon, one of the members there. Best performing single stock right now in the S&P 500. They are up 11.2% after the results after the close yesterday. The Bloomberg Magnificent 7 Index, overall, that is up 1.6% right now. Meantime, Peter Scheer at Academy Securities, he's looking at what he considers surefire investment theme.
Look for things that the government's going to get involved with and really rethinking this kind of production for security. I think it's the new ESG. This is going to be a multi-year trend where countries, corporations, governments, asset managers all think about what we need to be truly sustainable.
Right now, the S&P 500, 28 points higher. That's up 0.4%, 6850 on the index. The Dow's been bouncing between gains and losses. A lot of volatility there. Right now, it is down 8 points. The NASDAQ 100, 216 points higher. That is up just about 0.9%. Not a lot of action in the yield space. The 2-year is down just a basis point, 359. 10-year yield pretty much unchanged at 4.09%. This is worth a read on the Bloomberg. Did you see this headline? New York City bond investors urged to stay calm over Mamdani fears. Money managers apparently are receiving a lot of questions from worried investors about what New York City mayoral frontrunner Zoran Mamdani means for the city's finances. Of course, he's sort of a self-proclaimed democratic socialist. He plans to provide free childcare, free buses, and build 200,000 new units of permanent, affordable housing in the city. And you have to remind everybody, after the financial crisis in New York City of the 1970s, the state finances are controlled up north.
The city's finances are controlled by the state.
Albany, yes. And, you know, Albany is not known for its left-leaning whatever. Anyway, and I'm reminded back in the late 1960s, John Lindsay, the mayor then, he tried to do something similar, and he was reminded very quickly by the state legislature in Albany that there are bond covenants, so don't try to attach the funds from things like, you know, the MTA or whatever.
There was pushback. I know people were young adults who have recently graduated from college who have moved to the city and changed their residency to the city so that they can vote in this election.
I know. I've got people in my crew of that age, they're all in on this dude. So.
And they might get reminded there is a difference between actionable stuff and campaign promises.
Yeah, we'll see.
Right, but in the same way that a lot of people voted for President Trump, knowing that what he was saying wasn't going to be literally what he did, they are thinking the same with this guy.
This could be a whole show.
It could be a whole show. We'll see about it. All right, John Tucker, thank
Maybe
you so much.
2 shows.
Yeah, we appreciate that as always. We got Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Markets turning a little bit mixed now. The Dow is now down 22 points, but the NASDAQ is still higher. Dory Wiley joins us. He is president and CEO of Commerce Street Holdings, based down there in Dallas, Texas. Dory, we heard from a lot of the big banks over the past couple of weeks, and also some of the regional banks out there. Most of the bankers are saying business conditions are pretty good. What are you hearing from maybe your clients, the people that you're interacting with down there in Big D?
Well, first of all, it's nice to be here. Thank you very much. That theme is consistent with most banks, whether that be community, small cap, micro cap, big cap, large cap or regionals. There's 2 main drivers of that. One is the underwriting of bank credit is extremely strong, extremely disciplined, and has been since 2008. The second is capital levels remain pretty high. If you go back to March of 23, when we had those failures, all of those banks, while they had some problems and some of those pretty elementary mistakes, none of those banks had over 6% tangible capital at the holding company, and most were close to 5%. So there wasn't a lot of room for error. The money centers are all running over 7%. Most other banks are running 8% or higher. So the industry is extremely strong right now. It doesn't mean that, as Jamie said, that
Okay, so the backdrop is pretty favorable right now, but I do want to touch on some of those cockroaches because we don't really have economic data right now. We don't know the strength or the fragility of the labor market. We think we do, but there's a lot of headlines day in and day out about companies laying off tens of thousands of workers, so that by the time we actually do get official data showing us what's happening in the economy, it might have already been in process for a while. Are you seeing, people talk about this being a late cycle kind of environment. How long can this late cycle go on for, Dory?
Well, I think it can still go on for a little while. You're right. We're flying a little bit blind and going more blind every day as long as the government's shut down. And that's not good because we're not saving that money. They'll make it all up when they open up again, and it costs a lot of money to reopen. So that becomes a problem that increases at an increasing rate the longer we go. Now, the Fed, if you talk to them individually, a lot of them don't trust the data, so they kind of have their own opinion and everything, but they still need the data. And as we get into the December cut, we're flying a little bit more blind. And as you heard Powell's comment, it's not a foregone conclusion. What the market thinks it is, that we're going to get a cut. And I think we have a real divergence of the Fed from what they were thinking, focusing on inflation first and then unemployment second as an indicator of the economy and reason to cut. Now they're focused a little bit more on unemployment concerns, and we've got these layoffs that have been happening. And so I'm not as concerned about it. My number one priority is really still inflation. But it is a rise in unemployment is an indicator of problems, but the number has not risen that much. I mean, we're still under 5%. I get more nervous when it's 7 or 8%.
Dory, I know that you and your firm, you're located in Dallas, Texas, and what an incredible economic story the state of Texas has been for a number of years, many years now. Talk to us about the economy down there. It's so much more than energy. You guys have been so become so diversified over the years. Talk to us about the economy down there.
You're right. If you go back to the 80s, early 90s, we're much more energy dependent or energy and real estate dependent. Now it's everything from biotech, technology, you name it. We've got more Fortune 500 companies based here in Texas than any other state, more moving. We got a couple 100,000 people moving here to what we call the megaplex, which is the big triangle of the big cities here. So it's a strong economy and kind of a can-do place and very entrepreneurial. It's a good place to be based, but there's some other good pockets around the country but I will tell you, there is a divergence. There are some areas that investors and employers are starting to avoid around the country as they find it more and more difficult to do business.
Has the growth been too much, Dory? Because it just seems like every day we read about a company relocating somewhere in Texas. You wonder if the infrastructure can support them. I know you got a lot of land down there and everything's larger in Texas, but is it too much growth?
Well, it's you wonder if it'll choke the system, right? You want to make sure that you have the grid. That can be an issue, the water and the roads. And I think there's some pretty good planning going on. I know here in Dallas and Fort Worth, where I'm more familiar with it, is very, very strong. Houston does a good job. Austin has not historically been a good future planning place. They always wanted to remain small. Back in the 1960s, and they're about 50 years behind. But all the other cities actually do a pretty good job.
Yeah, I guess one of the big questions, though, Paul, when it comes down to is affordable housing and whether the cities can stay affordable for especially new graduates who can't find that foothold in places like New York City or San Francisco.
Absolutely. See companies moving all the time. Dory, thank you so much. We really appreciate getting a few minutes of your time. Dory Wiley, he's the president and CEO of Commerce Street Holdings, based down there in Dallas, Texas. And as they say in Austin, keep Austin weird. But that's a company, that's a part of Texas that's grown dramatically, and they just do not have the infrastructure there. When you talk to people in Austin, they talk about traffic. It's just gotten really brutal there as more and more people want to relocate to that great part of the country. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Big night, Major League Baseball. Game 6, World Series. Toronto Blue Jays, Los Angeles Dodgers up there in Toronto. Boy, the Toronto can win it all tonight with a win here, so that's going to be exciting. We want to figure out what's happening up there north of the border with our good friends up there in Toronto. Derek Desclouet joins us, executive editor for Canada for Bloomberg News. He's up there in Toronto. Derek, how crazy is that town, is that country for its Blue Jays?
I mean, the whole country is sort of vibrating with excitement. It's been 32 years since the Blue Jays have made the World Series, and in Toronto, I mean, there's really only been, of the major 4 sports leagues in North America, there's only been one championship in the last 3 decades. That was the basketball Raptors. So it's a city that's starved for a winner, and it's a really good baseball town, and it long has been. I mean, you can see the excitement around the World Series, but even last year when the Blue Jays were not good and they had a losing season, they still drew well above the Major League median in terms of fans, over 33,000 fans a game. So it is a city that needs a winner, that really likes baseball, and you just can see the enthusiasm everywhere. You coming in on the train to work this morning, hats and jerseys, and just everybody's talking about the Blue Jays.
You know, it's interesting because, here in the States, Derek, as I'm sure you're well aware, I mean, baseball is kind of a regional sport, regional fandom. Talk to us about it. It's a little bit different in Canada because you kind of have a national following here. Talk to us about that, because that's something new for our U.S. listeners and viewers.
I mean, that's exactly right. As the only Canadian team, it does have a national footprint. I mean, Toronto is sort of similar sized city to Chicago, but really its market is much larger. That kind of starts with broadcasting. The same company, Rogers Communications, owns the team, and Sportsnet, the cable sports broadcaster that has all the Blue Jays rights, and so they go across the country, and so you do have fans traveling in from other provinces, traveling quite long distances to come and watch the Blue Jays. They have got that that natural footprint, and it makes Toronto the Toronto Blue Jays a much bigger market team than they might appear to be on paper.
So I've seen some reporting here that the Toronto team kind of becoming a symbol of Canada's perseverance amid a trade war, and suggestions that Canada should be the 51st state and that kind of rhetoric. Give us that angle. How's that playing out up there?
Yeah, I mean, obviously for many Canadians, it's been a pretty frustrating year with the tariffs, which are having an economic impact. I mean, we saw just this morning some pretty soft economic data again. Unemployment going up in trade affected centers, which happen to also be in this part of Ontario. You have got sort of rising economic pain. So people kind of need a lift, and if the Blue Jays can win the World Series, I mean, certainly the whole month of October and the run that they've been on has given people a bit of a lift in spirits.
All right, Derek, thanks so much. Really appreciate getting a few minutes of your time. Derek Desclouet, he is executive editor in Canada for Bloomberg News, joining us via Zoom from Toronto. We want to stay up in Toronto. Camille Caramali joins us. He's a correspondent for CTV National News. Camille, I think you're outside the Rogers Center in Toronto right now. Give us a lay of the land. What's the level of excitement up there?
Well, it is quite an exciting time for Blue Jays fans and for the city of Toronto. Even if you're not a baseball fan, a lot of people jumping on this bandwagon, learning about the sport. Many people finally, learning terms like what a home run or a double play is, and are asking about the sport because this whole city has gotten baseball fever. Look, the weather is a bit colder now, but it wouldn't be the fall classic with an emphasis on the word fall. It is really starting to hit. It has been raining. The wind is blowing. I have a lot of fans who are dealing with the cold, waiting in line. I want you to take a look behind me here. I'm going to step out of the shot here just so you can look and see that we are about, more than 8 hours out from the first pitch, which is at 8 p.m. Eastern Standard Time. And we already have fans waiting in the cold. It's about 4 or 5 degrees here. The wind is really kicking in. That's the thing that is making people very cold here. But people are persevering, excited, ready for Game 6 and possibly watching a piece of Toronto, not only Toronto, but Canadian history, with the chance of being able to see the Blue Jays hoist the World Series trophy for the first time in 32 years.
All right, fantastic. Well, good luck tonight, Camille, to the Toronto Blue Jays and all their fans up there in Toronto. Camille Karamali is a correspondent for CTV National News, and again, a little bit chilly up there in Toronto, as you would expect this time of the year, but it's going to be a huge game. I'm going to get Game 6, World Series, Toronto Blue Jays and Los Angeles Dodgers. Boy, there's talent on both sides of the field there. And that young pitcher they have for Toronto, Trey Yasavich, unbelievable, just the way he played here. And that's got a lot of people's attention, both north and south of the border. So that'll be fun tonight. S&P, we are up 22 points here, about 0.3%. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up right now. S&P up 22 points, the Dow flat, NASDAQ up 185. Happy Halloween. Listen.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The FBI director says a terror plot was foiled in Michigan. CBS's Jake Rosen says it was described as a Halloween weekend plot.
FBI Director Kash Patel has said that there were arrests made. We know, based on our reporting here, the arrests happened in Dearborn and Inkster, two towns nearby each other. What we don't know is whether there's some kind of foreign nexus to these arrests. Were these people influenced by an ideology related to a country?
Sources say some of those arrested are minors. Federal authorities are being sued by immigration advocates over alleged inhumane conditions at the Broadview ICE facility outside Chicago. And CBS's Michael Wallace tells us
Governor J.B. Pritzker asked the feds to temporarily suspend immigration enforcement operations this weekend, but Homeland Security Secretary Kristi Noem shot that down.
No, we're absolutely not willing to put on pause any work that we will do to keep communities safe.
So parents and community leaders got the city's permission to close off streets and post volunteers at intersections. Little Village Community Council President Baltazar Enriquez organized a trick-or-treat zone so kids can
have a good old time and not be afraid.
The impact of the federal government shutdown widens, with food benefits set to end for more than 40 million people. CBS's Caitlin Huey-Burns is in Washington.
In previous shutdowns, there was funding available because of various appropriations. This time, that is not the case. So for the first time in history, SNAP funding, food stamp funding, will not be available to those who need it. That deadline is tomorrow.
Health care premiums could skyrocket as a tax credit and the Affordable Care Act expires. President Trump's calling on the Senate to scrap the filibuster so Republicans can bypass Democrats and reopen the government. Many parts of Jamaica remain without electricity as people deal with the cleanup from Hurricane Melissa. Christopher Box is a Kingston restaurant owner.
We feel here that, we're grateful for having been spared of it, the worst of it, but then, our heart breaks, our nervous system is still very much shocked.
A Baltimore police officer has been suspended after a video went viral that appears to show him driving aggressively and nearly running over a person with his cruiser.
You gonna hit him with the car?
The video shows a person running away and the officer following through a grassy fields before crashing the patrol car. Police Chief Richard Worley.
It's just egregious. That's not what we teach our officers to do. It's not what we want our officers doing, and it's going to damage our relationship with the community.
The man who was chased suffered a knee injury. Checking Wall Street. Right now, the Dow is down 26 points. The S&P and NASDAQ are higher. This is CBS News. They may be dead, but they still command top dollar.
Forbes is out with its 2025 top earning dead celebrities list. Forbes entertainment reporter Matt Craig says topping this year's list at a whopping $105 million over the last 12 months is Michael Jackson.
There was 5 different productions of the MJ the musical across the world. There's the Cirque du Soleil show, and he continues to have one of the highest earning musician catalogs in the world.
Coming in second by way of marketing and licensing deals and royalties, Dr. Seuss at $85 million, followed by Syd Barrett and Richard Wright of Pink Floyd and the Notorious B.I.G. Jennifer Kuiper, CBS News.
On Halloween comes news that a candy distributor filed for bankruptcy a few days ago. Candy Warehouse, based in Texas, says it's restructuring and hopes to still be in business next Halloween. The company says it's been squeezed by rising costs and inflation. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says it's time to go nuclear. Welcome to the Friday edition as the government shutdown hits 31 days. And the president now calling for the nuclear option in the Senate. Yeah, kill the filibuster. We're going to talk about that straight ahead with Bloomberg's Laura Davison. With analysis from our political panel, they're back together today. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis will be with us for the hour. The U.S. is not about to strike Venezuela. So says the president just now on Air Force One. We're going to discuss the latest with Bloomberg national security reporter Tony Capaccio, who also got his hands on the Pentagon's response to the movie A House of Dynamite on Netflix. Spoiler alert, they didn't like it. We'll have all this after a look at Wall Street. Let's get up to date on the Friday trade right now with Charlie Pellet. He's at World Headquarters in New York. Charlie, how's it going?
Thank you very much there, Joe Matthew. We are looking at a down day for the Dow, an up day for the S&P and NASDAQ. The artificial intelligence euphoria showing no signs of slowing after earnings from both Apple and Amazon. Right to the numbers here. We got the S&P up 1968.41, up by about 0.3%. The Dow pulling back from a record, down 10 now. Little change, down under 0.1%. NASDAQ is up 173 points for the NASDAQ Composite Index. That is a gain of 0.7%. Our Mag 7 Index surging 1.4%. The 10-year 4.09%. The 2-year currently yielding 3.59%. Gold is now down $20 the ounce, holding above $4,004 the ounce. A drop now of 0.5%. West Texas Intermediate crude unchanged on the day at $60.57 a barrel, and Bitcoin 110,174 up today by 2.5%. Apple shares little change, down under 0.1%. Apple is out with a strong holiday outlook fueled by iPhone releases. Dan Ives is head of global tech research at Wedbush Securities and on surveillance this morning. He told us it's not just the phones at Apple, it's also the firm's connection to Washington.
iPhone 17, it almost looks like a surprise upgrade cycle. You know, especially in China. China was the headwind, now looking like a tailwind. And then also comes back to Cook. I mean, 10% politician, 90% CEO, playing nice in the sandbox in D.C. That's going to have an impact as well. And this is all the drum roll to AI. I mean, that is what you're playing for here when it comes to Apple over the next year.
Dan Ives of Wedbush interviewed on Bloomberg Surveillance. Speaking of AI, Amazon shares, they are surging now by 10.8%. Amazon's cloud unit posted the strongest growth rate in almost 3 years, reassuring investors. Again, bears repeating, Amazon right now up by 10.7%. Apple shares, they are unchanged on the day. Recapping, Dow just turning positive, higher by 1 point. Little change there. We got the S&P up 0.3. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Back we go to Washington. Once again, your host of the Friday edition. What a week. We say that every week. Here he is. Joe Mack.
I know.
Yep. It's
broken record.
Without a doubt.
I can't. I've already said it 10 times today. Like, Joe, what's wrong with you? Welcome to Friday. Hey, Charlie's going as a business news anchor on this Halloween. Happy Halloween, everybody. We're 31 days into the shutdown, and yes, you made it to the threshold of the weekend. Welcome to the Friday edition of Balance of Power on Bloomberg Radio. We're streaming live on YouTube right now. If you want to dial us up, search Bloomberg Business News Live. We're, of course, always available on your satellite radio, channel 121, or on Bloomberg Originals. They stopped the jet. They stopped Air Force One on the tarmac so President Trump could deliver a message. I just want to get this right off the bat here. We're not apparently going to war today in Venezuela. The president was asked about this, replied no. Simple no. When asked if he had made a decision on the matter after the Miami Herald reported that the administration had made the decision to begin military strikes inside Venezuela, not just blowing up boats as they leave. Asked about that report, White House spokesperson Anna Kelly said unnamed sources don't know what they're talking about. So that apparently will not be part of the news cycle today. We may have more boats to talk about. And we're focused, of course, on the government shutdown. Not that I have any news there really for you either. But of course, tomorrow's the 1st of November, and that's a big deal when it involves SNAP benefits, open enrollment, Head Start. We're starting to see the collision in the works here. And we did hear from the Speaker of the House, Mike Johnson, a short time ago. Let's listen.
The same Democrats who've been perfectly fine with defunding SNAP and WIC for over a month now are suddenly claiming to be outraged that Republicans and President Trump can't just wave some magic wand and fix the mess that they themselves have created. If they're suddenly waking up to the pain their reckless decision is causing, then there's one simple way to fix it. They can come back in here and vote to reopen the government.
But President Trump does want to wave a magic wand. It's called the nuclear option around here. It doesn't involve nuclear weapons, which now you need to actually clarify on the air. No, that's about the filibuster. Because of the fact, all caps on Truth Social, that the Democrats have gone stone cold crazy, he writes, the choice is clear. Initiate the nuclear option, get rid of the filibuster, and make America great again. What do we make of the ... Was he following on another post? I'm confused. Maybe Laura can help me. Our Deputy Bureau Chief here in Washington, the great Laura Davison, is with us. Happy Halloween, I guess I'm supposed to say. Did you see him putting candy bars on the kids last night?
Candy bars, and also he had seemed to have some sort of booklet that he was doing. Melania was very focused on the kids. Some kids got hugs, but some kids also got a completely distracted president.
Look at this, though. This is amazing. Remember when he put the candy bars on the Minion's head, sort of went viral? This is many Halloweens ago. Last night, look at him putting the candy bar. I don't know, by the way, is that like a marshmallow? I don't know what that kid is for Halloween. But I think we just learned that the president is self-aware when it comes to his own sense of humor, I guess, right? This is a good moment for him. You have to be with us on YouTube to see what I'm talking about. All right. Let's talk about the nuclear option. This is not something that John Thune wants. What's the president talking about?
So the president is talking about getting rid of that 60-vote threshold in the Senate. This is, sort of long been a bane of both parties' existence. This was a big deal during Biden's term as well, as he said, look, if we could just get rid of that, we could get a lot of our agenda through. But you have institutionalists like John Thune and a lot of his colleagues who say, look, we want to keep this in place because, the shoe will be on the other foot at some point, and Democrats will have unified control. And if they are able to have, both simple majority, House, Senate, and then having the White House, they can implement their majority. So this is kind of the one last sort of fixture in Washington that is keeping wild policy swings from administration to administration. They've already weakened the filibuster repeatedly over the years in terms of, nominations now just need 50 votes. votes.
Right.
In terms of how they are able to use for like tax bills, that budget reconciliation process, that's also a 50-vote threshold. But so this is, where you see Thune kind of saying, look, we want to keep that last little edge of bipartisanship in the Senate.
You have to admit, this feels inevitable since we continue to come around on this. But what would be the reply from John Thune, President, to your point? So it's fine for judges. Why not keeping the government open?
So Thune came out today and said, look, my position is unchanged, even after the president called for the nuclear option to be, enacted here. It's unclear that Thune is going to go for this. He's rebuffed the president, kind of when it comes to matters at the Senate. That's where you see Thune saying, look, back off. This is my territory. I'm going to run my chamber the way I want to run it.
So the president's back in town. By the way, he's flying to Florida right now. He's on his way to Mar-a-Lago for the weekend. Back from the big trip to South Korea, the president said it was a 12 out of 10. That's how good the meeting went. And I presumably expect that he will now turn focus back to domestic issues. Is he going to get involved in this shutdown? Does he come back next week with new energy, call the lawmakers back, let's get everybody in a room, or that's just not going to happen?
Really unclear at this point. Democrats would really like to see Trump get involved in the negotiations. Their sort of position is that they need to be having talks with Trump. But Republicans, seem keen to let the president stay out of this, at least for now. There really are no talks. We've seen sort of ad hoc discussions pop up here and there between small groups of moderates. That's not going to be what resolves this. You're going to have something happen at the leadership level. There's going to be some arm twisting. Both sides potentially are going to have to swallow something that they don't like to end this. The real key will be, tomorrow we'll see SNAP benefits dry up. We'll see Head Start programs lose a lot of their funding. We'll also see open enrollment starts for Obamacare. So people who may have known there were premium increases coming or hadn't really been tracking that will suddenly go and sign up and see that they have a lot more that they're going to have to pay. So there's a lot of sort of shifting winds there. And Democrats' hope is that, that the politics of this are different next week or the week after, and they can have a robust conversation with the president.
So the walls start closing in a little bit more tomorrow. And we have new polling on this here. ABC News, Washington Post. Americans blame President Trump and congressional Republicans over congressional Democrats. 45 to 33%. Even more, independents put the blame on Republicans by a 2-to-1 margin. This is what's motivating Chuck Schumer here, right?
This polling is, some of the best that Democrats have seen throughout this process. They had sort of the edge in terms of, popular opinion being on their side throughout this process. But as we've seen, it's been a month now that they're getting, sort of that the public is more and more saying that the Republicans are to blame. That's only a sign to stick this out a little bit longer and hope for that you can get a better deal.
Remarkable. We've also got elections next week. And I keep hearing Republicans on our air say that this is first it was the No Kings rally. They've got to get through the protests, then maybe Democrats will come around. Now they're saying wait for the elections to go by. Next week we could see things start to loosen up. Is there any logic to that?
There's been a lot of Republican wish casting that Democrats, are going to reach some deadline and then they'll be willing to end the shutdown. Even Kevin Hassett 2 weeks ago said that the shutdown could end this week. That deadline came and passed. I was up on the Hill this week, wandering around and ran into a bunch of, Thune's aides, and they say, I think next week will be the week that it's done. They haven't provided any clear evidence or any sort of clear off-ramp of, something that they might be willing to offer to give the Democrats some way to save face. So this seems to be sort of, Republicans wishing this into action versus actually coming up with a strategy.
Wish casting. I love the idea of you wandering around Capitol Hill, by the way. I'm sure you were there for many high-level meetings. There's going to be a court ruling on SNAP as well. A federal judge indicating yesterday she'll probably order the Trump administration to tap the reserves here to go into this contingency fund and partially at least fund food assistance. Is that how this ends?
It could be.
At least this specific matter?
One issue here is that as you sort of put Band-Aids on a lot of issues, whether that be military pay or SNAP, that only really prolongs
making it easier.
The shutdown. Notably here that the contingency fund would only partially cover SNAP benefits, and it doesn't leave anything, in the pot for December. So this is really just a short-term fix if it is. But, the way, if different states or the federal government keeps coming up with ways to kind of patch some of the pain, that could, from a political perspective, that just makes it more difficult to solve this.
Next Wednesday is 35 days, or that would be 36 days. We hit the record Wednesday, James? I think
Tuesday at midnight. We will hit the record. So it'll be election night,
so
both election results and the shutdown, longest shutdown ever. Deadline.
All right. But that's inevitable, right? This thing won't reopen before we set a record.
It
will be the longest of all time, no matter
we are
how this goes.
getting ready. We are getting ready to send the redheads on the Bloomberg Terminal.
You can write them in advance. Laura Davison helping us Keep it together here on a Friday. Bloomberg's Washington Deputy Bureau Chief, great to see you. Thank you. Have a great weekend. You do trick-or-treating?
I've got a lot of kids coming to my neighborhood and
Yeah?
4 bags of candy.
4 bags of candy. Maybe not the full-size candy bars.
Perhaps not.
Let me know how it goes. Laura, thank you. Tony Capaccio's on his way in next. Causing trouble at the Pentagon. Well, it's the movie that caused trouble. You seen this House of Dynamite? That's coming up right here on Bloomberg.
It's 12:31 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing, getting a month-end lift. Final trading day of October, then on to November. So here's where we stand right now. S&P up by 8 now at 68.30. That is a gain of 0.1%. Dow Industrials down 64, down 0.1%. And NASDAQ higher by 118. That is a gain of just about 0.5%. The Russell 2000 index of small cap shares trading lower, down 0.1%. But our Mag 7 index, after earnings from both Apple and Amazon, our Mag 7 index up now by just about 1.1%. 10-year at 4.09%, with a 2-year 3.60%. Gold now at $39.80 the ounce. Gold is down 1.1%. Silver down 1%. West Texas Intermediate crude flat on the day, $60.55 a barrel. Netflix is said to be actively exploring a bid for Warner Brothers Discovery's studio and streaming businesses. That, according to Reuters, citing sources. Warner Brothers Discovery shares, they're up by 3.6%. Netflix up by 3.3%. Yesterday, by the way, Netflix did announce a 10-for-1 stock split. Recapping, S&P 500 index higher now by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Approximately 3 minutes ago, we detected an ICBM over the Pacific.
Have we seen DEFCON 2 before? No.
DEFCON 2. Yeah, have you seen this new movie, A House of Dynamite? It's on Netflix, and it's the big thing to watch. Well, this weekend, last weekend, I actually had a chance to see it myself, and it's making news because it's a pretty scary proposition. The idea here is that there, and I'll give you the spoiler alert right now. There's no way I can't ruin this movie for you, and just wait till Tony Capaccio starts talking. There's a nuclear attack against America. There's an ICBM. We don't know where the heck it came from. It's coming in on Chicago, and we try to knock it out of the air. Think, dare I say it out loud, Golden Dome. Think Dome, right? We've got interceptor missiles. They go up there and knock the thing down, shooting a bullet with another bullet. Except in this case, it misses. A terrifying thought. This movie is from Catherine Bigelow, the latest, remembering Zero Dark 30 and the rest, and it got the attention of the Pentagon. Because when we start talking about missile defense, this isn't exactly the kind of message that the Pentagon wants to send to everybody around the world. Now, again, watching this movie. Enter Tony Capaccio. He got his hands on a piece of paper inside the Pentagon. Remember, this is the Pentagon that kicked all the reporters out. Making clear that they think this movie is inaccurate, and they're trying to set the record straight to some extent here. Now, Tony's been picked up. He's the only person with this document. He's been picked up everywhere from the New York Times to the Hollywood Reporter to Esquire, and they even got Catherine Bigelow to respond to this, and no one's getting along. So we're delighted, as always, to have Bloomberg's national security reporter with us, Tony Capaccio. Good to see you.
Hi.
They must be glad they kicked you out of the building, because now you're breaking more news than you were when you were in the building, which I find hysterical.
Here's the irony. It was dated October 16th, the day after we all left.
How about that?
Yeah. This is the kind of memo they wouldn't want us to get. It was not stamped CUI, but it was for internal use only. They underlined internal and not releasable to the public.
Okay. Someday I want to know how you got this.
Yeah, right.
Okay, so tell us what the problem is, because this is not a documentary. What's the Pentagon care about the movie?
Okay, the memo is not a slash and burn that everything stinks in the movie.
Yeah.
It was not. It's fairly measured and fairly muted and fairly technical. It was meant to be a heads up for those in the Pentagon.
If you get asked about this kind of thing?
If they get asked about it, and if it shows up in conversation.
Okay.
It had a limited run in theaters, and not every Pentagon official gets Netflix. So this was like a heads up memo, but it was fairly detailed, and it was not a slash and burn.
Okay.
They actually acknowledged that some of the film laid out the messages they wanted. You know, that the U.S. could be attacked by a nuclear weapon.
Right.
The value of deterrence. So it wasn't slash and burn, but it was a critique.
A critique. They called it inaccurate and went so far as to say we have 100% capability of knocking said missile out of the air. Is that even true?
Okay, this is an area I've covered for quite a while. And literally, for the last 4 of these things, it is true. Between 2017 and 2023, the last time it happened, they hit 4 times in a row.
The last time what happened, though? Where was
there was an intercept test.
Okay.
These are always high visibility issues. Between like 2001 when they started doing these, or 2002 I think it was, they've had 12 of 21 hits.
Got it.
Those are with older prototypes, elementary radar, elementary warheads. But the last 4 were with better warheads, better discrimination technologies, and better command and control and detection technology. Excuse me. One of the tests, one of the four, was so significant that the Pentagon's test office, which was a critic of the program for quite a while, that said it only had a limited capability to defend the United States against a small number of missiles. One of those tests was convincing enough where they dropped the word limited and said it's demonstrated a capability to defend the United States against a small number of missiles fired from an adversary. That was significant. People don't realize that. I found that actually the memo when I was cleaning out my desk at the Pentagon.
You did?
Yeah, it's dated 2017, but that to me, it's a leading indicator. This thing's not perfect, but it's been the target of arms control critics over the years, and it's been embraced by the military-industrial complex that has an invested interest in missile defense.
Wow, sure.
So to measure it, it's had a 57% success rate if you look at all the tests. But literally for the last four, the last one in 2023,
100%.
it hit 4 times in a row, and it changed the test office's opinion from it has a limited capability to demonstrating it has a capability.
Okay.
So,
well, listen, that we just learned a lot. Catherine Bigelow didn't love what she heard from the document that you uncovered, nor did Noah Oppenheim, who I guess was the writer of the film. Right. Says, quote, as we see it, it's not a debate between us as filmmakers and the Pentagon. It's between the Pentagon and the wider community of experts in the space, saying that their consultants agree our current missile defense system is highly imperfect. What do we make of this?
Well, it's two reasonable people, reasonable sides making their arguments here.
But you've got data saying this is 100%.
Yeah, I mean, the Pentagon is their own worst enemy on missile defense and the system. It's gotten, they rarely do briefings on it. Over the years, they've had one briefing at budget time that lasted a half an hour, and it was the last briefing of the day. Congressional hearings, maybe one congressional hearing a year, and they just don't want it. They haven't talked about this very much to defend the system. So this movie comes out and raises legitimate questions that the public should ponder if they care about the subject, about whether things are effective. I mean, I got a couple questions out of myself as someone who's pretty agnostic. One, would we only fire 2 ground-based interceptors at this missile if we've got 44 of them?
Now we're really spoiling the movie. I don't even understand what that was all
That's an unknown question that people may want to ask their congressmen, representatives. Right. Is that really, would that be the case?
And then we'll watch the thing just come on down into Chicago with, so you might want to try again.
My kind of town. I'm from Chicago.
I don't know why they picked Chicago, by the way. That's a whole other thing.
Yeah, they don't even have stockyards anymore. But the other point I want to make, too. We definitely would know where the missile came from. That, to me, was unexplained in an apocryphal side comment that I missed. But if I'm a citizen, I'd want to know.
You'd know where this thing launched.
We spent billions of dollars on all these space-based constellations of satellites, and we couldn't find where this thing's coming from. And then we launch a nuclear attack on Russia or China based on a missile coming from an unknown location. That, to me, strained credibility.
All right. Talk to us about the Golden Dome. Does this mean, with 100% accuracy, that we don't need to spend all this money on a space-based system?
Okay, the Golden Dome is like the way Russia was described by Churchill, an enigma wrapped in a cloud in terms of from World War II. Yeah. They haven't disclosed much about the program except that President Trump said it'll cost $175 billion.
And it's out for bidding now, is it not?
Pieces are out there, but it's very elliptical. He wants this operational by the end of his term.
Not possible.
Not possible. There's no details on it. But if I'm a citizen who doesn't follow much about missile defense, and I see this movie, which was, a lot of it was terrific, by the way, I would say to myself, wow, if these ground-based systems don't work and President Trump wants to have a Golden Dome, an umbrella over the country to protect us, maybe that's not such a bad idea.
Right, yeah.
That's a point of debate. I'm not making the point, but it's a point of debate if I'm a reasonable citizen watching this film.
Exactly, sure. So, fascinating to watch all of this. And it comes against the backdrop of this meeting the president had with China and news about some of the weapon systems that China's working on. Incidentally, hypersonics would be part of that, which we've discussed before. And I don't know how you knock a hypersonic missile out of the air. But we're hearing things about this nuclear torpedo that could cross an ocean. We're hearing about a drone, an undersea drone that could start a radioactive tsunami. Is this propaganda, or do they have this stuff?
Well, there's a song, Everything Old is New Again.
Yeah.
I found the 2018 Missile Defense Review from when I was clearing out my desk.
This was also in your desk.
And there was, back then, they were talking about the status to a Russian autonomous intercontinental nuclear-powered undersea autonomous torpedo. Everything old is new again.
How? That was 2018?
2018. So,
so this doesn't sound real to me then.
No, but they're packaging it like it's real. And
that's right.
I would hope our intelligence community would tell the president, this is an iteration of something we looked at. We saw in 2018.
The heck else did you find in your desk?
Nothing I can disclose.
Like, we could have, I bet that's right. We're going to have like a segment called Tony's Desk, because apparently you've got the history of the Pentagon in there. Are they reconsidering this decision to kick you guys out? Because it's only increased the news flow, to your earlier point.
Well, no, it's doubled. They doubled down. You know that they've certified.
They brought in like Lindell TV and OAN and all that. Are they sitting in your old desk?
The cream of the right wing media. Yeah. My understanding is they're starting to move in next week in various workspaces.
Is that right? Yeah. Okay. So this won't be reversed as long as this.
I don't think so. No. So I'm not sure.
Would a
Lindell,
different defense secretary?
I would hope so, and I would think so. Yeah, I would bet on that. That's like a plus 200 if I'm betting. Means I'm putting out 200 to win 100 because it's so certain.
Yes, but you'd be ready to move back in if that happened.
The organization, Bloomberg as an organization, would have to make that call, but yes, I would think so.
You just wouldn't be signing any documents.
Plus, we wouldn't have the same space probably.
Maybe you'd get an upgrade, although you had a pretty nice one, as I understand. Yeah.
We have a great DSL line.
A DSL line, okay. What's the next story that's going to come out of this Pentagon? The president says no attack or no decision has been made to attack Venezuela. Are you taking him at his word?
At this point, you have to, because he's in the Far East. Hex is in the Far East.
And so is this about timing as opposed to
as opposed to timing. Plus, the moving in of assets, the bringing in the carrier. He's got to explain to the American people why this is necessary. This is a president who came in wanting to keep us out of foreign entanglements. You know, this is like Venezuela, Haiti, Haiti, Panama, Cuba, Grenada, 1983. American public's got to scratch their head. Really? Why do we go down there?
Thought they had their eyes on Panama too, but I guess it's Venezuela.
Oh, Panama was 1989.
Matter,
Noriega was indicted for a drug dealer. So there was a rationale for that quick action.
Interesting. Well, let's keep tabs on this. I love that. I know this doesn't help Bloomberg at all, but I love the fact that he's in the bureau all the time now. Tony Capaccio, covering the Pentagon from a distance, we'll say, national security reporter. Thanks for uncovering this for us.
Thank you for the
You liked the movie, though, right?
Excuse me?
I liked the movie.
I thought it was terrific.
I had a blast.
I thought it was terrific.
Producer James, you got to see it. Let us know what you think. We'll assemble our panel next. The Friday edition of Balance of Power, only here on Bloomberg Radio.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We've got just over 3 hours to go until we wrap up the trading month of October. Stocks are pushing higher, getting a month-end lift as AI fuels a historic run for the stock market. The S&P right now up 17, 68.40 where we stand. That is a gain of just about 0.3%. The Dow back in the green. Also little change now, up 15, up under 0.1%. The Nasdaq Composite Index up 166, up 0.7. The Russell 2000 Index of small cap shares is advancing now by about 0.1%. The Bloomberg Mag 7 Index up 1.4% with the 10-year 4.09%. and the 2-year 3.60%. Gold now down $37 the ounce. Spot gold down 0.9%. Silver 48.57 the ounce. Silver's down 0.7%. And West Texas Intermediate crude oil up 0.2% now, 60.69 a barrel on WTI. Bitcoin up 2.2%, 109,831 on Bitcoin. So it is an update today for the S&P and Nasdaq. The Dow just turning lower, down 24, down under 0.1%. Jim Caron is Chief Investment Officer for Cross Asset Solutions at Morgan Stanley Investment Management. And on surveillance this morning, he said markets and consumers stand to benefit next year from tax cut provisions.
That number in terms of what the consumer, what taxpayers are going to pay less is somewhere on the order of $160, $170 billion. So that's money that's going to be in the pocket of the consumer. As we know, consumption is 70% of GDP. That can keep consumption relatively robust, even though the labor market picture, which is weak right now, it's currently weak right now, might start to improve as we move into 2026.
Morgan Stanley's Jim Caron. By the way, you can hear more of that conversation on our Surveillance podcast. ExxonMobil and Chevron outperformed Wall Street expectations after new oil field projects and acquisitions boosted crude output. Shares of ExxonMobil today, they are lower by 0.7%. Chevron after earnings up by 2.4%. Again, recapping, S&P 500 index up 11, up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to see you. The voice of Wall Street and the New York subway. That's the man, Charlie Pellet. We'll be back at the top of the hour with the latest on the markets here as we follow the Friday trade after another wild week. Certainly when it comes to earnings, we've had a lot of cross currents here from NVIDIA GTC to the Mag 7. We've already got 5 of the 7 reported, as you've been hearing from Charlie. President Trump says it's time to go nuclear. I'm not talking about nuclear tests or Venezuela. In fact, he just told reporters at the back of the plane that we are not apparently about to strike Venezuela, as the Miami Herald reported. No was his answer when he was asked about it. We don't have a lot more than that. His plans could presumably still be in the works. No, he wants to go nuclear in the Senate, right? That's what we call the nuclear option, killing the filibuster. And it follows one of the longest posts I've ever seen on Truth Social. If you were with us earlier, I was asking out loud. Yes, there were a couple of posts. The first one is so long that it would take me the rest of the hour to read it. But to give you a taste, he says Democrats are crazed lunatics that have lost all sense of wisdom and reality. A sick form, he says, of the now legendary Trump derangement syndrome. And he followed it up with the post that you might see on your screen if you're with us on YouTube right now, all caps. Because of the fact that Democrats have gone stone cold crazy, he says the choice is clear. Initiate the nuclear option. Get rid of the filibuster and make America great again. He's not speaking John Thune's language, though. And I wonder how our panel feels about this. Let's assemble our panel. Rick Davis is back from overseas and glad to see the man on Halloween. If you're not on YouTube right now, you better get up there to see the dogs in their costumes. I mean, this is great. Republican strategist, partner, Stone Court Capital, Bloomberg Politics contributor, and Archie is with me in studio. Archie Siddiqui, former senior aide to House Speaker Pelosi, founder, CEO, Bellwether Government Affairs. Great to have you back, Archie, and this is going to be a great conversation. Rick, you spent enough years in the Senate here that you've heard about this perennial idea to nuke the filibuster probably more times than you can count. What's the president aiming for here, and is there a chance it could happen?
Yeah, look, I mean, I think he is focused on the short term, right? He wants the power to be able to execute on his plan with a slim majority, short of the 60 votes you need. to end a filibuster, and so it works for him today. I think what Majority Leader Thune is saying is, yes, but we have to think about the long haul. Senators have terms that last longer than a president, and so what is a really good opportunity to pass legislation and break this stranglehold on the government shutdown could result in Democratic dominance and majorities in the Senate that could do exactly the same thing in the opposite. So these rules are always hotly debated. There's always a reason to want to change them. Sometimes they have been tweaked for things like federal judges. But at the end of the day, you have a chief executive challenging the head of the Senate. And I always put my money on the head of the Senate in that challenge.
Where do you fall on this, Archie? It comes up so often that you might be rolling your eyes. It's like, who wants to tell him? Majority Leader John Thune says, and the Speaker of the House are doing a great job, but this apparently will not be part of it, right?
You know, the filibuster question is to me, seems like more of the same in the sense of a take it or leave it attitude by Republicans with Democrats, going from a sharp departure of this bipartisan discussion and negotiation that usually happens in these funding debates. That has been totally put to the side. So I think it's another threat to say that if, you know, and there are two pieces that are really, I think, saving the whole notion of checks and balances right now. Is one is the 60 votes that are needed in the Senate, which means that you do by definition need Democratic votes, and two, the courts. And so if you take one other piece off the table, then you have kind of the mixed bag with the courts.
What would happen, Rick, would the pendulum swing so wildly between party control that the country would somehow careen? I mean, what's the worst case scenario? Why is it okay for judges but not this?
Well, I think that when you start dealing with especially fiscal matters, you want a level of stability around them, right? And also, you know, by design, the Constitution sort of set up the Senate as a deliberative body that's really supposed to think through the long-term implications in a divided country, and they're supposed to be bipartisan, unlike the House, where partisanship, according to the rules in the Constitution, is part of the fight. And so I think you really start tampering with the construct of the way our founding fathers created government to basically use the House as a funnel for fiscal activity, but the Senate to calm it down and to put it back into the strategy that would work best for all Americans. And that is, I'm sure, what is behind Thune's thinking when it comes to starting to monkey with the protections for minority rights in the Senate procedures.
Interesting. I'm struck by the polling that's out today on the shutdown. By the way, if you're still keeping track, it's day 31 here on October 31st. ABC News Washington Post poll delivers the news that Chuck Schumer was hoping for. Americans blame the president and Republicans on Capitol Hill over congressional Democrats, 45% to 33%. Archie, the break for independents, blaming the GOP by a 2-to-1 margin. I'm fascinated by this because Republican talking points have been incredibly consistent, right? Just look at the numbers. We voted 13 times to reopen the government. Democrats voted no every time, yet they're being blamed for the shutdown. How did Democrats pull this off?
Listen, I would start by saying I think the polling here will be fluid, and you kind of see the polling all over the map. You do see a trend line towards the Democrats, and it makes sense because Republicans are in the majority. They control the White House, and Senate. So it does make sense that the responsibility is there. And ultimately, from a governing perspective, it is up to the Senate to get to 60 votes. That is the responsibility of governing. I will, though, say on the polling also is that, unfortunately, hopefully the polling will finally translate into some urgency because these, we're looking at a deadline where Congress has left and 42 million Americans, they're going to be cut off of food assistance, which could have been totally avoided even by tapping contingency funds.
Which could still happen by a court order. That's something that we're waiting on here. But Rick, I'm curious your thoughts on this. Is it as simple as the fact that Republicans control both chambers and the White House?
Well, first of all, historically, there's never been a shutdown that didn't get blamed on Republicans. That's why we don't like shutdowns. I mean, and you can spend all day long trying to figure out why that's the case. But the American public always believes, whether the Republicans are in power or out of power, that we're the reason for a government shutdown. So it is not a surprise that we're now starting to see polls gelling into that direction. I would say we're going to have a poll on Tuesday with these elections, off-year elections that are occurring, that are going to tell us a lot. And I don't think it's any public poll that's going to sway the president and Republican leadership in Congress. But the biggest public poll that's going to take place is Tuesday. And I got briefed this morning on Republican and Democratic and independent turnout in Fairfax County. Fairfax County today, in the early vote, is voting at the levels of a presidential election in a year that should be half of that. So, you know, that's a poll that I want to look at. And if that's the case and Republicans get swept out of office in Richmond, I think people are going to start waking up in Washington.
Rick, referring to Fairfax County in Northern Virginia, what's your thought on this election coming up? We've got New Jersey, Virginia. We're also, of course, looking at New York City, which is kind of its own factor. But we've also got Prop 50 in California that appears to be sailing to passage here. Does the shutdown impact the results of these elections?
I think the shutdown in some instances, because if you look at Virginia, obviously disproportionately impact on the government
Federal
funding
workers,
and federal workers. Absolutely.
If you lose your SNAP benefits tomorrow, does that impact your choice on Tuesday?
It does somewhat, but I think actually I would flip it. I would say on the federal side, this is going to have an impact on the shutdown negotiations because it's going to be a snapshot in time in terms of what, because right now our biggest challenge here is both sides, when you talk to Republicans and Democrats, they both feel very confident about their positions. I think there has been some, I guess, this week there was a little bit of softening in terms of actually having conversations, and that's because the Senate has been in session, which is critical because that's the only time you can have conversations when people are in town together. So going back to your piece, I would just say on the federal side, Tuesday's elections are going to be disproportionately important because they are going to send a message in terms of what is the pulse of the American public in three very different areas. You look at New York City, which is a very different political ecosystem, and then Virginia and New Jersey, which are also very purple in many regards.
With what you're referring to here, Rick, we're seeing, by the way, early voting in New York is blowing the doors off as well, which could cut both ways here for Mr. Mamdani. But if we're seeing this level of interest in, I mean, forget an off-year election. We've only got a couple of states in play here, and we have turnout on this level. If this does go to the Democrats, specifically in New Jersey, it looks like Virginia probably will. Do we see a White House meeting Wednesday or Thursday?
Well, you'll see people like Tony Fabrizio, the president's pollster, writing memos that will probably be titled, "End the shutdown immediately." And then here are the results of the election. So, yeah, I think you're going to see a lot of folks meeting in corners in the West Wing trying to figure out what to talk to the president about. Because right now, this is seemingly devoid of any kind of politics, as Archie was saying, is like nobody seems to think it's hurting them until Tuesday.
Interesting. You've got apparently a massive marketing blitz. When I say you, I mean Democrats. When it comes to Affordable Care Act, premiums, when it comes to SNAP, ad campaigns, town halls, canvassing events, Democrats seem to think they have the moment here and the tiger by the tail.
I think it's actually concern and true concern because all of these decisions are really under a short-term lens rather than a long-term lens. Let's say even let's say next week, to Rick's point, let's say on Wednesday, Thursday, Friday, something then snaps back and we're back in business in terms of an actual discussion and an actual negotiation. It's still then, there's a lag time. The timing matters on these food assistance benefits. And then again, the last thing I would say is this is just not about recipients. It's about the farmers, the grocery stores, the truckers who kind of take all of these goods and services. It's a whole ripple effect that is going to have an impact on the economy as well.
That's an actual economic impact, which a shutdown doesn't always have. We're going to keep this conversation rolling in our second hour. Archie and Rick will stay with us here. We've got a great panel for you today on the Friday edition of Balance of Power. Archie Siddiqui, Rick Davis with much more to follow here. We're going to start getting into geopolitics as we welcome our global television audience at the top of the hour here. President Trump says no when asked about imminent strikes against Venezuela. We'll spend some time with retired General Wesley Clark, and we'll have the latest from our bureau here in Washington as well as we balance both ends of Pennsylvania Avenue. The president in the air right now on his way to Florida. We'll let you know what he told reporters about Venezuela straight ahead on Balance of Power, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The president says, no, we are not about to attack Venezuela. Welcome to the Friday edition as the president responds to a report that strikes on Venezuela are imminent. We're going to get the latest ahead from Bloomberg's Laura Davison, and we'll discuss this along with more when we sit down with retired General Wesley Clark just moments from now. It's day 31 of the government shutdown, as we'll discuss with Democratic Congresswoman Rebecca Balint of Vermont and with our political panel. It's all after a look at Wall Street. Let's get up to date on the Friday trade with Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Lows of the day right now on the Dow Jones Industrial Average, S&P 500 Index holding on to a gain barely. We got NASDAQ pushing higher, up by 96 points right now, up by about 0.4%. Wall Street's blistering bull market getting fresh fuel at the end of a month that has lived up to its volatile reputation. Just under 3 hours to go until we wrap up the trading month of October. So here's where we stand. The Dow now down by 100 points, underscoring low of the day, down 0.2%. Little changed on the S&P, up 2 points right now. NASDAQ up 92. For NASDAQ, a gain of 0.4%. Russell 2000 index of small cap shares dipping into the red, down 0.2%. But our Mag 7 index holding on to gains of 1%. This after earnings from both Apple and Amazon. 10-year 4.09%, with a 2-year currently yielding 3.60%. Gold is off 1%, $39.83 the ounce. West Texas Intermediate crude, $60.80 a barrel right now. It is up by about 0.4%. Bitcoin higher by 1% now, $108,590 on a Bitcoin. Amazon surging after earnings. Amazon up now by 10.3%. It did post robust cloud growth. And Apple shares higher, little changed, up under 0.1%. Apple is projecting a jump in sales over the holiday season. Recapping, S&P little changed, up 5 right now, up under 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back, we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Charlie will have more in about 20 minutes as we keep tabs on Wall Street. Has not turned out to be the best session here, but there's been a lot of factors at play this week in the throes of earnings reporting season, so we try not to read too far into what's happening. Coming up, we're going to spend some time with retired U.S. Army General Wesley Clark as the president makes news on Venezuela. Also making news on the shutdown on this day 31. Happy Halloween, everybody. I have no news on when we're going to reopen, although the president seems to think that he has the thought of going nuclear, the nuclear option in the Senate, and the filibuster. That was his post on Truth Social that we'll talk about in a moment here. But of course, lawmakers are gone, most of them. The Senate is now out for the weekend. Everybody's getting ready to go pass out candy, and tomorrow's a big day, November 1st. SNAP benefits begin to expire. Open enrollment begins for those seeking health care with subsidies not yet addressed. And Head Start also starts to go broke tomorrow. We also have elections ahead next Tuesday. So there are some thoughts that as talks begin behind the scenes in Washington, maybe something's about to shake loose. But the talking points haven't changed. Listen to House Speaker Mike Johnson from earlier today.
The same Democrats who've been perfectly fine with defunding SNAP and WIC for over a month now are suddenly claiming to be outraged that Republicans and President Trump can't just wave some magic wand and fix the mess that they themselves have created. If they're suddenly waking up to the pain their reckless decision is causing, then there's one simple way to fix it. They can come back in here and vote to reopen the government.
Of course, they're not back in here. As I mentioned, everybody's away for the weekend. And, well, the House has been out of session for more than 45 days. Laura Davison covering all of this here in our Bloomberg Washington Bureau, our deputy Washington Bureau chief with us now at the desk. The president says, go nuclear, end the filibuster. This thing would be done in just moments. What's the majority leader think of that?
He does not like this idea one bit. He, for months has been saying he doesn't like it. He came out, his spokesman came out, and after Trump made this post yesterday, saying he wanted Republicans to do that, said, nope, this is not on the table. This is not happening. And Thune rightly recognizes that, the Republicans are not going to be in control of Washington forever, and they don't want Democrats to have the ability to just enact sweeping changes when they're in power, whether that be 2, 4, 6, 8 years from now.
Well, short of that, we have no off-ramp at the moment. There has been chatter, as you've been reporting, Laura, that there are some rank-and-file talks underway, although we've heard that before. I am compelled, though, by this headline that Chuck Schumer met yesterday with Senator Katie Britt. Does that give us a sense that the gears are starting to turn?
It could. Katie Britt's state of Alabama is a state that relies heavily on SNAP benefits. Yeah. We were doing an analysis of all of the districts, and there are lots of Trump districts that, are very reliant on this food aid. So that could start to see Republicans seeing pressure from folks at home. You have Head Starts closing. You also have, federal workers who are going without pay. The thing I think we really need to watch that's going to be the pressure point, though, are airports. And we've seen some sporadic closures, ground stoppages, including at DCA yesterday, where Thune was stranded at the Capitol, couldn't get back to South Dakota. But they've sort of been temporary. We haven't seen system-wide outages that will really be the thing that could tip this into negotiating mode.
Do we hear any chatter about a walkout? I mean, obviously, the air traffic controllers are not being paid, and they're all working overtime just by the nature of their jobs. When does the union say it's sick out day?
That's, what our team here is very closely trying to figure out. They have not indicated that. Even, last shutdown back in 2018, 2019, we had a day where you had Miami, Philadelphia, LaGuardia, and Newark that were basically all had ground stoppages and just totally messed up all air travel across the eastern seaboard. And that, later that night is when the shutdown ended. And that wasn't even a coordinated thing. That was just enough people saying on day 35 of the shutdown, I can't, it doesn't make sense for me to go into work. I've got other priorities. I need to be driving for DoorDash or Uber or whatever to pay the bills.
What a thought. Day 35, by the way, is Tuesday, so we'd set a new record next Wednesday for the all-time. There's new polling out, Laura, pretty incredible, and it's what I guess Chuck Schumer was probably hoping for. ABC News, Washington Post poll finds Americans blame Republicans over congressional Democrats. There you see it on your screen. 45 to 33%. Independents blame Republicans by a 2-to-1 margin. Do numbers like these start to pull a meeting together at the White House?
It could, and this is also why you see Democrats saying that they're not going to fold. They want to stay in this fight. They've had sort of the edge in polling the entire time. This polling is better than some that were even a couple weeks ago. So it seems that they've been able to keep public opinion on their side during this. Problems they also think that they have the edge. This poll doesn't necessarily indicate that, but they're both kind of waiting to see where the chips fall. Problems with the shutdown compound the longer it goes. So Republicans are betting that people are going to get fed up and blame the Democrats. Democrats are betting that people are going to see their premiums increase and say, what the heck, we need to get this solved.
Wow, boy, it's going to feel different when we start the new week here on Monday, and these benefits have actually begun to expire and real people are telling stories. We'll just have to see how that goes, and of course what the reaction will be on Election Day. Laura, I want to ask you about the president, though. His comments on Venezuela was on Air Force One. He's on his way to Florida right now. They actually stopped the jet on the tarmac so he could go back and talk to reporters. When asked about imminent strikes against Venezuela, as the Miami Herald reported, he said no.
He said no, he's not thinking. He said no, he's made no decision, and no, that no attacks are imminent. This, there have been two reports, but one from the Wall Street Journal that said this was under discussion, and another one from the Miami Herald that was much more definitive, saying that this, could be coming within days or hours. Poured a lot of cold water on that. I think that is, kind of lessen the flames and the sort of. Discord around that topic. But this has been, Trump himself a week ago said that land strikes would be next. So I think the question is still here, not necessarily, if, but when. But clearly he's not ready to come out and say he's made that decision yet.
That's fascinating stuff. This is what we're going to be getting into coming up next with retired General Wesley Clark. Laura, thank you as always. Happy Halloween, I'm supposed to say as well. It is October 31st. Big Halloween bash, I hope, for you. Laura Davison, our Deputy Bureau Chief, we thank you. I'm Joe Matthew in Washington, and thank you for being with us here on the Halloween edition of Balance of Power. The president has said a lot about Venezuela. These reports shouldn't be a surprise to anyone, knowing as well that a carrier strike group is on its way right now, the USS Jerry Ford, soon to arrive in the Caribbean. Here's the latest from President Trump on this.
Our sea drugs, as they call them, they use the term sea drugs, the drugs coming in by sea, are like 5% of what they were a year ago, less than 5%. So now they're coming in by land, and even the land is concerned because I told them that's going to be next. The land is going to be next, and we may go to the Senate, we may go to the Congress and tell them about it, but I can't imagine they'd have any problem with it. I think, in fact, while we're here, I think it's a good idea.
It's a good idea, all right? The land is next, he said. That was October 23rd, his most complete remarks on this to date, until again he said no to the reporters asking him this morning. So this may not be done. It may just really be a question about timing, to Laura's point, and that's what we want to talk about with the general. Wesley Clark is with us, retired four-star general, U.S. Army, served as commander of U.S. Southern Command, so he knows this region rather well, founder of Wesley K. Clark and Associates. General, it's great to see you. I wonder how you're interpreting the remarks by the president, knowing the flotilla, the armada that we have assembled that's about to get even bigger in the Caribbean. How do you read his remarks, and what do you think is about to happen in Venezuela?
I think it's like jiggling the skeleton key in the lock. It doesn't always engage the first time you move it back and forth and play with it a little bit. So you've got military force. Rumors are that there are some special operators inside Venezuela. You're not quite sure what the target is. That's Maduro's problem. Is it him? Could he just suddenly disavow Russia, Iran, and China and say, no, I don't want them. I'm on your side, America? Could he suddenly say, I'm going to crack down on all? Could he say, I'm just going to accept the results of the next election, and I mean it this time? He doesn't know what the objective is, so he's under a lot of pressure. And I think this is part of the strategy. We don't know what the objective really is of the administration, but if it really is about drugs, then yes, most of it is coming through Mexico by land. And if you're going to do something with drugs, you have to look at the demand side as well. So we're just in the early stages of this yet. This is a pressure building up on Maduro.
It is something. You mentioned the demand side. We never talk about that as if these drugs are, being pushed on Americans. They're coming here because Americans are demanding them, which is its own problem. The USS Gerald Ford is on its way right now, General. It's apparently not in theater yet. Would the administration take action without that platform being there?
Well, it depends on what the objective is of the administration. If the objective was to go in and snatch Maduro and put him on trial somewhere, then maybe you don't need the Ford there. If the objective is to sort of intimidate, be prepared, then you want overwhelming force. And that's what we're assembling there. They do have aircraft. They do have aircraft, anti-aircraft. They have radars. They have ships. But that could all be taken out in a few hours, I think. What you couldn't do, even with the two amphibious groups that are there from the Marines and so forth, what you can't do is really go in and occupy Venezuela. It's just too big, too many people, too many weapons distributed. You can't quite do the same kind of takedown that we did in Panama against Manuel Noriega in 1989. That was an entirely different case, legally, militarily, geopolitically. So this is different. We still don't really know what the objective is of the administration. And it could be that really it is drugs. It also could be that's just what you say when there's a private set of objectives that are coordinated through Congress. And he has briefed at least the Republican members of Congress in the big committees. I hope he'll bring the Democrats in too, because national security shouldn't be partisan. It should be beyond the country's borders. We should all be one nation.
Well, this is a great point that you make, and maybe that will actually tell us a bit if we start seeing briefings across the aisle on Capitol Hill. I know that the Pentagon has not been terribly fond of talking to Congress at all lately. But, General, we've seen B-1 bombers and B-52 bombers buzzing Venezuela's airspace. We also saw Venezuelan F-16s buzz a couple of U.S. ships weeks ago when we first started striking these alleged drug boats coming out of Venezuela. You mentioned the fact that they do have some aircraft. They've got anti-aircraft missiles and the like. What kind of a job would it be for us to knock all of that out, or would there in fact be an air war over Venezuela?
You never want to discount an adversary. So, yes, they've got pilots. They fly F-16s. They have some air-to-air weapons, but they don't have the modern air-to-air weapons. They don't have the system that we have. So there might be an air war over Venezuela. They might get some aircraft actually off the ground. But in terms of our ability to reach out and strike, our ability to use stealth, our ability to name the time and manner of attack and so forth, I don't think there's any question about the outcome. And the Israelis have really pioneered this. In their operations, they typically strike. They're effective. They're using our technology. Of course, we know all those systems. I wouldn't think there'd be much of a problem. But for the pilot in the aircraft, hey, he's put his life on the line for the country. He's got to succeed, and we would do everything possible to make sure we can do this effectively without losses.
Yep. As we're speaking, General, we're showing images, video of some of the alleged drug boats that we've blown up recently. Too many to count at this point. There was a sub. We've got the boats as well. This is quite a gallery that we have of these things blowing up and catching on fire. A lot of people have died. As someone who actually ran Southern Command, what is your thought on the legality of this operation so far?
Well, you know, it should have been briefed as legal. Presumably, there's some legal authorization to it. We haven't been told that. The evidence that has been presented to Congress, at least as it's been explained publicly, doesn't fully justify that we know for sure that these are drug boats. And if they are, then it would be a violation really of maritime norms to attack them. We would normally seize and secure them, use them to collect information, and then run it back to the source. This is a different approach. It's more about sort of naked power than it is the international rules-based system. And this is one of the concerns that so many have today when you look at the shape of the international environment, what's going on in Ukraine, what's happening or might happen in Taiwan and so forth. How do we use all the tools of statecraft, not just the military, and not just tariffs, but international law, diplomacy, and how do we put it all together in the package that best serves the interests of the American people? And so when you look at what's happening with these boats, you have to ask, what if Russia decides to do this? What if China decides that it makes up anything in the South China Sea that's moving must be a threat to China and starts knocking off boats? Certainly wouldn't like it. So I think we have to be very careful about the example we set. I hope that the administration will come forward soon with more of a legal justification and make sure that this is not a partisan, but a bipartisan thing. It's got the support of the entire Congress. That's the way that American foreign policy is strongest.
Yeah. General, I only have a minute left, and I hate to bring up a whole new topic. I don't want to have to cut you off. But this headline just ran from CNN. The Department of Defense has okayed Tomahawk missiles for Ukraine, and it will leave the decision finally to President Trump. In our remaining 30 seconds, should those missiles go to Ukraine?
Absolutely right. Yep, puts more pressure on Putin, brings us closer to an end of the war. Yes, absolutely. Great decision.
Fascinating. Would love to talk to you more about that when we learn more, General. It's good to see you. Retired General Wesley Clark with us live again on Bloomberg TV and radio. We thank you, as always, for the insights. Tomahawks for Ukraine cleared by the Pentagon. We'll see what the president has to say about this. Maybe he'll be asked about it if he talks to reporters when he lands in Florida. He's on his way there right now for a weekend at Mar-a-Lago. The Halloween edition of Balance of Power continues next with our panel, Rick Davis and Archie Siddiqui, together as we look ahead to Election Day next week. The impact of the government shutdown should not be discounted, and we'll get their take next on Bloomberg.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index in the red right now, trading just about the low of the session. The Dow in the red as well, trading down by 0.4%. S&P keeping it all in context, lower by 0.1%. Nasdaq, though, holding on to a gain of 54 points, up 0.2%. Apple down 0.2%, but Amazon surging now by 10%. The 10-year 4.09% with a 2-year that's currently yielding 3.60%. Spot gold is down $38 the ounce, down 1%, $39.86, below $4,000 a year on gold. Silver down 0.7, $48.59 the ounce. West Texas Intermediate crude $60.92 a barrel, up by 0.6%. Bitcoin now up by 1.2%, $108,759 on Bitcoin. Coinbase Global up 5.5% after the largest American crypto exchange reported revenue that exceeded Wall Street's third quarter estimates. And cybersecurity firm Cloudflare is surging to a record after posting better than expected sales that topped quarterly and annual estimates. It uses the ticker symbol NET. Cloudflare right now is up by 11.9%. Recapping S&P just about the lows of the day right now, down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Many thanks to Charlie Pellet. We'll have more on the markets a little bit later on this hour. We'll do that again in about 20 minutes to keep us honest here on the Friday trade. Coming into the close after a very long week with a lot of earnings to talk about. So we'll be curious to see what the numbers look like by 4 o'clock. The numbers in California are eye-popping as we follow the money here on Prop 50. You know, next Tuesday is an election day. And we've talked a lot on this program about the gubernatorial races, certainly in Virginia and New Jersey. We've talked a lot about the New York City mayoral race, and we're going to get into all three of these. But also, what's taking place in California is extremely important. Prop 50, this is redistricting, right? We talked about it a lot when this first emerged, and it has started a cascade now of other states rewriting their congressional maps following what is expected to take place in California. Gavin Newsom put this up for a vote. That was the way they decided to handle it. And Prop 50 looks like it's going to pass quite easily. Over the past 11 weeks, Bloomberg News reporting Newsom and his allies brought in more than $120 million for Prop 50, about 3 times the total raised by the proposal's opponents. Yes, George Soros' name is on there, along with others, including Reed Hastings. And this is where we start now with our political panel. Bloomberg Politics contributor Rick Davis is with us, our Republican strategist and partner at Stone Court Capital. Archie Siddiqui with me here in Washington as well, former aide to House Speaker Nancy Pelosi, founder CEO of Bellwether Government Affairs. It's great to have you both with us. Archie, I'd love to start with you on Prop 50. Are you expecting a blowout, and what would this mean for the redistricting efforts around the country and just the aura for Democrats that might follow nationally?
Well, I think there are 2 important pieces about California. One is it's a defensive measure, and I think the governor really went out of his way to structure it in a way that really was not a unilateral decision by him, but actually going back to the voters. So, and then it was a really quick ramp-up time. So it's a defensive measure for Democrats in a very aggressive push by Republicans to go state by state and try to rewrite these districts.
What do you make of the money involved here, Rick? You've run enough campaigns and elections to have a sense of this. You expect a blowout?
Well, it certainly is what's indicated in the polling. I mean, recent polling, as you pointed out, Joe, 6 in 10 Californians are supporting Prop 50. Out of 160 million being spent, 125 of that is pro Prop 50. So it's overwhelming force politically. And so we'll see. Early voting is very favorable to the Prop 50 demographics, but early indications are that there'll be a significant Republican advantage on Election Day, which is pretty traditional in an early voting state.
Mm-hmm. Indeed, Rick makes reference to the poll out in the last 24 hours from the Institute of Governmental Studies at the University of California, Berkeley. 60%, Archie, of likely voters backed the proposal compared with 48% of registered voters who were surveyed in August. So there's been some real momentum here, really interesting. Will Democrats regret this move knowing that, of course, this started in Texas by Republicans, but it's tipped off a cascade of states that really could end up favoring Republicans in the end.
No, I actually, not at all. I think if anything, it is a defensive mood that really Democrats were backed into a corner.
You saw no choice on this.
Yeah, there's no choice. And honestly, that's just unilateral disarmament where, it's not a fair fight going into the midterms. So I think even now with this California move, that still doesn't get Democrats where they need to be, because you saw this in Indiana. In Indiana, the Republicans are very skittish, and it's just been this barrage of pressure by Washington, Republicans in Washington and the administration on getting that piece done.
Really interesting. As we gather here on day 31 of the government shutdown, there are implications, according to some at least, that will play out here in these elections. Again, we've got governor's races in Virginia, New Jersey. We've got New York might kind of be its own thing with the Mamdani factor. But let's keep these two gubernatorial races in mind. Rick Davis, people start losing SNAP benefits tomorrow. Open enrollment's going to be in everybody's face when it comes to Obamacare. We've got Head Start on ice all of a sudden because of the shutdown. People are going to be talking about ground stops, most likely at airports. How does that play in favor potentially of Democrats or Republicans in these two races?
Look, I mean, the polls that we've been talking about around the government shutdown penalize Republicans, especially with independent voters who tend to be the deciding vote in a lot of races. And certainly will be in this very close New Jersey governor's race that is within the margin of error, and turnout will be a major contributing factor to the outcome of this race. In other words, who shows up in the early voting and on election day? Is it going to be Democrats who are motivated because of the anger they have toward the government shutdown? Is it Republicans who are supportive of the Donald Trump agenda? And so I think that's the one to watch of all of these. The outcomes are pretty much assured, except for New Jersey. And if Democrats win, Republicans are going to say, "Wow, if without a government shutdown, could we have taken that race?" And I think that's not an academic issue. That could be pretend serious considerations for how to handle then the midterm elections.
Yeah. If the polls like today's from ABC News, Washington Post, show Americans blame Republicans, does that favor Democrats on Tuesday?
I think the government shutdown nexus in New Jersey is interesting because if you look at, it is a margin of error race, as Rick pointed out, but also importantly, there's been a lot of campaigning in communities of color, and some of these benefits are really disproportionately, cuts are impacting communities of color. So I think from that perspective, there's a nexus. But I do think turnout is going to be critical in New Jersey, and it is a very tight race. And as you know, for the past 60 years, voters in New Jersey, they alternate between a Democrat or a Republican in the governor's office.
Right. So how worried are you about New Jersey as a Democrat?
I think what's very exciting is Mikey Sherrill is just the whole package. She's smart, she's driven, she has a national security background, she's a moderate pragmatist, a problem solver. So I think that's a lot of room for hope there.
Well, it's being looked at as a bellwether. Rick Davis, how important will the results in New Jersey specifically be for these two parties?
Yeah, look, I think that if Republicans can win this, and we, as Archie pointed out, we haven't been that successful in the most recent statewide election history. They're gonna rally around the president's agenda in a way that right now you don't see happening in the other races, and so it will give an impetus to Republicans to double down on this strategy. It'll make it more difficult to cut a deal to open government, assuming we're not open by, the 4th of November. And so it could really change the mental attitude that Republicans have about, whether they're leaning back or leaning into this agenda going into the midterms.
Really interesting. We haven't talked enough about Virginia, probably because a lot of folks see this as a foregone conclusion. By the way, we should note that Virginia's General Assembly advanced a proposed constitutional amendment today that could bring redistricting to the Old Dominion. Archie, is this a blowout, as many are casting in the media? I live in Virginia, although I'm in Northern Virginia, so I'm not seeing a lot of winsome signs around. How do you expect this to pan out?
I think no one should take Virginia for granted.
Yeah.
And we've seen that. And you look at Youngkin's win last time, and we've seen some indications that Trump is really focused on Virginia because of redistricting.
Right.
So he's engaging. And so in that, as we know, he can be a very powerful advocate on the campaign trail. So in this final stage, I think Democrats aren't taking anything for granted, and they cannot afford to. Now, the great thing is Abigail Spanberger is a fighter. The Congresswoman knows how to really run a really aggressive and strong campaign, and she's really focused on issues of affordability and delivering for Virginia families.
Well, as my fellow Virginian Rick Davis would tell you, we can't get through a single commercial break without seeing ads in this campaign. It's just been dominating the airwaves and dominating the conversation. Rick, to what extent could the shutdown impact results in Virginia as well, knowing how many federal workers live here?
Yeah, we've been looking at turnout in Fairfax County, a competitive county that has been trending more blue than red in the last few cycles. And the turnout as of today is on the same par level as a presidential election. And remember, this isn't even a midterm. This is an off-year election, which means turnout usually is off. And so the fact that you've got that level of activity at the ballot box before Election Day usually indicates that you've got a change election coming, which would, of course, advantage the Democrats in this case. But I got to believe that you have that kind of a strong move in Fairfax County. It is a direct corresponding factor to the shutdown. And of course, we see all that news, and we have hundreds of thousands of people who've been affected. And so you got to believe that's translating into some political activity.
Really interesting. This is going to be a fascinating night, actually. I'm really looking forward to it in our coverage here on Bloomberg. We'll have special coverage for you on Tuesday, live from World Headquarters in New York. Everyone's expecting Mayor Mamdani to show up at some point, maybe later in the evening on Tuesday. What do you make of the Republican effort to elect Andrew Cuomo, a Democrat turned independent?
Yeah, I think the fear factor, there's certainly a excitement factor on the Democratic side for Mamdani. I think on the Republican side, there's a fear factor, and there has been a fear factor, and then also an attempt. It's interesting. We were talking about Spanberger, Mikey Sherrill.
Yeah.
Nobody talks about them as our standard bearers and great examples of Democrats. People are also looking at Mamdani to really kind of characterize him as a radical, whereas we have these other two potential governors who are really middle of the road pragmatists.
Fascinating. Rick, we've only got about 30 seconds. Does Wall Street vote Cuomo?
Wall Street votes Cuomo, absolutely. Everybody I've talked to over the last few months prepping for this election on Tuesday are sick with concerns about what that agenda that Mamdani is going to result in for New York City. And so we'll see, but I think fear and loathing is the nature of the election in New York City.
Fear and loathing in Manhattan. Rick Davis, Archie Siddiqui, many thanks to both of you for a great conversation. Again, we'll have special election night coverage here on Bloomberg. Much more to follow as we zero in on the government shutdown straight ahead. It's day 31. Stay with us on
6:30 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P. They are both lower right now. S&P close to session lows. Little change. We've got NASDAQ up 76, up by about 0.3%. But Wall Street's blistering run fading at the end of a month that has lived up to its volatile reputation. Just over 2 hours to go until we wrap up trading for the month of October, and then it is on to November. S&P down 1.5. Little change to the convention. We've got the Dow down 154 now, down 0.3%. NASDAQ higher by 0.3%. The Russell 2000 index of small cap shares down 0.3%. And the Mag 7 index, the Bloomberg Mag 7 index, down 0.9% right now. Apple is slumping 0.3% after earnings, while Amazon is surging 10.4%. The 10-year yield 4.09%, with the 2-year currently yielding 3.60%. Spot gold down $35 the ounce, $39.89, drop there of 0.9%. West Texas Intermediate crude oil up 0.6%, $60.95 a barrel, and Bitcoin now up 1.5% to 109,123 on a Bitcoin. Netflix is said to be actively exploring a bid for Warner Brothers Discovery's studio and streaming businesses. That according to Reuters, citing sources. Netflix up 3.1%. Warner Brothers Discovery up now by 3.5%. Yesterday, you recall, Netflix announced a 10-for-1 stock split. Again, Netflix up by 3.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie. Good to see Charlie Pellet every day here on Balance of Power, helping us connect the dots. Charlie Pellet every day here on Balance of Power, helping us connect the dots between Washington and Wall Street. He'll have more on the Friday trade coming up at the top of the hour, 2 p.m., as we turn things over to Bloomberg Business Week Daily. Indeed, I'm Joe Matthew in Washington. Thank you for being with us here on the Friday edition of Balance of Power on Bloomberg TV and radio. I'm imagining the foliage right now in Stowe, Vermont, which I'm sure is striking compared to what we have here in the Washington, D.C. area. But it's not foliage that we're going to be talking about with Congresswoman Rebecca Balance. Now, on day 31 of a government shutdown, that means we're 1 day away from SNAP benefits expiring and open enrollment for Obamacare beginning, not to mention the end of money for Head Start. There's great concern about what's going to happen to tens of millions of people who rely on this assistance. And as the Congresswoman will tell us here in a moment, they're actually taking action in the state of Vermont, backfilling SNAP benefits on the state level, which is a very important trend that we're seeing take place. Vermont was one of the first states to do this, and it's coinciding, again, with attorneys general from about 24 states suing to reinstate SNAP benefits or use money from a contingency fund. Vermont is not waiting. They're taking care of this on the state level, at least for now. Congresswoman Ballant is a Democrat and represents Vermont's at-large district. It's great to have you back, Congresswoman. I hope things are well in the great state of Vermont. How long can you keep backfilling SNAP while the government's closed?
Yeah, not long. I mean, this is the struggle right now because we are facing the double whammy of the impact from the so-called Big Beautiful Bill that was passed earlier this year, and the steep cuts to Medicaid have also impacted our ability to keep our healthcare system afloat. We're really struggling in that realm. And of course, as you said, people are going to go hungry this weekend. And there are a couple things that I just wanted to point out is that in the past, whenever there has been a government shutdown, there have been contingency funds used to make sure that people did not lose a SNAP payment. Again, that's just, modest food assistance for people. It's the first time in which you have had an administration saying we will not be using contingency funds to make those payments. This is a choice. It doesn't have to be this way. The SNAP money is not it's not contingent upon us coming to a deal to reopen the government. And that's what I want to make sure people understand. There is money that can be used right now, and which is why so many of the states the states AGs decided to sue. The other piece that is troubling, and that's why you asked how long will Vermont be able to do that. The administration has also said they will not be reimbursing states for feeding people. And it is deeply disturbing to me that even as recently as the end of September, the Trump administration had, by its own admission, had put notices on their web pages related to USDA saying that the funds were there and available and would be used. And now that's all been scrubbed and replaced with highly partisan information. It doesn't have to be this way. It doesn't.
For a little perspective on Vermont, roughly 1 in 10 people rely on federal food assistance in your state. And based on the reporting that I saw, that's about 38,000 people who low-income households in Vermont, 38,000 households to be clear, not people, continuing to receive support here from SNAP. You guys call it 3 Squares Vermont, the program, and so you've got this covered for 15 days. You know what Republicans would say? You know what the president would say if he was sitting here, if Mike Johnson, the Speaker of the House of Representatives, would say then Democrats should vote to reopen the government and this wouldn't be a problem. How do you respond?
I know they would say that. And what's misleading there are 2 things that are misleading about that. One, the money is already there. All the president has to do is instruct the contingency funds to be released, and people would not be going hungry this weekend. So that's the first thing. The second thing is, even if the House had been in D.C. this week, which the Democrats were there. Again, Democrats were there ready to work with Republicans. Republicans weren't there. It's not as if the spigot just gets turned on automatically. And so the most immediate way to get food to people is to use these contingency funds. And I just think it's a very sad state of affairs when you have the Speaker of the House using hungry people as a political football. Because again, this is unusual. This doesn't usually happen during a shutdown. You don't usually have an administration saying we're not going to feed people. You also don't have an administration, a president traveling overseas during a government shutdown. Usually you have the president and the Speaker of the House trying to convene people to get to an agreement. The other thing that I want people to understand is that the so-called continuing resolution that they put out is only good for another 15 days.
Well, yes, right.
I mean, there's so much that has gone wrong here because Republicans were not willing to meet with us before the 11th hour. And then by that point, it was an unwillingness to have any kind of negotiation. So it makes me very angry.
Been asking about that date a lot. I mean, even if we voted today, government reopens, we'd be heading for potentially another shutdown before Thanksgiving. So obviously some of this may need to be rewritten. There's a federal judge who's considering this lawsuit coming from state attorneys general, as we discussed, and indicated, this is Judge Indira Talwani, indicated that she likely will order the Trump administration to use these reserves to at least partially fund SNAP. The quote, Congress has put money in an emergency fund, and it is hard for me to understand how this is not an emergency, unquote. Congresswoman, is that how this ends?
I hope so. In terms of this particular issue, I certainly hope that will be the ruling from the federal judge. What's complicated, and I don't know if you're aware of this, but I want to just highlight it because it's a complicating factor here, that the people who would be positively impacted would be the people in the states who were a party to that lawsuit. So I can't remember if it's 25 or 27 states AGs that sued, but the states who were not party to the lawsuit would not automatically be receiving those funds.
Wow, interesting.
Yes.
We got a lot to figure out here. If you're called back and the president wants to start talking, say, after election night, are you ready to have that conversation?
Look, we've been there. I have been going back and forth between Vermont and D.C. ever since Mike Johnson decided to put the House into recess. We can't come to any kind of agreement back in our district. So I've been traveling there regularly. Everyone in the Democratic caucus has been there, ready to do the work. And meanwhile, trying to meet the needs back in the district. I just, I want people to understand that, of course, there is always, when you're in DC, there's partisan one-upmanship happening. But I want people to understand that we have never had a situation in which a party, and in this case, it's the Republicans who control the House, the Senate, and the White House, are not willing to do any kind of negotiation and also left town. Like, at least the Senate is there trying to do work. The House Republicans have not been in DC for, what are we at? 30 consecutive days now?
Something days, yeah. No, I mean, the House has been out of session for over 40 days, though, right?
Yeah.
Congresswoman, thank you. Let's continue this conversation when you're back in Washington. Becca Ballant, Democrat, Vermont. Hope you have a good Halloween. Mike McGlone gives out the full-size candy bars, is what I've been hearing, if you know where he lives in Miami. Bloomberg Intelligence senior commodity strategist is with us right now as we watch the price of oil actually move a little higher today. This is kind of interesting. Mike McGlone, it's great to see you as always. WTI, West Texas Intermediate crude was above $61 a barrel a little while ago. What's at play?
It's stuck at 60, Joe. The significance of 60 is that's right about where it ended in 2019, right before the pandemic. And it's a known. There's an oversupply bear market. It's the question of what trips it up. The key question I ask myself is, with crude oil down about 15% this year, that's juxtaposed to about the S&P 500 up 17%. It's a significant sign of divergent weakness. So I look at it, what happens if the S&P 500 corrects 10% or so? Crude oil, I still think, is on that trajectory to $40 a barrel. And I don't know what's going to stop it, but I know it can accelerate it. Just a little backup in the stock market.
Interesting. I thought maybe you'd say something about Venezuela. I don't know your thoughts on this. There was reporting earlier, the president knocked down those reports that we were set to attack Venezuela imminently. Would that be a factor in the oil market?
In the short term, Venezuela is known to have some of the largest oil deposits on the planet, and they're just not properly being utilized. They only export about 500,000 barrels a day. To put that in context, total crude and liquid fuel exports from the U.S., that's an oxymoron compared to the past, from the U.S., are running around 4 million barrels a day. So they don't have a lot to do. So in the short term, it might matter. But if that happens and there's some kind of regime change in Venezuela, that brings on supply. So it's not a big deal in terms of the market. But the key thing that's happening, Joe, is that shift from the focus on supply is shifted to the Americas from Middle East. That's what's happening on a global basis. That's what's changed in the world. Every single time in the past that crude oil's dropped near 40, which has been 3 times in the last 20 years, U.S. was a net exporter. Now we're an net importer. Now we're an exporter.
Fascinating. It's been how many times in the last 20 years? Did you say 4 times, 3 times?
So 2008 was the first, 2016, and then 2020 when it went negative. Right around 2020, we were kind of even, but now our exports exceed our imports in total crude oil and liquid fuels.
The 2 majors were out today. We got quarterly results from Exxon and Chevron. They're squeezing a lot out of a barrel, it seems here. What did you make of their results?
That's a key thing to remember about humans and harnessing energy is you can make decent money in the energy patch, producing energy and producing crude oil. So like you look at the XLE, that SPDR ETF, it's up about 70% since 2019. And crude oil is the same. Wow. So that's generally a good place to invest in energy is in the equities.
Yeah, you're giving out the full-size candy bars like Donald Trump, I heard tonight. Mike, you excited for Halloween?
Well, here's a candy bar for you. When I was in Connecticut, in Weston, we used to have the most trick-or-treated house in Weston, Connecticut. You can relate to that being from Connecticut. Right? But here's my treat for you. I think we're on pace for the average gasoline price in this country around $3 a gallon to go to $2. And even natural gas to potentially go there, partly because that's where they go all the time. And there's one key thing that might trigger that. That's the stock market just dropping maybe 10%.
What's that mean for heating oil in Connecticut this winter?
Exactly. Well, this winter, that's a key thing. Here's the matter: we had a very cold winter last year. It was great for pond hockey. I was in Miami, so I missed it. If we have a colder than normal winter, it might happen. But if we have a normal winter, prices get pressured.
Fascinating. Great to see you. Mike McGlone, thank you. Bloomberg Intelligence, important breaker on the terminal. The judge in Boston says the administration must use the contingency funds. Food aid suspension likely unlawful. We'll have more on this in the late edition of Balance of Power. I'll meet you at 5 p.m. Eastern. Only.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Welcome to Bloomberg Business Week Daily. Carol Master, Tim Stanovic, live here on Bloomberg Radio, Bloomberg TV, well, across the platforms. I just said that because I was looking at some headlines. Mike McKee, what did we just get?
The federal judge in Boston has ruled that the administration has to use the contingency funds, the emergency funds, to fund SNAP. They can't just let it die, which sets up a very interesting situation because the administration's argument was it wasn't legal. So if the judge says that it's legal, then we have to see if the administration appeals it, because the only reason they would appeal it would be to make people starve. So
you're listening to Michael McKee, international economics policy correspondent for Bloomberg Television and Radio.
People know his dulcet tones.
They do, but 42 million Americans could see their food assistance cut off within days. Are they safe now because of what this judge said?
If the administration does what the judge says they're to do, they're safe for some time. It will take them a few days. There will be an interregnum of a few days because it takes a while for the money to get into the accounts at the states. But then I guess the emergency fund has $5 billion in it. It takes $8 billion to get through a month. So they get through 3/4 of the month maybe, and hopefully the government is open by then.
Yeah, as we tick, 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 keep building on this government shutdown. Mike's going to be with us. We're going to talk more about kind of the Fed speak that we've seen in a week where it's been busy, but we did get a Fed decision just on Wednesday. Mike's going to be back in just a moment. Folks, in the meantime, we have seen quite a rally in the month of October. We are seeing some of the big Mag 7, well, mostly a name like Amazon really moving still ahead on this Friday, but we are going to wrap up the month of October here.
Yeah, right now, as the month stands, 2.2%. I'm going to round that up, Carol. For the S&P 500 advancing this month. The NASDAQ, though, up 4.6% this month. We do have just about 2 hours to go, but who's counting until the end of the trading month? But things are looking good if you're long these stocks.
Yeah, I mean, look at the S&P 500, folks. It has soared almost 40% since that meltdown back in April when the president started to talk about tariffs, high tariffs for many of its trading partners. It is now on pace for its longest streak of monthly gains since 2021. All right, this hour, what we decided on our planning call this morning is we wanted to kind of look at the week that was, with news still coming at us on this Friday as we continue to monitor President Trump, who is on his way or landing in Florida as we speak. But as we think about the week that was, today, we've got a question. Is the U.S. headed for some kind of ramped up military conflict with Venezuela? That is definitely on our minds.
Yeah, we saw that affect the oil trade earlier in the day today. Also, the big themes of the week, of course, big tech earnings, Amazon surging. There's more speculation around Netflix's interest in Warner Brothers. We're going to talk about that and more with Needham's Laura Martin.
And then we're going to talk a bit more about the government shutdown and then tariffs, critical minerals. There was so much coming at us, certainly when it comes to U.S. politics and U.S. interaction with the world at large. But first up, let's get a check on the trade on this Friday. Let's turn things over to Charlie Pell.
All right, thank you very much. Happy Friday. Happy Halloween to the two of you. We got the Dow lower, the S&P, NASDAQ, both advancing right now. NASDAQ 100 index up 0.4%. The stock rally waning after a $17 trillion historic run. S&P 500 index helping us keep it all in context, up 15 now, up by about 0.2%. The Dow down 28, drop there of just under 0.1%. Mixed market, we do have the Russell 2000 index of small cap shares just about flat on the day, little changed, up under 0.1%. The Mag 7 index up 1.3%. Apple, a member of that index, big time, up 0.1%. Amazon, also a member, up by 10.7%. Year 10-year at 4.09%, with a 2-year currently yielding 3.60%. Gold now slumping $26 the ounce, just below 4,000, $39.98, down 0.6%. And West Texas Intermediate crude up 0.6%, $60.94 for a barrel of WTI. Amazon posted robust cloud growth that reassured investors of the tens of billions of dollars that the company and its peers are pouring into AI will pay off. Amazon again up 10.7%. And Apple is projecting a jump in sales over the holiday season after releasing new iPhones and work to reassure investors concerned about a decline in revenue from China. Apple again up by 0.1%. S&P higher by 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Pat is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here at Bloomberg headquarters in New York City. So it's Friday, almost hard to remember that we got a Fed decision this week, but we certainly did. And this is what we're seeing now is a lot of Fed speakers coming out. Fed Bank of Dallas President Lori Logan said she did not support the U.S. Central Bank's decision to cut interest rates this week and will likely find it appropriate to hold rates steady at the next meeting because, Tim, inflation remains too high in her view.
Logan doesn't vote on monetary policy this year. She participates in the FOMC discussion. She will rotate onto the voting panel. That will happen starting next year. In the meantime, the Fed dated overnight index swap, a type of derivative contract used to manage interest rate risk, has trimmed the odds of a December rate cut to about 50%. With more on the U.S. economy and Fed policy, and here to help us wrap up the week, you've already heard from him today many times, Bloomberg TV and radio international economics and policy correspondent Michael McGee. He joins us here in the studio.
We were going to start with Fed Speak, but I want to ask you about that headline that just crossed about SNAP benefits. I mean, what is it? I think all of us, I put something out on X. I mean, when more than 40 million Americans are getting food assistance in what is supposed to be one of the richest or the richest country in the world, what does that mean about our economy? What does that tell you about our economy?
Well, that's kind of a political question. Obviously, economically, it doesn't suggest that we're allocating our resources in the best way. This is a big, SNAP's been a big political football in Washington, and it's even more so now because it's in the middle of this government shutdown argument. But the Republicans have said that along with Medicaid, they want people who get these benefits, they should work. But 98% of them or 96% of them, I think, are children in school or caregivers or retired people. So that doesn't that doesn't really work either. So it's kind of it comes down to what kind of country do you want to have, and how do you believe that you get there? Because there's certainly an argument that Republicans make that people should make their own way, or that this should be handled privately by charities and things like that.
Well, that's what I wanted to talk about, Mike, is who picks up the slack in a situation like this. I have family all over the country, and we have, like many families out there, group texts where we're talking about everything. And my mom and my sister brought up something interesting, and it's the idea that on Halloween, people are thinking about making available foodstuffs, like shelf-stable things that they can give away to people who might experience hardship if they are losing SNAP benefits. They're talking about schools in different parts of the country, and these are local issues, but it's also a national issue. Having parents step in to help other students who would traditionally get SNAP assistance, and instead the parents at the school, or even people who don't even go to the school, are bringing food to the schools. It seems like people are stepping in.
Yeah, it's been kind of a nationwide thing, and a number of states are saying they will do their best to cover as much as they can. The administration has said those states will not be reimbursed, and of course they don't have the money to fund the entire program. All this SNAP money is federal money, so they've got to take it from somewhere else. They won't have enough for a whole month, but there is certainly a rising effort to take care of it.
We're going to get to the Fed, I promise, in a second, but this conversation really has me thinking about the way that a government dollar that goes out has this multiplier effect when it is spent by somebody buying something. Do we have any research on that? Do you have anything on the top of your head, Mike, about a SNAP benefit and to what extent that ripples through the economy? And the absence of that would actually cause some sort of pullback.
Well, it would. Just basic economics. If the dollar's not spent, it doesn't cycle through the economy. I don't have any specific numbers on SNAP itself, but again, it's $8 billion a month, roughly. So that's money that does, comes from the taxpayers at one place or another, or comes from selling bonds to Wall Street, probably. And then that money goes through the economy, goes to the store, and the store then, pays its suppliers who pay its workers, and et cetera.
I'm going to call an audible. We were going to talk to Nathan Dean after we were done with Mike, but because we're talking about SNAP and Americans and food benefits and the government shutdown, we do want to bring in Bloomberg Intelligence senior policy analyst Nathan Dean into the conversation. Then, Mike, we're going to come back to you on the Fed. But Nathan, I'm assuming you're listening to us. I mean, Mike mentioned SNAP benefits are, I guess, a political football, if you will. What are your thoughts about this against this government this government shutdown that it is impacting workers, it's impacting Americans?
I mean, absolutely. I mean, this was one of the key pressure points of which would potentially bring Congress together on a deal. And obviously that didn't occur. But I will say is that there's open ideas, call them chit chats, as we go into next week among some certain Democratic senators about this idea of reopening the government. Now, today's ruling most likely takes away a little bit of that pressure if the administration falls through and actually pays the benefits here. But from an investment point of view, I just point out here is that it's really Walmart, Kroger, and Albertsons are the three equities that you should be looking at in terms of SNAP benefits. Walmart takes in about 25% of SNAP. Kroger and Albertsons around 8 to 6%. So if this were to go into November, and I don't think it will, but if this were to go into late November, into December, those three equities in particular would be harmed by this decision, or by the idea of not paying out SNAP benefits.
Is it the type of thing, Nathan, that could actually end a government shutdown? I mean, if we think back to the first Trump administration, it was potential issues or actual issues at airports and air traffic controllers that put a lot of pressure on the administration to sign a CR. But would it be something like this, and we could hear Republicans potentially hearing from their constituents about benefits running out?
Absolutely. I mean, look, the government shutdown is going to end when the American populace tells Congress to get it done. And right now, the polling data doesn't suggest that. If you're a Democrat, you're looking at the data and you're seeing that independents blame Republicans slightly more than Democrats, and you're saying, yep, we're good. If you're Republicans, you're looking at the same data and you see 85% of your caucus supporting your strategy, you say, yep, you're good. But as we get into November, additional unintended consequences, and ideally the SNAP benefit is a perfect example of this, where real Americans are going to go to their policymakers and say, enough is enough, get this done. Now, the way that I think this will end is that you will see an agreement, most likely coming from a group of bipartisan senators, not leadership, but bipartisan senators who then go to leadership and say, here's what the agreement looks like, most likely keep opening up the government, a vote on these ACA premium subsidies, not a deal to pass them, but just a vote. And then they'll go to leadership and say, this is what it's done, and this is what we want to do. Now, if we don't get that next week, the next major catalyst is going to be Thanksgiving travel, and that is something that policymakers are definitely taking into account, because no American wants to go traveling for Thanksgiving and then have a ground stop at Newark and be stuck there for 5 hours.
Yeah, me included. Anybody
Even though
included.
you're from New Jersey, you still don't want that.
I don't want anybody stuck at the airport. Okay. Mike, you're getting more details.
We have a few more details now on these court rulings. The first case had been filed in Boston, and that judge ruled, and we talked about that. Second judge in Rhode Island has now joined in this case in a similar lawsuit filed there, and said that the government, this is the Department of Agriculture that administers this program, must, both of these judges ruling, they must by Monday explain how they're going to use this money and how quickly they're going to get it out, etc. I don't know what the or else is on that, but they need to have something in place by Monday. Now, it's the Associated Press story says it takes about a week or two to load people's SNAP cards. They could probably do that more quickly, but that would be one thing that could cause problems. It could bring in the private help that you were talking about, Tim.
It's all related to the economy, Mike. It's all related to the shutdown. And if we take a step back and think about the bigger economic effects of the shutdown on the economy, Jan van Eck, we've spoken to him twice in the last month, and he hasn't changed his tune about he doesn't think that the shutdown will affect the stock market, but not necessarily the same question about what it does to the economy. We've talked to you in the past about this, Mike. What are your thoughts on the shutdown, the daily numbers that are associated with the government being shut down, its overall economic effects now that it is over a month long?
And it is something Jay Powell addressed, right, in terms of the shutdown a little bit in that
Well,
Fed meeting.
I mean, obviously there is the issue of the data that the Fed and others are not getting on the economy, but the overall economy studies in the past have suggested that it would be between 0.1% and 0.2% per week that the government is shut down that would subtract from GDP in that month or that quarter. This is on the going to be on the high end because no appropriations bills were passed. Therefore, all of the people who would be furloughed were furloughed. The last time in 2019, we didn't have everybody furloughed. So that will subtract. Now, the issue is always how quickly this ends. And then a lot of the money that wasn't spent will be spent, which trims the loss overall. You have a loss of efficiency and a loss of things that may not get spent. Federal contractors, for example, essentially freelancers, they don't get paid and they don't get back pay. So that money is gone and the spending that they would have done is gone. But federal workers will get their lump sum repayments and then they'll go out and they'll pay their mortgages and pay their credit cards and things like that. So we won't lose all of it. It is a hit to the economy, but if you go back a couple of years afterwards and you look, it's really hard to find in the overall statistics. It's maybe more damaging to confidence than anything else.
Well, the banks are thinking about it. I open up my credit card app and it says at the top, if you're affected by the government shutdown, we can help. Click here.
Well, I mean, what the banks and everybody are doing is they don't want your credit report to be ruined, your credit to be ruined because you're showing up for work every day and the government says you can't come in the door.
Yeah, that's an interesting point. Wow, banks can be helpful. Just saying. No,
She's
I know.
fired at it.
I know. I know they can be helpful. Michael McKee, thank you so much. Bloomberg TV and Radio International Economics and Policy Correspondent. Nathan Dean, we want to go back to you. There was a busy week in Washington. What is top of mind? We talked about the government shutdown. I mean, that to me speaks of major dysfunction. I mean, how is Washington looking at this past week with the president overseas, a U.S.-China agreement? I'm putting parentheses around that, which they're going to talk about again in a year. So it just, I don't know, is this a win this week or doesn't sound like one?
I think it's a win from the status quo, and I think that's what markets really want here is clarity. And obviously this agreement with China says that 1 year from now, we're going to come back. And look, President Trump, the way he operates, we could be back in a point where additional tariffs go up in a few weeks. You know, that's just what the play that comes from the White House here. But at least it gives us a little bit of clarity of what at least things are going to go forward. And we're not faced with that 100% tariff that would potentially go in, starting tomorrow. So I think, markets are going to look at this week and they're going to say, okay, we saw what happened here in Asia. Let's go back to DC. Let's go back to politics here and let's see what happens. But I would also say is that even though the government is shut down, deregulation is still moving forward. I mean, if you think about the pillars of how President Trump is operating, executive orders, legislation, and deregulation to a certain extent is still happening. There's a lot of deregulation that's happening at the Federal Reserve. We had a couple of proposals come out just last week about stress tests. So even though the government is still shut down, ultimately this is what we tell our clients, is that when you look at how President Trump is implementing policy, it's a delay, but nothing has been derailed by this government shutdown.
Halloween costume, what are you doing tonight, Nathan? Just quickly.
Very tired dad going out there, just dressed up as a, just very tired dad.
Hey, you know what? Not everybody's too cool to be seen with Nathan Dean trick-or-treating, okay?
Yeah.
Come on. That's a little deep tease about your weekly newsletter. Everybody's got to subscribe to it. It comes on Fridays. Nathan always shares some personal stuff. But have fun trick-or-treating with the whole family tonight, Nathan.
Thank you.
All right, take care. Have a good weekend. All right, that, of course, is our Nathan Dean, as we said, Bloomberg Intelligence Senior Policy Analyst. Hey, folks, it's been a really big week. So much going on. We're going to go around the big tech universe from Netflix and its interest in Warner Brothers Discovery to those Mag 7 earnings with the one and only Needham's Laura Martin. She's with us right here on Bloomberg Business Week Daily. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Two federal judges have ruled nearly simultaneously that President Trump's administration must continue to fund SNAP. That is the nation's biggest food aid program, using contingency funds during the government shutdown. Now, these rulings do come a day before the Department of Agriculture planned to freeze payments to the Supplemental Nutrition Assistance Program, SNAP, because it said it could no longer keep funding it due to the shutdown. Stocks now higher across the board. The Dow, the S&P, NASDAQ all advancing. 19-point advance for the S&P. We've got under 2 hours to go until we wrap up the trading month of October. S&P right now at 68.41, up 0.3%. The Dow back in the green, up 21, up just about 0.1%. NASDAQ up 163, up 0.7%. The Mag 7 index holding on to a gain of 1.4%. Apple and Amazon, both members, both higher. 10-year 4.08%. The 2-year 3.60%. Gold down $16 the ounce at $4,007. That is a drop of 0.4%. While West Texas Intermediate crude oil $60.90 a barrel, up by about 0.5%. Coinbase global shares up 6.8% after the largest U.S. crypto exchange reported revenue that exceeded Wall Street's third quarter estimates. And the cybersecurity firm Cloudflare surged to a record after posting better than expected sales numbers that top quarterly and annual estimates. The ticker on Cloudflare is NET, and the stock surging now by 12.1%. Recapping, Apple right now up 0.2%. Amazon up by 11%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Netflix is actively exploring a bid for Warner Brothers Discovery's studio and streaming business, that at least according to Reuters, citing people with knowledge of the matter. Now, remember, Bloomberg News reported earlier that Netflix and Comcast are weighing bids for parts of the company. Comcast execs discussed their M&A strategy on an earnings call earlier in the week. Meantime, we are also, focused on those Mag 7. Amazon shares, Tim, are soaring in a big way today.
With more and a look at the big tech earnings week that was for Apple, Meta, Alphabet, and Amazon. Back with us is Laura Martin. She's Senior Entertainment and Internet Analyst at Needham & Co. She covers the media, entertainment, the worlds of internet as well, which, as we know, have become so intertwined. She joins us from Los Angeles.
Laura, great to have you back. Hello, hello, hello. We got to start with Netflix and Warner Brothers. We've talked with you before. We did it at Bloomberg Screen Time out on the West Coast, and it was just after Netflix co-CEO Greg Peters was like, we're not interested in Warner Brothers. You said that even though Netflix doesn't do big acquisitions, you did note that they must buy established IP, intellectual property, and you talked about this. So do you feel like there's momentum here that Netflix is kind of moving towards a deal?
I think that it's a smart move for them to look at the books of Warner. They lose nothing by doing the due diligence and looking at Warner's business model. I think Wall Street would be supportive of Netflix using its very valuable equity to buy the studios. I do not think Wall Street would be amused if they tried to buy the linear TV networks. And I think that, I think there's a disagreement within Netflix. You're right that when I last saw you, Greg Peters was like, hard no, we don't want to look at these assets. Ted Sarando's body language on his earnings call was much more open, probably because he's the content guy. And Warner Brothers has some of the best IP and the deepest library of any studio. And once you own the IP, you never have to pay to rent it again. So it's really hard to keep creating brand new IP. You may as well get some that has an installed base of fandom from the last 50 years, and Warner Brothers has some of the most, next to the Walt Disney Company.
So should Netflix do it?
I think it depends on price. Because it is contentious within Wall Street, it depends on price. And I get the sense that Warner Brothers really wants to sell dear because they have this idea that if they split in half, they're going to get $26, $27 a share of total value. I don't believe that. But if they believe that, then that means that they're going to try to overcharge Netflix. And I don't know that Netflix would be overpaid for the studio assets here.
Who else? I mean, we talked about Comcast. I mean, who else could be, a really big competitor here for Warner Brothers?
So I think, my opinion is the way this plays out is everybody looks at the books. Everybody gets the inside scoop on what's happening at Warner Brothers because why not? You're competing against them. And then the price, and then they try to buy a piece, like Comcast tries to buy linear or Netflix tries to buy. And I'm not sure they are regulatably approvable, except for Larry Ellison, who is Donald Trump's good friend. So I think all of this is in the end, a way to get Larry Ellison, David Ellison, to get their price up to match whoever else is bidding. But I think Ellison's are the only ones that can get this to regulatory, in my opinion.
What ends up happening to the linear stuff over at Warner Brothers?
Well, Ellison
Discovery?
has said he's willing to buy the whole thing. So that solves that. They just sell the whole thing because he can get regulatory approval.
Oh, okay.
God, it's fascinating.
I think we'll have Laura back on before this. and still, like, our first question will be a month from now about this potential deal.
I know. Is there any pressure to get this thing done sooner rather than later?
No, I mean, the CEO Zaslav is trying to make pressure because he's saying, oh, in April, we're going to split it in two pieces. But it's an arbitrary deadline. He can push that off to June or September. You know, I don't agree that the two pieces spun off alone will be worth 26 or 27. But that's his stalking horse, is this artificial timing deadline he set.
So let's say Netflix doesn't get this. And I promise we're going to ask you about more stuff, Laura. But let's say Netflix doesn't get assets from Warner Brothers. What would be its next move in content IP? What should it do?
So what I think it's doing, interesting things with advertising, interesting things with video games. It's going into short form, which is smart. It's backing creators, which is smart, influencers. It's moving into the YouTube businesses and like socially connected people. It's doing physical. You saw it's doing physical around K-pop. It's #1 film of all time. Physical outlets, the way Disney does, but they're doing pop-ups, a much smaller, much smaller vision than the Disney vision of theme parks. So they're doing a lot of things that are trying to maximize revenue from their IP. I would like to see them buy a library, but I don't want to see them overpay for a library.
Okay, last one on Netflix. Announcing yesterday a 10-for-1 stock split. The split-adjusted basis trade is expected to begin on November 17th. Shares up 2.7% as we speak. I'm like a big, hey, this doesn't change the fundamentals of the stock, so I have a hard time ever understanding. Yeah, I do. Whenever a company does a stock split like this. Your thoughts on the stock split? Do you care?
No, super smart. This is a retail company, and people should be able to give. You know, when I was a kid at 5 years old, my grandmother always gave me 5 shares of the Walt Disney Company, which we should deliver in a frame, which are still on my walls, every birthday for 5 years till I was 10 years old and wanted a different thing, dresses or something. So they should be doing that with Netflix shares. And this should be accessible to the public that wants to be supportive in the capital markets on a retail investors of the fact they love Stranger Things. It's another way to sort of give a feedback loop to Netflix about the good work they're doing. So I'm very supportive.
All right, great stuff. Hey, let's talk Mag 7. Amazon, Alphabet, Apple, Meta. What a dump this week. Investors reacted differently to the AI spend at different companies. Pick your company that you think was most interesting this week.
Okay. So the two most interesting were Amazon and Meta, because one's up 12%, the other one's down 12%. In total, these companies each raised their capital spending guidance for this year by $7 billion. Together, the Mag 7 will now spend $400 billion on generative AI infrastructure, going up to $500 billion next year, $500 billion, in a revenue stream that isn't determined yet. So that is a big headline here. CapEx spending continues to, rotate up. Amazon, really spectacular numbers. Really, Amazon is trading on AWS. Like, you may think it's an e-commerce company, but capital markets are telling you AWS is what it trades on. They've reported 20% revenue growth in AWS, which is the highest in, I think, 3 years, 300 basis points faster than last quarter, so accelerating. It did $33 billion of revenue out of 105 total revenue for the quarter at a 30% margin. Remember, e-commerce has a 2% margin. So think about what's happening to returns on capital. And, okay, so you're going to say, oh, but they're spending all this CapEx, so it's unclear. But what's great about Amazon is everything they're building for generative AI, they are using internally to lay off 14,000 people. So they're improving their operating efficiency, and they're driving revenue growth in all of their businesses, and they're going to sell. They are the only one not capacity constrained, because 4 years ago, since 2022, they have doubled their power capacity, which is the gating factor to data infrastructure, and they created Trainium chips, which are their like proprietary, what they call custom silicon. So they don't have a capacity problem. Whereas we hear from Microsoft and Llama over at Meta and Alphabet, they're all capacity constrained. That's silly. Amazon's running a better business. Good for them. Go Amazon. So they are not capacity constrained, and they have differentiation by these Trainium chips. Let's move to Meta. Meta, the opposite. They're like, we're going to take on all this money. They spent $19 billion of CapEx in the quarter, which left them only $10 billion of free cash flow in the quarter, which means next quarter, when they spend more, they're going to go into negative cash flow, which means they're going to be borrowing money from capital markets. And when he tells you about what his goal is for this huge capital spending that's going to drive leverage, adding financial leverage to his income, his balance sheet, he's saying, we're going into the super intelligence business, which is going to benefit the world. And it's going to be, some experts see 3 to 5 years from now, some say 7, and some say after that. To which I say, well, too much value leakage. Wall Street investors should not be in the business of buying Meta shares to benefit the world. The Pope does that. There are people who have a seat that does that. No, buy Alphabet. Everything they do is about capturing the value of the CapEx that they're building, both for themselves and leasing it to third parties at increasingly high margins. So I don't like the value leakage. I don't want to save the world through a corporate investment. Get out of Meta, move into Alphabet, move into Amazon, and Apple's just not in the game.
Laura,
they doubled their CapEx.
We only have 10 seconds left, but if Amazon's market cap is $2.65 trillion, excuse me. You say that's all AWS is what it's traded on. What portion of that is the value of AWS? Very quickly.
I would say this is what it trades on, but I'd say half of the value of this company is now based on AWS outlook.
That's incredible.
Laura Martin, we could
That's
talk
why
to
Andy Jassy is the CEO.
I know. We could talk to her forever. Have a great weekend, and I know we will talk with you soon. Amazing. Laura Martin, Senior Entertainment and Internet Analyst at Needham & Company. Hey, as we head to a break, we do want to mention something while we're talking about media and the content space. Bloomberg's original investigation, Can't Look Away, the case against social media, now available on Bloomberg platforms. It exposes the real-world consequences of harmful algorithms. Here's a little sneak peek.
These companies have been gaslighting us for years. This is all about money.
The purpose of all commercial ventures is to create a demand.
Our children are the casualties. We need to take back the power from these companies. They created a dangerous situation and then manipulated these kids.
They know the levels of addiction, sexual abuse. They know the levels of suicide. They're not showing our kids what they want to see. They're showing you what they can't look away from.
All right, that again is Can't Look Away, the case against social media, Bloomberg's original investigation. It is based on the original investigative reporting from our own Olivia Carville. It's now available on Bloomberg platforms. You can catch it Saturday, 1 o'clock to 2:30 p.m. and 9 to 10:30 p.m. Wall Street times. All right, coming up after the break, we're going to switch gears. We're going to talk a little bit about Venezuela, Tim.
Yeah, from the latest Nobel Peace Prize recipient and political opposition leader to Venezuelan President Maduro amid what feels like rising tensions between the U.S. and the South American country. That when Bloomberg Business Week Daily continues.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We do have the S&P 500 index advancing now. The Dow, the S&P, NASDAQ all solidly in the green. Right to the numbers with the S&P 500 index climbing now by 22 points, well off session lows. 68.45 where we stand. We have got the S&P up now by just about 0.3%. Dow Industrials up 45 for the Dow. That is a gain there of just about 0.1%. NASDAQ up 165. NASDAQ higher now by 0.7%. The Russell 2000 index of small cap shares is advancing by 0.3%, and our Mag 7 index up by 1.3%. Apple and Amazon both a member of the index, with Apple up now by 0.1%. Amazon ripping higher by 11.1%. Yield on the 10-year 4.09%, with that 2-year yielding 3.60%, while gold down $20 the ounce, holding above 4,000 as we wrap up October. Right now, the precious metal is down 0.5% at 4,004. Crude, West Texas Intermediate, 61.02 a barrel, up 0.7%. And Bitcoin now above 109,500, up by 1.9%. As we were discussing with Laura Martin moments ago, Netflix said to be actively exploring a bid for Warner Brothers Discovery's studio and streaming businesses. Now, that's according to Reuters, citing sources. Warner Brothers Discovery up by 4%. Netflix, which also announced that 10-for-1 split, up by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week Daily. While speaking to reporters earlier on Air Force One, President Trump says no when asked whether he is considering strikes in Venezuela. He also said no when asked whether he's made a decision on the matter. So it sounds like
I think
not committing to anything.
I was going to say keeping the options open, despite the two no's.
Yeah, and this is after we saw earlier Venezuelan dollar bonds up across the curve after reports of the U.S. potentially increasing military pressure on the oil-producing nation. Oil, too, moved slightly higher, although it did drop back. And then we know the further backdrop, is that the U.S. has been conducting attacks on alleged drug-running boats in the Caribbean Sea and the Eastern Pacific, and the administration has announced it is sending, Tim, a naval strike group to Latin America.
Oh, that's just our backdrop on this Friday afternoon, and we welcome journalist and author Michelle Hussein. She's the host of the Michelle Hussein Show, a new podcast from Bloomberg Weekend. She's also the author of Broken Threads, My Family from Empire to Independence, among others. It's good to have you here. How are you?
Very good to be with you. Hello, Tim. Hello, Carol.
Well, you had a very timely guest on your program. You sat down with Maria Corina Machado just 3 weeks after she won the Nobel Peace Prize. And in my understanding, she's in hiding. You did this interview with her from hiding.
Yes, it's a remote interview. She has been giving some interviews since she got the Nobel Peace Prize 3 weeks ago. And from her point of view, that is a very welcome international spotlight on the issue of Venezuela, which had really receded from international attention in many ways since the election that Nicolas Maduro is widely understood to have stolen from Maria Corina Machado and fellow opposition figures 15 months ago. So the Nobel Peace Prize put the spotlight back on it. And of course, then, since the strikes on the boats in the Caribbean that the Trump administration says are carrying drugs, since those began 2 months ago, and now we have this massive U.S. military buildup in the Caribbean, the biggest since 1989. So this is perhaps a particularly timely interview because we dropped the episode this morning just as this reporting started to emerge on whether land strikes will be next.
And she specifically address the amping up of actions on Venezuela. Let's actually play a little snippet of it, and then we'll come back to you. This, again, is Maria Corina Machado, Venezuelan opposition leader and 2025 Nobel Peace Prize laureate.
I believe that the increase in pressure and the escalation that's taking place is the only way to force Maduro to understand that it's time to go. And those that still support him, which are very few at this moment, the top brass of the military, financial enablers, front men that are making huge, obscene fortunes with the hunger of our people, better understand that, time is running off. And I believe that this escalation is the last opportunity for those that still support Maduro to understand that they need to put aside, take all support away from him and Maduro himself to understand that this is the last chance to truly facilitate a peaceful and orderly transition, which is what we want.
That's Maria Corina Machado, Venezuelan opposition leader and 2025 Nobel Peace Prize laureate on the Michelle Hussein Show. Michelle here with us right now. The idea of Maduro actually having very little support among the top brass, is that, did she provide evidence?
You kind of made a face.
Yeah, she doesn't back that up, and this has been quite a frequent refrain, and I can understand why she is putting it that way, painting the regime as on the brink of collapse. But elsewhere in the interview, she says 80% of the military are now against him. You know, we have no idea if that could be true or not. But this answer she gives about escalation is the only way for Maduro to essentially see that the writing is on the wall. This was her answer when I put this point about land strikes being next, and does she support the idea of strikes on the territory of Venezuela, when I put that question directly to her. I think it's clear that she supports the US military escalation in the region. She thinks that this is very valuable pressure. She doesn't go as far as to say, I want a military intervention, but she dreams of a different Venezuela, and perhaps she feels that with the Trump administration's attitude and attention in the last couple of months, she and people who feel that way are closer than ever before to that goal.
How, you know, I think about South America as a whole and how U.S. actions in Venezuela would be perceived across the region.
Yeah, I mean, of course, there's a long and very troubled history.
Exactly.
Over a century of U.S. military intervention in these countries. She, in so many ways, she echoes the language of the Trump administration when she's talking not only about her country, but the region. Not only narco-terrorism, she uses the exact phrase that administration figures do, but when she says words to the effect that America's stability and security depends on the Western Hemisphere. You know, this is an echo of the Monroe Doctrine and the fact that this whole region is within America's purview, and that its security is all linked. So she is portraying her country in the United States and others in the region as part of a continuum.
I'm curious, too, though, you know, after she got the Nobel Peace Prize, I mean, of course, President Trump was hoping to get it. What is the communication between the two, or with the Trump administration?
Well, she certainly had that call straight after and
she did
dedicated her prize partly to him.
Right.
And I'm sure she was trying to keep him on side and think, this is a moment where the U.S. is engaged in my country. I don't want this moment to be the one that drives the president away. I asked her particularly about her communications with the administration and with Secretary Rubio. She said, of course, I've been in touch with him and my team is in touch with his team. The extent of those day-to-day communications, she wouldn't say. But I also asked, what are you doing, right? What are you doing within the country now? And she said, are you going to call people out on the streets? And she said, people will come out when the moment is right. So I think, in a sense, from her perspective, there's everything to play for in these days.
I'm not going to ask you to make a prediction, but you might be speaking to the next leader of the country.
Well, she certainly would be the president of Venezuela today had Maduro not blocked her from standing. And then, as the opposition has very credibly put forward their evidence that they won that election, had he not stolen the election from them. So she said, of course, I'm interested in becoming president, but technically, if Maduro was to fall, then Edmundo Gonzalez, who was elected the president 15 months ago, would be the person in place. But she's a very brave person. There's no doubt about it. She is enduring isolation and separation from family members who are in exile. She is living in hiding. She cannot leave. I don't even know if it's her home. Wherever she is, she cannot be seen outside because of the risk of arrest. And she was briefly detained when she appeared in public 9 months ago.
Does she stay in the country, just very briefly?
She is in Venezuela. That is our understanding. She is in Venezuela. Most other opposition figures are in exile. But yes, she continues to bear considerable risk.
Michelle, thank you so much. Really appreciate it. Michelle Hussein, the host of the Michelle Hussein Show, a new podcast from Bloomberg Weekend. That full interview with Maria Corina Machado, it is available now, and you can check out it. It's from the Bloomberg Weekend team. It is on the Bloomberg terminal, Bloomberg.com, as well as on YouTube, Spotify, or anywhere you get your podcasts. All right, folks, we are heading and getting close to the last hour of trading here on Wall Street. When we come back, an update on the trade on this Friday, and we'll also get a look at some of the stocks on the move in a week where there was so much coming at investors, and yet the S&P on track for another monthly gain. You are listening and watching Bloomberg Business Week Daily. We'll be right back.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we're almost into the last hour of trading here at Bloomberg, and bouncing around here. We're off our worst and best levels of the session. So what does that mean? S&P 500 just up a hair, up about 1/4 percentage point. NASDAQ 100 a gain of about 0.5%, but I do believe we are on track, though, for another month of gains. Let me pull it up on the Bloomberg because sometimes it takes a moment. Up about 2.25% here for the month overall. So it's definitely been a bullish tone here in the month of October. If so, it would be the longest streak of monthly gains since 2021.
Wow.
Back-to-back gains for the S&P.
So we'll find out
1, 2, 3, 4, 5, 6 months of gains.
She counted the old-fashioned way.
Got my abacus out.
I bet there's a way we can do that.
I've gotten it out a lot of times this week.
I'm Tim Stennebeck along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg Television Markets correspondent Nora Melinda. Nora, you're watching some big ones today.
So many tech stocks really in focus this entire week, but we're looking at shares of Apple today. That's ticker AAPL. And they are seeing them rallying earlier, but then pairing into the red. But we're now about unchanged here, just above flat. But this is after the company reported a strong holiday outlook, but they did talk about a sales decline in China. So that has definitely been weighing here on the stock as a lot of the street just really tries to grapple with what is going on here in the earnings and parsing it piece by piece here. But I mean, they were saying that a lot of the newer iPhones is what actually lifted some of the metrics here.
It bounced around big time in the aftermarket, but it like sold after earnings came out and then it bounced back.
Yeah, there were some comments, you know,
All
that
over
the
the map.
CFO made or that Apple was putting out essentially to different publications that talked about, hey, actually, we are going to see some growth this quarter. And here's how much.
And today we're not so impressed.
Yeah, it doesn't seem to be too impressed. Now, what, into the red? We're bopping around, really bouncing all over the map right now as people really just try to get an idea of what they feel about it.
I was just looking at what it's done for the week overall. I'm just curious. Let's pull it up. I know, I'm just kind of in that mood. 3.25% higher.
Yeah, well, there you go.
Okay.
Long term.
Long term.
Just saying. All right.
Just
Let's
a
go to
day.
another Mag 7, Amazon.
Okay, this has definitely been an outperformer here among all the Mag 7 stocks. Of course, this has really been one of the biggest gainers in the S&P 500 as well. Ticker AMZN. We're seeing shares rallying for double-digit gains. Earlier up for the highest level on record, really just a stellar day for the company here. So really people have been looking a lot in the cloud segment here. Of course, AWS really in focus, a $33 billion revenue that was reported here. The revenue is up 20% higher than what we saw last year. So you really are seeing the street really just feeling a little bit more comfortable or a little bit less stressed out about fears of an AI bubble, at least in particular for this company here.
For Amazon?
Yeah, for Amazon. I mean, if you think about it versus Meta, what we just got yesterday, everyone was thinking about.
Isn't it? That's why it was so wacky, that AI spend. We just talked to, we've talked with a lot of folks, about and the perception and how investors, reacted. Not the same for all the companies.
They're just picking at each of them.
Yeah, exactly.
Okay, also on your radar today is Netflix, a stock that's firmly in the green.
Firmly in the green, and this is after the company announced a 10-for-1 stock split.
All right, I'm going to talk about this in just a second.
There he goes again.
Okay. I'm going to get on my high horse.
All right, Tim. I can't wait to
please.
hear. But I mean, of course, this is a stock where each share is more than $1,000. It's been quite expensive, lofty here. But I mean, the company is essentially just going to be making a bit more affordable for its employees, stock options. And of course, the bid here that we do know and focus has really been about Netflix exploring a bid for Warner Brothers Studio, Warner Brothers Discovery. So that's also been something that the street has really been digesting here. We're looking at shares up about 3% so far, but 25% on the year.
Here we go.
Yeah,
I
please.
didn't have time to talk about this with Laura Martin when we interviewed her. If you missed, I didn't have time to give my 2 cents, okay?
Well, we're listening.
But what did she say?
She likes it. She said it makes it more accessible.
Okay.
But my response to that, if I had time, and now I do,
Good.
would have been,
well,
it's already very accessible on retail trading platforms such as Robinhood.
Okay.
In fact, when I was talking about this yesterday after they announced this, and I said there's no fundamental change to the stock with a stock split, I got a text message from somebody listening to our show who said, I just bought $20 of Amazon using Robinhood, and it the share price doesn't matter because
Interesting.
These days you can buy fractional shares of stock. You can say, I want $50 of Apple.
How many people buy fractional owners?
I don't have the answer to that.
Retail, maybe.
Do they?
But in retail,
I'm not sure.
Instead of just cobbling together, $564 for said stock, put $50 toward a stock.
Yeah, well,
it's
I
a
guess
lot easier.
We need some more viewers to weigh in. I'm curious anecdotally.
And whenever I talk about this, I get pushback, for the option stuff. And look, there's, and also for inclusion in certain indices, price is important, but fundamentally nothing changes about the stock. But Laura Martin liked it.
She did.
Okay.
Yeah. Are you done?
I'm done.
All right, good stuff. So is
Come at me, everybody.
So is Nora Melinda, Bloomberg TV markets correspondent with Stock Movers. Check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. We're headed into our last 2 hours on this week.
Spooky.
Ooh. I don't know. It's been so much coming out of investors, and yet we're looking at some gains for the week overall. So what an interesting bunch of stuff coming at us.
We got a great couple of hours coming up on Bloomberg Business Week Daily. Carol's going to decide what her Halloween costume is going to be.
I'm wearing it.
She's wearing it. Also, Amazon shares soaring. The CEO of Berkshire Hathaway and Brooks Running is going to be with us. That's next.
News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. A federal judge has just ordered the Trump administration to pay for SNAP food assistance during the government shutdown. Christopher Cruz reports.
A federal judge in Rhode Island said the program, which costs about $8 billion a month to fund nationally, has to be continued using at least a $5 billion contingency fund, and asked for an update on progress by Monday. A judge in Massachusetts also gave the administration until Monday to say whether it would partially pay for the benefits for November with contingency money or fund them fully with $23 billion in additional funds that almost half the states say can be used.
Ali Stefanik is with the New Jersey Food Bank and says they usually would be preparing for Thanksgiving now, but instead it's a surge in need from SNAP beneficiaries.
The funding definitely helps. Emotionally we're ready. Food-wise, we're going to have as much food as we can for households that we're trying to serve. But we need all the help that we can get.
Christian Benavides at Orlando's airport reports air traffic controllers and others still working without paychecks.
Several of the major airlines are stepping in to try to help some of those federal aviation employees. They're offering food assistance and other support to them because, again, it's not just the air traffic controllers. You've also got TSA workers that are not getting paid.
5 people were arrested today in Michigan in what FBI Director Kash Patel said was a terrorist plot. CBS's Anna Schechter.
Sources said an FBI Joint Terrorism Task Force member had apparently uncovered 2 teenagers in an online ISIS chat room and that no real plot materialized.
The UN Human Rights Chief says the U.S. military strikes on alleged drug boats in the Caribbean and Eastern Pacific are unacceptable and a violation of international human rights laws. Spokeswoman Ravina Shamdasani.
The U.S. must halt such attacks and take all measures necessary to prevent the extrajudicial killing of people aboard these boats, whatever the criminal conduct alleged against them.
There have been at least 60 deaths. Israel's handed over the bodies of 30 Palestinians a day after Hamas returned the remains of 2 hostages. CBS's Rami Inocencio with the latest.
The remains of 11 Israeli hostages are still in Gaza, all male and most of them in their 20s. Israeli media are now reporting that Hamas has restarted searching for those bodies, or at least some of those bodies, inside areas under Israeli control behind what is known as the Yellow Line.
On Wall Street, stocks are higher. This is CBS News. flyers with nut allergies are upset with one airline.
Cracking Gangnam Style.
Southwest Airlines plans to serve pistachios for passengers in new premium seats to crack and eat next year. Parents with allergic kids and grown-ups with tree nut allergies themselves say the decision could be life-threatening. Many opponents who've taken to social media say they can't understand why a major airline would choose one of the leading allergens in the country to serve in a confined space. Southwest says it tested more than 50 options before it settled on pistachios. They'll come in 2 flavors, honey roasted or roasted and salted, beginning January 27th. Deborah Rodriguez, CBS News. A French cyclist survived after a 130-foot fall into a ravine and was kept alive for 3 days by drinking bottles of red wine he had in his shopping bag. The man was 77 and missed a bend in the road on his way home from the supermarket. This is CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily, with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Howdy, everyone. We are now in the last hour of trading. In fact, we just got about 54 minutes to go until we wrap up the trade for the week overall, for the day, and for the month of October. So we're off to November starting next week. And it's been another good month. We have seen, I think I counted 6 months in a row that we have seen the S&P finish with a weekly gain. Monthly gain, excuse me.
Well, if you look at the S&P 500, it's on pace for its longest streak of monthly gains going back to 2021. The NASDAQ 100, a 7-month surge, set to be the longest in 8 years. Thanks, big tech.
Yeah.
Thanks, AI.
Which is always interesting when we have a guest on and they're like, yeah, look at these other names that have been forgotten. But it's like, what repeatedly, consistently seems to continue to provide gains? And how much of our world is the world of big tech?
Oh, one of those companies today, 10.5% to the upside. Amazon shares just surging. A handful of banks raising their price targets on the company following yesterday's update. One of those is Maxim Group. Tom Forte, we're going to be speaking with him in just a minute.
All right, looking forward to that. Also, the CEO of the Berkshire Hathaway-owned Brooks Running on the business of the sport. Very timely ahead of this weekend's New York City Marathon, so it'll be good to be checking in with him.
He's going to be coming in. I bet he's wearing Brooks.
I would hope so.
You know, the Levi's people always wear the full Levi's denim outfit.
If you taint wearing your brand.
The Brooks CEO is going to be wearing Brooks.
Maybe.
We'll bring you an update when we see him in just about 20 minutes. Also, Bloomberg exclusive, Jeffrey Epstein's emails revealing a money laundering probe going back to the 2007 case. This is a big take.
Yeah, listen, this isn't something we talk about a lot, but yeah, it's a deep dive by our own Jason Leopold and team. So we're going to get into that a little bit later on in the 4 o'clock hour.
All that and more coming up over the next 2 hours. First up, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. And here's what's going on. We are running toward the closing bell with the Dow, the S&P, NASDAQ, all advancing right now. We've got just about 53 minutes to go until we wrap up the trading month of October, then on to November. Where has this year gone? We've got the Dow, the S&P, NASDAQ all advancing. 26-point advance right now on the S&P at 68.48. That is a gain of 25 points now, up by about 0.4%. The Dow up 64, higher by 0.1%. NASDAQ up 169, higher by 0.7%. Our Mag 7 index up 1.3%. The 10-year 4.09%, with the 2-year that's currently yielding 3.60%. Gold down 0.5% at $4,003 the ounce, and West Texas Intermediate crude up 0.5%, $60.85 for a barrel of WTI. Amazon now surging 10.6% after earnings. Amazon posted robust cloud growth that reassured investors that the tens of billions of dollars of the company and its peers are pouring into AI will pay off. Laura Martin is senior entertainment and internet analyst at Needham. She was a guest last hour right here on Bloomberg Business Week Daily.
Amazon, really spectacular numbers. Really, Amazon is trading on AWS. Like, you may think it's an e-commerce company, but capital markets are telling you AWS is what it trades on. They've reported 20% revenue growth in AWS, which is the highest in, I think, 3 years, 300 basis points faster than last quarter, so accelerating. It did $33 billion of revenue out of 105 total that revenue for the quarter at a 30% margin.
Laura Martin of Needham. Again, Amazon up now by 10.5% after earnings. Apple up now by under 0.1%. Apple is projecting a jump in sales over the holiday season. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks for that update, Charlie. Appreciate it. Shares of Amazon up 10.5%. They were up as much as 12% earlier in the session. This after the company reported third quarter results that beat expectations. AWS, that business especially strong. A bunch of banks, including Morgan Stanley, Truist Securities, RBC Capital, raising their price targets as a result of the print. Also raising his price target, Tom Forte, Managing Director and Senior Consumer Internet Analyst at Maxim Group. He's got a buy rating on the stock. He's increased his price target by $8 to $280 per share. Tom joins us this afternoon. Tom, good to have you with us on the program. I'm wondering about the specific price target increase. It was a pretty blowout report. Stock surging, as I mentioned, 10.5% right now. You raised your price target by $8. Why not more?
Yeah, so when you think about our price target for Amazon, it's pegged to an enterprise value to EBITDA. And I do think, as crazy as this sounds, on that basis, there's an opportunity for expansion in the multiple as the company improves its profitability led by its cloud computing effort. So I would say that the $8, call it modest increase, was a reflection of a slight increase in our profit expectations coming out of the quarter. But I do think as they continue to improve their margin profitability or margin over time, that there actually could be some expansion in the multiple for Amazon, which is somewhat unique.
All right, so what kind of improvement, Tom, could you see in that margin when it pertains specifically to the AWS business, and how does it get there?
So, Carol, if you think about Amazon as a software company and not as one of the largest retailers in the world, that's where the opportunity comes. So when you compare it against other software companies, they're trading at enterprise value to EBITDA ratios of north of 30 times. So by no means am I suggesting that Amazon will get to 30 times from the high teens today, but I think directionally it could head there.
Am I crazy to bring this up? This was like something that people talked about a couple of years ago, Tom. Should Amazon just spin off AWS?
So, Tim, the challenge for spinning off AWS, I've spent probably too much time thinking about the sum of parts for Amazon. So the cloud computing business is clearly very valuable. Over that 3-year period, the advertising business has become a lot more valuable. When 62% of items are sold on Amazon, they're sold by third parties, not Amazon. That's a relatively healthy margin business. But the remainder, where Amazon's the seller of record, they're probably break even. So I do think on the strength of advertising and cloud computing, the sum of parts may be worth more than the whole, but you still have a pretty big low margin e-commerce business for Amazon. What happens to that in the case of a spinoff?
So, you know, what we got some color on and specifics on, Tom, on the earnings was, you know, we know Amazon is backing Anthropic, that investment of $8 billion, but we got some idea of the impact of that company. So I'm just curious, you know, AI and what they're doing, their whole strategy and the build out and the spend, you're comfortable with?
The build out and spend is enormous. I mean, it's kind of scary to think about more than 100 billion in CapEx for Amazon. But what I think is interesting when you compare and contrast Jeff Bezos running Amazon with now Andy Jassy doing it, is that Andy focuses on both the top line and the bottom line. And I think the reason he does that is to give the company the ability to generate profits while it ramps investment spend. So I spent a lot of time, Carol, thinking about why are they laying off all those people heading into earnings? What does that mean? And I think that Andy's trying to run a business where he cares about margin a lot more than Jeff does. And the reason is so he can continue to invest in the business, but maintain profitability.
Well, look at his DNA, right? Where did he come from? AWS. He's the guy who created
AWS. Exactly.
AWS. So
exactly. Yep.
So it's not necessarily the retail DNA.
No. So yes.
But what is that?
He's
Where does
clearly
that leave
running
the retail?
Amazon as a services company collectively.
So where does that leave the retail business? I'm just trying to get an understanding of how investors should value it.
I mean, sales increased, 10% in the third quarter.
But remember, they're eating tariffs.
Right.
So
it is remarkable how insulated they've been from tariffs. Again, it speaks to the marketplace model. 62% of the items sold by third party, not by Amazon. And Amazon and those third party sellers know that if you want to win the buy box, you have to price competitively. So I don't think you're seeing inflation have as negative impact, or tariffs and inflation, on Amazon's retail sales as you're seeing at Walmart, Target, and other retailers.
But Tom, to Tim's point, I mean, we all think about Amazon, in a big way as this retail company that, miraculously puts things on our doorstep in 24 hours.
Yeah, mostly groceries for us.
Yeah.
With Whole Foods, thanks to that acquisition.
Lots of stuff, right? But I mean, we know the bread and butter and the gold of this company, or the golden aspects, is really AWS. But having said that, would Amazon be as interesting without that retail component?
So if you think about it, let's compare and contrast it with Alphabet and YouTube. So you have Google Cloud and you have YouTube. In the case of Amazon, the birth of AWS was to give the retail effort the capacity it needed from a computing standpoint. So I do think that there is an element where the two go hand in hand.
So I always like to ask folks like yourself, and I do this with our reporters too, if you were sitting down with Andy Jassy, what would you ask him?
So I would ask him the future of Amazon and what will be the next pillar. So if you think about Amazon, you think about healthcare. I'm a One Medical customer because I want to learn all about their healthcare efforts. You think about Amazon Pharmacy. So what is Amazon going to do in the future that it isn't doing today? You think about Project Kuiper and high-speed internet via satellite, things of that nature. So what's Andy's vision for what Amazon will do in the future, and what are areas where he doesn't want to pursue? So how's he making that decision on where to expand and where not to expand?
All right.
That is what keeps me up at night thinking about Amazon.
Tom, 45 seconds. So I'm going to be Andy Jassy, and I'm going to throw it back at you. So Tom, what do you think we should do?
So in order to maintain the stock price, so I've published 27 white papers on the convergence of tech and retail, 3 on the death of Amazon, essentially what could slow the stock. They need to maintain growth. So I do think he needs to continue to find large trillion-dollar market opportunities like healthcare. So I do want him to expand there, not just as a consumer looking for a better healthcare experience, but as a longtime analyst of the company.
Just 30 seconds on Project Kuiper. Do you think they stand a chance against SpaceX and Starlink?
Do I think they stand a chance? So let's call them a distant number 2. So I still like what Elon's doing with Starlink, but I think it's interesting what they're doing with Project Kuiper, and understand why both Starlink and Project Kuiper are trying to bring high-speed internet to parts of the world that don't have it today.
Hey, yeah, good for AWS if everybody can get online.
Right?
Yeah.
Exactly. Tom, this was really terrific. Thank you so much. Have a great weekend. Tom Forte, Managing Director, Senior Consumer Internet Analyst at Maxim Group. He's got a buy rating on Amazon and did increase his price target by $8 to $280 a share for Amazon. The stock trading at $246.62 here. Stock is up about 12% year to date, but a lot of that gain is the result of what you might say happened today, right?
Yeah, up 10.5%.
Exactly. All right, interesting stuff. Really loved it. What?
Let's talk running next. The CEO of Brooks Running is going to be with us.
Not a runner.
This is Bloomberg
but I like
Business Week
sneakers.
Daily.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all very much in the green right now, with the S&P 500 index up 35, 68, 57 where we stand. That is a gain of 0.5%. Dow Industrials up 140, up by 0.3%. NASDAQ now higher by 207 points for the NASDAQ Composite Index. That is a gain of 0.9%. Our Mag 7 index up 1.4%. Apple, a member of that index, up 0.2%. Amazon, also a member, surging now by 10.7%. 10-year, 4.09%, with a 2-year currently yielding 3.60%. Gold is tumbling $32 the ounce to $39.92, down 0.8%. And West Texas Intermediate crude up 0.6%, $60.91 a barrel. Bitcoin up almost 2%, 109,604 on Bitcoin. As for the AI investing backdrop, Ulrich Hoffman-Burchardi is with UBS Financial Services, and she spoke with us this morning on Bloomberg Open Interest.
Yeah, we believe, in fact, that AI is the most profound innovation in human history and also one of the biggest investing opportunities. But I think one thing is also clear, that AI is the new frontier, even between countries, between sectors and companies, and I think even the new divides within the Mag 7. If you look at the performance this year, we now have 3 of the Mag 7 companies underperforming the NASDAQ 100.
Ulrich Hoffman-Burchardi of UBS Financial Services. Amazon, as we mentioned, surging after earnings. We got Amazon up now by 10.6%. It did post robust cloud growth that reassured investors that the tens of billions of dollars that the company and its peers are pouring into AI will pay off. Again, recapping here, S&P up 36, up 0.5% as we sprint toward the finish line. Just 40 to 37 minutes to go until we wrap up the trading month. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. A great and timely column from Bloomberg Opinion on the terminal today. Thank you, Carol Massar, for sending it my way.
You're very welcome.
Okay, so Laura Noonan writes that the sport of running, it took off in the 1970s as a low-cost fitness trend. It's turned into a playground for the wealthy. One Citigroup exec who took up running 6 years ago has spent tens of thousands of dollars on hundreds of personal training sessions, regular blood tests, countless massage treatments, 3 hours a day of training. I want to know what type of executive can do 3 hours of training a day. That's what I want to know.
I don't know.
That's
a very efficient one, I guess.
Yeah. Well, Dan Sheridan has also spent decades thinking about running, not necessarily spending as much money in 6 years training for a marathon, but getting people to buy his running shoes. He's the CEO of Brooks Running. It's the Seattle-based subsidiary of Warren Buffett's Berkshire Hathaway. You know their shoes. The company, though, also makes apparel, sports bras, accessories, and more. Dan joins us here in the Bloomberg Interactive Brokers studio. Welcome. How are you?
I'm well. Thanks for having me. This is great.
How's business?
It's incredible. We just finished our third quarter up 17%, and all regions for Brooks are growing double-digit right now.
So that's the top line. And that's growth. That sounds great. Yeah. What about the bottom line with these tariffs?
So we don't report our bottom line publicly, but I would tell you that we are having a great year in terms of top line and bottom line. And it's really based in this participation that we're seeing around the world for running and walking and just movement in general.
On the bottom line, controlling costs around tariffs, your shoes are imported. Right. Are any made in the U.S.?
No, not at this time. Southeast Asia is where we manufacture our products.
How have tariffs hit your company?
Yeah, it's been challenging. Since 1930, the athletic footwear industry has had really high tariffs, 20% on average. And so this new round of tariffs increased our tariffs by 100%. We now have 40% tariffs out of Southeast Asia. So we had a big math problem to deal with. And we've got our arms around it. It's now at a place where we think it's going to stay at this rate. And so we're working the whole value chain at Brooks to really address the costs that are coming into our products. And again, I think we have our arms around it, but we're just starting to see the tariffs kind of roll into cost of goods right now.
So Dan, you went from what tariff to 40%?
So we went from 20 in Vietnam, where we're predominantly manufactured, to 40% now with the August announcement of tariffs. So,
how do you manage that?
Yeah, it's really tough.
Where do you squeeze things?
It's tough. We tried to really be holistic in this approach. We didn't want to, raise prices and dampen demand or punish consumers. Yeah. So we looked at the entire supply chain, worked with partners, long-term partners that we've had for 25 years, all the way way through distribution and transportation to get our cost to a place where we could raise prices moderately and not dampen demand and punish the consumer.
Is this the world we live in moving forward thing, you think?
Yeah, I think the history of tariffs is they don't roll back. And so we're planning long term for, higher cost inputs on duty. We sell in over 50 countries around the world. So global trade for us is super important.
Does it make you think differently about your supply chain? I mean, look, at the end of the day, the president, everything to be made here in the U.S. We've spoken to a lot of CEOs who say, we just can't do that. I mean, Harmeet Singh, the CFO of Levi's, was on our program, and he was like, we're not going to make Levi's in the U.S. Yeah. It's just not going to happen. Are you ever going to make Brooks in the U.S. again?
Yeah, I think the way we think about it is for our supply chain, we have to build agility and resiliency into our supply chain because a lot of the things that impact supply chains are out of our control. Trade policy, just governmental policy as well. And so we're building agility and resiliency. We also are starting to work on automation in the footwear process. One of the secrets of performance run product is it's manual. 500 people touch a pair of shoes from the start to the finish. And so automation will change. And that could open up new markets for us, new countries to manufacture in.
If you can increase automation, would it make it possible to manufacture in the U.S.?
Potentially. I think that the challenge, though, is that the entire supply chain of material is based in Southeast Asia. So we have to solve that problem as well. Otherwise, we're just importing goods to final assemble in domestic markets, and the imports would have duties on it as well.
Is the president listening? Is the White House listening to your industry?
Yeah, I think we've got really good trade organizations that are, lobbying on our behalf. And so we're making some progress, but I'm not sure we're at the top of the list. This administration has said they're not trying to make shoes in this domestic market. So we're hopeful that we can navigate this, but we do have our arms around it, and we feel like we've got a path forward in terms of pricing and supply chain.
Well, let's talk a little bit about brand positioning for Brooks and how you think about Brooks's position within the entire industry.
Dan, but there are tons of sneaker choices out there.
I love it. Yeah, I mean, look, we've had the CEO of on our program. We've had New Balance's CEO as well. No question, there's a lot of competition out there. Nike's challenges have been well documented. Where does Brooks fit in?
Yeah. There's 1,400 people at Brooks that get up every single day, and all we think about is running. Runners, their experience, the products that we deliver. That is our positioning. We often say at Brooks that our sharp focus creates mass appeal to anyone that moves. But our North Star is runners and the lifestyle of run, the community of run. So that's our positioning, matched with innovation that solves for the runner. Real innovation every single day based in biomechanics and science, matched with trends in the markets. And that has been a great strategy for us. Over a 25-year period, we've grown over 14% compounded. And we have consistent growth because we're based in science and we're delivering products that are meaningful in runners' daily lives. And it's a great position for us.
What does that science look like? Give us an idea of what is going on in a lab or labs and how you guys are innovating.
Yeah, well, in Seattle, Washington, where we're based, we have a biomechanics lab that we invest a lot in R&D and innovation through that lab. We're doing deep scientific study on how people move through the gait of running. Our goal is to reduce injury and improve performance in everyone's life. And so that lab, based with partners in Asia and institutions around the world, is driving insights for the runner. We match that with what we call Run Insights, which is a consumer insights group that we have at Brooks. Right. And they're matching the biomechanical science piece to what runners want, experiences, emotions, and the like. And that is just a beautiful marriage for us.
So help us understand your demographics, because I hear it's runners, but I mean, there's a lot of older folks that are wearing them.
Hey, they got wide shoes for people like me.
Yeah, they got wide shoes.
So thank you.
So I am curious about...
If you put one foot in front of the other, you're a runner. Walking, slow running in our building, right? And so we are in the business of movement. So if you get up every day and you're moving, we have a product for you. That's how we think about it. Our strategy and our biomechanics is designed around the runner. But if you move, if you put one foot in front of the other, you're our consumer.
All right, we're talking with Dan Sheridan, CEO of Brooks Running, here in our Bloomberg Interactive Broker Studio. So going back to it, so demographics, what do you know about your shopper?
Yeah, we know a lot of deep survey data tells us, one, just the journey of running. What we're seeing right now is there's 4 generations. You've got boomers, you got Gen X, millennials, and Gen Z that are investing in health and wellness.
Yeah.
And so it's the biggest market we've ever seen. What we know about Gen Z with this new generation is they started running earlier than any other generation, maybe all time. Because of COVID, they were at home with their parents, and they started running at the age of 11. My generation, when you got to high school, you started running track, cross country. That was the first time. So what we know is that is coming towards us in a big running boom right now. And they're paying for it.
And you are seeing that.
We're seeing it. We're seeing it across the globe.
You've been at Brooks for longer than it's been owned by Berkshire Hathaway.
Correct.
But I'm wondering what it's like to be an independent subsidiary of Berkshire Hathaway.
I often say that I have the greatest job in sporting goods because of our ownership structure.
Do you report your results right to Warren Buffett?
We do. We report up through the Berkshire family, and we're fortunate. You know, ownership matters in business. And what I often say is my competitors that sit in a seat like mine operate on a 13-week calendar. I get to operate on a 10, 20, 30-year calendar. We make decisions for the long haul. And there's many examples at Brooks where we have disruption. Trade is one of those where we play the long game.
Does Warren Buffett pick up the phone and call you? Can you pick up the phone and call him?
I see Warren once a year at the shareholders meeting.
That's what a lot of people see.
I get so excited when I have any amount of time with him. I more frequently talk with Greg Abel.
Which a name that would be very
yes.
familiar to our audience. But is Greg doing anything day to day, or is all day to day to you, and you essentially report some sort of metric to him quarterly? Or
so Greg's available whenever I need him, and we do regular check-ins through the year. But most of the time, the culture of trust and the culture of decentralization that everybody reads about and hears Warren talk about is really how we run the subsidiary. And we run our own shop, and Greg's there when we need him. And it's a perfect scenario for our business and a long-term approach in which I'm very appreciative of it.
All right, Greg Abel, obviously the CEO, along with Warren Buffett of Berkshire Hathaway. Dan, thank you so much.
Thanks
Good
for
luck.
having me.
You have a runner in the race?
We have a lot of runners from Brooks, employees, and some of our professional athletes this weekend. We'll be out on course rooting them on.
All right, well, good luck to all of them. Dan Sheridan, CEO of Brooks Running, joining us here in studio, in the Bloomberg Interactive Broker Studio, with Brooks sneakers on.
Oh, yeah. Always, I bet.
I bet. I can only imagine how many pairs.
Hey, coming up next, we're going to talk oil. Dr. Ellen Wald is going to be with us. You know her from president of Transversal Consulting. She's also senior fellow at the Atlantic Council. This is Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they're all advancing. We got 20 minutes to go until we wrap up the trading month of October. It'll be on to November. Right now, let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlotte. U.S. stocks are trading higher in a choppy session with the Dow currently up 160 points. S&Ps are higher by 40 and NASDAQ, that's up by 1%. The U.S. 10-year yield is at 4.09. Gold is in the red. Oil is in the green. And Bitcoin, that's trading higher by 2.2%. Among the main 11 S&P sectors, leaders were consumer discretionary and energy. Utilities were under pressure. And leaders to the upside in the Dow, Amazon and Chevron, while Microsoft fell 1.4% and led to the downside. After earnings, Chevron rose 3.6%. ExxonMobil was little changed. And wrapping things up after its earnings, Amazon gained as much as 12% to a new all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, Bill, have a great weekend. And to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat. Just drive, baby.
This is the Drive to the Close.
Where we're going, we don't need roads.
On Bloomberg Radio.
TikTok, everybody. I guess it helps if I push the button. Hey,
I just want to hear all the songs.
I know you do.
The new music.
It's kind of fun, right?
Thank you to all the people who've gotten in touch with the feedback for the new Drive to the Close.
Do most of
It
them
had
like
been
it?
a few years.
Do most of them like it?
Yeah, I think so.
Okay.
Yeah.
It's a little different. Throws
It
me
is.
off a little bit.
Our team did it.
Oh, did our team do it?
Our team did it.
You
Yeah.
guys did it? Oh my God.
I-
Talia and Steve Lanzone.
Ari had something to do with it too.
I'm sure.
Talia says she did it, but there's no Oasis in it.
Oh my God.
So I don't
Not
know.
that Oasis thing. Stop it, kids. All right.
You want to talk
let's-
about oil?
Yeah, let's talk to it because we
oil.
talked about Venezuela. Right now, I'm looking at WTI crude futures. They're up as much as 1.3%, just up about 0.5%. We did see a jump in oil earlier, though, but it did pull back off those highs, as President Trump said. He denied making a decision to strike military targets in Venezuela. It's something we talked about in our 2 o'clock hour. Also, ExxonMobil and Chevron outperforming Wall Street expectations after new oil field projects and acquisitions boosted crude output. We wanted a big picture view on where Venezuela fits in, but really where we are in the global oil markets.
Let's bring in Dr. Ellen Wald, president of Transversal Consulting, also senior fellow in the Atlantic Council. She's also the author of Saudi Inc. Ellen, good to have you with us. Welcome back. I want to start with this idea of a potential military strike on targets in Venezuela by the United States. The president denying that he'd made a decision to strike military targets in Venezuela. Look, whenever we have a conversation like this, we're talking about a military operation, but we're also talking about the economics of it. So we're going to try to separate
market implications.
The market implications from everything else. I am curious about the market implications if the U.S. were to strike Venezuela. What would that do for oil?
So I can see why oil spiked a little bit earlier in the day when it wasn't exactly clear what's going on in Venezuela. I think it's still not exactly clear what in the world all of these U.S. warships are doing right off the coast of Venezuela or approaching Venezuela. But it doesn't seem like we're about to strike Venezuela, which I think was probably never really in the plans, mostly because we're not about to invade Venezuela. I think that there's a concern, certainly, that if there is any kind of political instability in Venezuela or military activity in Venezuela, that could have the potential to impact Venezuela's oil exports. Now, keep in mind, Venezuela's oil is actively being sanctioned. So all the oil that it's selling is really all on this kind of black market, goes to China or goes to Iran, or at least it used to be going to Syria. And so technically it's not really, or it shouldn't really impact the larger oil market. But of course, everyone knows that there's this large black market for sanctioned oil going on. So, the potential for any kind of disruption does impact the oil market. And so we saw that happening today.
Hey, so what's a more important fundamental story when it comes to the energy markets, the oil market? Is it really what's going on in overall global supply and demand?
I do think that is the most important thing underlying, but I do think that there is a lot of confusion about what exactly is going on with supply and demand, because you have some of these big, global kind of agencies that keep track of supply and demand saying, hey, we're in a massive oversupply right now. And then on the other hand, you have other agencies like OPEC saying, no, we're not in such a big oversupply. And you have, the Saudis coming out and saying, we're not all that oversupplied. OPEC is going to pump more oil. And so I think that there's some confusion or at least disagreement about how much oil is on the market, how much oil is being pumped, and how much and what oil demand is. And I think that that's understandable given how incredibly complex the oil market has become recently with all of this sanctioned oil going different places, and they're saying it comes from one place when really it's coming from the other. And so there is a lot of confusion, rightly so. I also think that there is a lot of trepidation about the economic condition, where we're going economically, kind of as a world, as the global economy. And so that makes it hard for people to figure out, how much oil should we be pumping. And so that's one of the reasons I do think that we have seen oil prices remain fairly low. And at the same time, we're not seeing any kind of pullback in terms of production.
Well, let's go there. There's a story on the Bloomberg today. Ellen, U.S. oil production climbed to a fresh record near 13.8 million barrels a day in the month of August, according to a monthly government report. Number was higher than official figures previously indicated. Apparently, there are some government reports that continue to come out.
Okay.
Sorry. But so U.S. oil, our production here, I think I heard something earlier on Bloomberg Surveillance, maybe it was with Tom and Paul this week, about, just the amount of oil that we are producing here in the U.S. What's your expectations, and where is all this oil going? And do we...
Yeah, this is a great question, because we have, we get these reports weekly, but they're not all that accurate. What they really are estimates. And so once we start to get these reports coming, it's now the very end of October, and we're finding out what really was produced in August, and wow, it's a lot higher than than the forecasts were. That really says something. I mean, 13.8 million barrels a day is an absolutely massive amount of oil that we're producing in the United States. And it's clear a lot of that oil is going into our own refineries. It's being used, it's being turned into products that we're using, but we're also exporting a lot of oil. We're exporting to Europe, we're exporting to China, we're exporting, all over the place. And I do think that is very, very significant at this time. I do think there's a lot of discussion about, has fracking peaked? Is the Permian peaking? And when we get a data point like this, it tells us that maybe it's not peaking, because people have been looking at these estimates and saying, hey, maybe we're finally seeing it coming down. Well, maybe it's not, or maybe it's not going to come down as fast as they thought it was, and that's going to lead to more supply being on the market than people thought there would be. So sometimes we see a disconnect between what the forecasts and what people think it should be, and then actually where it is going.
Where does China fall into this in demand or lack thereof coming from China right now?
That is a really interesting question, because China has definitely got strong demand, but then the question is, okay, is it going into their, is it going into their economic system? Is it being actually used, or are they putting it into their absolutely massive stockpiles of oil? Is it going into their kind of independent refinery system that's producing products and then selling them all over Asia? And so it's hard to get kind of a handle on what China's economic situation is, what they're producing there, when we're not entirely sure where all that oil is going. Plus, now you have this issue with Russian oil. We know that China imports a lot of sanctioned Russian oil. They import a lot of Iranian sanctioned oil. They import Venezuelan sanctioned oil, and they hide a lot of that. And so we may not know exactly where their oil is coming from, but it's possible that soon they may be at least cutting back on some of their imports of Russian oil. And so that is important for the future of global oil markets.
So glad we could check in with you. Dr. Ellen Wall, President of Transversal Consulting, Senior Fellow at the Atlantic Council, author of Saudi Inc., WTI crude at $60.